appetite. So we're looking to price that in, and that goes a long way, Lizzie, to explaining why we are seeing futures for Europe considerably higher, up by 2.8% on Euro Stoxx 50, expecting the DAX, which has moved so much on this story in general, we are expecting that to really bounce at the start of the trading day. Lizzie, what do you see in the individual stocks?
So a broad risk-on mood expected, but in particular gains expected for European chip stocks this morning, Anna. We've already seen gains for Asian chip stocks on the war relief, and that news that OpenAI has completed a deal to raise $122 billion from investors at an $852 billion valuation. We've also got an eye on sportswear companies, given Nike gave that surprisingly gloomy outlook for the year ahead, so watch the likes of Adidas, Puma and JD Sports. And then energy, very much in focus, of course, as we have oil swinging now below $100 a barrel on both Brent and WTI. Where will that leave the likes of Siemens Energy and Vår Energy, we ask at the opener?
Yeah, absolutely. And for these markets, energy does seem to still be something of a wild card here, Lizzie, because we were thinking about a positive start to the European trading day, expecting that, even at a time where oil prices were quite resilient and staying above $100 a barrel. They've most recently dropped below that. So what does that do to the European equity market picture? Things in flux. The energy price certainly in flux, catching up with the risk-on mood that we're seeing in other assets and dropping below $100 a barrel. So the Stoxx 600 is up by 1%, essentially, but we are waiting for a lot of markets to open. The DAX might take its time to open, and that is perhaps where we expect to see some of the real positivity coming through. In the meantime, the CAC 40 playing that role, up by 2.4% on the French market right now. Some of the beaten up luxury names, they could be in focus for us this morning, as they have taken some of this head on. Expectations around perhaps more difficult times. Sales in the Middle East region has been part of the narrative around those. So some of that maybe rebounds. Is all of this premature? Is some of it just short covering? We still don't have any signs that the Strait of Hormuz is going to open. What conditions will Iran attach to that kind of climb down? All of those questions still very relevant for markets, Lizzie, but right now markets are buying first and asking questions later, it seems.
They are indeed. All but one sector in positive territory this morning, and that one sector is energy. As you've mentioned, we've got oil prices lower now, and energy as a sector down 1.5%. Losses for names like Total Energy, BP, both down about 2%. At the top of the basket, though, we have construction, we have banks, we have basic resources, all up about 3%. Tech not far behind, and I had said that we should be watching those European chip stocks after the gains that we'd seen in the Asian session. Indeed, for some of the chip names this morning, like ASML, BE Semiconductor, VAT Group, ST Micro, all up about 4% as things stand. Just turning to sportswear as well, because we'd flagged a potential European read across after the Nike earnings. We're waiting for Adidas to open, but Puma up 2.4% and JD Sports up 1.6%. I have to say, on a day as risk-on as this, those moves perhaps not that much to write home about.
Right, it's incredible, isn't it? The scale of the moves that we're seeing this morning. We still don't have the DAX open. We do have gilt markets open, though, and falling into line with the rest of what we're seeing across Europe, we are seeing a lot of bond buying in the gilt space and those yields coming down. So we're now down by 11 basis points on the UK 10-year gilt, and across the curve, we're seeing those yields coming down. The 2-year down by 13 basis points. So we're seeing perhaps a little bit more movement at the short end, but a lot of pivoting in the bond market conversation, it seems, around what to expect from inflation and then from growth. how that plays out into equity markets is always something we're interested to think about as well. And we've seen some of the rate-sensitive stocks have been on the move substantially in the past couple of weeks as we saw yields go higher and then the subsequent drop back. But back to the stock markets, and technology is now the best performing sector, up by 3%, Lizzie, as we think about what we've seen through the Asia session and where we saw a lot of that buying coming through. Let's get some deeper analysis of these markets. Ben Gutteridge, Market Insights strategist over at Invesco, is with us this morning on set. Ben, nice to speak to you this morning. So we sit here this morning with an incredible amount of risk appetite returning to these markets. What's your instinctive reaction to that? Is this overdone? Is it premature? The DAX is open, up by 2.9%. The oil price is now playing ball, catching up a little bit and dropping back substantially, down by 3-4% in this morning's session. What's your thinking?
Well, look, I want to be positive. You know, it's a good day when markets are showing such strength, and no doubt taking the lead from the geopolitical story that the US may look to withdraw from the Middle East, and that is a route to the Straits of Hormuz reopening, but it's not a definitive route. There is, as you sort of suggested, markets are reacting to the story but may ask questions later, and I think those questions will have to be asked. You know, what caveats will Iran attach to a withdrawal, and indeed may this make life a little easier for Iran to keep the straits closed if the US is withdrawing. Now look, it may surprise you, I don't have a huge military background, but you know, there are just simply lots of questions that are very difficult to answer even if you have, and on that basis, you know, we have enjoyed an overweight equity position and an overweight international equities versus US, but we have been neutralising that of late. And look, we could be more bearish than being neutral. So there is some positive things we want to talk about. But at the moment, we'd probably be fading sort of market strength on this story.
Okay, so this does not give you the confidence to become more positive, to turn that neutral into something more positive?
Not at the moment, no. I think we're going to need to see hard data that the Straits of Hormuz are reopening. And maybe people can look to a modest uptick in the numbers already, but I mean, it is incredibly modest versus what we were looking at pre-conflict. And of course, by the time it's fully reopened, the market would have priced all of that. So you can't just sort of wait for definitive evidence, but we're looking to get more positive from our neutral position, but this news is, I don't think, sufficient to catalyse that.
When it comes to bonds, Ben, you've basically argued that it's win-win, right? If it's a short war, then you don't get as much inflation, and if it's a long war, you get rate cuts. That's very optimistic, isn't it, when you have people warning about stagflation?
Yeah, win-win was probably a bit cavalier on my part, but so you no doubt you've latched onto that. Look, I think there is certainly, if the oil price moves dramatically higher in the short term, I can't see bonds dealing with that very well. Maybe hedge funds treat it as a sort of a bit of a toy in that environment. Now, inflationary risks escalate, bonds have a difficult time, but I think there's some asymmetry building into bond markets, and we would be looking to build exposure for exactly those points that I've made and you've raised. Is that whilst the scenarios that could play out is that the Strait, reopens gradually or whatever pace, and some of those inflationary concerns dissipate. But at some stage, if the Strait doesn't reopen, these inflationary concerns morph into a deflationary risk, because just life is just so unaffordable for everyone that they just can't buy as much as they used to, and businesses can't afford to build inventory, and it's sort of demand destruction and activity takes a nosedive. So I'm not sort of ringing the bell on bonds today, but we would be building into a bond position, certainly if the oil price were to move higher, because we've no doubt yields would move higher on that news.
Where along the curve do you like? You're seeing double-digit falls, basis points, really across the curve, across the European continent this morning.
Well, I think on the basis that if the oil price were to remain elevated, indeed move higher, I think recessionary risks are going to be building, and therefore looking to buy longer dated bonds in that environment. So we'll wait and see how the news develops, but if it gets more precarious, then I think buying longer dated bonds is where we will go on the curve.
A lot still hinges on this oil price, and without the Strait of Hormuz opening, as you say, it's difficult to see where this goes. But oil prices are reacting, down by 3.8% on WTI, 97.54. Brent price now $99, down by 4.3%. So if we don't have clarity on a lot of these things, then, Ben, where looks relatively stable is, where do you hide out? Are there assets that you've been adding to try and hide from some of the volatility elsewhere?
Yeah, I mean, it's difficult to hide. I would have thought within our neutralising position, that means, replenishing some dollar assets. Dollar not actually acting like a typical sort of safe haven, more of a petro sort of currency, not being as resilient as it might have been in sell-offs in the past, but having dollar assets in there makes sense given sort of US sort of energy self-sufficiency. But like within asset classes, I think favouring like UK equities isn't a dreadful move, and it's one that we've been applying. We of course should these geopolitical strife come to a swifter conclusion than we're anticipating, then energy prices would be under some pressure. But no matter what the outcome, we would say that there's going to be a geopolitical risk premium in oil prices, and that countries are going to replenish supplies and indeed build even greater surpluses into the future. And of course, resource hoarding, an environment where you're looking at sort of spheres of influence and not wanting to have bad actors in your supply chains, means I think the sort of materials and mining sector can do okay.
So buying the UK would be about large caps, not for their UK eco exposure. It'd be the global plays.
No, I would have thought the domestic story looks something to shy away from at the moment. The international exposure and the energy materials, yeah.
And how much is that because of the politics here in the UK? Because, of course, the government's under massive pressure to respond to what's happening in the war in Iran by supporting consumers and businesses in a way that perhaps it can't afford.
Yeah, I think the government finds itself yet again in a very difficult position, not least given its sort of core values, I guess, as sort of a left-leaning party, or maybe even more than leaning, and may have to commit to some support programs that the bond market might start to question, and certainly if it wants to push hard on that envelope. But a lot of this isn't. At the blame doesn't necessarily lie at the door of the government here. Interest rate environment has been pretty precarious. The jobs market was starting to show some cracks already, and the inflationary burden, does leave the domestic consumer in a difficult place. Maybe the politics can help a little bit, but the bond market may undermine some of that support.
It's difficult to have conviction, is it, in 2026, Ben? Are there things we can have conviction about? I mean, the underlying growth story for the US economy around AI and technology and all of the things we got excited about in January and February, are some of those still there?
Well, I mean, I would have thought the AI capex story is something for the markets to have some concerns about. The speed at which that gets monetized, the introduction of debt to pay for that AI capex. So in part, that was one of the reasons why we were exposed more internationally away from the US, because of that sort of hurdle that other markets don't have to wrestle with. But there is some resiliency to tech business earnings, those US mega caps that kits might find some companies very difficult to have conviction at the moment. It's a bit trite, but you have sort of conviction that markets will be sort of volatile, and in that environment probably calls for a bit of a neutral position. But some of the better days, as we're seeing today, come amongst some of the most difficult. So I don't think it's appropriate to get super bearish at the moment either.
And are you also one of these people who's worried about private credit and the contagion risks there?
I am not yet in the camp that suggests this is some sort of start of some systemic risk. We believe, speaking to our credit analysts, it is of a more modest scale, and that banks have done, one of the reasons that private credit has escalated is that banks have acted in a far more conservative position. So even if private credit challenges sort of escalate, the banks could find themselves still quite well shielded. But of course, it could have a knock-on effect on credit spreads and government corporate borrowing costs. So not a helpful outcome. But at the moment, it's not enough on its own for us to pivot, as I say, to a more bearish position on corporate profits.
Okay, Ben, always a pleasure to have you with us in the studio. That's Ben Guttridge, Market Insight Strategist over at Invesco. Thank you. Thank you. Let's turn now to the core six. How are they holding up on this risk-on day? Well, green across the screen, as you'd expect. Schneider Electric up the most, up 4.8%. Nestle at the back of the pack, only up 0.2%. But Novo, LVMH, Rheinmetall and ASML all up this morning. Let's also check on some of the individual stocks we should be watching this morning with Chloe Melly. What are your movers, Chloe?
Good morning, Lizzie. Well, airlines are having a really good morning today. Those are companies that, of course, had really felt the impact of the war in the Middle East. That is because of those flight disruptions and cancellations across some Middle Eastern hubs. But then also the fact that higher oil prices were expected to lead to higher fuel prices. So the fact that now we have got this hope of this conflict potentially coming to an end, that is coming as a huge relief. And therefore, we are seeing all of those airlines up in the green quite significantly this morning. On the other hand, the oil and gas majors are definitely struggling, and that is for the exact same reason. We've got this hope of the conflict coming to an end that is leading oil to extend losses, and therefore oil majors are struggling this morning, and we are seeing in particular BP down 2% this morning. Moving on to Babcock, and there had been a real pullback in the shares of that defense company lately, but Citi analysts have just said that it now is time to buy those shares. They've upgraded the company, and therefore we are in the green. We are up almost 6% for Babcock this morning. And finally, quite a tough day for Berkeley, the London housing developer, down 10%. And that is because it issued quite a disappointing profit outlook. And it said it would not buy any new land as long as the tax and regulatory burden on residential development continues, and would instead focus on existing land holdings. And so this is a very cautious outlook, and that has really disappointed investors this morning.
Chloe, thank you very much. Chloe Melly with a fast-moving stocks picture this morning. European equities really on the front foot then, up by 2.3%. We'll be back with some of the corporate stories that we need to pay attention to this morning. Nike slumps as global headwinds darken the outlook. We'll have more on the sportswear giants' challenges, what it means for European competitors as well. This is Bloomberg.
Of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujera report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back to the opening trade, 8:17 here in London. European equity markets very much on the front foot, in particular the Xetra DAX up by 2.6%. The CAC 40 also up pretty strongly this morning. Let's talk about oil prices, where we are seeing a considerable retreat. We are down under $100 a barrel, certainly on Brent, 99.64. WTI dropping down to 97 as a handle. So both of those down by around 4% this morning. Took a while to get this kind of movement coming through in oil prices, playing catch up with some of the more risk-on movements in other assets. But now we see it. Now we see that negativity around oil prices. Let's bring in Stephen Sapczynski, Bloomberg's Asia Energy Team Leader. Good morning to you, Stephen, from London. So help us understand what we're seeing in oil prices right now. This has been described up until this point as one of the worst oil crunches in history. And so I was all set this morning to ask you, why aren't oil prices higher than they are as a result? Because $100 a barrel is a not unheard of level for oil prices, even in peacetime. And here we have war in the Gulf. So that was my question. And I suppose that is still my question, even though we have oil prices retreating, because we still don't have the Strait of Hormuz reopened.
Yeah, I mean, I think there's an interesting way that the market is kind of digesting the statement from Donald Trump overnight. I think there is an expectation he is going to have a press briefing or a media briefing on Wednesday, 9 p.m. Eastern time. I think there's an expectation that he'll maybe have some sort of hints or comments about how there's the off-ramp for this war. And then the oil market, I mean, according to the prices, it sure looks like there's an expectation that things will de-escalate maybe rather quickly after that. You could see maybe the Strait of Hormuz opening and then oil flowing again. But as you mentioned, why are we at this situation when the Strait of Hormuz remains shut? It's unclear how long or if it will open up. It's unclear exactly how long de-escalation will take with the U.S. We don't know what Trump is going to say next. He changes how he views the war, and he says one thing and then changes it to another thing. Administration officials do the same as well. And then also there's damage within the region. There has been Iranian attacks on oil refineries, on ships, on liquefied natural gas export plants. So all of that together doesn't really indicate that the Strait of Hormuz can open quickly. In fact, it could take weeks or months, according to analysts. So it does seem to be some sort of disconnect, and you're seeing it play out in other markets. Jet fuel prices in Europe have hit a record high. You're also seeing different products as well staying pretty elevated. So I think everyone's really just waiting to see what Trump does and whether or not there will be any action behind his words this time.
Yeah, when it comes to jet fuel, Stephen, we had the president saying that Europe will have to start learning to fight for itself. It's going to have to get its own jet fuel, maybe buy American jet fuel. How tight is the situation in Europe right now? And how quickly could the European situation actually turn into a shortage?
I think there's a very interesting happening between the crude market, which is, hovering around $100 for Brent, versus jet fuel, which is at a record high level. $100 Brent, not unheard of. We've had that before in the early 2010s. The market can digest that kind of price level. Jet fuel, though, seems to be quite an emergency level. And we had a really interesting report out of my colleagues from Europe that showed that, according to officials that they spoke to, Europe does have enough jet fuel to get through April. There are no risk of shortages for the current month that we're in. But if this continues into May, that's when you could really start to see some supply shortfalls and inventories depleting to levels where there could be shortages potentially. Again, if this all continues, there isn't as much of a buffer in the jet fuel market as there is in the crude market, right? We were entering the crude market this year with quite an oversupply, quite an overhang. U.S. supply had been very strong. We were talking about the year of the glut. We were talking not about $100 Brent. We were talking about $50 Brent. And here we are. So there was a little bit more slack in the system, and perhaps that explains some of the price movements over the last 24 hours. But jet fuel is a different monster, and it really depends on how long it continues. April seems to be in the clear, but May could be the month that really starts to tighten things and emergency flags sort of flying then.
Okay, May the month to watch. Stephen, thank you for the update. That's Stephen Stupczynski, Bloomberg's Asia Energy Team Leader. Well, turning to retail now, we've seen Nike shares tumbling in after-hours trading after the retailer gave a surprisingly gloomy outlook for the year ahead. The company says that revenue is expected to decline 2 to 4% in the current quarter and will be down in the low single digits for the rest of the calendar year. Andrea Felsted, Bloomberg opinion columnist, joins us now for more analysis. Andrea, what seems to be the issue at Nike?
The issue seems to be the more casual, fashion-oriented clothing and footwear. We wrote a little while ago that we're all smartening up again. Sophisticated casual was in.
You told me trainers were out.
Exactly, and athleisure was out. And we're really seeing this. Nike's doing okay in the kind of things they call performance, which, you know, more comfortable running shoes, warm outdoor gear. But it's that fashion-oriented casual market that's really suffering.
And how does that complicate a turnaround that is being planned for this business by a relatively new CEO still trying to make a mark?
Well, he's doing very well, actually, on the performance side. He's had some wins in running. He's launching the ACG brand, relaunching it as a more gorp-core, out-core fashion brand. He's doing all the right things. He really needs a fashion hit because when sneakers are in, we're going for the more low-profile, smarter shoes, which favours Adidas more. The Nike Samba, the Terrace styles, although they're definitely past their peak, but they're refusing to die. They're still there. And Nike has been quite slow in tapping into that market. It has the styles, the Cortez, the Killshot, but it hasn't activated those enough because it's focused on performance. So it really needs a fashion hit.
Is it the Samba that's come out in a new T-bar iteration? Not for me. But look, we were looking at maybe there would be a European read across from these Nike results. We're not so much seeing it this morning. Adidas, Puma and JD Sports all up, along with that broader risk on move this morning.
Yeah, Europe, they definitely said Europe was weaker in this sportswear business. So we're seeing these fears kind of play out in Europe. Not great news for Adidas, although I think actually Adidas is more protected because of its styles. The CEO, you know, I think he's really on top of all the fashion trends. He's been, you know, the Samba's faded, he's reactivated the Superstar. Now he's going for the Stan Smith, which actually works very well with a smart casual look.
I will say I like a Superstar. I had those when I was at school. Glad to see them getting revived.
Nice retro reference. LVMH, I mentioned this just because we've got a lot of focus on luxury. At the beginning of this week, we were talking about the role that some of these big cap stocks and luxury, and LVMH was one of those, in Europe's retreat. And now they're playing a role in Europe's gains today. What's at stake for the luxury sector at the moment, Andrea, as we watch the broader market narrative unfold?
Well, the Middle East is obviously an important market, but it's quite small. What is really important for these brands is what happens to markets, particularly in the US, because US luxury demand is correlated with stock markets, and we're seeing US stock markets hit. If that gets worse, then that could be problematic for these luxury names.
Andrea, thank you very much. Bloomberg's Andrea Felsted joining us there with the latest on what's happening in the luxury space and indeed Nike. Let me talk about what's going on with aviation. We've seen some strength coming back to aviation, of course, and some of that is because of the weaker oil price. I mean, you've got an oil price that drops $97.58 on WTI, $100 on Brent now. I mean, this doesn't feel like the end of the story by any stretch. Still no opening of the Strait of Hormuz, but that is positive enough for airlines today, Lizzie, and we see them gaining.
Yeah, travel and leisure, the best performing sector data on the Stock 600 this morning, up by more than 4%. But as you say, it comes back partly to the oil price, and we're looking at Brent weaker than $100 a barrel, actually just on the nose at $100 a barrel for Brent now, down 3.7%. But WTI below that, and at the bottom of the sectoral basket on the Stock 600, you've got energy down 1.5%. Coming up, though, we're going to talk space. We'll be speaking to Mike Lockwood, president of the Royal Astronomical Society, as NASA prepares to send astronauts back to lunar orbit after more than 50 years. That conversation next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back. This is the opening trade, 30 minutes into what is an incredibly positive session for European stocks. Is this all we need to know about today's market? We are up by more than 2% on the Stocks Europe 600. The DAX, the CAC, the FTSE 100 all gaining. Of course, exposure to energy for the FTSE 100 will hold it back just a little bit. And no surprise that we see the DAX getting the best of the gains this morning. But we spoke to Schroders earlier on. They were talking about short covering. Is that part of the story? We'll get into a conversation, Lizzie, in a moment about what is really under the hood and driving these markets.
We'll take a look at this breakdown, Anna. 544 members of the Stock 600 higher this morning compared to just 53 to the downside. As you say, this is a risk-on morning thanks to that war optimism. People piling in volume-wise as well. We're up almost 50% here today. Let's just take a look at some of the particular leaders because, yes, this is a broad picture across these markets, but outsized gainers include Novo Nordisk this morning, up 3.6%. The specific story here likely revolves around the news news that the company's offering its obesity drug, Wegovy, more widely on England's NHS. We're also seeing gains for ASML, up 4.5%. It's the biggest gainer by points on the Stock 600 this morning after that optimism that we'd seen earlier in the Asia tech trade. We had the OpenAI news, also, of course, the war optimism. Finally, on the leaders board, Siemens Energy up 6.1%, rebounding on that possible resolution in the Middle East. Of course, we wait to hear from President Trump at 9 p.m. Washington time later, but this stock has significant exposure in the region, so obviously reacting positively to that optimism. Flipping to the laggards this morning, Total Energy's down 2.7%, of course, because we've got Brent dropping on the prospects of a resolution in the Middle East. We were at about $100 a barrel on Brent the last I checked. Shell also down more than 2% on the oil price, and Berkeley here down 17% after the firm said that it'll stop buying new land because of an increase in tax and regulation on development. Anna.
Let's talk about some of the other stories that we need to keep across this morning. And in fact, we'll start with war in Iran. Donald Trump says he expects the US to end the war on Iran within 2 to 3 weeks. That's as a report in the Wall Street Journal says the UAE is preparing to help the US open the Strait of Hormuz by force. The White House says the US president is set to address the nation tonight to provide an important update on Iran. The Greek stock market has been upgraded to developed market status by MSCI once again, marking a milestone in Greece's recovery from its earlier debt crisis. It was demoted to emerging market status at the height of the crisis in 2013. The reclassification, due in May of 2027, is expected to widen the pool of capital available to Greek companies. And Nike shares have been tumbling in after hours trading after the retailer gave a surprisingly gloomy outlook for the year ahead. Nike cited increased inventories and disruption from the war in the Middle East. Analysts also pointed to weakness in Greater China and other areas. Lizzie.
Anna, let's dive back into the stock market picture. European equities rallying as investors eye an end to the Iran conflict. Are they right to do that? Bloomberg senior strategist on the EMEA equity markets, macro trends and strategy team, Michael Masika, has been covering this on the terminal for us this morning and joins us around the table. Michael, I wonder if this is an overreaction or more personally, perhaps, whether it's sustainable, because we get some headlines out of the White House and Tehran and stocks jump around the world, but surely it could all change from Trump tonight.
That's right. It can definitely all change. Also, you got to look at the bigger picture of like what will be the impact on, oil jumping that high, of gas jumping that high, of what's going to happen with central banks and the monetary policy, the fiscal policy in Europe over the next few months. So overreaction, I would say no, it's not really an overreaction. It's more like a knee-jerk reaction because the positioning was so bearish getting into those headlines, which seems like the clearest we've got recently. There was a lot of fatigue in the markets, like flip-flopping, and like investors didn't know what to do exactly. But the reality was fast money, hedge funds, CTAs, macro hedge funds, they were all very, very short. CTAs got short for the first time since last April this week. This was like literally ready to rip on the first real positive news, and that's exactly what we're seeing.
That's what we got then. So there were a lot of short positions. We got a headline that looks as if it changes the direction a little bit, and stocks fly as a result. But what have we actually heard here, Michael? We've heard that the US is willing to leave, and we've heard that the Iranians are willing to talk. We have not heard that the Strait of Hormuz is going to reopen. Oil prices are reacting just like we're seeing risk assets react, and oil prices are considerably weaker this morning. But what is the link then between what oil prices do and what stocks do from here? Because oil prices may stall. They may say we need to see more proof of the Strait reopening before we can drop further from here. And then where does it leave risk appetite?
So that's the problem. If you have oil settling at like around $100 a barrel, you're going to have a huge impact on earnings especially for Europe, a bit less for the US, obviously, because the tech weight in the benchmark is much, much higher. But for Europe, it's very important. And if you have like suddenly, this year, the consensus expect like double-digit growth in Europe. If you have oil at $100 a barrel, you're not going to have double-digit growth this year. So, like I said earlier, like down the line, the impact is still, there's still a potential very high impact on European earnings and on the European market. But we'll see that later. I mean, if you look at what happened in 2022, for example, like the stock market went down, then on headlines it started to go up, and then it completely flatlined for a while.
Okay.
So that's the risk we're having today.
That is the risk. Michael, thank you very much. Bloomberg's Michael Masika joining us with a look at this fast-moving market story. Let's make space for something else today, shall we? Later today, NASA is scheduled to send astronauts back to the moon for the first time in over 50 years, around the moon at least. The Artemis II crew will test a spacecraft that's to play a key role in America's return to our lunar neighborhood.
I think our generation appreciates having a program that now we get a chance to take our own moonshots, what we call great things that humans accomplish.
NASA's Artemis program is the space agency's ambitious mission to send humans back to the moon for the first time in more than half a century. The last time NASA sent humans to the moon, they were locked in a space race with the Soviet Union. This time, NASA wants to go back to the moon to stay in order to learn how to live sustainably off of the lunar surface.
4-stage engine start.
Prior to Artemis II, NASA launched the very first major mission in the Artemis program, called Artemis I, which sent the Orion crew capsule around the moon to demonstrate that they could work without a crew on board. Now it's time to show that they can actually keep a crew alive while traveling to deep space.
Our goal is get to the moon and get back. 4 days out, 4 days back.
We are going to do as much science as we can on the way. And on the far side of the moon, we're going to have maybe 45 minutes where we're in a loss of comm with Earth. And all we can do is just train our eyes on that moon surface.
The entire Artemis program has come under significant criticism for how much time it's taking to build and how much money it's costing the taxpayer. There is an estimate that between 2012 and 2025, the Artemis program has cost roughly $93 billion. Despite the criticism, it does benefit from strong congressional support. Many of the programs that are needed for Artemis are spread across the entire United States and provide a lot of jobs for constituents. While the Artemis II mission is coming up, Artemis III, Artemis IV, Artemis V are all a bit of open question marks at the moment. There's development that needs to happen for hardware, notably with the landers that will actually take the humans to the surface of the moon. NASA is pulling out all the stops with its contractors to ensure that a landing occurs no later than 2028, but it remains to be seen if that date will actually be possible.
For more analysis, we're joined by Mike Lockwood, President of the Royal Astronomical Society. He joins us now. Good morning, Mike. We heard just there some of the concerns around the cost of this mission. I wonder how you justify that $93 billion and counting price tag, and whether Artemis has just become too expensive to fail at this point.
That's a good question. Scientifically speaking, we can do exploration just as well with robotic craft. The thing that you get with manned missions is inspiration. You get, well, I myself, my career started when as a schoolboy I came home and on the news there was this young American president talking about going to the moon and doing the other things because they're hard. And I thought, wow, I'd like to be part of that. And so the inspiration side of it and bringing young people into science and technology is really important.
Good morning to you, Mike. It might be important, and do you think that we will see a similar effect this time around? This hasn't happened for decades. We
That's a very good question.
Haven't sent people into deep space for decades, but we have done it before. Will it have the same impact in 2026?
That is an extremely good question. There seems to be a lot of interest, and so maybe it will, maybe it will. But as you say, I think the dangers of failing this time are much higher. I think there will be a lot of adverse reaction if Artemis fails, and I do worry about that. But for me, that's the big benefit. The big benefit is to inspire young people into science, because we need them. They're the future wealth generators for the world.
Mike, you've got a lot of billionaire-backed space companies getting involved with this. Do they accelerate progress or do they complicate it?
I'm not sure either, really. I mean, a lot of the commercialization of Artemis is in the mechanics, is in the building of the craft, is in the operations and things. And there's no reason why that shouldn't. I'm quite sure that the process can be made to run as smoothly as it did with the state-backed system of the original of NASA, well, the state instigated, state-controlled system. I don't think it's a great complication because if you're going to do anything in space, everybody has to pull together, everybody has to work together. What I do worry about is we have an outer space international treaty, and I do think we almost need to think about having a treaty for the moon that very much mirrors that we put together for Antarctica. And that happened 50 years, the Antarctic Treaty was 50 years after the original exploration missions. So it's kind of about time to think about that. And my big hope for Artemis is actually a geopolitical one. It's not a global mission. Russia and China are not included, but that it will drive some international agreement on sustainable behavior in space, because we really badly need that. The space junk problem in near-Earth orbit is beginning to turn critical, and we really do need a beefed-up international space treaty, and maybe Artemis will help us produce that.
Right, yes, and we'll see if the mood, the geopolitical mood on Earth can produce that for us, Mike, despite plenty of disagreement here closer to Earth. Thinking about the international involvement in this project, international involvement, of course, the Europeans are not absent from this project, but they were particularly focused on the Gateway, the mini space station that was supposed to be accompanying Artemis later on in the project, that now has been called into question. Is Europe at risk of being cut out here?
I can't answer that. I hope not, because the more international this program is, the better. What you really don't want is a colonizing frontier mentality to set in, and then the moon could become a political flashpoint. So that's the last thing you want. So the more international it is, the better, quite frankly.
Mike, thank you very much. Thanks for joining us. Mike Lockwood, President of the Royal Astronomical Society, as we look ahead to that mission, Artemis 2, later on today. Coming up on the programme, back to the technology conversation here on Earth, and OpenAI's valuation tops $850 billion after a massive funding round involving the likes of Amazon, Nvidia and SoftBank. More next on its plans for all that cash. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back to the opening trade. 47 minutes into today's session. As you can see, it is green across the screen this morning following the euphoria that we saw on Wall Street yesterday on the optimism that this war in the Middle East could be coming to a close. We have the Stock 600 up 2.4%. Particular gains for the DAX in Frankfurt up 2.7%. The FTSE 100, the laggard somewhat, it's still up 1.7%, but that comes down to the oil price. We are looking at Brent just below $100 a barrel at 99.72, down more than 4%, and WTI crude also below 100 at 96.77. So the energy exposure here in London, meaning weakness for London stocks.
Yeah, let's talk about tech. There's been a lot of thinking about where you're taking us there, Lizzie, with the optimism around the global equity story. There's been a lot of optimism in the Asia tech space, and part of it has to do with some company specifics, and part of it's just the broader Iran story. OpenAI has raised $122 billion in new funding, valuing the company at $852 billion, making it one of the largest fundraising deals in history. It's backed by Amazon, Nvidia, and SoftBank, and the move underscores strong demand for AI, even as costs to scale the technology continue to rise. For more, we're joined by Bloomberg's executive editor for global tech, Peter Elstrom. Peter, nice to have you with us. So how significant is this funding round and this epic new valuation?
Well, we get used to these big numbers in the AI world, but let's just pause for a minute. These are really staggering figures. You said it's one of the largest fundraising. We can just say this is the largest fundraising that we've ever seen in the public markets or in the private markets. $122 billion. It's really staggering. You're talking about Amazon putting in $50 billion, SoftBank and Nvidia adding another $30 billion. Most of the venture capital world is participating, or many of the most prominent firms, including Andreessen Horowitz, there's MGX, there's also $3 billion from individual investors here. So it's really a lot of money that they're raising at this point. And also pause for a minute on the market valuation that you've got, $852 billion. There are only 14 publicly held companies out there that are worth more than that. So it's really reaching into the stratosphere, and this is for a company that's very young. It's losing tons of money at this point. It really hasn't proven its business model, but it's able to raise this kind of money. And partly it's because it's burning cash so quickly. It's burning about $1 billion a month. It's really trying to do three things at once that are very, very difficult. It's serving customers with their AI model with ChatGPT. They're trying to build this enormous infrastructure across the US and the rest of the world. And at the same time, they need to innovate and come out with these new models that are going to be better than the similar offerings from Anthropic, for example. So those are three things. They're burning tons of cash at this point. They probably need effectively all of that money to do what they need to do by 2030 here.
So in terms of how OpenAI will use this money, Peter, most of Amazon's investment is contingent on them either IPOing or reaching artificial general intelligence. What's the bar for that? What does it mean?
Right. Yeah, that's a very good point. Amazon agreed to invest $50 billion, but a lot of it is contingent on reaching these benchmarks. As you say, are they going to reach AGI in the next few years? They have to get there. They have to go public. Now, OpenAI is planning on going public later on this year, but as you guys were just talking about, the markets are pretty tumultuous at this point. Also, if they go to the IPO route, they're going to be competing with Anthropic, which also wants to go public, SpaceX, which includes XAI these days, wants to go public too. So it's a bit of a rocky road. They have a lot to prove here to be able to get all of that money.
Yeah, and let's talk about the wider moves we're seeing in markets today then, Peter. We've seen chip stocks jumping, certainly through the Asia session, now into the European session. A lot of this has to do with just the underlying positivity that we're seeing in markets today around the Iran conflict, but also I think memory pricing and some data we got there crucial to the Asia story.
Yeah, that's exactly right. Because there's been this big build out of AI infrastructure, they need a lot of these memory chips. So we've seen companies like OpenAI, Amazon, Alphabet scoop up tons of memory chips that they want to put into these data centers. That's put a squeeze on the pricing because also smartphones need memory chips, laptops also need them. So you've seen this squeeze and prices have just gone up exponentially over the past few months. That had led to this big trade driving up memory stocks in a lot of different sectors, including Samsung, Hynix, but even some little known ones like Kioxia in Japan has gone up a huge amount in recent years. So we saw some of that air come out of the trade with the Iran wars, with some concerns that maybe the spending wasn't going to be as aggressive as it has. But now that we're looking at perhaps some sort of truce in the Middle East, or at least Trump claiming that he's going to be able to get out of the conflict in the next couple of weeks, again, there's this squeeze that could drive up prices even more.
Peter, thank you very much. Bloomberg's Peter Elstrom with the latest on those tech themes. Let's pivot to some of the geopolitical read across we've seen from perhaps what's been going on in the Middle East into some of the European capitals. And I'm thinking here of Paris and things we've seen in Paris over the last week. French prosecutors are seeking charges against 4 people over that attack attempt that we saw against their Bank of America offices in Paris. They're seeking terrorism-related charges. And also interesting here to note that these charges involve 3 minors and 1 adult. So we will see, we'll keep across all the details, of course, and hope to get to the bottom of what was driving that.
Let's take a look at what else we're watching throughout the day as well, Anna. At 10 a.m. London time, we have Euro area unemployment data. At 1:30 p.m., it's US retail sales numbers. We also have Fed speak from Alberto Musalem and Michael Barr. And then, as we were discussing, we're expecting that Artemis 2 launch to take place at 11 p.m. London time. And then, if you're up late, we have at 9 p.m. Washington time, 2 a.m. London time, President Trump delivering an address to the nation on Iran.
Right, so 2 very different events to look ahead to, hearing from President Trump and indeed the Artemis 2 launch. Perhaps we will, we'll certainly be looking ahead to what President Trump has to say with regards to markets. And let's talk about where markets head next with Bloomberg's Morwenna Connian from our Markets Today team and things that they are watching on the blog. Good morning to you, Morwenna. This optimism, it seems pervasive for markets today. It started in the US yesterday, but US futures, incidentally, pointing a little bit higher, suggesting this has further to run.
Yes, so they're not pointing as high as we've seen the rebound today in European stocks, but as you say, we saw a bit of that starting yesterday. So it does look set to continue. We are seeing the reasonably big gains in the stock 600 this morning, up about 2.7%. I think it is important to note, though, that when we look at how much retrenchment there's been since the start of the Iran war at the beginning of March, this doesn't even go halfway to repairing that. So it is optimistic, but it's not fully recovered by any means. There's still so much uncertainty. We have seen an element of sort of whiplash before in terms of how close to a resolution we are. This does seem a bit more concrete. We sort of have a bit more of a time frame for those intentions. But I think we'll have to wait and see, obviously, what Trump says later today. I think markets are sort of tentatively optimistic. We are seeing, broad-based rebounds. I was reading some of my colleagues mentioning that because volumes weren't actually that high in Asia today, it does suggest that it's a little bit of a shallow rally. It's not, fully priced in because oil has come back. It is below $100 a barrel. But it is still incredibly elevated from where we were.
And a lot of people on holiday, apparently.
What I really need to know, Morwenna, is my mortgage going to come down now?
I wouldn't be so sure about it coming down. But we are seeing traders really paring back their bets on hikes. I have to keep reminding myself we are now talking about hikes. For so long we were always talking about cuts, but there's now fewer than 2 rate hikes fully priced in for the end of the year. We started the week with close to 3, so there's quite a significant retrenchment there. But we are still looking to tightening compared to the easing that had been expected, for over the past year. Actually, if you're in the US, then people are starting to add to their bets on the chances of a Fed rate cut, and in the ECB, we're also looking at the tightening expectations paring back. So going in the right direction, but still not back where we were by any means.
So President Trump could yet get his rate cut this year. Morwenna, thank you very much for that. That's Bloomberg's Morwenna Conium. As we're looking at Wall Street futures pointing higher to add to the euphoria that we saw on Wall Street yesterday, we're up 0.5% on S&P E-minis, 0.8% on NASDAQ futures, and the stock 600 already up 2%. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Stocks surge and Brent hovers around $100 a barrel on optimism the Middle East conflict may be nearing a conclusion. President Trump says the Iran war could end within 2 to 3 weeks and the U.S. would leave other nations to resolve the Strait of Hormuz. Plus, OpenAI's valuation tops $850 billion after one of the biggest transactions in history, boosting its expensive push for more chips, data centers, and talent. Let's look at where we are on a host of assets across a host of asset classes. This is the oil price. This is the oil price right now. We're down by 2.7% on the Brent price, just hovering around that $101 a barrel. Interestingly, WTI has dropped below $100 a barrel at 98.13. There's the oil price for you again. S&P futures then with all of that in mind and the positivity we saw on Wall Street yesterday that has since gone around the world. We do see further upside and US stocks are expected to go higher at the start of trade. The US yield in focus, yields globally in focus as we see bond buying continuing, yields coming down. Are we worried about growth? Are we thinking about the end of the war in Iran? All of that in the mix. And spot gold, interestingly, up by just over 1%. Let's have a look at how European equity markets are playing today's news flow. Is this just, quote unquote, a lot of short covering? Is this something more than that? Does it still tell us something very useful about the level of risk appetite we have in these markets today? We're up by more than 2% on some of these markets, including the DAX. Let's also talk about where we are on some of the key US stocks in focus. Nike out with numbers last night in after hours. We saw the stock slump by 9%. You can see in pre-market it is down by more than 9%. A gloomy outlook coming through from this sportswear manufacturer. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Anna Edwards, live in London. Brent crude has been oscillating around that $100 a barrel mark. It's down substantially this morning, down by 2.4%. In fact, we've seen the price of oil has been dropping. President Trump saying he expects the U.S. will end its involvement in the Iran war within 2 to 3 weeks. We have not had any confirmation that the Strait of Hormuz will be opened as part of that, but we will be hearing from the president later. The White House says that the president will address the U.S. nation, of course, tonight to provide an update on the situation in Iran. Let's talk to Bloomberg Horizons anchor Jemana Basechi, who's in the region for us, in Dubai for us. President Trump setting out a timeline there from the U.S. perspective, and Iran seeming to signal that they're at least willing to perhaps talk. What do we make of the latest news flow and how that's playing out then, Jemana, in the region?
Yeah, well, certainly markets are reacting to these comments that came through from President Trump overnight, suggesting a 2 to 3 week time frame by which they expect to wind up their military operations. Now, we don't know how concrete this time frame is, and indeed, over the course of the war, which has been going on for more than a month now, we've heard several timelines. It's sort of shifted as the war has evolved. But I think today the takeaway is that there is optimism that the U.S. may be thinking of ending their military operations because, according to President Trump, they have achieved most of the objectives that they set out to achieve, including the main one, which is ensuring that Iran doesn't develop the capabilities of a nuclear weapon. Now, what was not mentioned was, number one, the fate of that enriched stockpile. So, again, there was no comment about that. It will be interesting to see whether it actually comes up in his address this evening. And the second point is he's sort of delinked the military objectives to the reopening of the straits. And this is sort of in line with the reporting that has come through in the last 24 hours, in which it seems as though the U.S. now thinks that this is a broad global issue that needs to be resolved as opposed to a U.S.-specific issue. And there's some questions as to whether or not other countries around the world, including some of these Gulf nations alongside European nations, would actually be willing to form a coalition to help reopen that strait. So that's one question mark still outstanding for where we go from here. And then final point, Anna, is let's not forget there are more military assets still arriving into the region. We spoke about this on Friday, that first Marine Expeditionary Unit arrived to the region, and then Bloomberg reporting overnight that another aircraft carrier, the George H.W. Bush, has left California now, is on its way to the region as well. That will take another 2 to 3 weeks to arrive. So there's still a buildup of military assets. At the same time, the strikes and counterstrikes overnight have continued, and it's been a very actually intense 24-hour period for many of the Gulf states with incoming projectiles.
Yes, and with that in mind, Qatar saying that a missile hit an oil tanker as strikes, as you say, continue, Jumana. Take us into a little more detail around the role that we might see the UAE playing. We've seen the Wall Street Journal reporting that the UAE is preparing to help open the Strait of Hormuz by force if necessary, which would be a big step, wouldn't it? It would be the first Gulf country to really get so involved.
I think what's clear from all of this is an outcome in which Iran still exerts sovereignty or control over the Strait of Hormuz is not an outcome that's acceptable to Gulf Arab states, and indeed probably not to any nation around the world. We need to go back to the status quo that existed before the war, which allowed for the safe and free passage of vessels through that Strait of Hormuz. So Wall Street Journal reporting overnight that the UAE, and perhaps alongside support from Bahrain, will be putting forward this motion, a resolution at the UN Security Council to potentially get involved with reopening the Strait of Hormuz by force. And it's unclear exactly what that would mean, but the idea would be for the UAE to assist the US with any military operations should they want to get involved in reopening the strait via naval escorts, via military operations, via using some of their bases as launch pads, perhaps to launch some of those operations, even going as far as taking over some of those little islands that are situated close to the Strait of Hormuz. But I think the takeaway from all of this is that there certainly is a lot of work being done behind the scenes on how you can bring together a group of nations, and perhaps not just the US alone, to come to some resolution for the Strait of Hormuz. If it's not diplomatic, then it will probably most likely have to be military.
Jumana, thank you very much. Bloomberg Horizons anchor Jumana Basechi with the latest from the region. Let's think about what this means for the global economy. Janet Henry joins us, Global Chief Economist at HSBC. Janet, nice to have you with us this morning. So we were just hearing the latest from Jumana. Day after day, we get these updates about the violence that continues, the war continuing, but the markets react to the latest news lines and what they sense as any willingness to either leave the region, in the case of the US, or talk, in the case of the Iranians. Does any of this change your base case? What kind of base case are you still clinging to around these events?
Oh, very good question. As you say, financial markets are important. Any good news, if financial markets are more buoyant, then that's good for financial conditions. But as Jumana explained, there's just so much we do not know. We do not know whether it's going to take a diplomatic route, a military route. We still don't know about the direction or the timeline for any resolution of the conflict, and indeed the reopening of the Straits of Hormuz. So the fact is, our base case, what you might now describe as a good case for the global economy, is indeed that the Strait of Hormuz does reopen in the course of the next couple of weeks. But of course, every day that passes, the likelihood of our good case becoming a little bit worse would tend to increase, because damage has already been done to the global economy.
Yes, absolutely. And so if we can think about that scarring to the global economy from the damage that has already taken place within the region, so attacks on energy infrastructure in particular that will take time to fix, and supplies that will take time to reinstate. Even if we did see, let's take President Trump's latest time scale, if they left in 2 to 3 weeks, if there was some way for then the Strait of Hormuz to be reopened, that's a huge if. But if we can assume that's the timescale we're dealing with, what kind of damage will be done to the global economy if that's the case?
Well, at least for the next few weeks and probably beyond, we've got the uncertainty angle. Decisions are not taken. Investment decisions, hiring decisions are not taken. But the cost increase, which we have seen, obviously we all follow the spot oil price minute by minute to see where it's heading. But we also know physical supplies are an issue, and actually a lot of trading is happening at a much higher oil price. We obviously see what's happening with jet fuel, diesel, and all of these other derivatives. So certainly, based on our good case, we did already cut our numbers for global growth, because of course this conflict is having differing impacts on different regions and different countries of the world. We did trim our global growth numbers. We raised our inflation numbers globally by over 1 percentage point, and that was just based on oil prices peaking around 120, staying a bit elevated, but actually dropping back quite swiftly towards, by the end of the year, in the low 70s. So yes, you get this impact on inflation, but the indirect effects are a bit more limited. You don't get the second round effects into wage growth. Central banks don't have to respond with the aggressive tightening that might be anticipated, but there is still worse growth, higher inflation, and there is still some scarring effect because obviously what's happening on gas supplies, we know the hit to Qatari output is going to last multiple years.
And talk to us about where you would see positivity for the global economy. I mean, not for the economy as a whole, but where are the geographies that are set to benefit from the higher oil price? So clearly oil exporting nations come to the fore, and maybe some of those you're having to upgrade your expectations.
Well, it's, as I make the point very clear in the report, there are no outright winners from this. There are relative winners and there are relative losers, and the relative winners are currently those oil exporters outside the Middle East. So actually Russia, Canada, the US, net oil exporters, and top of the list would be Norway, because Norway, obviously a massive net oil and gas exporter, but also doesn't use that much oil. It's at the forefront of renewables, of electric vehicles and such like. But actually, even for those net exporters like the US, this is bad news for the consumer. The squeeze on real incomes, how that will weigh on consumer spending, and the uncertainty angle, if costs are going up for companies as well, they're not getting the same fiscal support there, that their costs will rise as well as all of those other cost increases that you've already been talking about this morning, but they are the relative winners. Latin America's a bit in the middle because obviously they've got a mixed exposure in terms of net exporters, and as I think there is this growing acceptance of, relatively speaking, it is Asia, China a bit less so, Asia and Europe that are the relative losers in this, being the net energy importers.
Okay, so that's the relative gains and losses.
Yes.
What about the stagflation risk for the countries that are most exposed negatively to all of this, Janet? I get lots of messages from viewers talking about, well, isn't this just stagflation? Is that where we're heading? Take us into your definition and when you're prepared to use that word.
No, that is a very good question, because actually the other point I wanted to make on Europe and Asia, they also rely on global growth because they've got the export channel to consider as well. So stagflation, of course, this is something that Chair Powell got quite firm about at the last press conference, didn't he? You know, he absolutely dismissed that term stagflation, which was very much coined in the 1970s when you had inflation that was well into the double digits, accelerating inflation, deepening recessions and rapidly rising unemployment. So yes, if by the end of the year you've got 5-6% inflation in Europe or in the US and you've got unemployment at 5 or 6%, yeah, I think that's absolutely what you would associate with not quite 1970s, there are a lot of differences, but outright stagflation. But of course, there are a lot of other factors related to that, and we now have much more credible central banks who are much more willing to act at a much earlier stage.
Okay, interesting. It doesn't have to go to double digits to use that word. Janet, thank you very much. Thanks for joining us. Janet Henry, Global Chief Economist at HSBC. Coming up on the programme, the succession battle engulfing Banca Monte dei Paschi. Up next, we will be speaking exclusively to CEO candidate Luigi Lovaglio. That conversation right here on Bloomberg TV. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Geo report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back, everybody. This is The Pulse. Let's talk about Italian banking. A fierce succession battle has engulfed Italy's third largest bank, Monte Paschi, ahead of the expiration of the current CEO's contract. The board declined to back Luigi Lavaglio's renewal, instead proposing external candidate Fabrizio Palermo. But the turmoil escalated further when Lavaglio then decided to propose himself as a leadership candidate for Monte Paschi, with the backing of one of the lender's shareholders, PLT. And Monte Paschi's board subsequently stripped him of his powers. Complex story. And Luigi Lavaglio, I'm pleased to say, joins us now. Luigi, thank you very much for your time. Thanks for being with us. So the Paschi board last month refused to back you for a new term as CEO. Do you fully understand why they made that decision?
Let me say the following. That is, I think, the most important thing for our shareholders. I feel comfortable to be part of the slate of PLT because I think I have always delivered results for our shareholders. Market knows my track record. When I commit to a plan, I execute it, and I strongly believe that continuity, execution is crucial at this stage for unlocking the second stage of value creation for our shareholders.
Okay, so those are the reasons you think you should have the job, Luigi. Do you know why the board, though, decided not to extend your term?
I think honestly is not the key point. The reason, I think what is important, that I feel fully committed to deliver the plan, and I am really glad to have the opportunity to join such a qualified list of Mr. Tortora, right? PLT.
Okay, and you have decided then to run for CEO anyway. Is there a chance, do you still think there is a chance that you get a new term? Will you still be successful, do you think?
I'm confident. I remain confident because I'm fully committed to the bank, to its people, and I believe my commitment will be recognized by the market as they just have in the last 4 years.
Some investors have expressed dissatisfaction with the plans you had for integrating Mediobanca. Do you think that is the reason that the board took the decision?
I think the plan was well assessed. We have several feedback from investors. The plan is okay. I think at that time there was several situations that impacted on the price of the shares, among which also the fact that we didn't publish the exchange ratio in exchanging the share on Mediobanca with Monte Paschi. So the plan, I believe, is a good plan. We are delivering 60 billion of total remuneration for our shareholders. So I think is a plan that is positioning the bank at the very high level, considering that we are practically reaching the third place in the banking sector.
If the board, though, does have a problem with your plans around the integration of Mediobanca, Luigi, would you be prepared to change those plans at all?
No, the plan, I think, is well done, will not be changed, and I believe this is the key message that we can provide to our shareholders. The plan is there, and is a very efficient plan, and I'm sure will provide a high level of remuneration for shareholders, at the same time will positioning the bank for the next stage of consolidation of the banking sector.
Mediobanca has a large stake in the insurance company Generali, Luigi. As part of your plans, what would you plan to do with that?
I think, as I was mentioning last year, Generali is nice to have because it's bringing a correlated bulk of revenues, and is quite important, can be a further optionality for the bank assurance business. So we look at Generali as an important element of our business plan, but our strategy is much more oriented in corporate investment banking, private banking, and the typical commercial banking.
So long term, would the plans be to not be involved with Generali?
I think, as I mentioned, it's important to have Generali, but our focus strategically is in making the group growing and delivering what we promised with the plan.
I think that I understand Italian prosecutors are investigating the activities around the Mediobanca deal. They're investigating you and some of the Monte Paschi investors over the way that the Mediobanca deal happened, Luigi. Can you tell us any more about that? What more can you tell us about the probe?
No, I think as the investigation is ongoing, we are very confident that at the end everything will be clarified. The project is a project for me was very important. I thought about Mediobanca since 2022, and finally I succeeded in implementing it with the support of all the people, all shareholders of Monte Paschi and shareholders of Mediobanca. So to have 86% acceptance rate in delivering the share, I think is a recognition of the validity of the project and our capability to deliver results.
Does the probe, the fact that the probe is taking place, Luigi, does it make it harder for you to be CEO of the business?
No, I think the bank confirmed on the 5th of December my full fit and proper. Then there was another one in mid of February, and I believe, considering the stage of the investigation, this is not an issue for me to be CEO of the group.
Do you think the probe is an issue for the board? Do they cite that as the reason why they don't want to extend your contract?
Honestly, I don't think so, but anyway.
Yeah. We'll have to ask them. The board has obviously stripped you of your CEO powers, Luigi. I wonder what you consider to be your current status. Do you still consider yourself to be CEO of this bank?
No, first, I am still a board member of Monte Paschi, even if I'm today speaking from personal point of view, my personal point of view. And it's clear, I believe that is important that this project will see the completion. And I think I know the project quite well. I am extremely aware about what is necessary to be done, and that I would like to complete the project for the interest of all the stakeholders.
Okay, Luigi, thank you very much for your time. We really appreciate it. Luigi Lavaglio, the CEO candidate for Banca Monte dei Paschi di Siena. And stay tuned tomorrow on this programme. We will be speaking to the CEO candidate put forward by the Monte Paschi board. That's Fabrizio Palermo, and we'll get his perspective on this conversation. Let's pivot to the earnings story out of the United States. We heard from Nike. Pre-market shares, we'll put those up on your screen. And this comes after Nike gave a surprisingly gloomy outlook for the year ahead. Andrea Falstead joins us now, Bloomberg opinion columnist, of course, who writes about all things fashion and much beyond, Andrea. What seems to be the issue at Nike then? Pre-market, the stock down by 9%, that the outlook was a little gloomy.
Indeed, and what seems to be the issue here is not the kind of products for sport, it's the kind of fashion, casual, athleisure products. They are down by double-digit sales, US, Europe and Greater China. So that really has hurt the turnaround story.
And so that's the issue. This is around the fashion, more fashion side of the business rather than the performance side.
Yes.
And how is this complicating the turnaround that the new, relatively new CEO still, I think, is trying to enact here?
Well, I mean, Nike's a big business to turn around, and to be fair, he has started with performance. He set about putting sport at the heart of Nike's strategies. He's concentrated on running, where they are having some successes. They've got the World Cup coming up, unveiled lots of new products and innovations for that. Now he's got to really turn his attention to the sportswear lifestyle side. And what they really need, they need a big hit. They need a style that maybe starts off with performance but crosses over to the mainstream. And, you know, they had that with the sort of chunky basketball sneakers. They've really gone out of fashion now, so they're trying to clear the decks of those. What they haven't really got is something to replace that. And we've seen the fashion cycle changing away from athleisure to more sophisticated casual. And where we are wearing sneakers, we want slightly dressier. Yeah. The hybrid sneaker.
And
like
is that too much to expect from Nike? Just briefly, Andrea.
I think they can do it, but the product cycles are long, and Adidas is stronger in those areas.
Okay, Andrea, thank you very much. Keeping an eye on our wardrobes and helping us understand the investment case around these businesses as well. Andrea Felster, thank you very much indeed. Let's quickly check on US futures. So we take on board what we're seeing on the Nike share price, and that is of interest. But the overall story, of course, very much influenced by what markets are now expecting to see from Iran, the US willing to leave, the Iranians willing to talk. All of that adds up to risk appetite, and US futures are higher. Coming up on the program, though, we'll talk about technology, why McKinsey believes arenas and omniscalers, we'll explain both of those, will direct future global growth. Details next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London. It's just gone 9:30 here in London, and here are your top stories. Stocks surge and Brent hovers around $100 a barrel on optimism the Middle East conflict may be nearing a conclusion. President Trump says the Iran war could end within 2 to 3 weeks, and the US would leave other nations to resolve the Strait of Hormuz. Plus, OpenAI's valuation tops $850 billion after one of the biggest transactions in history, boosting its expensive push for more chips, data centers, and talent. Let's talk about what's happening with gold as we see risk assets rally. Where does this leave the precious metal? Bloomberg opinion economist Marcus Ashworth says that gold is currently failing as a safe haven asset, instead acting as a piggy bank for nations facing economic strain. In fact, we've seen a number of central banks selling gold holdings. Let's put that question to him. He joins us now. Marcus, good to speak to you. So why do we see central banks selling gold?
Well, because they need to. The point is that this reserves management are there for the rainy day, and this is it. Now, that could well be, you've seen situations like Australia, for instance, having cut their fuel levies. We've got clear, serious problems in the Philippines. We've got Turkey having to protect its currency, likewise with Russia. The Polish have even been looking, before the conflict really, at selling some gold to pay for more defense. Quite clearly, the Middle East have got some issues whereby you could imagine they might need to spend an awful lot more on defense and moving some money around. At the end of the day, gold has done extremely well the last few years, and it's an easy thing to sell, and it would make some prudent sense anyway, just on a reserve management basis, which they often move allocations around on what things between bonds and equities and currencies. So gold should not be immune from that.
Okay, but if these are holdings that central banks have, Marcus, then how does that help fiscal actors with the strains that you're right to point to?
Very good question there, yes. Should they, of course, the independence of central banks, well, it's managing money on behalf of the country. So there are ways and means that, and certain countries have different rules and regulations and approaches than others. But, as I said, countries diverse as Poland, Russia, Turkey, and various other Middle Eastern countries can do different things. We see the Swiss doing different things than you might talk about with, for instance, something between the Bank of England and the government. But I mean, likewise, the Bank of England does indeed help out a lot in the gilt market. So, look, I'm not saying this is going to be for every country. I'm not going to say it needs to be for very much. And some countries will be buying gold on a dip because they still believe in diversifying away from perhaps over-reliance on maybe dollar assets. So it's just a two-way market, I think, whereas the last couple of years it's been a one-way, upward-only, speculative vehicle. I think gold has changed its nature.
Okay, so that's interesting. So there's a different kind of take to the markets these days. So if central banks and other authorities have been buying gold because they wanted to manage some of that risk that they saw with too much of their holdings being exposed to the dollar, does this tell us anything about de-dollarization, or is that a different story?
Well, it's a complex question, but I mean, I think you have to look at it in two ways. There's usage of dollars in day-to-day activity, which I think has actually increased, and we're seeing strength of dollar, people moving as a sort of safe haven, though it hasn't been brilliant, but there have been not very many at all havens, including gold, in this recent crisis. So, and then what central banks or sovereign wealth funds use as their reserves management, which is to buy and hold and keep for the rainy day. Every now and again, that might have to be tapped into, like for some countries now. So usage and then, what we would call sort of reserves management are two separate things. They're interrelated, don't get me wrong, but I think it's careful to conflate the situation with the dollar, which is, as the world's reserve currency, is perfectly sound in that context, and indeed maybe as a reserve management tool, it's less attractive over time, and I think that hasn't gone away, and I'm sure gold will hold up perfectly well. As I said, some countries may see this opportunity to buy more. Other countries will use it as a chance to trim some profits and use it to do things that they may do to support their currency by defense or indeed help the economy with energy problems.
Marcus, thank you very much. Thanks for the analysis. Bloomberg Opinions, Marcus Ashworth with his take on what's happening with gold prices. Let us talk about technology and the way that it is growing. Since the Iran war began, the global economic outlook has been shaken and shaped by traditional industries, commodities, shipping and physical exports. Now we've got a new McKinsey report published recently saying that the future global growth story will be written by 18 future arenas, as they call them, arenas of competition, including AI services and space. Here to talk us through the findings, Chris Bradley, director at the McKinsey Global Institute and McKinsey senior partner. Chris, nice to have you with us. Thank you very much for joining us early your time, I think, on this subject. I say this is about where technology is growing because you've homed in on 18 future arenas of change, and you did this some time ago, and now you're giving us some further analysis. How much faster are these arenas growing? And give us a sense of which parts of the economy we're talking about.
Well, it's a fact we've discovered that in recent industrial history, industries that count for about 10% of revenue actually make up half the value creation. So we've got this really interesting story where kind of a small number of industries really are shaping our industrial landscapes. We call them arenas. They're places that have big end markets, new technology trajectories, and kind of this flavour of competition, which is more like a race. And in terms of growth, you know, if you took out the 18 next arenas in the last 3 years out of the large companies, then there would have almost been no growth in corporate revenues. So these 18 arenas are explaining almost all growth in corporate revenues and have explained half the growth in market cap. They're screaming ahead at an annual rate of 29% market cap growth versus kind of the normal industries at 8%. Quite an unbelievable story.
Okay, and so some of the areas we're talking about here, I mean, there's the obvious things like AI and cloud. You're also talking about EVs, video streaming, video gaming, obesity drugs, nuclear fission gets a mention, batteries, a whole host of different sectors, Chris. You also say in your report that we are all in these arenas now, or maybe you mean increasingly so. I wonder what you're describing there.
Well, if you think about these arenas, and by the way, you're right, it does. AI foundations is a really big part of it, but and the continuing march of digitization, that's not finished yet. But also hard tech, and this is the physicalization of technology, electrification, and the entry technology in molecules and DNA as well. So they're the kind of platforms we're talking about here. So they're the kind of platforms that we're talking about.
And when you say about physical technology, where do you see the growth coming from there? Is that about physical AI? Is it about robotics? Or is it about hardware versus software? Where are the real growth areas when it comes to physical technology?
Well, it's things like robotics and semi-autonomous vehicles. For example, we note in our report that in San Francisco, a Waymo is already the second most popular form of transport behind an Uber. So we see these things really, they're not theoretical anymore. And when you say we're all in the arena now, what we really mean is over $1 in $4 of market cap in the world is now in these arenas, only 18 places. While maybe, and that number, by the way, maybe 15 years ago was more like 5%. So these used to be things kind of on the fringe that you could think, hey, they're interesting technologies, but now they're so close to us. It's almost like they're stars that have come so close to us that they affect the gravity field that all of us are in. And we're either in an arena, we're next to an arena, we're downstream, we're upstream from them. They are affecting us everywhere.
And maybe we're more likely to be in one of these arenas if we work and live, Chris, in the US or in China. You say that 90% of the market value of these 18 arenas is in those two countries. Where does that leave the rest of the world?
Well, this is a really interesting question for Europe, isn't it? I mean, in the States, these arenas are about 37% of the market cap, so a really big chunk of the stock market there. But in Europe, that number's only 7%. And what it really reflects, Anna, is capital allocation. In the US, these 18 industries account for more than 1/3 of CapEx and R&D. But in Europe, much less than 1/10. And, you know, in fact, the surge of investment that's happening in the US is because of these arenas, and it's not happening in Europe.
And you talk about, and we talk in that investment context a lot about hyperscalers, Chris. You in your report talk about omniscalers. Help me understand what these are, what they bring.
Well, we wouldn't be McKinsey without creating a new slogan, would we, around omniscalers? And these are 9 companies that not only are among the world's biggest investors, so they spend 20 billion plus a year on capex and R&D, but they also play in 3 or more of these 18 arenas. And it's a surprising new development in the way competition works. So who would have thought maybe 5 years ago that a social media company, a space company, an EV company, an AI company would actually have synergies together and have an industrial logic. But that's the world we're in. And these omniscalers, they really matter. Let me just give you a sense of the scale here. They generate $640 billion of operating cash flow last year. To give you a sense, that's like much bigger than the private equity market. It's 3 times bigger than the IPO market. In fact, it's on par with the amount of new loans that US banks make to businesses every year. So these are kind of giant, their own weather system. But not only do they generate a lot of cash, they spend even more. They invested last year $800 billion.
Chris, thank you very much. Thanks for bringing us the headlines of the report. Chris Bradley, Director at the McKinsey Global Institute and McKinsey Senior Partner. Thank you very much for your time. Coming up, we will continue to talk about technology a little further from home, preparing for liftoff, how NASA is attempting to return humans to the moon, and around it for the time being. For the first time in 50 years, that's next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back to The Pulse, everybody. This is The Pulse on Bloomberg TV. I'm Anna Edwards here in London. Now, later today, NASA is scheduled to send astronauts back to the moon for the first time in over 50 years. The Artemis II crew will test a spacecraft that's to play a key role in America's return to our lunar neighborhood.
I think our generation appreciates having a program that now we get a chance to take our own moonshots, what we call great things that humans accomplish.
NASA's Artemis program is the space agency's ambitious mission to send humans back to the moon for the first time in more than half a century. The last time NASA sent humans to the moon, they were locked in a space race with the Soviet Union. This time, NASA wants to go back to the moon to stay in order to learn how to live sustainably off of the lunar surface.
4-stage engine start.
Prior to Artemis II, NASA launched the very first major mission in the Artemis program called Artemis I, which sent the Orion crew capsule around the moon to demonstrate that they could work without a crew on board. Now it's time to show that they can actually keep a crew alive while traveling to deep space.
Our goal is get to the moon and get back. 4 days out, 4 days back.
We are going to do as much science as we can on the way. And on the far side of the moon, we're going to have maybe 45 minutes where we're in a loss of comm with Earth. And all we can do is just train our eyes on that moon surface.
The entire Artemis program has come under significant criticism for how much time it's taking to build and how much money it's costing the taxpayer. There is an estimate that between 2012 and 2025, the Artemis program has cost roughly $93 billion. Despite the criticism, it does benefit from strong congressional support. Many of the programs that are needed for Artemis are spread across the entire United States and provide a lot of jobs for constituents. While the Artemis II mission is coming up, Artemis III, Artemis IV, Artemis V are all a bit of open question marks at the moment. There's development that needs to happen for hardware, notably with the landers that will actually take the humans to the surface of the moon. NASA is pulling out all the stops with its contractors to ensure that a landing occurs no later than 2028, but it remains to be seen if that date will actually be possible.
Let's discuss then with Blethen Bowen, who is Associate Professor in Astropolitics at Durham University and Co-Director of the Durham University Space Research Centre. Blethen, thank you very much for coming to talk to us. So I wonder why you think this is happening now. We just heard there how 50 years ago this was about the space race, competition, global geopolitical competition with Russia. Why does it make sense to do this again now?
Well, the Artemis program is the culmination of around 20 years now of effort to return American astronauts to the moon. This began as the Orion program and the Constellation program under the George W. Bush era 2 decades ago. And the funding was nothing like it was for America in the 1960s. So it has taken this long to get to the point where the Americans are at now. China also has been working along similar lines with the ILRS, and they have been working on a crewed spaceflight program of their own for over 20 years as well, with their first human spaceflight into Earth orbit in 2003. So what we're seeing right now is a culmination of decades worth of less frantic technology development and research in human spaceflight between China and America compared to the race of the early 1960s.
So shadows of the past, perhaps there, Blethen. If this is about astropolitics, I wonder where this all leaves Europe. You said in your notes ahead of our conversation today, you pointed out that Europe has played a key role in the Orion service module, which is part of the Artemis program. It had also hoped to play a big role in the Gateway space station, mini space station that was going to be orbiting the moon. But now questions being asked about the status of that. Is Europe at risk of being cut out here? Where do you think this leaves Europe?
So Europe has played an important part with the direct Orion missions here, of course, with the service module, as you said, but the Lunar Gateway is a different story. So Europe, of course, would be very disappointed with the Gateway decision, but it's hardly a surprise. We sort of known that the Americans were leaning in this direction of cancelling the Gateway for a couple of years now, really. But it leaves open a question mark as to what will be the nature of Europe's cooperation with the United States in a larger Artemis program framework. What will be Europe's contribution to perhaps future missions, which will rely more on perhaps SpaceX or Blue Origin missions and technologies, as opposed to the SLS and Orion systems. So the European Space Agency has a lot of figuring out to do in terms of the long-term place it's going to have in what will be mostly an American-led effort on the moon from Western countries.
Yeah, so should Europe then, Blethen, focus on pivoting to a new role in the Artemis program under the US, of course, or should it try to focus on building up its own independent space capabilities? Take us through where the strengths and weaknesses there might lie.
none of these options are particularly cheap. So if European politicians and bureaucrats are looking for a cheap option, they should get out of the astronaut game now. However, if significant amounts of funds are wanting to be spent, then either of those two options of perhaps finding a new role in an American-led program or a more independent one are going to be difficult. The challenge with, of course, going with the Americans is that a similar thing to the Gateway happens again, that Europe finds a role in the American program, but America unilaterally decides once again that they don't want to go for this anymore, and Europe is left in the lurch again. The challenge with a more autonomous program is that Europe needs to build a lot of the capabilities that it doesn't currently have to fill in the gaps which America currently provides. So Europe already has its own astronaut corps, the European Space Agency, but it doesn't have the core rocket lift capabilities to launch very heavy objects, including human-rated craft, perhaps as far as the moon as well. And Europe's launch program is at capacity for the foreseeable future as well. So Europe has certain bottlenecks in technologies that will take a long time to address. But if the ambition is over 20 years, and the money is there to do it, Europe could do something on more independent footing if it really wanted to.
And Blethen, how seriously should we take, I mean, I guess you call them moonshots, if you pardon the expression, about business opportunities in space? I'm thinking here about mining on the moon, data centers in space get quite a lot of mention when we talk about technology. How seriously do we take these talking points?
I don't really take them seriously at all. The economic potential of the moon is not something I think I will live to see. The government spending will dominate whatever a lunar economy will be. It will be something like Antarctica. It'll be a place purely of exploration, of science, and for some perhaps adventure and tourism. It's a very hostile, dangerous place, and we barely know how to do anything on the moon. There is so much about the moon we don't know. Getting there is still extremely expensive, even with the reduction in cost that's happened in the last 10 years with companies like SpaceX. And the amount of resources that you could extract from there are more easily accessed on our own planet for the time being. So the cost proposition just doesn't make any sense right now. So for the foreseeable future, there is no economic nor military benefit to anything on the moon. So it'll be just science and exploration for the foreseeable future.
Okay, we'll keep our feet on the ground then in that context. Blethen, thank you very much. Thanks for joining us. Blethen Bowen, Associate Professor in Astropolitics at Durham University and Co-Director of the Durham University Space Research Centre. Geopolitics here on Earth now. We have President Macron of France meeting with the Japanese Prime Minister Sanae Takaichi. They're talking about the Iran war, the Middle East, tensions spilling into the global economy, of course. They're talking about that topic. They're also going to be discussing rare earths. There's an expectation that we see a signing of a rare earth deal. I'm reassured that those are live pictures of Macron. There we go. We can just about see him. He is, and the Japanese Prime Minister. I think we can see her as well. But there we go. Those are the two global leaders who are meeting right now. Let's pivot to a different conversation around tech here on this planet. OpenAI has raised $122 billion in new funding, valuing the company at more than $850 billion, making it one of the largest fundraising deals in history. It's been backed by Amazon, Nvidia, and SoftBank, and the move underscores strong demand for AI, even as costs to scale the technology continue to rise. For some analysis of what this story means, let's get to Mark Bergen, who joins us here on set from our Bloomberg team. Mark, good morning to you. So how significant is this round of funding that OpenAI now has? $850 billion.
Yeah, I mean, sort of record-shattering. This is something that's been in the work for a long time. I think it's certainly the size, not just the size of the amount of the round, but the contributions from SoftBank, from Nvidia, and Amazon is a fairly new party here. And you know, some of this, which we've written about quite extensively, you know, some of this money coming from Amazon and Nvidia's going to OpenAI and coming right back to Amazon and Nvidia for a cloud in the chips, and so that's this really fascinating dynamic that's been happening for years now in this industry. These kind of circular deals, and Amazon deals contingent on OpenAI hitting certain thresholds and milestones.
Yes, and let me ask you specifically about those then. So this is quite tantalizing. The Amazon investment is dependent on OpenAI going public or, is it and or, I'm not sure, achieving artificial general intelligence, AGI. I'm fascinated to know how that's been nailed down with a definition that would satisfy the lawyers.
I wasn't in the room for that one, but once we hit AGI, who needs public markets, I suppose. I think, listen, the concept of when we hit AGI, what AGI is hotly debated and probably will continue to be. And I think OpenAI might come out and say it. Clearly, that's been this major race that Google's competing in, and then Anthropic and Elon Musk. But it is interesting. This is. I think the more interesting element here is the public listing, which is one of the most hotly anticipated, along with Anthropic, along with the SpaceX XAI, and then we'll get to see. I think what was also pivotal about this this round is we're now seeing Cathie Wood and ARK. We're seeing big demand for investors being able to buy into OpenAI.
Yes.
And effectively, I think that we should start treating them like a public company.
Right. Yes, because it's really interesting. They're finding ways to allow kind of retail investors in, aren't they, through these ETFs, maybe with ARK or other routes. Let me ask you about Anthropic as well, because there's been some news flow there. What has Anthropic accidentally done with Claude?
Yeah, this was a fairly major cybersecurity breach here, like opening up the code. And we've been reporting for months now about the popularity of Claude Code is at the frontier of these vibe coding, these applications that are transforming software. I think a key part of that and a key issue with broader enterprise adoption of these tools is their security, right? If you're a company, if you're a bank, if you're a hospital and you want to be adapting these, you want to be on the frontier of AI and adapting these cloud code, you want to know that there's no leakage, that's not to be something that hackers can easily access.
Yes, absolutely. Yes, one investor said no one's going to be vibe coding their payroll. And I think it's reference to that similar conversation and trade-offs there. Mark, thank you very much. Bloomberg's Mark Bergen on the tech beat for us. Don't miss an interview with Admiral Pierre Vandier, NATO Supreme Allied Commander for Transformation. That's at 12:30 London time in the context of US doubts around NATO. That could be a really interesting conversation. Up next, Bloomberg Brief. This is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
People would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. With or without a deal, President Trump says the Iran war could end within 3 weeks, even as attacks continue. Stocks get a major boost. Benchmarks around the world march higher while oil drops below $100 a barrel. And OpenAI wraps up a massive funding round, $122 billion. More details on that coming up. Let's look at these markets then. I want to believe. That's what Paul Donovan entitled his note this morning, and that's what markets want as well. After yesterday's massive rally, the Nasdaq 100 up 3.4%, the Mag 7 up 4.5%. And if you look at the board, you'll see why. We have Brent crude now trading at $102 a barrel. If you can believe it, just a couple of hours ago, it was actually below $100 a barrel. New York crude actually below $100 a barrel. That's a far cry from where we were at the beginning of this war. Nevertheless, it is much off its peak. Will it stay there? Lots of questions still to be answered. The 10-year yield also down about 4 basis points plus, so the bond market continuing in that direction. If we look at futures, we had a massive session across Asia and into Europe now as well. Nasdaq 100 futures are pointed higher. Gold on track for another day of gains as well. All right, before we get into all of the whys, let's get to some individual movers. Here's Abir Abu Omar.
Good morning, Vonnie. We're inevitably watching big oil today. Big oil companies in the U.S. in the pre-trade market are not doing well, obviously on the back of those dropping prices in both Brent and WTI. We've seen Brent drop to around $102 a barrel, so that's affecting those stocks dropping as much as 3.5% in the case of Occidental, but the rest not doing really well, following the lead of their counterparts in Europe that also opened lower this morning in the midst of wider market optimism and a wider positive sentiment in Asia and in Europe. Now we flip the board, and this is slightly related to the Middle East, but it's also a wider story. Now Nike is also declining this morning, around 10% down in the pre-trade session, and that is on the back of an outlook that is surprisingly gloomy. Now they had their earnings yesterday. The revenue for this quarter is set to be affected by the war in the Middle East. This is what the company said yesterday, but also revenue for the year is set to be in low single-digit numbers, so not doing very well. But we move on to a different story, and that is a stock, Vonnie, that we've spoken about multiple times. Is it SanDisk? Up 170% for the year, and this is on the back of memory chip demand. AI demand is still very strong, and that is impacting SanDisk this morning, nearly 4% gain in the pre-trade session. These are the stocks we're looking at. Vonnie, back to you.
All right, Abir, I think there'll be a lot of big moves today, potentially. That's Abir Abu Omar. And also coming up this hour, head of a Monday Investment Institute, Monica Defend. Our top story, Iran launching overnight missile attacks at Israel, Bahrain, Kuwait, Qatar and the UAE, despite President Trump signaling that the war in Iran may end soon.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons, but we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
Let's get to our team coverage now with Bloomberg's Washington Deputy Bureau Chief, Laura Davison, Emma Ross-Thomas, who covers oil, and markets reporter, Morwenna Coniam. Laura, let me start with you. Markets certainly decided that they were interpreting President Trump as this war will come to an end, but there are so many questions still to be answered, right? Like, if this war is coming to an end, what happens to the Strait of Hormuz, and why is there a third aircraft carrier on its way to the Middle East?
Yeah, there are a lot of questions that have yet to be answered, including, whether Trump is serious about this 2 to 3 week timeline for withdrawing from the war. He has famously in the past set some of these deadlines and then blown past them or completely ignored them as they got closer. So there's a lot of risk here. Two, he has not yet laid out sort of what his metrics for success are, what he and foresees the withdrawal timeline being. And of course, when it comes to the Strait of Hormuz, he suggested that he would leave that to allies in Europe, Asia, in the Gulf region to figure out how to open that up. He suggested that the U.S. doesn't rely on oil from the region, which is broadly true, but because of global oil markets, it means that if that strait remains closed, that global oil prices will continue to be elevated for quite some time, posing both a risk to the global economy, inflation, but also to Trump politically as he faces midterm elections, and his party faces midterm elections here in November.
Emma Ross Thomas, let me come to you and ask you, if the president is pulling out, at least pulling the U.S. out of this war, what's Iran's incentive for making sure the Strait of Hormuz reopens?
Yeah, that's a really good question. And I think, for the oil market, it's all about the Strait of Hormuz, isn't it? And it's not just the violence that we're seeing at the moment, but there's also this talk at the moment, isn't there, about a sort of what the post-war order might look like in the Strait of Hormuz. Instead of being a sort of open international waterway, that Iran might be, they've been preparing legislation on this, that they might seek to extract tolls. You can imagine what the other countries in the region think about that. And so, I guess as you're thinking about what that situation might look like, you have to imagine what Iran's incentive is to maintain a level of friction, right, as you sort of negotiate that position.
Exactly. And Morwenna, equity markets around the world, and it has to be said bond markets to a certain extent, have decided that this war is essentially over for the most part. But you have to wonder why this massive rally, particularly in tech, the SOX index was up 6.25% and so on. This war is going to keep going in some capacity, you would have to imagine, even if it becomes more regional.
Yeah, absolutely. I mean, you say there's a big rally. I wouldn't say they're totally pricing in it all being over. If you actually look at how much, say, if you look at the Stock 600 has fallen since the beginning of March, I mean, we're looking about sort of down 6%. So we haven't even made that up halfway. And likewise in the bond market, yes, we are seeing big drops in yields today, and particularly, in the UK, where we've seen a particularly harsh reaction, I think, to the conflict and the inflation risk. But yields now are, still only sort of back down where they were in the middle of March, not back at the beginning of March. So we're sort of halfway there, but I think that uncertainty is still actually priced in.
And we should point out as well that it was the last trading day of the quarter, which may have had something to do with everything that was being priced in. Laura, let me come back to you, because we are anticipating a speech to the nation, in fact, on the part of President Trump tonight. He's going to want to sound, enthusiastic, to say the very least, and maybe even victorious. What else will he want to get across to the nation?
So these speeches are relatively rare for Trump. This is a time for him to essentially blanket the airwaves. All the networks will take this live. It's a speech at 9 p.m. Eastern time, and typically these addresses have more of a somber tone, more serious. And Trump, like all presidents, sticks to the teleprompter versus speaking off the cuff, as Trump is one to do. But this is an opportunity for him to sort of give the message that he wants to resonate with people, with voters, as he makes this decision to back away from this war. Whether that is setting out what he sees as the successes here, what he sees as the economic consequences or lack thereof. This is his moment to sort of make that case. Typically, we would have seen an address like this before the war started. We never saw that, but now we're seeing, as Trump is trying to control the message, as this war has become more unpopular, as prices have risen, gas prices, for example, hitting $4 this week in the U.S., he's looking to have a little bit more control over the messaging, even as the geopolitical situation has gotten out of his grasp.
Emma Ross Thomas, one of the questions for the oil market now is, if Trump does pull out and Iran keeps the strait closed, does Trump then have to get involved again, right? Or can the U.S. go it alone and leave it up to everybody else to sort out their own oil price mess and their own Strait of Hormuz mess?
Yeah, it's interesting, isn't it? I mean, I guess it's a big question mark whether what the Europeans do. Weeks ago, we had Macron making noises about, putting some coalition together, but very much the idea was that that would come after the conflict has subsided. The other thing I think to keep an eye on are these sort of bilateral negotiations between Iran and other countries. We've had a few ships going through the strait, and we think that is probably as a result of some government-to-government talks, some payments being exchanged, and so I think that there'll be, on the one hand, the military piece, but on the other hand, sort of bilateral negotiation. And again, going back to the other producers in the region, again, that's their worst nightmare. They absolutely do not want to get into negotiating with Iran safe passage.
Morwenna, do equity markets care why oil is coming down, or do they just care that it is coming down? And if it starts going back up again, will we see you selling again?
Well, I think, it comes down to the inflationary risk, and actually we are seeing a lot of companies starting to price that in into the outlooks, coming into a lot of the commentary. So I think if it does come back again, that will obviously amplify those concerns. I think it falling a certain degree, as you pointed out earlier, we're not back where we were at the end of February. We're still looking at inflationary risk. I suppose how prolonged it is, how prolonged those higher energy prices persist affects the way in which companies are able to hedge those risks and their longer term planning. But I think, obviously we are seeing movements in sort of tandem with how the oil price is moving. But I think the actual sustainability of a continued retrenchment is quite important to the equity outlook longer term.
All right. Our thanks to all of you. That is Bloomberg's Laura Davison and our Deputy Washington, D.C. Bureau Chief, Emma Ross Thomas here in London, and Morwen Iconium also here in London. Thank you. Turning to tech now, OpenAI has raised a whopping $122 billion in its latest funding round. That's an $852 billion valuation. Marking that the firm's largest round to date. The biggest investments include $50 billion from Amazon, $30 billion each from Nvidia and SoftBank, and also some retail investors involved here as well. Let's bring in Matt Bloxham of Bloomberg Intelligence for more. Matt, why does it need the money? What's it going to do with it? So our Matt Bloxham is with us in our London studio, and just curious, Matt, this massive funding round that's going to raise, basically $120 billion for OpenAI. What will it do with some of that money? That's a significant amount of cash. We're going to return to the subject in just a moment. Some very important questions to answer. But we are going to look at some other stories trending on the terminal this morning. Wall Street's biggest private credit firms will be facing questions from Democrats on the House Financial Services Committee. According to Bloomberg sources, Blackstone, Ares, Apollo, Blue Owl, Carlyle and KKR will all be among those who will be questioned about how they market, value and handle private credit. Spokespeople for the firms declined to comment or didn't respond to messages seeking comment. Anthropic accidentally released source code for its Claude AI agent caused by human error. The spokesperson said no sensitive customer data or credentials were exposed. Still, the incident is raising questions about Anthropic's operational security. Greece has been upgraded to developed market status by MSCI. It's a major milestone for the country, whose markets were demoted over a decade ago during the 2013 debt crisis. The reclassification will officially be made during an index review in May of 2027. Coming up, Nike CEO Elliott Hill's efforts to turn around the business are complicated after a disappointing earnings call. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg. Good Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline, bad news, is bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. We want to bring you now to Keir Starmer, who's actually making a speech. Obviously, the predominant topic is the Iran war, and he's telling the nation that they're exploring every diplomatic avenue to reopen the Strait of Hormuz. The Foreign Secretary is going to host a meeting of 35 counterparts. Once again, this is Keir Starmer saying it's not going to be easy to make the Hormuz Strait safe, but the UK is well placed to weather the effect of the Iran war, and the UK is ready to provide clear and calm leadership. This is fascinating in light of what Emma Ross Thomas was just telling us, that if the US pulls out of the region for its part, that doesn't mean that the Strait of Hormuz is open, and all of these other countries might have to engage in some kind of other type of agreement with Iran in order to get safe passage through the Strait of Hormuz. Once again, this is Keir Starmer addressing the nation and saying that the Foreign Secretary is going to host a meeting of 35 counterparties exploring every diplomatic avenue to get Hormuz reopened safely. Nike significantly lower in the pre-market this morning after the company gave a surprisingly grim outlook for the year ahead. Revenue expected to decline 2 to 4%. Strong results in North America overshadowed, though, by traffic disruption caused by the Iran war and a decline in Converse sales. Bloomberg Opinions' Andrea Felsted joins us now. Andrea, obviously, Converse is a really sore point. We'll get to that in a moment. But I was fascinated by the China outlook. It's forecasting a 20% drop in China sales.
Yes, the problem seems to be in the sort of fashion, casual footwear, where it's sort of got local competition, and that seems to be really where the problem is. There's a bit of a switch away, or not just in China, but all over the world, from sort of athleisure to more casual, smart, sophisticated casual fashion, and that is hurting Nike.
Yeah, it's really interesting because Elliot Hill was sort of praised when he came in, right? He was an insider. He was going to turn it all around. Investors, though, are getting a little impatient.
They are, and to be fair, he is doing better on the performance side. That's the sort of running trainers, football boots, that kind of thing. And that's where he put his sort of major effort. So they are paying off. But it's this sort of fashion side that he's really struggling, and he really needs to turn his attention to that.
I have to ask you, I mean, he keeps saying that he wants to keep Converse. Authentic brands, they go to Reebok and Champion, but they bought those brands, also wants Converse. Isn't there a price at which everything can get sold?
He should sell it. He should just do it and sell it. You know, Converse are nice to have, but it's a distraction he doesn't need. He's got so much going on with the Nike brand. He should just sell it.
And it's only something like 3% of sales, right? It actually accounts for a very tiny part of the portfolio. Can I ask you about LVMH? Because also worst start of the year on record. And it's not just LVMH. It's all of these other brands too. Richemont, Hermes. Why is the luxury shopper reeling it in?
It's the worry is that the Middle East is obviously an important region. It's quite small, but you've got some big spenders who travel. That could be disrupted by what's going on. The bigger worry, though, is a knock-on effect on markets. Obviously, we've seen the effect of stock markets from the war. The US markets in particular are correlated with luxury demand in the US. And the US is having to do a lot of heavy lifting at the moment because China is still in the doldrums. It's not getting any worse, but it's not yet getting any better. So if the US is disrupted because wealthy shoppers are feeling more cautious because because they're seeing their investment portfolios weaker. That's a big worry for the industry.
There are so many headwinds for the retail industry, right? So you have also tariffs. You have also, immigration policies, which are not that friendly to tourists or foreigners right now as well. Even students coming to the United States, for example, right, they're down in numbers. What are executives saying on conference calls about policies affecting their actual bottom line?
What they're most worried about at the moment is the impact of higher shipping costs and the oil price. So it's got two elements. When consumers have to pay more for the things they need, like food and fuel, they have less left over for the things they want. At the same time, you may see the things we'd like to have, like clothing and footwear in the case of Nike, going up because of higher shipping costs. And also, a lot of the products are made from polyester, which is dependent on oil. So we've got all these moving parts. So that is definitely the thing to watch. We had Next, one of the biggest British retailers, warning that prices for clothing could go up.
Oh, wow. Andrea, do all our shopping now. That's the only answer. Bloomberg Opinions, Andrea Felstead, thank you so much. Coming up, a look at what's making headlines in your front page news. That's next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
UK Prime Minister Keir Starmer has been speaking on the Iran war from Downing Street. He's now taking questions. Let's just listen in for a moment and hear his tone.
how quickly the Strait of Hormuz can be opened. And that's why I've made the statement I have today about the next step that we're taking, particularly on the Strait of Hormuz, which will be crucial in terms of what actually happens to energy prices and how long there's a spike in those prices. So that's the action that we're taking today. I've got ITV, Harry. Harry.
Thank you, Prime Minister. Harry Hodgson from ITV News. President Trump has said this morning that he's considering pulling the US out of NATO. You've just talked about looking at a new long-term partnership with the EU, including on security. Is this an acknowledgement that Britain's long-term security relationship with the United States is about to change?
Well, let me say a number of things in response to that. Firstly, NATO is the single most effective military alliance the world has ever seen. And it has kept us safe for many decades, and we are fully committed to NATO. Secondly, that whatever the pressure...
All right, you've been listening to Prime Minister Keir Starmer, who's been speaking for a few minutes now from Downing Street. We're going to get the headlines of what he had to say. Obviously, the subject matter was the war in Iran. Bloomberg's Lizzie Burden joins us right now. So, Lizzie, you've been trying to listen into what the Prime Minister was saying. Can you give us some of the headlines?
Well, he said that the UK is going to be affected by the war in Iran, of course, but the UK well placed to weather that effect. He says that he's exploring every diplomatic channel to reopen the Strait of Hormuz. The Foreign Secretary, Yvette Cooper, will be hosting a meeting of 35 counterparts, but it won't be easy to make the strait safe, he says. The UK ready, though, to provide clear and calm leadership. How we emerge from this crisis will define us. That question there about NATO, really an important one, because, of course, the President had said that Starmer was no Winston Churchill for not wanting to get actively involved in this war, but trying to keep that relationship with the US going.
Bloomberg's Lizzie Burden, thank you. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news stocks whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. With or without a deal, President Trump says the Iran war could end within 3 weeks, even as attacks continue. Stocks get a major boost. Benchmarks around the world march higher while oil falls below $100 a barrel. And OpenAI wraps up a massive funding round of $122 billion. More details on that coming up. So we saw it yesterday. It started out like a trickle and it turned into a huge flood of buying. Absolutely frenetic buying all day yesterday. Partially why is what you're seeing on screen. Brent crude and New York crude coming down. We're down even further today. Although I will say earlier on in the session, we were actually below $100 a barrel on both of those oils. The 10-year yield down another 4 basis points, so yields are also in concert with this oil move. And if we flip the board and look at futures, we'll see that we are pointed higher in the United States. This after a massive gain yesterday. The S&P up 2.9%. But get this, the SOX was up 6.25%, and the Mag 7 was up 4.5%. So as you can imagine, NASDAQ 100 futures are coming off the back of that and looking to gain some more today. And it's yet another day of gains for gold as we approach a long weekend. We start a new quarter, and it is April 1st. We're also obviously waiting for the president to speak tonight. Okay, let's get to some stocks to watch. Here's Abir Abu Omar.
Good morning, Vonnie. We're obviously going to be taking a look at big oil companies today in the United States. Now, moving pretty much in tandem with those oil prices. You mentioned earlier that Brent is paring down some of those gains that we saw earlier in the session, about $103 a barrel. You're seeing in the pre-market big oil companies, including Exxon, Chevron, moving pretty much similarly to that, paring down some of those losses that we've seen, but still significantly declining as much as 2% as of now in the case of Occidental. And this is on the back of President Trump suggesting yesterday that the conflict in the Middle East could come to a resolution within 2 to 3 weeks. We'll wait to hear him speak this evening in Washington. We flip the board, and this is a story in a different industry, albeit a little bit of similar themes here. Nike is dropping almost 10% in the pre-trade session this morning. The company did come out yesterday and say that it expects revenue to be in single to low digits for the full year. This quarter, they're not doing well, and this is on the back of what we're seeing in the Middle East. Now, Nike has been trying to turn around story for a while. This is not reflecting in the earnings and definitely not in the stock's performance this morning. But finally, we go to a stock that is doing relatively well today, but for the full year is doing incredibly well. It's up 170% for the full year. Today, it's advancing as much as 3%, and this is SanDisk on the back of memory chip demand and this unabating AI demand that we're seeing following a good tech session in Asia, but also in Europe. And those are the stocks we're watching. Lonnie, back to you.
All right, Abir, it's going to be an interesting session. I think we can say that for sure. That's Abir Abu Omar. Stocks and bonds charging higher than on optimism over a potential end to the U.S. involvement, at least in the Iran war. Joining us now is Monica Defend, head of Amundi Investment Institute. So, Monica, Paul Donovan of UBS, an economist in London, saying today, I want to believe. It seems like these markets just wanted to believe yesterday that the worst of this was over. But what, in fact, has actually changed?
Well, the headlines remain quite kinetic. We all wish for the best, but let's listen to what President Trump will announce later today. Having said that, the shock is persistent enough to matter, but uneven across oil and gas. And more importantly, what we are looking is that probably the war premium can fade, but what has happened to infrastructure, for example, rerouting costs, insurance costs, will last for longer.
Absolutely. And markets have been pretty quick to price in higher inflation. Are you expecting that we'll see higher inflation now anyway? The damage has been done, or can some of this damage get undone fairly quickly?
Well, I think the market actually has been overpricing inflation fears while it has not paid enough attention to growth. So we keep in mind the spillover to growth in making the outlook, economic outlook assessment and expectations on the central banks. So for sure, inflation will be higher, and it will depend on how persistent this shock will be on energy prices.
Monica, did you do anything at the beginning of this, breakout of hostilities and this clogging up of the Strait of Hormuz, in terms of portfolios?
Well, I would say that as a bottom line, we remain strategically constructive but tactically cautious. So what we have been doing has been to adjust but not capitulating on some of the position. And as of today, I would say that our risk-on stance is neutral. But we maintain convictions on some sectors, notably industrials, because of the AI tech revolution that will continue over time. And we remain convinced on Europe, emerging market, as long-term constructive position. But as of now, we've been adjusting to a more neutral stance.
What would turn you from neutral risk to pro-risk once again? What would you need to see, and has it really anything to do with the United States and what it does at all in the next 2 to 3 weeks?
Probably two things. First, a clear and credible announcement of the war to stop, or the traffic on the Hormuz Strait to restart. And second, let's not forget that we are entering in the earnings season. So we will closely monitor fundamentals, how, and probably it is too early to see an impact on the first quarter earnings, but maybe some disclosure on forward guidance will help us in shedding the lights in terms of damages and highlighting those sectors that eventually will come out as winners of the current situation.
The problem is the so-called war ending, or the U.S. involvement in this region, ending, if you like, Monica, is not the same thing as the Strait of Hormuz going back to normal, and we all know that, and this could be very messy for a long time. So what do you do about emerging markets, particularly oil importers? You said that you were very, pro-emerging markets, that many of them looked attractive. Which ones suddenly look less attractive now?
Well, probably our favorite for now remains Latin America and Eastern Europe, while we move to neutral in Asia, notably India and China, notwithstanding the long-term convictions we have on the two regions, but they are exposed to the energy shock quite notably, as we are reading now in the economic projection we have in mind. So this was on the equity part. When I look into emerging bonds, we still maintain the constructive position on hard currency, while we've been reducing a tiny bit the exposure to local currency, maintaining a preference for Brazil and South Africa.
Yeah, I mean, you said you'd step away a little bit from some Asian nations. Can I ask you about Japan and its situation and how it's going to manage this? Because on the one hand, investors really needed to hike rates, and on the other hand, that could be the wrong thing for the economy at such a fragile time.
Well, on Japan, medium term, you have this very nice alignment between political stability and the prosecution and implementation of some fiscal measures. Tactically, the issue is on the yen that remains extremely volatile. So for now, we maintain the idea of the central bank to hike later on. But again, there is this strong volatility on the yen that weaken the position. But we remain constructive on the equity front, because what they've been doing so far and what they will be doing is definitely credible in our opinion.
Monica, we have Keir Starmer speaking in the last half hour, and he's been basically saying that the UK is prepared to step up and take a leadership role in trying to unblock the Strait of Hormuz and, you know, come to some kind of an agreement, I guess, with Iran and particularly the Gulf countries at the moment who want to get involved, maybe even, you know, on some kind of a hostility footing to try and get this problem solved. What happens if it's on the UK and maybe the 35 other nations whose foreign secretaries are gathering to try and come up with a solution to this? Are they suddenly, you know, a force to be reckoned with? And is it the US versus this group of 35?
No, I hope not. I hope that the NATO will remain cohesive. This is really what we need. Divide et impera status is not what we wish. Now, looking at the UK, again, the market is under pressure. The sterling is under pressure because the UK is starting from a weak position, and definitely the energy shock allowed us to reduce our growth expectation while inflation remain sticky and the fiscal space is tight. So on the economic front, it is not really a rosy position. Therefore, I think it is very important that the Prime Minister stand up in saying they are fully committed to the NATO.
Yes, and he literally just did that a few minutes ago. He said the UK is fully committed to NATO. President Trump, on the other hand, gave an interview to The Telegraph, and he said that leaving NATO was beyond reconsideration. He is responding to a Telegraph question on US NATO membership, and he said he was never swayed by NATO. All right, Monica, thank you so much for joining us today. That's Monica Defend of Amundi Investment Institute. Now to other top stories trending on the terminal this morning. Wall Street's biggest private credit firms will be facing questions from Democrats on the House Financial Services Committee. According to Bloomberg sources, Blackstone, Ares, Apollo, Blue Owl, Carlyle and KKR will all be among those who will be questioned about how they market, value and handle private credit. Spokespeople for the firms declined to comment or didn't respond to messages seeking comment. President Trump signed an executive order intended to make it harder to cast mail-in ballots. The order seeks to ensure that state election officials have lists of eligible voters. Election officials in Oregon and Arizona immediately promised to challenge the executive order in court. LVMH shares are seeing their worst start to a year on record, falling 28% in the first quarter. The impact of the Iran war on the global economic outlook and shrinking demand for luxury goods all hurting performance. LVMH now sits at a 20% discount to its peers. Coming up, President Trump coming out with more strong words on NATO and more on his remarks on the Iran war next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
New York time, this is Bloomberg.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
All right, that was President Trump speaking from the White House on Monday night. He also told The Telegraph in an interview, in response to a question, that he could pull the U.S. from NATO. In fact, he says that it's going to happen. He's going to be addressing the U.S. later tonight at 9 p.m., a national address, New York time. Bloomberg chief correspondent in Washington, Tyler Kendall, joins us now. So a lot has happened in the last 24 hours, Tyler. These NATO headlines are just the latest attack on NATO. But of course, what really just obliterated market sentiment yesterday was the idea that the U.S. might actually be pulling out within 2 to 3 weeks. What do we know about the president's thinking right now?
Well, Vonnie, at this point, President Trump did signal yesterday the timeline that we have been tracking, saying that the U.S. could withdraw troops from Iran in the next 2 to 3 weeks, but also importantly indicated that he would be okay with ending the U.S. military operation without an agreement with Iran in place. Still, I was at the White House yesterday, and officials maintain that negotiations are ongoing, right? We heard from Secretary Pete Hegseth yesterday, who said that diplomatic talks are, quote, gaining strength, though he still vowed that the U.S. is going to continue to strike Iran until an agreement is reached. Plus, we heard from the Iranian side saying that there are no formal negotiations happening right now, instead saying that there are some talks happening with what he called were, quote, friends, these mediator countries, but still maintaining that at this point, Iran is not coming to the table to talk with this White House. So there was a lot that we could track here, but of course, at the center of this are big questions about what happens when it comes to the Strait of Hormuz, as Iran demands that it has sovereignty over the critical waterway, considered to be a non-starter for the U.S. But these questions start to emerge as President Trump signals that the U.S. could soon exit the conflict, but the waterway closure at this point remains unresolved. And that perhaps is the thread that we can pull on to tie together those NATO headlines, because Vonnie, yesterday, President Trump had some pretty staunch words for our allies when it comes to the Strait of Hormuz, urging them to go in and reopen it and take the oil themselves, in his words, or at least buy it from the U.S. So it's going to be something to watch here really closely, because at the same time, I will point out that a person familiar with the matter does tell us here at Bloomberg News, even as we talk about a potential exit, the U.S. does appear to be sending an additional carrier strike group to the region today.
Yeah, a third. Exactly, Tyler. And then the UK Prime Minister literally saying a few moments ago that he's prepared to take a leadership role in reopening Hormuz. Now, the president also has other items domestically on his mind. So he's apparently going to be at the Supreme Court today to hear oral arguments on the birthright issue. What do we know about that? Is that usual for a president to attend Supreme Court oral arguments?
Well, this will actually be his first time going to the Supreme Court of this term. He was there once during his last term, so that's going to be highly anticipated, particularly when you look at this issue in particular and the backdrop here that President Trump has really been playing defense on some of his more hardline immigration policies. We can't forget that in the background of all of this is that the Department of Homeland Security is currently still in a government shutdown over disagreements about how his immigration policies are going to play out going forward. But the president's feature at the Supreme Court today really shows that he's doubling down on these immigration policies. This case is considered a landmark case. It stems from an executive order that President Trump had signed on his very first day in office, barring U.S.-born children of undocumented immigrants from gaining U.S. citizenship. Vonnie, it could have some really wide-ranging implications and is one to watch for sure.
Oh, absolutely. So much to watch this April 1st. Tyler, thank you so much. Bloomberg's Tyler Kendall there in Washington, D.C. Oil hovering around $100 a barrel. Bloomberg's Emma Ross Thomas is back with us now for more. So, Emma, what will the oil market be concentrated on today? We just had Keir Starmer saying that, the Foreign Secretary here in the UK is going to be gathering 35 counterparties to try and come up with a solution to the Strait of Hormuz problem, because we all know the US pulling out doesn't mean that gets solved, does it?
Yeah, you're right. One thing is for the war to end, and another is for the Strait to regain even some kind of normality. Remember a few weeks ago, Macron was talking about perhaps getting a coalition together. I suppose one of the questions there is just the number of, naval assets that Europe has at its disposal, and without the US. I think we wrote a piece a couple of weeks ago saying that the US Navy even doesn't have enough ships to provide the escorts that would be required to get traffic through Hormuz at a sort of back to a pre-war level. So it's incredibly complicated. I think that's why oil's down, but not there is still a huge war premium in the oil price, and that's because there's still so much uncertainty, so many questions about how you get the Strait of Hormuz back to normal. And the other thing that's bubbling in the background, I think, is what Iran is showing that it wants any sort of post-war order to be, which is that they want to make it into a strait over which they have control. There's been talk of tolls and fees. There's legislation going through the parliament talking about tolls, and that is a huge risk for A, buyers, but B, also the other Gulf producers. And I think that's quite an important thing to keep in mind.
Yeah, absolutely. And there was talk of whether these tolls could, make up some of the reparations that Iran is also demanding. There's a lot of questions outstanding. Emma, thank you for joining us this morning. That's Bloomberg's Emma Ross Thomas. And for more on the latest on the Iran war, you can follow our blog by typing TLiveGo. Turning to tech then, OpenAI has raised a whopping $122 billion in its latest funding round, at an $852 billion valuation, marking the firm's largest round to date. The biggest investments include $50 billion from Amazon, $30 billion each from NVIDIA and SoftBank. Let's bring in Matt Bloxham of Bloomberg Intelligence for more. These companies are spending like drunken sailors, Matt. What are they going to get for their money? What is OpenAI spending all this billions of dollars on?
Chips and data center capacity, I think, is the short answer to that question. And obviously, big investments here, particularly from Amazon, and there's I think quite a lot of strings attached to the money that they're investing in OpenAI, with part of it contingent on a successful IPO. And also a lot of this funding is in anticipation that OpenAI will look to do an IPO, I think, sometime later this year. And certainly the noises coming out of the chief financial officer suggests that the company is, organizing itself in preparation to at least make it possible for them to do that kind of event. And alongside the funding, they've been streamlining the product offering, dropping support for some products like the video editing suite, and consolidating other products into kind of a neater package, which I think, again, is typical of what you'd expect a company that's looking to go public to do, so that when they present to investors, there's a kind of clear and coherent strategy about how they're going to generate revenue and how they're going to ultimately generate profit.
Oh, Matt, I thought we were done talking about all these deals, but apparently not. There's more to come. Matt Bloxham of Bloomberg Intelligence, thank you so much. This is Bloomberg.
American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The German port has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Now a look at what's ahead today, April 1st. Well, we have a host of data on deck. ADP employment data out at 8:15 Eastern, followed by retail sales at 8:30, and manufacturing PMI data out at 9:45 and 10 a.m. Let's take a look at your market action this morning after a whopping day yesterday. You can see that Brent crude is lower, but not by as much as it was earlier in the session. It was below $100 a barrel for a time. U.S. futures pointed higher even after yesterday's huge gains, 6.5% on the SOX index, in fact, and the 10-year yield down another almost 4 basis points. We'll see what the president says at 9 p.m. Eastern. That's it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which that you respect the dignity of those with whom you disagree.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Some of these unwinds have been technical and mechanical.
The equity markets guys don't seem to be overly concerned.
Is there opportunity in the market? I think absolutely.
The market will not wait for clarity. The market is just looking for, are things getting less bad?
We kind of have to take it one day at a time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, positioning for the end game.
We're finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
The president gearing up to address the nation later on this evening as the UAE is reportedly preparing to help the US reopen the strait. Crude trimming gains following a record-breaking monthly rally. A warm welcome to Q2.
Hey, and it's clear as mud, just as it was during Q1. Ultimately, what have we learned? It's not really clear exactly where the talks are going. I think the key questions going into Q2 are, 1, what's actually going on with talks? Number 2, what's actually going on with physical markets? And number 3, if there is some sort of de-escalation or ceasefire without some sort of established new rule around the Strait of Hormuz, how positive is that for commodities?
The market wants 2 things: end the hostilities, get energy moving once again. 2 stories. 1, the president ready to end the war in a few weeks' time. We hope, we'll see. And 2, the Wall Street Journal with this story right here. The UAE preparing to help reopen the Strait of Hormuz.
So potentially this would be a part of a broader coalition. They seem to be having outreach as well to the United Nations regarding this. They view this, as the rest of the world views this, as an international waterway, not one that could be completely controlled by the Iranian regime. It also goes back to what Ambassador Youssef Al-Attaiba, the UAE ambassador to the United States, had an op-ed in the Wall Street Journal. It goes back to what he said, quote, "We aren't asking the United States to carry out the full burden. What they're basically saying is we are willing to take a more aggressive posture alongside the United States."
So what's the outlook for prices? What's the base case in the White House? This from Politico just moments ago. The base case, their advice from Treasury officials: prepare for $100 per barrel for some time.
And this ultimately is the conclusion that a lot of people are coming to, which will allow the economy to grow, but poses the biggest threat to central bankers worldwide, because ultimately it's going to be that increase in inflationary pressure without necessarily the downdraft on growth that leaves them in an obvious position. It's sort of stagflation-light, stagflation-esque, and maybe outright stagflation when you look at the Eurozone.
We're all wrestling with the same thing. For European gas prices up by something like 60%. The crude move 50, 60% higher through the month of March. And now we start to see the shortages through Asia, rationing in places like Indonesia. And a question, Lisa mentioned Europe. Is Europe next if this doesn't get solved, and solved quickly?
I think one of the most important interviews yesterday, maybe it was important to this White House, because the president took aim directly at UK jet fuel about 20 minutes after Societe Generale was on this program and said, the last vessel carrying jet fuel into the United Kingdom is on its way now. And after that, there's none coming left.
It's nice to get rid of March, isn't it? Just to start a new month.
Oh, yeah.
A new quarter.
Today is April Fool's. All I can say is I have a feeling it's going to be a lot more fun. It's going to be a lot more stable in April.
Oh, my goodness. The never-ending first quarter has come to a close. Welcome to Q2 and a month of April. Coming up this hour, Stephen Orth of Federated, with stocks coming off their best day since May. Ellen Wald of the Atlantic Council on why oil markets are facing more questions than answers. And Alan Zettner of Morgan Stanley as markets look to turn the page on a wild first quarter. We begin this hour with our top story. President Trump saying the US could end operations in Iran in 2 to 3 weeks. Bloomberg's Jemana Bersecci joins us now from Dubai for more. Good morning, Jemana. Not just that story, but also the UAE preparing to enter to reopen the Strait of Hormuz. How's that going down across the region?
Yeah, well, once again, there's a lot to unpack here. It's certainly not the first time that President Trump has given a time frame for how long he expects the war to go on for. The latest, obviously, the suggestion that it could go on another 2 to 3 weeks. I will just remind people 2 to 3 weeks is actually a really long time in terms of military operations. And during that 2 to 3 week window, there's another deadline that President Trump set. Remember the April 6th deadline vis-a-vis Iran coming to the table? And if they're not doing that, then the U.S. reserved the right to hit back at their infrastructure and their power plants. That is also a deadline that is coming up on Monday as well. So within those constraints, I will say that a couple of things have actually stood out in the last 24 hours, though. The first is the fact that the U.S. seem to think that they are progressing very well militarily, and even this is echoed by the Israeli Prime Minister as well. Benjamin Netanyahu also gave a speech yesterday, which I thought was interesting. He said the two existential threats of ballistic missiles and nuclear weapons have now been removed. So this is also coming from the Israeli Prime Minister, notable. Second is President Trump seemed to imply that you don't need to have a deal with Iran in order for the war to end, so implying that Iran does not have agency here. Of course, they would attest that they have their own conditions as well for the war to end, including assurances that this wouldn't happen again. And then the third point, which has really become, I think, quite apparent in the last 24 hours, is the delinking between the military objectives on one side versus the fate of the Strait and what happens to the Strait of Hormuz here. And an outcome in which Iran are still exercising sovereignty and still controlling who and what vessels get to pass through the Strait is an outcome that is unacceptable for pretty much all of the nations in the Gulf, for sure, and most nations around the world. This should be a free maritime shipping passage. So there is the story that came through from Wall Street Journal overnight suggesting that the UAE are putting forward a resolution at the United Nations Security Council in order for them to be involved in reopening the Strait by force, either militarily or by offering assistance to the U.S. And I think they would get strong support on that front from Bahrain, and certainly the language coming of Saudi Arabia would suggest that they too are aligned in terms of Iran's fate, and that they should not be able to exercise such a sovereignty over the Strait of Hormuz. But at the same time, I think the language here is also very important, and they have reiterated that if they were to get involved, it should be part of a broader global coalition. And so potentially over the next couple of weeks, maybe you're going to start seeing more reporting emerge about a global coalition that's forming, not just with the Gulf states, but perhaps with European allies as well, to help secure the safe passage of vessels going through. One last thing that I just want to remind people over the next 2 to 3 weeks, there are more military assets from the U.S. arriving to the region. There is a third aircraft carrier that has set sail that happened in the last couple of days. It should be arriving in the next 2 to 3 weeks. And so the buildup of military is still going on, and the operations are still going on. I will tell you, over here in the UAE, we have had the busiest couple of days of air defenses being triggered since the beginning of the war. So, the operations are still going on at high intensity.
Jemana, with the latest on the ground. Jemana, thank you. Jemana Basechi there, leading our coverage out of the region. The first trading day of April could be a long trading day. The president addressing the nation later on this evening.
I was thinking to myself, how many people were excited, thinking maybe this is an April Fool's joke and I don't have to stay up until 10 or 11 p.m. to understand exactly what the mood for Q2 is going to be.
Well, a source called me last night after that news became public and said it's going to be the Academy Awards of verbal intervention.
More to come a little bit later on this evening. Here's the view on Wall Street this morning. Stephen North, the Federated, writing the following: "We are treating this as another brick in the wall of worry as the US markets advance towards our S&P 500 target of 7,500 for 2026. Steve joins us now for more. Steve, good morning.
Good morning.
Why is this just another brick in a climbable wall of worry?
Well, we have an expression at Federated Hermes, if it can't happen, it won't. And I think, the alternative really can't happen. And you've seen already UAE stepping in here. We can't have 20 million, 11 million barrels a day, I guess, if they can keep the Red Sea open, of the world's oil supply, which is 11% unavailable. That just takes oil, roughly, I think, as you guys know, it's about $10 a barrel. So you're looking at a number in the 150s. That would kill the global economy. So we have a 15% probability that that's what happens. So that's why we're sort of signaling caution here. We have not added to equities. We're keeping our forecast in place at the moment. But every week that goes by, we get closer to the summer driving season, I think you know that the gasoline output, they have to store it in advance. They can't produce enough to meet demand during the summer season. So crack spreads are closing in on $20 on top of the oil price. That gets you to levels that often results in a demand response. So a few more weeks of this, we're going to have to take down our GDP forecast.
President just told you it's going to be a few more weeks.
I think that's why he's looking at those number of weeks. I think they're doing the math on this. So they really do have to figure out a way to get this over in a couple more weeks, or people are going to start taking down their GDP forecasts. We entered into this with GDP ahead of consensus. We were at 4% for this year because of all the stuff that's going on with the One Big Beautiful Bill and, the stuff people have talked about. And the underlying earnings pretty good. Investments are pretty good. So fortunately, we're entering into this with a strong number. So this doesn't yet put us into a recession scenario. It's more like lower growth than we were anticipating. I'm also looking very carefully now. We've got earnings season coming up in another 10 days or so. And, it's going to be great. We know that coming into the thing. But the question is this going to be like the weather? Everyone's going to be talking about the weather here, which is, the Mideast, and guidance might be more conservative, and that's probably not good for the market either. So
there are a lot of unknowns. There are known unknowns, and then there are unknown unknowns, and it's just a really muddy moment, and everyone's really frustrated, which one analyst came in yesterday and said, it gives me a lot of time to take a step back and have big thoughts. So I'm curious for you to have big thoughts, to understand how structurally the market has changed. Even if, say, this is a short conflict, there will be an inflationary read-through. And if the economy is strong, even more so. And right now, it seems like we're pushing up against the limits of both fiscal borrowing, as well as just how much the Fed can stimulate, or monetary policymakers can really stimulate on the other end. How much do rates at 4.5% to 5% in the United States materially change the outlook for U.S. equities going forward, if they're not going to come down all that much, and if it's the same around the world?
Okay, so we tend, Lisa, we're trying to invest against a 3-year horizon. So we're looking out past this and saying, what world are we going to be in? We should be back to a world that's growing reasonably well. All those drivers we've talked about, the AI revolution, et cetera, and a market that is significantly cheaper than it was 3 months ago. So on that view, we'll come through this. The question is, in the meantime, how do you navigate your way there? And as I said, if this goes on longer, I'm more worried about the demand impact. You're more worried about the inflation impact.
Well, it's one or the other.
I would say 4.5 is another Maginot line for the Trump administration. We saw that back in April of last year. We got close to it again just recently. We're not back down quite a bit now, but yeah, 4.5 is not a good number.
Can you have both, not necessarily downside surprise, if you do have some sort of end to this, and companies can maneuver through it, and then also get the disinflationary pull-through that a lot of people are expecting later this year? Do you have to have one or the other, either a downturn in growth or stickier inflation and central banks that aren't going to be cutting rates that potentially could pressure valuations?
Well, I don't think the inflation is going to be stickier if they really do get this done in the next few weeks and get the straits reopened, right? Because people are not going to factor in those higher prices forever, which is what you need to be stickier. So I'm still not on the sticky inflation. I'm more worried about the summer driving season, the demand impact. They're going to figure out a way, whether it's Trump declaring victory, but the Iranians, what are they going to do? The only thing they've got left is the Strait of Hormuz.
For the markets, though, can you declare victory and still have the Iranians in control of the Strait of Hormuz and not have normal traffic?
I think that's going to be very difficult, right? That's going to be the issue. So it's a two-way negotiation. The market right now is like a multidimensional chessboard with some very smart players in it. And so I think when I play that kind of chess, I've got a board at my home if anyone wants to try it.
We play it every day.
The thing that makes me most difficult for me when I was younger and used to play, my sons were younger and a little bit crazier, is an unorthodox player that you can't predict that's on the board.
If they think Dying is winning, you're dealing with an unorthodox player, that's for sure.
Yeah, and that's what makes this so difficult for everybody, because we've got an unorthodox player here who's playing for different things. Economics is not necessarily their driver.
There were two parts to your question, by the way. The first part was, is the market going to be okay with Iran controlling the Strait of Hormuz? And the second part was with restricted energy. For the first part, the short term, I don't think the market will care who's in control of the Strait of Hormuz so long as the energy is flowing. The most important part is whether the energy is flowing. And right now it's not flowing. There's just a hope that the president moves on, Iran takes control in the near term, maybe, and then the energy starts flowing again, they'll charge people for it. I don't think in the near term the market's going to care about that. Over the longer term, that will have consequences for the kind of premium that will be put on crude coming through the Strait of Hormuz, the risk around that. But in the near term, this market has been itching to move on now.
Well,
for the
okay,
last
so
1 month.
the longer term outlook for oil has gone higher regardless because of that, John.
Which is why December's trading at 80.
And, what we're looking at is a demand impact here of people saying, I got to have a bigger reserve to avoid this. And longer term, this is probably really good for nuclear energy companies.
That's the structural shift. Just one final question. Tech multiples, real multiple compression through the last month or so. Is that compression an opportunity, or does that speak to the structural shift we're seeing and how we value this equity market?
We think, as you know, just the day before this started, we took down our target for the year and we took down the tech multiples because we saw the big mega caps going from big free cash flow generators to, in the near term, not being big free cash flow generators, and we don't know how long that's going to go on for. So we've kind of switched our portfolios, fortunately, towards hard asset companies, a little more value intensive. And I think once you come out of this, you're still faced with that problem. The AI disruption on the software side of tech and the free cash flow decline. That's why companies that are growing free cash flow right now tend to be on the old economy side of the kind of like Chevron. I mean, their free cash flow is ballooning. Micron, by the way, free cash flow, and that stock, down significantly here, down 30%, but their free cash flow is going to go up by 8 times over the next couple of years. So I think that's where the market is going to end up going to. The tech is okay here. The price, I think, has already kind of corrected, but
yeah,
I'm not sure it can lead us out of this.
Steve, it's good to see you. As always, thank you.
Thank you.
Steve Orth, the Federated. Have a happy Easter. It's good to see you.
Happy Easter, happy Passover.
Thank you.
Happy everything.
Thank you very much. Don't want to offend anyone. Of course, happy everything, whatever it is today, whatever it will be tomorrow. Equity futures right now in the S&P, positive by 0.5%. Let's get you an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Good morning, John. President Trump saying he is strongly considering pulling the United States out of NATO after it failed to join his war on Iran. Trump telling The Telegraph that the NATO alliance is a paper tiger and that withdrawing U.S. membership is, quote, beyond reconsideration. An Iranian missile hit a fuel oil tanker off the coast of Qatar today. A total of 3 missiles were launched from Iran, but 2 were intercepted. This as Iran continues to launch attacks at Israel, Bahrain, Kuwait, and the United Arab Emirates. And staying on the UAE, it is reportedly gearing up to join the war. According to the Wall Street Journal, officials are reviewing how it could play a military role in securing the Strait of Hormuz. This would make it the first GCC country to join the fight after being hit by Iran. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for that. More from Yahara later this hour. Up next on the program, finishing the job.
We're finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer to do the job, but we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
Up next on the program, Colonel Wayne Sanders joins us to break down what he sees materializing in the Middle East. From New York City this morning, good morning.
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The bounce continues. Equity futures higher here by 0.5% on the S&P. On the NASDAQ, up by 0.7. Under surveillance this morning, finishing the job.
When we feel that they are, for a long period of time, put into the Stone Ages and they won't be able to come up with a nuclear weapon, then we'll leave, whether we have a deal or not. We're finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer to do the job, but we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
So here's the latest this morning. President Trump signaling the Iran war could end in the coming weeks, saying the U.S. military goals have largely been achieved and that other countries should be tasked with reopening the Strait of Hormuz. To discuss, Colonel Wayne Sanders, senior defense analyst at Bloomberg Intelligence, joins us now for more. Colonel, welcome to the program. The answer to the following question is highly conditional on what you believe the objectives are. But if you didn't see that statement overnight, if you hadn't seen any of the truth socials, the social media posts, and you were just focused on how things were emerging in Iran and watching the military posture evolve over time, what phase of the war would you say we're in right now?
Yeah, right now I'd say we're almost entering into sustained operations, also known as like steady state operations, because you have so much firepower that is already out there, right? You actually have a third aircraft carrier that is potentially coming into the region. Normally you have about 3 or 4 that are operationally deployed. Then you have a handful that are in training status as well. And then a couple that are in maintenance. So you're having a large portion of your forces that are actually tied in directly to the Iran conflict. It allows you to have a network of mobile air bases to be able to conduct your strikes against that. 11,000 targets have been hit across Iran at this point in time by the United States, and they continue to do it. And the United States military is not going to stop until they have been ordered to stop.
Right, and we see even last night a massive port near the Strait of Hormuz was hit. So if you ignore everything that is said, to Jonathan's point, and just look at what Trump is doing in terms of the military buildup, how much longer do you think the United States will be in this conflict?
Yeah, when you move that the third aircraft carrier in there, it's signaling that it's going to be a longer-term escalation. It's one of two things, and it's really only those two options. It's either I have a surge plan that I want to do, and he's kind of alluding to it a little bit now in terms of almost the final blow that he brought up last week, to be able to hit a lot of these and, forgive the phrase of, bombing them to the Stone Age, but being able to hit those military targets to the point where they wouldn't even be able to get stuff out of the rubble from that perspective. Or it's signaling that, hey, we are going to be here for a while, and we want to make sure that we have the ability to rotate our aircraft carriers, rotate our air crews that have been surging for the last month, so that you can actually avoid some operator burnout there.
Do both of those plans include the United States making sure the Strait of Hormuz is open as normal?
Yeah, I think that ends up being one of the key, I call it second and third order effects to what those military operations are. They've achieved the military operations and their objectives to point now in terms of their valid military targets, taking out a lot of Iranian leadership, as well as those missile stockpiles and nuclear sites as well, right? They've done those pieces of it. But now at that point in time, you still are trying to create what they call freedom of maneuver through the Straits of Hormuz, but you can never eliminate the asymmetric threat. And you've seen General Kane talk about that multiple times during his press briefings as well, is that you can eliminate as much as you want as the conventional force, But all it does is it takes just a handful of folks that may have a shoulder-fired missile or something very similar to insurgent campaigns back in 2003 in Iraq and Afghanistan.
Colonel, this is the reason why people are talking about some sort of buffer zone around the Strait of Hormuz to try to ensure and prevent some of these rogue attacks. What could a coordinated UAE and United States effort look like to try to secure that type of buffer?
I think it would definitely help. Freedom of maneuver, especially on the southern part of the strait, actually helps because of UAE's geographic positioning. It's also one of the reasons why I think that Iran has focused so much of their attacks on UAE specifically, is because it is such a powerful economic center, as well as has military capability and air defenses. So being able to partner with the U.S. there allows for additional capability, allows for additional visibility through intelligence, surveillance, and reconnaissance. It allows us to have a better place for the United States to be able to park some additional vessels as well as part of their U.S. naval port at El Jebel there as well.
Colonel, a clinic. Thanks for breaking it down. Thank you, sir. Colonel Wayne Sanders there of Bloomberg Intelligence. This is the difficulty right now for financial market participants. The verbal guidance you're getting is this could end soon. The military posture speaks to something far more prolonged.
Yeah, ultimately, if you're moving another aircraft carrier over to the region and if you're deploying troops, it all takes money. It takes a cost. It's not just simply something that you do just in case. And that speaks to something that really speaks more to an escalation rather than we're almost out.
Verbally, they want to kind of control or at least pause some of the unwinding you could see, what would happen in a war in the financial markets. But at the same time, the president wants to be able to go in and finish the degradation we've seen with the regime. Very difficult to do at the same time.
Up next, following a record-breaking monthly rally in the energy market, we'll catch up with Alan Wald of the Atlantic Council. Plus, Yahira has some morning movers for you. In the market, Nike shares sinking with the war in Iran weighing on guidance. That name is down by 10%.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Hello, April. Goodbye, March. Good riddance. Check out the market March madness. Check it out worldwide. The Euro Stoxx 50 down 9%. The Nikkei down by 13. The Kospi down by 19. The Euro Stoxx 50, worst month since 2020. Over in Japan, worst month since 08. Over in South Korea, the worst month since 2008. It was that bad for the month of March. This is the turnaround so far this morning. Over in Europe, bouncing back on the Euro Stoxx 50 by 2%. Overnight in Japan, up by 5%. The Kospi closing out the session up by more than 8%.
Traders want to pick up where they left off. Just as sort of a reference point, this Stoxx 600 hit a record on February 27th before this horrendous month happened in March. We had the same with the S&P closing at a record high on January 27th. And then what? People want to just erase March from existence and march on. Can you do that, though, with some structural changes, even as you do get a sense maybe there is some de-escalation?
We're trying to move on. We're positive by about 0.5% on equity futures on the S&P 500. On the S&P in yesterday's session, we closed out the worst month of the last 12 months with the biggest one-day gain of the year so far on the S&P 500. On the Nasdaq, higher by 0.7% this morning. Likewise on the Russell. In the bond market, yields continuing to fall. I believe for a third time this week, Monday, Tuesday, Wednesday, yields are down by 4 basis points, 4.28 on 10s, 2s at 3.76. That's a very different picture to a week or so ago when we were talking about the 4s. And the potential, I stress the potential, of rate hikes in our future.
In the face of a real inflationary shock from a prolonged conflict that could leave oil prices and other commodity prices at really high levels, I'll just add that yesterday's JOLTS data added a flavor to this of potential weakness. Hiring has fallen off a cliff. This is a frozen labor market heading into a jobs report on Friday that a lot of people say is irrelevant, backward-looking, nobody cares. It does matter to understand how much heat is in this economy and how much there actually can be a wage response to some of the inflationary pressure.
There has been a ton of heat in this energy market. Brent crude absolutely flying through last month, the biggest one-month gain we have ever seen in the Brent crude market. There has been a so-called contract roll. So the contract we're now focused on in the Brent futures curve is the June contract, 103 for that contract this morning. But if you check out December, we've crept into the 80s. And that's the reality check for this oil market, a shift from the 60s to the 80s since this war started, looking out beyond the front end of the curve.
There's been supply destruction, there's been oil production disruption and gas production, and there's been the risk premium that Jeff Curry really brought to our attention of Carlyle, saying ultimately people are going to pay more for physical goods because of the risk of getting it around the world, given some of this volatility that we've seen.
Paper market currently is trading on every single headline. Some of the ones yesterday were really shocking that the market viewed as potentially optimism that the war maybe was coming to a close, coming from the Iranian president. But further looking out, to all of Lisa's points, it's actually energy installations that have been hit. And then it's that premium that is still in the surface of not just what's going on in the Strait of Hormuz, but also what happens potentially in the Red Sea.
Oil holding on to triple digits so far this morning, 3 hours away from the opening bell. Let's get you some morning movers, some single names. Yahira has more. Hey, Yahira.
Hi, John. We start with Nike. Shares are falling 10% on the dot this morning after the company delivered a much weaker outlook than expected. Nike sees sales declining this quarter, and it's blaming the Iran war, saying that it's already seeing disruptions to traffic across the Middle East and Europe, plus tariffs and heavy discounting continue to weigh on margins. Moving on to the high-end furniture retailer RH, shares are falling nearly 20% in the pre-market. The company now sees sales falling this quarter. That's a big miss compared to expectations for growth, and it's also a tariff story here. Tariffs still biting, with RH saying that those duties cut about $30 million from revenue in the last quarter. And as optimism grows that the Iran war could be nearing its end, we are seeing some pressure on domestic oil stocks like Occidental, down 3% as we see crude prices falling. But remember, these stocks have seen a massive run during the war, with Occidental up 20% in the month of March alone. John?
Oxy, one of the best performers of the last month or so. Yahara, thank you. More from Yahara later this hour. On a radar this morning, President Trump saying military goals in Iran have largely been achieved and operations could soon come to an end.
We're finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer to do the job, but we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
The president going on to say reopening the Strait of Hormuz should fall on other nations. Elsewhere, the president delivering an address to the nation later on this evening. The White House saying President Trump will provide an important update on the situation in Iran at 9 p.m. Eastern Time. And finally, President Trump making his strongest threat so far to pull the U.S. out of NATO. Trump telling The Telegraph that the alliance is a paper tiger and that withdrawing U.S. membership is, quote, beyond reconsideration.
The fact that he was talking to a United Kingdom paper was interesting to me with respect to what he's trying to message. The president speaking is talking about Keir Starmer being a weak leader, talking about withdrawing from NATO, saying you guys aren't coming to our defense. How much is he trying to rally popular support in the United Kingdom to back the U.S.'s effort in the Strait of Hormuz? And how much are we seeing increasing outreach from this administration to the UAE, Saudi Arabia, and European nations saying we need your help? Because ultimately, there isn't a lot of political support to pass a $200 billion supplemental defense bill in the United States. The effort and the finances have to come from elsewhere.
Well, let's go through the facts and the recent reporting with regards to the division between the Europeans and the U.S. Spain closed its airspace to U.S. jets. Italy, we saw the reports yesterday, denying a military aircraft permission to land in Sicily. The UK only allowing US to use bases for limited defensive action. It's been brewing across the continent.
It's been absolutely brewing, and what you see in Europe is a hardened stance when it comes to this war specifically and the help they're willing to offer the United States. I think more importantly is less so what Trump has said about NATO, but what Secretary Rubio has said about NATO in the last 24 hours, because this is someone who has a very long history of defending the alliance when he was a senator and even when he first became Secretary of State. So yesterday he accused NATO of being a one-way street in an interview, and then on top of that, he was the first one to say, and maybe potentially this is why you had the president in this interview say this similar thing to The Telegraph, he said we need to re-examine the military alliance. So this has brought forward really some of the structural issues the United States has had with Europe, but also how Europe feels about this war in particular, because they feel like you didn't even give us a heads up for this. They should have been building their stockpiles, especially when it comes to energy. And that is why they are now dealing with serious domestic issues.
Oil down this morning by about 0.5% on Brent crude. Oil falling as the president stokes optimism the Iran war is nearing an end and possibly withdrawing before reopening the Strait of Hormuz. Ellen Wald of the Atlantic Council noting potential issues with the plan, writing this would be a terrible precedent for the U.S. because Iran is actually in an enhanced position of making more money than before. Ellen joins us now for more. Ellen, welcome to the program. The last time we spoke, which I believe was about a week ago, you said unless this ends in 10 to 14 days, the energy crisis is going to approach severe levels. The president's now saying it's going to take another 2 weeks, potentially. Ellen, with that in mind, what kind of levels are we going to approach in the next 2 weeks?
Well, if you look at what's happening already in France and other countries where they're having runs on gasoline stations, I mean, gasoline stations are running dry because, they're putting in these price controls, and that's making everyone rush to buy. We're really having severe issues in a lot of countries that we in the U.S. are quite insulated from because we're not experiencing this. Yes, we are seeing much higher gasoline prices, but the fact that we're not seeing any shortages is really giving us this sense of isolation, I think, from the most important impacts of this conflict.
Ellen, can the strait be reopened, or can you see supplies start to flow through there if Iran continues to hold on to control of this region? And I ask this at a time when Qatar is seeing oil tankers being bombed in Qatari land.
This is a really severe problem because if the United States ends this conflict or declares an end to it while leaving Iran basically in de facto control over passage into and out of the Persian Gulf, then we've actually put Iran in a much better position than they were in, before this started, because now, beforehand, they weren't actually controlling it. It was just this threat that they might actually limit traffic, or they might threaten the safety of ships passing through. Now they are threatening the safety of ships passing through, and it is effective because tankers are refusing to cross because of insurance issues and because they don't want to get hit by a drone. And then if we leave, Iran's basically in a position to say, well, how much are you going to pay us to leave you alone? And that's a whole new role for this country, and also puts them in the position to make more money.
Well, when it comes to the money, Ellen, in the past, anytime the United States offered waivers for Iranian oil, it was put into an escrow account, and it was dictated that it had to be used for humanitarian aid for the people of Iran. I didn't see any of that sort of language in the general license. So where is this money going that the regime is making right now off of selling their crude and the toll?
Presumably, it's going straight to Iran. It's not going in dollars because there's still restrictions on what kind of currency Iran can use. But at this point, do they really care whether Pakistan is paying them in yuan or not? It's going straight to the government now. Because militarily we've hit certain sites, we've hit factories where they're making these missiles and drones. They're not necessarily able to produce more of it right away. But the fact that they have this money means that they will be able to get back to this in the future, or they can funnel it to their proxies. I mean, the Houthis are still a wild card here that could completely change the situation in the Red Sea. And if they're doing that with Iranian funds, then have we really even put anything in this situation in a better place? And I would argue that not necessarily.
I was told once again by a source yesterday that the Saudis are basically paying off the Houthis to not get involved. At what point does that stop?
It stops when they have access to the Persian Gulf again. Once they can ship out of the Persian Gulf, then they don't have a need to continue to pay off the Houthis at maybe such a high rate.
Ellen, just more broadly, what's Saudi Arabia's role in all of this? We've heard from the UAE, or at least reporting from the Wall Street Journal, that they're considering seriously getting involved in some sort of effort to make the Strait of Hormuz independent and a free flow for traffic. When does Saudi Arabia get more intensely involved?
I think they get intensely involved as a member of the GCC. This is a waterway that they depend on. I mean, remember, we've had major wars on a much larger scale fought simply, for freedom of the seas. This was something that Woodrow Wilson cited when he brought the United States into World War I. So the idea that Saudi Arabia and the UAE and Qatar and Kuwait and Iraq want free passage or a freedom of the seas and freedom for passage through the Strait of Hormuz, that's a very basic right of nations. And so I do think that if there's a potential for them to make a difference in securing that they will get involved as part of the greater GCC.
Ellen, it's good to see you. Thanks for breaking it down. Ellen Walden there of the Atlantic Council on the energy market. In the near term, the market might be comfortable with this setup because it just wants the energy to start moving again. Partners in the Gulf won't be happy with that setup. Not at all.
It's unsustainable for them. And frankly, it's unsustainable for the risk premium that a lot of people are going to have to charge, because if you think that Iran's going to be in control and you're not sure how much your government's paying off the Iranian government, which ship operator is going to feel really comfortable going through the Strait of Hormuz? This is the issue with asymmetric warfare, and the reason why you're seeing reports that make a lot of sense about the UAE, about Qatar, about Saudi Arabia getting involved.
It's why the back end of the futures curve, the longer end, is starting to speak more to 80 than it is to 70.
Absolutely. And then right there, she said basically, if the Saudis are able to get back through the Persian Gulf, potentially the Houthis would be more inclined to deny the payments and support the kingdom has given them, and maybe get involved at the behest of really who's in charge of them, and that's the regime.
Brent Crude right now, 103. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. The White House is discussing the possibility that crude prices may climb to a record $150 per barrel. That's according to Politico. Officials are analyzing the economic effects of higher oil prices and are weighing ideas to bring down costs, including deploying more emergency powers. And LVMH shares having their worst start to the year on record as the Middle East war hurts sentiment and intensifies a demand slump for luxury goods. The Tiffany & Co. owner is set to report first quarter revenue later this month. And a federal judge is pausing President Trump's efforts to build a new ballroom at the White House. The judge ruling the president likely exceeded his legal authority by overseeing construction of the ballroom, the judge pushing him to get congressional approval. That's your Bloomberg Brief. John.
Yahara, thank you for the update. More from Yahara in about 30 minutes' time. Up next on the program, a first quarter for the ages.
You have the Supreme Court now going to rule on whether or not we can use tariffs. Can you believe this?
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas.
There are certainly concerns about the growth of private credit.
The United States and its partners have launched Operation Epic Fury.
Maybe we'll have more clarity in the next 3 or 4 weeks, but we don't have it right now.
Yeah, maybe. Anna Zenner of Morgan Stanley up next, live from New York City. You're watching Bloomberg TV.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Coming off the back of the biggest one-day gain since May on the S&P 500, leaving behind the worst month, going back some 12 months on the S&P 500. Equity futures bouncing back. That bounce continues, up by 0.6% on the S&P, on the Nasdaq higher by close to 0.9. Under surveillance this morning, a first quarter for the ages.
You have the Supreme Court now going to rule on whether or not we can use tariffs. Can you believe this?
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas.
But there are certainly concerns about the growth of private credit in aggregate.
Everyone's focused on these bubble risks. I think the biggest risk is actually the disruption risk.
The United States and its partners have launched Operation Epic Fury.
Prices went up to send signals to everyone that can produce more, please produce more.
We don't know how this war ends yet. Maybe we'll have more clarity in the next 3 or 4 weeks, but we don't have it right now.
So here's the latest this morning. Global markets looking to turn the page on a brutal first quarter that saw one market shock after the other. Investors hoping for calmer waters ahead in Q2. Joining us now to discuss, Anna Zentner of Morgan Stanley. Anna, good morning.
Good morning.
We have thrown a lot of this market and this economy. How well have we stood up to it?
Yeah, well, I'm really honored to be on this morning right after you say it's been the worst month. So I'm glad that we're closing out this month. But it's just been extremely volatile. And I think investors don't really know what they're supposed to make of all of this. Is this temporary? Is it more lasting? I can tell you that conversations are only just now starting to change to, could this have a real impact? And where can I sort of hide out during this time? Whereas it's taken up until now, with the conflict lasting longer and longer and longer than people thought, for people to really start to ask, wait a minute, is this going to be bad?
When we say to the bulls, what is anchoring your view? They usually have the same answer, earnings. And the outlook for corporate earnings is getting better, not worse. What's your view on that? And does this threaten to upend that story?
You know, I think there are pockets where earnings can get better, not worse. But I think that if we think broadly businesses are not going to have to absorb the higher costs of energy and inputs, I mean, we know how this works. It's just delayed. But we aren't broad sellers of U.S. equities here. There are pockets that have been oversold where investors can still get in and have a nice upside to that. It's just that you've got to be a stock picker here. And you also need to be maximum diversified across all asset classes. This is about risk reduction. We are in a time where we need to be reducing risk. And it doesn't appear that there's enough of that going on.
How do you reduce risk when it's unclear what the bigger risk is, whether it's inflation or some sort of downturn to growth?
I think the only option is just to be diversified across all asset classes. So within global equities, you know, choosing within emerging markets, LATAM over Asia, still preferring U.S. equities over other global equity markets, but being diversified across bonds and cash and real assets and alternatives. And so it's diversification is really the risk reduction.
How much have longer-term returns in risk assets, I'm talking about some of the major benchmarks and stock indexes, and even some credit, been reduced just simply because we're now at a higher inflation rate, people are paying a premium for physical goods, and there's extra policy uncertainty that is leaving a lot of people without the appetite to really pay the multiples that they were paying before?
Yeah, well, I think that's what we're seeing in sort of this volatility of people trying to find some footing and trying to time the market, really, which is never wise. Just don't try to time the market. And so you want, the reason why we always talk about, which is the most boring conversation to have with an investor, is diversify, diversify, diversify. It's just that this environment is just too uncertain. And I see a lot of disconnects out there, more so than I think I can remember in some time, in terms of people's expectations versus what I think, at least, what we think is likely to happen. I don't think recession risks are high enough. I think there are probably 40% odds of over the next 12 months of a recession. That's uncomfortable. That's really uncomfortable, and I don't think that that's priced in. I think that the market pricing out the prospect for Fed cuts is absolutely ridiculous. I mean, the Fed is going to respond to what is going to be a big hit to aggregate demand, for businesses absorbing costs and for households having to absorb costs and change behavior. That changing behavior has a gravitational pull on inflation. So yes, it stays the Fed's hand for now. They will be cutting, though, because we're going to stop spending on expensive things and switch to less expensive things. This is just tried and true cyclical behavior. There's nothing that's changed there. And so that's another disconnect that I see as well. So I think there's still a reckoning to come. And especially, you know, how can we have elation over being told the conflict may last only 2 to 3 weeks more? It's already lasted weeks and weeks more than people thought. And so you could open up the strait tomorrow and have normal flows, which of course wouldn't happen. Let's say overnight we get normal flows. Impacts are still coming. And so I just think that we've not braced for that.
Damage is done. When did you start to think this is going to have a lot longer term impacts? A lot of people in the market were saying we're going to get through this in 1 or 2 weeks. When for you was that moment?
Well, I think, you know, one of the benefits that I have now being at a large wealth manager is that we have access to experts. I mean, one, the CSIS, the Center for Strategic and International Studies, never before have I used them so much. They are an incredible source of experts on global developments. Speaking to admirals, Admiral McRaven, 4-star Admiral, Admiral Stavridis, these are people to speak to that have been very, very accurate when we've had conversations with them on what to expect and how long this could last. And they have been right, but that's not broadly embraced by the market.
Ellen, it's good to see you.
Yeah.
And whilst at the end there, Ellen Zentner there of Morgan Stanley. That's been a theme of the last month. We've seen it continuously on this program when we've caught up with CIS and when we've spoken to others too. The specialists are more concerned than the tourists. And I hate to call them the tourists because we all are ultimately tourists when it comes to geopolitical risk. Everyone that comes on this program with regards to financial markets are tourists on this. The specialists are far more concerned about what they've seen transpire over the past month.
They see physical shortages and they see more shortages coming down the pike. And Ellen Zentner and others have come on and seem to indicate they're much more worried about downside growth risk than they are inflation risk. And I think that that's really important to keep in mind because right now that disconnect really can be felt in the market where both bonds and stocks are thinking it's more an inflation risk than it is a hit to growth.
Energy analysts, executives, ministers behind the scenes immediately told you this is going to have longer term impacts and the market is brushing it off. But to Jeff Curry's point, you can't print molecules, and at some point that is going to catch up. It doesn't matter how much verbal intervention you throw at it.
Futures right now, the S&P positive by 0.6%. Coming up next on this program, we'll catch up with Tom Becker of BlackRock, Andrew Bishop of Signum, Susan Bell of Rystad Energy, and Admiral Pierre Vandier of NATO Commander for Transformation. From New York City this morning, good morning. The second hour of Bloomberg Surveillance is just around the corner.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Now, what would you say when you look at your career that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my past restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, no good, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So Example, Nobu Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Energy shocks take time to materialize.
Supply shocks create inflation pressures, and that creates upward pressures on rates.
In the worst case, it's not just inflation, it's growth.
We should all be concerned about are there cracks in growth that need to be responded to?
Instead of the above trend growth that we were looking for in the U.S., we could see slightly below trend growth.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action, the scores look like this. The gains continue to build, the bounce back, and some follow through this morning. Equities up by 0.7% on the S&P, up by 0.9% on the Nasdaq, and the bond market yields declining for a third consecutive day on 2s, 10s, and 30s. 10-year yields at the moment look a little something like this. Your 10-year down by 3 basis points to 4.28. And crude shaping up as follows. Brent trimming a monthly advance, a record monthly rally. Brent crude right now down by about 1 percentage point to 103 on Brent this morning. 2 reasons for the market move so far. The president ready to end the war, maybe in a few weeks' time. I stress maybe, and this story changes every single day. But some encouragement from this story from the Wall Street Journal that the UAE is preparing to help reopen the Strait of Hormuz.
And this actually is being treated as a bit more, I don't want to say credible, but realistic in terms of how this transpires, because as we were speaking with Steve Oth, it is just not feasible for the Strait of Hormuz to remain in Iran's control. It is not feasible for the UAE, it is not feasible for Saudi Arabia and Qatar, and frankly, for all of Europe and Asia, because it ultimately introduces such a huge risk premium. Ultimately, though, I come back and I'm thinking to myself, okay, here we are in April. And some of the big questions, how are we looking forward? Is this a growth shock? Is this an inflation shock? Or is this a blip that we can just look past as soon as someone says, all right, it's over?
The market wants 2 things. It's over, end the hostilities, and get the energy moving again. How close are we to those 2 things this morning?
Well, Sultan Al Jaber, who's the head of ADNOC and also UAE minister, is out on LinkedIn today, and he says the world must act together, protect the free flow of energy, and safeguard economic stability. Potentially, what the UAE is talking about is a growing coalition between Arab allies, maybe even some European allies, to come help the United States open the Strait of Hormuz. And the president's going to give this address today, and I think he needs to outline to the American people what they think the strategy has been, the wins have been, but also that how can you leave this region right now with the Strait of Hormuz completely controlled by the Iranians? They have more troops coming in, which is why I think it's important to look what the president does, as well as not what he says, because he says he's vacillating between a number of different options, but what he's doing has been consistent.
The one constant, troop build-up. We're all tracking the same thing. Coming up this hour, Tom Becker of BlackRock, with stocks seeing stability to kick off a new quarter. Andrew Bishop of Signum Global as President Donald Trump signals the war in Iran could be nearing an end. And the NATO Supreme Allied Commander for Transformation, Admiral Pierre Vandier, with allied countries facing pressure from the administration. We begin this out with stocks adding to the biggest one-day rally we've seen going back to May of last year. Tom Becker of BlackRock writing the following: we remain neutral directional equities and short duration across portfolios. Tom joins us now for more. Tom, good morning. It's the bond piece of this that I find a little bit more interesting. You think we're not paying enough attention to the fiscal risk that might be building here?
Yeah.
Tell us why.
I think the inflation risks are known, and coming into the year, inflation was definitely on an updraft even before the oil price spike. You had upstream kind of chips inflation, you had inflation in services kind of across developed markets. The fiscal consequences of the war, particularly for Europe, are something that's front and center in kind of our research agenda right here. Because, like you say, the Strait of Hormuz is really the choke point. That's much more of a European and Asia kind of supply chain route. LNG stocks in Europe are quite low, and Europe comes into this with a dearth of investment over decades. And so I think this is more exposing kind of the underinvestment. So we think there's going to be a fiscal response in Europe that markets are underappreciating.
So we've heard this phrase a few times in the bond market. We've created value in fixed income. You're smiling, I'm smiling, I've heard it a million times. The UK 10-year yield was the highest since 2008. Over in Germany, the highest since 2011. In Japan, the highest since the late 1990s. Is that not creating value enough for you?
I think if you anchor on the QE era of yields, it looks optically attractive. If you think about this post-pandemic new normal of fiscal, higher inflation, higher investment globally, these yields don't look like they're compensating you for the issuance risk, for the, every shock we've had in the last 5 years has been inflationary into the upside after kind of a couple decades of shocks surprising to the downside. And we think markets are still anchored on that kind of ZERP QE era of yields. These real yields are not that attractive. The German Bund's at 3%. Inflation, we saw the data yesterday, it's rising quite quickly. And I think what is being underappreciated are those second round effects, as well as some of the consumer psychology. Fool me once, shame on me. But I think coming on the heels of Ukraine, 2022, European consumers know that there's more inflation coming. Their behavior is going to change, and I think the ECB is tuned into that.
I think that this idea is so compelling, and you've been harping on it for a while, and I think it's been one of the true transformations that a lot of people are trying to hone in on. If we don't have the monetary response because of inflation, you don't have the fiscal response because essentially the more that nations borrow, the more that yields go up. How much does that introduce downside risk to growth that people are not fully appreciating when it comes to risk assets?
So I think the growth to us is not the challenge here, because you've had a lot of capital destroyed. I mean, you're just talking about the UAE. They're going to have to rebuild a lot of infrastructure. There's going to be LNG facilities that have to be rebuilt. Europe is going to have to harden. So we think the fiscal response puts a floor on growth. And so I think we're not so worried about the growth downsides. It's more that you keep kind of responding to every crisis with a fiscal response and issuing more debt. That's inflationary. Governments tend not to be the most savvy price, comparators. They're going to go in and move prices up. The U.S. has to rebuild its stockpiles of interceptors, and we're burning quite the run rate of kind of burn for the military operation is huge. But then you think about the response that countries with elections have to kind of offset some of the hit to consumers, hardening your infrastructure, getting energy security. All of those to us are growth stimulatory, but maybe not great for equity multiples.
I guess another way to ask this is, how constrained are developed markets from borrowing more money and actually engaging in these fiscal support plans if you do have people who are saying, we get it, you guys are just going to keep borrowing and rates are going to keep on going up? At what point does that pushback get to be too much for fiscal authorities?
So in Europe with 3% Bund yields, I don't think there's much pushback. So if you look at five-year European markets, they're a percentage point and a half lower than UK and US debt markets. So there's no real term premium in German debt markets. So we think that's an attractive place to play duration from the short side now. If you think about kind of the U.S. 10-year has been remarkably well behaved given this inflation shock. If you think about where yields were in January, they're not that much higher here. I think part of that is there's been constrained supply. We just haven't been issuing a lot more bonds. The Fed is expanding its balance sheet again. And I think people are worried about these downside risks to growth. We just don't see it. And so we're deploying risk elsewhere.
So you're not worried about Germany or the United States, but to Lisa's point, kind of a Liz Truss moment. Could you see that in any other sovereigns?
You've seen glimmers of it, right? Wasn't there a moment after the Japanese election where people were like, oh my God, the Liz Truss moment? So like, markets are doing it in, for a moment. But I think we haven't seen that kind of, stock sell-off, equity, bond sell-off, and currency sell-off. We haven't had that. And I don't think we're going to have that necessarily. It's just a grind higher with each shock moving inflation.
Let's sound the US 10-year. Let's just down that piece if we can. 428, you are absolutely right. We are at the upper end of the pre-war range. This was it, 428. Now, with that in mind, if you go pre-war, a lot of people came into this year excited about a cyclical bounce. And this for me, and Lisa and I have been talking about this a few times in the last week, this for me is the great contradiction in the consensus right now. At the start of the year, everyone's bulled up on a cyclical bounce. That's the consensus view. The consensus view now is the economy is not strong enough to have second-order inflation effects. Now, can you help reconcile those two consensus views? Make sense of that?
I guess people just think that the consumers are going to retrench. But I think we've learned over the last 5 years the U.S. consumer wants to spend money. And the fiscal consequences of the war, we think, are that governments are going to spend more money. So that's all stimulatory to growth. IP was picking up for data centers. It was picking up, but also more broadly at the start of this year. So the ISM kind of moved out of contraction for the first time in 2 years. That wasn't just data center builds. That was a more broad lift. And so I think last year, if you put yourself in the shoes of a U.S. consumer, tariffs are all the headline. Do you want to be the fool and go and buy something when it's tariffed if you don't know what the tariff rate's going to be? So services did a lot of the heavy lifting last year. U.S. consumers spent money on services. We don't measure that with retail sales. It doesn't come out every month. We don't track it as closely. But U.S. consumers spent money last year. It just wasn't on the stuff that they were worried had a higher tariff price.
So we understand the concern about the bond market. You've given us a pretty in-depth framework for that. How are you deploying capital? How are you taking risk right now on the long side?
Yeah, so over this month, you saw a lot of complacent trades get unsettled. So people were looking to clip a coupon. A lot of tourists were in emerging markets. That was sort of the trade of the start of the year. And emerging market bond markets really got rocked at the start of this month. So we use that as an entry point to step into kind of some of the more commodity-exposed countries. Mexico, Brazil, yields shot up. There was an expectation of lots of cutting. They're still biased to ease, but now you're getting kind of a couple 100 basis points of extra yield to kind of enter into a country that is exporting into this higher commodity environment. And so the terms of trade are quite good for them, and we can get a better entry point. That's one place. And then, we've closed some of the gilt short. Gilts have moved a lot. The BOE pricing has moved a lot. And so we've bought back some of that gilt short on this month's price action.
Interesting. Tom, it's good to see you. Thoughtful stuff, really thoughtful stuff. Tom Becker there of BlackRock. Whether you agree or disagree, they're the pockets of tension right now that we all need to talk about.
Yeah, and the fiscal response, I think, is really important. The idea that there's going to be so much physical infrastructure that has to be rebuilt, and there's so many countries that are willing to rebuild it in order to support their political ambitions, that this is really the regime that we're going to be in on the right side.
The election cycle.
It's going to be wild.
Just planning around that. It's just wonderful, isn't it?
Oh, so much fun.
Yeah. Bond yields down for a third consecutive day. We're down by about 3 basis points this morning. 428, call it 429. Let's give you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Trump saying the U.S. could end military operations in Iran in the next 2 to 3 weeks. Trump saying that the U.S. goals of eliminating Iran's nuclear program have been completed and that he would be willing to end the campaign even without securing a deal to reopen the Strait of Hormuz. President Trump saying he is strongly considering pulling the United States out of NATO after it failed to join his war on Iran. Trump telling The Telegraph that the NATO alliance is a paper tiger and that withdrawing U.S. membership is, quote, beyond reconsideration. And the United Arab Emirates is reportedly gearing up to join the war. According to the Wall Street Journal, officials are reviewing how it could play a military role in securing the strait. This would make it the first GCC country to join the fight after being hit by Iran. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, President Trump setting the timeline.
We're finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer to do the job, but we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
Andrew Bishop of Signum joins us next, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujian report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The bounce continues, adding to recent gains on the S&P 500, up by 0.8%, kicking off Q2 and a month of April higher by 1% on the Nasdaq 100. Under surveillance this morning, President Trump setting the timeline.
When we feel that they are, for a long period of time, put into the Stone Ages, and they won't be able to come up with a nuclear weapon, then we'll leave, whether we have a deal or not. We're finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer to do the job, but we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
So here's the latest this morning. President Donald Trump indicated the U.S. could wind down operations in Iran within weeks. The White House announcing the president will provide an update in an address to the nation later this evening. Bloomberg's Tyler Kendall has the latest right now. Good morning, Tyler.
Hey, John, good morning. Well, as President Trump says that the U.S. could withdraw forces from Iran within the next 2 to 3 weeks, he also made clear that he doesn't think an agreement with Iran is required to end the U.S. military operation. In fact, he said that the main goal, of course, is to ensure that Iran will not be able to obtain a nuclear weapon with or without a deal. Still, I was at the White House yesterday where officials maintained that negotiations are ongoing. We heard from Secretary Pete Hegseth, right, who said that diplomatic talks are, quote, gaining steam, but also vowed that the U.S. will continue to strike Iran until any such agreement is reached. In fact, a person familiar with the matter tells us here at Bloomberg News that the U.S. is now moving a third aircraft carrier strike group to the region. At this point, it doesn't feel like a breakthrough is imminent. In fact, we know that one of Iran's top demands is that they obtain sovereignty over the Strait of Hormuz. Of course, that's considered to be a non-starter, but it is raising questions on what will happen if President Trump does withdraw U.S. troops without the Strait of Hormuz disruptions being resolved. As you well know and have been discussing on the program, President Trump is heaping the criticism and the pressure on allies to take control of the strait. In a new interview out this morning with The Telegraph, he did appear to signal that he could withdraw the U.S. from NATO over his dismay of how allies have responded to his demands when it comes to the waterway. Plus, pair that with new comments from the Secretary of State Marco Rubio overnight, saying that it may be time to re-examine the alliance. John, as you well know, President Trump is also facing domestic pressure as retail gasoline tops $4 a gallon this week. Politico is reporting new this morning that the White House is considering some other emergency options to deploy in a bid to tamp down on prices.
Tyler Kendall, good to have you back. It's good to see you. Tyler down in Washington, D.C. More still to come from Tyler and the team over in Washington. Andrew Bishop of Signum writes the following: we find it extremely unlikely that President Trump would end the war in Iran without first at least trying to reopen the Strait of Hormuz. Andrew joins us now for more. Andrew, welcome back to the show. How are you preparing clients for this address later on this evening?
So unfortunately, I actually think this address is not going to deliver much clarity. My best guess is that we're going to get a reiteration of all the same messages, which is the war's end is coming to, is getting nearer. It's not imminent. We will leave as soon as we've accomplished our objectives. Essentially just more of the same. I think this is the president trying to reassure the American public in addition to markets and buying some time.
We do know that the troop buildup does continue, though. What do you think the president's three main objectives are and the options he has?
So I think the president's main objective at this stage is to reopen the Strait of Hormuz, hence our skepticism that he will leave the region without at least trying to do that. And this means that in our view, the idea that he's going to unilaterally declare an end to the war and leave with Hormuz closed is exceedingly unlikely. Instead, we're at a fork in the road where you've got either de-escalation through a deal, which is our base case, although narrowly so, or major escalation, and you hinted at troops. I think that major escalation would entail boots on the ground, not in Kharg Island, which I think has always been an overhyped myth, but rather to reopen Hormuz directly.
Andrew, how difficult is that in terms of communication from the White House? Their main objective now is to open something that was already open before the war started.
The easy way to communicate it is to deny it, right? So they're just arguing that they really don't have to tackle the problem. That doesn't mean they don't have to tackle it.
How much is it that the president also is trying to get allies involved and trying to force them to the region to create this coalition?
I think that is a huge part of it. You're absolutely right. With the one twist that I'll mention, which is that I'm very skeptical the president, I mean, of course he would love that, but I'm skeptical he expects, countries like France, the UK, Germany, et cetera, to join in the military operation to reopen Hormuz. I think what he's trying to do instead is create a backup plan where if the U.S. moves into Hormuz unilaterally and does essentially the heavy lifting, the U.S. will not have to stay for the long term because the Europeans take over from there. Far from guaranteed that that'll happen, but I think that's the more realistic objective he has in mind.
Andrew, how much have the comments about NATO's participation and comments about possibly asking the Gulf region to help pay for this stems from the fact that there isn't political will right now in Washington, D.C. to pass that $200 billion supplemental spending plan for the Defense Department?
I think very much so, but to be honest, even if that bill or that supplemental were to pass, I think the president would have the same language, which is always trying to outsource the bill for better or for worse. I'm not taking a side on that, but I think this is in line with his historical pattern and would be the case no matter what happens to the U.S. defense budget.
Do you think that there is enough political will from the conversations that you've had with strategists in Europe in particular to join this effort, given the hardening stance in certain places, whether it's United Kingdom or Spain?
So I think both are true. You are seeing a lot more progress in conversations behind the scenes than is typically portrayed. It's not true that the Europeans are doing nothing. The French have been pretty active. The Brits have sent delegations to Tampa, Florida, to discuss this with the U.S. military. So there is actual real planning going on, and I think we will and could see, or we could and will see a European role to keep Hormuz open once it's been reopened, if that ever happens, which we think it will, to be clear. However, again, it's not going to be in a fighting capacity. We've got to separate out the potential UAE role, which would be in a fighting capacity, versus the Europeans' role, which would be more of almost like a peacekeeper rather than peacemaker, if you will.
Andrew, this is not even about fighting at this point, it's about airspace. And Spain at the moment, the Spanish government, the far-left government, is borderline anti-American at this point. I'm really struggling to understand how the US is going to deal with Europe going forward from this. It was tense already at the start of the year, and rightly the Europeans were very upset by how the US delegation handled Greenland, particularly on their visit to Switzerland back in January. But this is getting worse, not better.
Yeah, I think there are two answers to that. One is, you've got to separate out the Spains from the UKs, right? Not all countries in Europe are taking the French, the Spanish approach. The French, for example, have been denying some overflight, but have been much more selective. So the first answer is, Spain is the extreme example, to put it simply. But the second answer is, yes, absolutely. The break in the transatlantic relationship has been going on for a couple of years. One could argue has been going on since 2003 in various degrees and will absolutely continue. Unfortunately, I think that is maybe not irreparable, but pretty close to it.
Andrew, it's good to see you. Thanks for breaking it down. Andrew Bishop there of Signum on the relationship and the breakdown of the transatlantic relationship we've seen build for quite a while now.
Yeah, the United Kingdom and Spain are two different countries. Nonetheless, it's very difficult for the European Union to act as a cohort if you have Spain with also the Netherlands and Germany and France, and there are all these different competing interests. Is part of the reason why it's difficult to get a handle on what the relationship of NATO will be going forward, what this means for, say, Russia, and how they treat Europe, and what this means going forward for the Gulf.
I spoke to Amos Hochstein yesterday in Washington, who is President Biden, a chief aide to him, and he said the issue with Spain is years in the making, and really for the U.S. government it was a problem when Spain decided to deploy Huawei in their infrastructure. They have taken steps, how many times we've seen with this prime minister, towards Beijing and almost shutting their back to the United States.
And this will be the pushback from the Secretary Rubios of the world. Why provide a security blanket for the Europeans that Spain can take advantage of when Spain is making decisions like that?
That go against the U.S. national interest, and they would argue against the interests of U.S. allies and NATO writ large. And at the same time, what you hear from Secretary Rubio, like we heard from him yesterday, when it comes to Spain and Italy not allowing for the United States to potentially land or use U.S. air bases, their point is, well, then why do we have them there?
I thought it was fascinating, his response to you, Amos Hochstein, when he said that the U.S. should not sell sensitive technological equipment because you just can imagine that China has a wiretap. I mean, he went that far. This is a bipartisan approach to exactly what type of constraints there could be. It is one of the reasons why a lot of this is fraying.
To your point, that's from a Democrat.
Exactly.
Not a Republican. Coming up on the program, Susan Bell of Rystad, with crude prices hovering around triple digits, plus Yahira has your modern movers, Nike shares sinking, with the war in Iran weighing on guidance. That name is down by more than 10%.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Futures positive here by 0.75% on the S&P 500. On the Nasdaq, shaping up as follows. We are up by 1%. The rally continues on the Russell, up by 0.9. Yesterday on the S&P, the biggest one-day gain we've seen going back to May of last year, even with the worst month in 12 months on the S&P 500. In the bond market, 2s, 10s, 30s, yields all over the place last month. Initially a big spike higher, particularly at the front end of the curve as we priced in more inflation, less easing. 2s got to 4%. They're down by about 25 basis points from the highs. 3.76 and down another 3 this morning. Chairman Powell anchoring us around the idea that they won't be doing anything anytime soon.
Saying it's a two-sided risk and saying right now they do not see break-even rates or inflation expectations becoming unmoored. That is the potential catalyst for them to take action. Otherwise, this still seems to be a Fed looking to cut rates and potentially may have to do so based on a downside hit to growth.
Let's finish on energy. Triple digits on Brent, around those levels on WTI, pulling back just a little bit. We're down by, let's call it 2%. The hope, and I stress the hope for many people in this market, is that the hostilities will end soon and the energy will get moving. Some indicators of that in the last 24 hours.
Right, and maybe the hostilities could end soon, which right now it is not happening. To Lisa's point earlier, there was a tanker by Qatar Energy that was struck by an Iranian missile just this morning. They are not ending, but even if hostilities were to end, what do you do with the problem of the Iranian regime saying we are not going back to normal for the Strait of Hormuz? Maybe there's a toll, but maybe not only the toll, but you have to be from certain countries as well. So it's not going to be the normal flow, even if hostilities were to end.
Brent crude, 102. Let's give you an update on single names and morning movers. 2 hours away from the opening bell. Yahira has more. Hey, Yahira.
Hi, John. We start with Nike. Those shares down 10.5% in the pre-market as the company blames the war in Iran for declining sales. Nike saying that it's already seeing disruptions to traffic across the Middle East and Europe. And that contributed to Nike issuing a weaker than expected outlook as it also continues to see weakness in China. Meanwhile, moving on to some sell-side action, we are seeing Disney shares up 1% in the pre-market after analysts at Raymond James upgraded the stock to outperform, citing an attractive entry point. Disney shares down 14% year to date and down 7% in the month of March alone as concerns mounted that visits to its parks could be disrupted by the war. And we are seeing Micron shares rising 2.7% in the pre-market, building on yesterday's gains. But the question is how much of this is real and how much of this is just the broader market optimism, because Micron shares are down some 25% from recent highs as concerns continue to linger over its CapEx plans, plus this technological breakthrough from Google that could cut memory needs. John?
Yahira, thank you. Thank you for the update. On our radar this morning, President Donald Trump expecting to address the nation at 9 p.m. Eastern Time. The White House saying the president will provide an important update on the situation in Iran. Elsewhere, a third US aircraft carrier heading to the Middle East as military operations continue. The carrier expected to take 3 weeks to arrive as the president signals the war could be nearing an end. And finally, the UAE preparing to use force to reopen the Strait of Hormuz. The Wall Street Journal reporting officials are actively weighing military options, including mine clearance, to help secure the waterway.
This underscores what we've been hearing from a lot of analysts and investors this morning, which is for the U.S. to leave this area and leave the Strait of Hormuz in control of Iran is infeasible. And frankly, it is unsustainable for the Gulf Cooperation Council, which is a reason why the UAE would be interested in getting involved, as well as Saudi Arabia. How much could this lead to the next phase of this war that won't necessarily end, but could enter a more sustained phase?
This report really reflects a lot of conversations I've been having for weeks. That at some point, the UAE would be willing to get involved, probably more so as long as there is a coalition. I really think it's important to go back and read the opinion piece Ambassador Youssef Al-Otaiba put in the Wall Street Journal. We want Iran as a normal neighbor. It can be reclusive and even unwelcoming, but it can't attack its neighbors, blockade international waters, or export extremism. And the ADNOC CEO today saying Iran's action is about global economic extortion. They will not allow it. They are also part of this body of water. And for them, this is where the buck stops.
This is not going to be the new status quo for them at all. At all. And when we talk about negotiations, I keep going back to it. Gulf nations have got to say in what happens here as well. They've got to say for sure. They've got skin in the game big time.
The United Arab Emirates has gotten hit the hardest because they're the closest to Iran. They have been at the most at risk, and they've experienced the backlash. I will just say the points that you raised in the editorial was fascinating, given the fact that they also want to protect their own nations from getting dragged into a sort of extremist cycle that they fought hard, and the entire upbringing of the economy in that region. They have to sustain that with peace.
They're also a financial hub, and they're cutting off access to the regime's access to being able to use finances because, of course, they are barred from SWIFT. It's very challenging. Also, I thought this was really important. Emirates Airlines, nationals of Iran are not allowed to enter and transit. If you want to go in and out of Tehran, a key hub, I've been there, a key hub before you go anywhere else in the world is to stop in Dubai.
Crude prices right now still around triple digits. On bets the war may be coming to an end. We're pulling back just a little bit on Brent and WTI. Susan Bell of Rystad Energy writing, without the Strait of Hormuz reopening, the energy crisis will deepen. Crude oil and product prices will continue to escalate until there is some resolution. Susan joins us now for more. Susan, welcome to the program. Let's go with the president's line. Let's say it goes another 2 weeks and maybe an additional few days. Where's this market then?
Well, I mean, if it depends on how the conflict resolves. Certainly the president is now talking about leaving the region before ensuring that the Strait of Hormuz is flowing normally. And that really doesn't do much for energy markets globally. We really do need to see the Strait of Hormuz operating like normal for crude oil prices to begin to return to more sustainable levels. Crude oil prices right now are at levels that are very inflationary, and the knock-on impacts on product prices are what's driving consumers to reduce their spending on discretionary items. And it has a GDP impact globally. It's recessionary, and if this ends in 2 to 3 weeks, that is very good news for the world, particularly for Asia that's facing a mounting energy crisis. I think it's highly unlikely this ends in 2 to 3 weeks, though.
Susan, let's just stay on Asia. The shortages that we've been tracking, building over the last month. Think Indonesia yesterday rationing fuel, and we've seen others do similar things. Where are we with that? And a question we've been asking as well, how are you tracking what happens next in a place like Europe? Could they be experiencing this in a few weeks' time?
Absolutely. Asia is hit hardest in this situation, and it started with petrochemical feedstocks, but very quickly moved into diesel and jet fuel, and it's now impacting gasoline. Gasoline was a little bit slow to respond, but now we are seeing that being impacted, and we do expect to see more government-led rationing in Asia. Right now, the measures are, it's a headline, but it doesn't have a truly material impact on global demand yet. But with the 10 million barrels a day of crude oil that has been shut in and a couple of million barrels a day of products that can't reach the markets anymore, we will have to see global liquids demand decline by upwards of 10 million barrels a day. And right now we are seeing around 3 million barrels a day of demand destruction, and that's largely focused on jet fuel and the petrochemicals industry. But we need to see gasoline demand fall, we need to see diesel demand fall, and unfortunately this is going to spread from the Pacific Basin into the Atlantic Basin. Europe has 60 to 90 days of strategic petroleum reserves that they can release. But beyond that, you know, if this crisis extends into the summer, then we are talking about government-led rationing in Europe.
Susan, that seems a lot closer than a lot of people seem to be pricing in. Do you think that markets are accurately reflecting how close we are to that type of rationing?
I don't think so yet. I mean, when you look at the forward curve on crude oil prices, they still are quite backwardated, meaning the front month is still very strong relative to the future months. If the market sentiment was that this war was going to, or maybe not so much the conflict, but that the Strait was going to remain controlled by Iran and that U.S. allies were going to be largely shut out of it, if the markets were considering that in the futures curve, I think you'd see a much flatter futures curve. I think that there's perhaps a little bit too much hope in that futures curve right now.
If this conflict ended in a week, how bad would the shortages be? I mean, I guess I'm trying to get a handle on how much is already baked into the system and is coming down the pike, regardless of how quickly this issue is resolved and supplies can get moving through the Strait of Hormuz again.
Right. If this conflict ended in a week and the Strait of Hormuz started to move, Asia is still about a month away from starting to get normal flows of crude oil just because of in-transit times. So Asia would still face some pretty tight product markets, but Europe would be in a much better position. They have adequate strategic reserves to get through the next, say, 2 or 3 months. And beyond that, it turns into a very significant energy crisis.
Susan, thanks for breaking it down. We appreciate it. Appreciate the numbers. Susan Balder of Rystad on what's happening at the moment and the cushion Europe still has, and that's the good news. There's reason for panic. We used that word yesterday in certain markets because there are real shortages and you're seeing countries ration access to these fuels. There is a cushion still in Europe, and you hope you don't get to the point where it runs out.
She was saying in June, you could end up at a place where the government's rationing how much gets used. Remember the idea of every other even or odd license plate getting to fill up on any given day, and so people had 2 cars. This was back in the 70s with Carter. I'm just wondering, you know, if we get to that kind of point, what kind of political pushback do you end up getting as well?
How long the Strait of Hormuz stays open also will determine when all these Arab countries hit their storage tops. And then at that point, you are stuck. You have nothing else, no options available but to shut in wells.
Brent crude right now, 101. Let's give you an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Saudi Arabia's exports of crude oil plummeting by 50% in March. Iran's virtual closure of the Strait of Hormuz forcing Saudi Arabia to divert crude to terminals across the country at the Red Sea. About 55 million barrels of Saudi crude are still stranded in the Persian Gulf. An Iranian missile hit a fuel oil tanker off the coast of Qatar today. A total of 3 missiles were launched from Iran, but 2 were intercepted. This as Iran continues to launch attacks at Israel, Bahrain, Kuwait, and the United Arab Emirates. And President Donald Trump saying military goals in Iran have largely been achieved and operations could soon come to an end. The White House saying the president will deliver a, quote, important update on the situation at 9 p.m. Eastern. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you for the update. Up next on the program, an alliance under pressure.
That, in fact, that we can no longer use those bases to defend America's interests. Then NATO is a one-way street. We are going to have to re-examine that relationship. We're going to have to re-examine the value of NATO and that alliance.
Up next on the program, the NATO Commander for Transformation, Admiral Pierre Vandier, joins us next from New York City. You're watching Bloomberg TV.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The bounce continues, adding to gains, up by 0.8% on the S&P, up by more than 1% on the Nasdaq. Quite a rally following the losses through the month of March. March madness for global markets. In the bond market, 2-year, 10-year, 30-year. 2s got to about 4%. At 1.10s, we're looking down the barrel of 450. We're back from those highs. We're down by 3 basis points this morning. 376, 10s at 428.
It feels like there was a great washout. It's a lot of momentum positioning that got completely blown out. And now we're looking at the rubble and saying, okay, what is the credible trade going forward? Do we have clarity? Well, I'll let you answer that. But right now, I think there still are a lot of questions out there.
I'm struggling for clarity right now. I think there's a lot of hope that this war ends quickly and the energy starts moving again. I've got no idea how misplaced that hope is.
And from an economic perspective, do we frame the rest of this year as more of one that could be beset by a deflation risk or a downturn in growth risk? And those two are polar opposites, and that's really the framing that we have for the market.
And you've got these issues, Lisa, that we've been talking about that predate this war. AI disruption, private credit jitters. Those things have been building now for a while.
And a lot of people have been trying to focus on those because they can't get their head around this, and it's not exactly tradable. But good luck trying to get any sort of clarity on that either.
Crude this morning around triple digits. WTI just below those levels. Let's call it 98.99. Right now, Brent crude 101, and down on the session by more than 2%. Under surveillance this morning, an alliance under pressure.
If now we have reached a point where the NATO alliance means that we can't use those bases, that in fact, that we can no longer use those bases to defend America's interests, then NATO is a one-way street. When we need them to allow us to use their military bases, their answer is no. Then why are we in NATO? You have to ask that question. We're going to have to re-examine that relationship. We're going to have to re-examine the value of NATO and that alliance.
Here's the latest this morning. The president slamming NATO, telling the Telegraph he is strongly considering pulling the United States out of the alliance as members refuse to join the war with Iran. Joining us now is Admiral Pierre Vandier, the NATO Commander for Transformation. Admiral, welcome to the program, sir. I'll share with you what the president said to the Telegraph. In their story this morning, they say the president was asked if he would reconsider the U.S.'s membership of the alliance after the conflict. He said, quote, "Oh, yes, I would say it's beyond reconsideration. I was never swayed by NATO. I always knew they were a paper tiger, and Putin knows that too, by the way." Admiral, what's your reaction to that quote, and what's the future of this alliance?
So thank you for having me. It's the first time I'm on a US TV on live, so I'm very happy to be able to share some comments with you. So you will clearly understand that we, the military, are not maneuvering on the political level. So I will not comment this debate, which is a strong one, which is about the transatlantic links and how the things go on the political side. I think what we have in front of us is a world where the crisis is not anymore the good understanding of how the things are going. It's much more a question of shock. If I may an image, a crisis is when the tires of your car are flat. A shock is when you hit a tree. We are in a world where hitting trees now is a new normal. And I think for an alliance, it's a strong challenge to be able to adapt at a very high speed to these shocks.
Admiral, though, this goes beyond just politics. This is about operational issues for the alliance. When the UK only allows the US to use bases for limited defensive action, when we see reports that Italy is denying a military aircraft permission to land in Sicily, and you have the US questioning whether they should even have bases in those places if they can't use them, the question still remains, what is the future of this alliance? From an operational standpoint, what is the future of this alliance?
I think the strength of the alliance is having been able during more than 18 years to discuss and to find a way together. It's the consensus. It's an alliance which is not driven by majority, but by consensus. And so that means that you have a unique place in the world where you have 32 nations that discuss at political level on a daily basis. And so I know that since this war is going on in Ukraine, there are very intensive discussions at NATO level. It's not only the nations themselves, one by one with the US. It's all together in the NAC. It's the NATO North Atlantic Council where this discussion occur. And I think it's a strength for the West. It's something we need never to neglect. Is the fact that we are together, we are committed by bonds, and so we need to. There are always tensions. That is not the first time, but we need to solve this as a united alliance.
Admiral, can the alliance exist though without the support of the United States?
This is a great question. So, Mr. Trump, during the La Haye summit last summer, he achieved to ask to the allies to spend 3.5% of their GDP for their own defense. That comes by the fact that the US have other priorities. They are not only focused on Europe, and the crisis in Iran is a good demonstration of what they say. So it's a moment for Europeans to stand up and to do largely more than they have been habituated to, they did before. During the post-Cold War decades, the Europeans have been somehow the free riders of their own security. Today, there is a great change, and now we need to ramp up in all domains and to be able not to do without the US, but largely with a smaller force of the US, given the other commitment these US forces have over the world.
Admiral, is it ability or will to potentially help the United States when it comes to reopening the Strait of Hormuz? I was struck by the UK Defense Secretary Minister in an interview really struggling to answer basic questions, even about how many frigates the UK has presently at the moment.
So we inherit 30 years of disinvestment in all domains, in the industry, in the weapons stockpiles, in the military, in the number of soldiers. So it's not by a flick of a switch that we will change that. That means a strong, long-lasting commitment from the Europeans to be able to ramp up. So we inherit a very bad situation, and I think it's time now to wake up.
Given the fact that there is a lot of questions right now about the U.S. and the U.S.'s role with NATO, how likely is it that in 5 years NATO will still exist?
It's a very political question. I think we don't kill. We inherit a system which is a good one. In fact, in other parts of the world, I think most of the allies we discuss with, and especially in the Pacific, they are saying we should have something that looks like NATO. So NATO is how it is. It's a big organization, but it's a one where we discuss on every day. You have more than 12,000 military that on a daily basis, they work on plans, they work on interoperability, they work on training, they work on concepts. So this is a goal in our hands. And so I think it's a moment where we need to have a cool hands and not saying, okay, because there is a crisis, we will kill the baby. I think it's a moment we have an heritage. We have something that works. I think it's a moment where all the stakeholders need to be responsible. They need to say, okay, what we inherit, and with this this alliance, I think there is a lot to do still, and killing it will not make the world safer.
There was some questions about the fact that missiles were lobbed at Turkey from Iran, and that this potentially could engage NATO more directly in the conflict. What's your response to that?
So some measures have been taken by Secure. It's the U.S. General Gringovich, which is in charge of that kind of answers. And so he has taken measures in order to be sure that the NATO AOR, so area of responsibility, is well protected against the will of Iran to spread the crisis outside of its borders.
Admiral, before you go, can I get clarification on something? Can you confirm whether Iran did try to strike the Diego Garcia base in the Indian Ocean? Because we're still trying to gauge what their range actually is. What do you know about that?
So it looks like they have tried to send a three-stage ballistic missile, which is much more looking like a commercial rocket. I think it was a messaging, and they are trying to demonstrate their ability to expand and to spill the crisis outside the Middle East. It's their strategy. And so I think it's a moment where, back to the islands, it's a moment where I think we need to show that we are united. We are committed to defend 1 billion plus citizens over the world and not kill the baby at a moment of tension, which I fully understand.
Admiral, thanks for making time for us this morning. Very sensitive moment, and we appreciate your time, sir. Thank you. The NATO Commander for Transformation, Admiral Pierre Vandier, on the future of this alliance and the operational difficulties at the moment.
Yeah, and how difficult it is right now to see the future, but continuing to reiterate the message that they're stronger together, given the alliance in the past.
Also interesting, he said time is now to wake up. How many times have we heard that from NATO and from European officials about how they need to really reinvest in their industrial base?
Coming up on the program, we'll catch up with Lizanne Saunders and Kevin Gordon of Charles Schwab, Yelena Shuletseva of the Conference Board, Nouriel Roubini of Roubini Macro Associates from New York City. The third hour of Bloomberg Surveillance up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Some of these unwinds have been technical and mechanical.
The equity markets, guys, don't seem to be overly concerned.
Is there opportunity in the market? I think absolutely.
The market will not wait for clarity. The market is just looking for, are things getting less bad?
We kind of have to take it one day at a time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your scores, the price action looks like this. Equity futures on the S&P adding to yesterday's gains. The biggest one-day gain on the S&P we've seen since May of last year. Up another 0.8% on the S&P. On the Nasdaq, up by 1 full percentage point. In the bond market, unwinding the sell-off of last month. That continues for a third consecutive day. Yields are lower, down by 4 on a 2-year to 3.75. In the commodity market, crude trimming a record monthly advance. Brent crude back to 101. WTI at 98. And the market getting everything it wants to hear right now. The president talking up ending hostilities soon. And in the Wall Street Journal this morning, the UAE reportedly gearing up to get involved to reopen the Strait of Hormuz.
So ultimately, this is a market that wants to rally and is trying to reset after a pretty miserable March, and a sense that maybe there's cleaner positioning now for them to take some wagers. Big questions remain, of course, not to mention just how much these talks are ongoing, what the path of the conflict will look like, but also, will this ultimately prove to be a blip? Will it be an inflationary shock, or will it be some sort of hit to growth? And those are different parameters that people are trying to work through.
If you take the two main headlines today, one is the president's going to give this speech this evening. I was told it's going to be the Academy Awards of Verbal Intervention, and he's talking about 2 to 3 weeks time frame. At the same time, the UAE is talking about we are going to potentially get involved, we are ready, and we want to be part of a broader coalition, really, when it comes to reopening the Strait of Hormuz. What that says to me is escalate to de-escalate in the next 2 to 3 weeks. So potentially there is going to be a little bit more of kinetic movement on the ground, especially as you see the continuation of troop buildup.
I know that Monday feels like a lifetime ago, but on Monday, which was only 2 days ago, the president came out and said that if they don't reopen the Strait of Hormuz, they'll be bombing energy infrastructure. That was Monday. Tuesday, the story, complete opposite of that. And are you really convinced that you know what's going to come later on this evening? Because I'm not. What happens at 9 p.m. when we get an address to the nation?
Everyone's very excited to find out. There has been a sense of frustration with headline diplomacy and headline trading, given the fact that it's been all over the place. That's why people are watching the troop buildup. That's why people are watching some of the connections between the UAE and the GCC more broadly. Bigger picture stories. Everyone's looking at what the structural change could be, because you can't analyze this. This is not a tradable kind of headline roulette that we're playing here.
But this is on purpose. The president is keeping optionality, one, for himself, but also how many times has he talked about he likes this idea of surprise. Axios spoke to an administration official who said this isn't 3D chess, it's 12-dimensional. He contradicts himself regularly, so nobody knows what he's thinking. It's on purpose. The question I think a lot of people have is, does he even know exactly what his plan is?
Doesn't the trading week just feel like one long day that starts on Sunday evening and ends on Friday?
Yeah.
And you get one day off and it's Saturday?
And you feel
that's not even a day off.
Actually, are reading
if you're covering Trump, it's not a day off.
So 12-dimensional chess or a scribble that you're trying to follow? Because that kind of was what my mind feels like right now.
6-day trading day. It's very strange. Coming up this hour, we'll catch up with Liz Ann Saunders and Kevin Gordon at Charles Schwab following the best day for equity since May. Yelena Shiletseva of the Conference Board reacting to fresh jobs data, and Nouriel Roubini of Roubini Macro Associates with investors awaiting President Trump's evening announcement. No doubt Nouriel will cheer us up a little bit later. I would say, though, that he's been more upbeat than most more recently.
You're actually not kidding. This sort of gloom and doom, Dr. Doom, has turned into Dr. Optimism about how everything's going to be better on the other side. So maybe he will cheer us up.
Look out for Nouriel a little bit later this hour. We begin this hour with stocks rising on renewed hope for an end to the war with Iran. Liz Ann Saunders at Charles Schwab writing the following. This is a classic oversold bounce. The key to this rally will be quality from a breadth perspective. Joining us around the table, this is special, I'm pleased to make this happen, the Schwab Equity Strategy team, Liz Ann Saunders and Kevin Gordon. Liz Ann, Kevin, good to see you both.
Nice to see you.
Thanks
all.
for making this happen.
Yeah, thank
You exhausted? Did you enjoy Q1?
No.
No?
Is it actually over? I'm still wondering.
It's official, it's over. Welcome to Q2.
April Fools.
What did we learn in Q1?
Well, one of the things that we wrote about in our 2026 outlook was that uncertain was too simplistic a word to describe the backdrop, that unstable was a better way to describe the backdrop. I don't think that changed at all throughout the course of the first quarter. And I think the way to think about it, at least to your point before, is how difficult it is to trade, particularly around how quickly narratives can change and what social media posts are going to say. I think the way to think about an attempt to navigate this environment is what is positioning, because that we can measure, we can gauge. You look for where the crowded trades are, where the desolate trades are. I think that's a lot of the short-term money. That's how they're navigating this, is they're trying to either press from a momentum perspective certain trades or try to decide whether maybe you're going to get an inflection point and you'll see a move in the opposite direction. That's the best you can try to do to glean movement, is understand positioning.
Can we stay on one particular narrative that's come up continuously over the last month? Is that we've priced this energy shock, the biggest monthly rally we've ever seen for Brent crude, and yet somehow equity investors were looking through a lot of this. They were more comfortable, that we weren't priced for the growth downturn, or at least the threat to growth that we could see in the next several months. Is that a fair take, a fair narrative from what you see beneath the surface?
I think it is a fair narrative, and I think it has a lot to do with the expectations for earnings growth, which have not deteriorated. And whether or not we just haven't seen analysts make those relevant adjustments for industries that are energy intensive. We know that it's mostly just energy and tech that has accounted for the rise in earnings estimates. Energy, for very obvious reasons. Tech, actually a concentration in just two stocks, Micron and NVIDIA, were a big part of that upward move. I just think analysts, because of how uncertain this is and how much volatility there is in terms of the narrative, I think they're just kind of stepping back, waiting till it's either closer to earnings season or until they get more color from companies and then can make those appropriate, rest of year adjustments to estimates.
In the meantime, Kevin, I just wonder what you glean from the idea of whether this potentially could be inflationary if you do have the resilience that John was talking about in the underlying economy as seen by some of the earnings expectations, or potentially a hit to growth that just hasn't been reflected yet by said earnings expectations.
Yeah, I mean, it's both, and that's an uncomfortable situation to be in. But I think, the inflationary impulse, what I find a bit interesting and what seems to be a little bit too sanguine in terms of what consensus is thinking about inflation, and this just being a headline inflation issue, I think the war itself is certainly that. But the problem is that we had a lot of inflationary pressure before the war in advance of this coming into it. I mean, core PPI at an annualized pace over the past few months has been running, north of 7% now. So you had some of these pressures building up already. So I think that from an inflationary standpoint, it's not to me something that, puts a hike on the table for the Fed, for instance, in the summer. I think that's still a little bit too aggressive. But I do think that there's a little bit too lax thinking around some of the inflation pressures that had already existed that predated the war. And then now you add in the growth the growth perspective. One of the things we pointed out that's been, I think, a really important distinction between now and 2022, because that's the last time we had an energy shock while we were a net energy exporter. So it's really the only historical comparison you can use. But back then, non-farm payroll growth was running above 5% year over year. Today, it's barely above zero. So the growth risk is certainly more protracted, I think, to the downside. You do have elevated risk relative to where you were several years ago. That's why I think this environment becomes so difficult. But adding on to that difficulty is the fact that the most high-frequency labor indicator we have for the broad U.S., initial jobless claims, those have rolled over since the start of the war. So you haven't yet seen the company reaction function for corporate America to be, let me just lay off a bunch of workers because of this.
Is there enough information, though, already in the pike to say the broadening out isn't going to happen, that ultimately it is really concentrated in a couple of sectors like energy and like tech?
Well, I think I'll just say that what's interesting, you talk about sort of the kind of investor reaction to this so far and why markets haven't gone down as much, at least in the U.S., as people would expect for this kind of conflict. There was a fair amount of de-risking heading into this, especially within the tech sector. When you look at retail positioning in particular, flows out of that sector for that retail cohort were pretty extreme, had gotten even more extreme in March. But in January and February, you had already started to see a lot of that come back in. Very different than what you had seen in the past couple of years, where it was the sort of knee-jerk reaction on the part of retail investors and traders to sort of step into tech anytime it was selling off. So that rotation didn't really change, and I think that has implications certainly for tech becoming a potential leader again, because it's also not immune to this crisis.
Yeah, and Lisa, this is not abnormal to have a period of volatility like this driven by geopolitical crisis or otherwise, where you see things like what we've seen in the last month, 1 month realized correlation going up. I think when this is over looks like, whatever that looks like, I think there still is a case for the market becoming a little broader again. I think we're in the kind of backdrop where monolithic decision-making, Mag 7 type decision-making, doesn't make a lot of sense in this environment, that we are, to some degree, reconnecting fundamentals to prices. Prior to this conflict, you had seen a huge drop in correlations, a huge increase in dispersion. I think we could veer back in that direction, but it would require us going back to whatever a sense of normalcy as it relates to the war.
But to Kevin's point, Lizanne, the markets have been holding in. A lot of this, is it propped up by verbal intervention from the White House?
Well, maybe at the index level, but this is something we've been writing and talking about a lot. We've talked about it last several times. S&P at the index level didn't hit correction territory on a maximum drawdown basis, stopped at just around 9%. But the average member maximum drawdown within the S&P year-to-date is negative 18%. It's negative 33% for the NASDAQ. So you have to peel at least one layer of the onion back to see what's going on under the surface. And that churn and rotation is where you've had the corrective phase. It's just happened via that process as opposed to, the NASDAQ falling by 33% all in one fell swoop.
Kevin, you experienced the 22 shock and you talked about the difference between now and then. You also experienced what happened last year. What's the difference between the drawdown we witnessed last month and what happened in April of last year? Because I can tell you a lot of people are coming on this program itching for a repeat, to play the repeat of April of last year. How different is this?
Well, it's already different in the sense that, this sell-off has been, I think it's 45 days old at this point. In terms of the percentage decline relative to April 2025, that's only half the drawdown, yet April 2025's drawdown was 34 days long, and then it was over. I think the difference with this, and the reason that is it is sort of this grind lower, is the fact that this is more of a sort of direct-to-consumer shock. Liberation Day was more of a direct-to-business shock. When you think about businesses having to face that higher import cost first, and then figuring out how to pass it on to consumers if they were going to do that. This time is much more visceral and direct in terms of higher gasoline prices, and then you probably see, a bit of a quicker pass-through to goods prices because of higher fuel costs. So I think that's one of the reasons in trying to now figure out how much of this is a sort of a hit to growth over time, and that to me is more consistent with how the equity market at least has responded so far.
Struggled with the taco phrase as well. I never liked it to begin with, but obviously on this occasion, as many other people have said, it takes 2, 3, 4 different people this time around, different parties, and within Iran, it's more than one party. It's multiple leaders within Iran as well to tackle.
It's not the correct framing, and one of our guests said that. There is nothing to chicken out of, and it's not actually a phrase that is relevant here, given the fact that there are more people, and given the fact that it's not as if you can just press pause and rewind like you could with some of those tariffs.
I mean, Trump even said this in one of his Oval Office press briefings. He said, it takes 2 to tango. And at this point, it actually takes more. I mean, do we even actually know who this administration is properly dealing with in Tehran? No, not clear.
No, we haven't had the answer to that for a number of weeks now. This was special. Let's do it again soon. Very cool. Lizanne, thank you. Appreciate it.
Thank you.
Kevin, thank you. Lizanne Saunders there and Kevin Gordon of Charles Schwab. Let's get you an update on stories worldwide. Let's get to your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. President Trump saying the U.S. could end military operations in Iran in the next 2 to 3 weeks. Trump saying that the U.S. goals of eliminating Iran's nuclear program have been completed, and he could be willing to end the campaign even without securing a deal to reopen the Strait of Hormuz. An Iranian missile hit a fuel oil tanker off the coast of Qatar today. A total of 3 missiles were launched from Iran, but 2 were intercepted. This as Iran continues to launch attacks at Israel, Bahrain, Kuwait, and the United Arab Emirates. And the White House is discussing the possibility that crude prices may climb to a record $150 a barrel. That's according to Politico. Officials are analyzing the economic effects of higher oil prices and are weighing ideas to bring down costs, including deploying more emergency powers. That's your Bloomberg brief. John?
Yahira, thank you. I never know what to do with those stories, because obviously someone's walked in and given them a massive range of estimates for crude over the next 12 months.
And we have our own reporting from last week from the team down in Washington that the Treasury Department was already modeling as high as $200 a barrel, as they should. This is what happens when the Strait of Hormuz is closed, and then potentially you have to add in the Houthis. You're going to see prices elevated higher for longer.
I'm sure most teams on Wall Street are going through different scenarios. It's just that when you get reporting like that, it suggests that this is what the president thinks crude is going to hit at any given time, and they're not telling you.
Yeah, my question is, why didn't they do this 5 weeks ago? Because then maybe we could have gotten ahead of this. Just saying.
Up next on the programme, we'll get you some morning calls. Plus, Yelena Shiletseva at the conference board with fresh jobs data on deck. That conversation up next from New York City this morning. Good morning.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech. This is The Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
We're sort of signaling caution here. We have not added to equities. We're keeping our forecast in place at the moment. Now, we've got earnings season coming up in another 10 days or so. It's going to be great. Guidance might be more conservative, and that's probably not good for the market.
That was Stephen North of Federated weighing in on this market. We just got an upside surprise on ADP, 62K. The estimate was 40. That's good news. We'll get to that in just a moment. Equity futures holding on to the highs, up by about 0.75% on the S&P and the Nasdaq, up by 1 percentage point. In the bond market, yields are raising some of this morning's decline. On the 10-year, we're down by still 2 to 3 basis points. Let's call it 429. And a quick update on crude. Crude at the moment down by 2%. 102 on Brent, WTI around 99. That's the price action. Let's get you some morning calls. First up, Morgan Stanley cutting its price target on RH, highlighting near-term supply chain disruptions. That name hammered in the pre-market. Your second call from Raymond James, upgrading Disney to outperform, believing shares are, quote, historically cheap. Stock is up by more than 1% this morning. And your third and final call from JP Morgan, downgrading Nike to neutral, noting turnarounds, quote, take time. Nike right now down by 11% in early trading. Let's turn back to that data. An upside surprise on ADP. Mike McKee's got the details. Morning, Mike.
Good morning, John. Well, it's got to trade on something Wednesday, so we present ADP, 62,000, as you mentioned, after a revised 66,000 in the month of February. Does this mean much? We're not really sure because the ADP folks found 66,000 last month, while the non-farm payrolls number for private sector jobs was down 86,000. But it is something that people like to trade on and take a look at. So here's some of the numbers underneath. Manufacturing loses 11,000 jobs. Construction gains 30,000. Leisure and hospitality, just 7,000 jobs created, but transportation, trade, and utilities lose 58,000. An interesting mix. They also track pay. Job stayers get 4.5% pay raise during the month. Job changers get a 6.6% raise during the month. It is going to be very interesting to see what we get from the ISM employment numbers coming up at 10 o'clock this morning. And of course, in just a few minutes, we got February retail sales, so something to trade on if you're tired of trading on oil.
Mike McKee, thank you, sir. Thanks for the update. And that's what we like to see, that difference between wages, wage gains for your current employer and what an alternative employer might offer you. If you switch jobs, if you leave, you get paid more money. It just keeps the pressure on the employers to make sure they keep people happy and pay them.
That's what we like to say.
John, that's what we like to see.
What would you like to say? Come on, carry on.
Like to see.
Ask for a raise.
I like to see that gap. I like to see that gap. It speaks to a little bit of tightness in the labour market, some demand for employers. You know, both.
Honestly, this to me highlights why people are worried about inflationary shock. It doesn't really speak to any kind of downturn.
Don't give up, Bramo.
I know.
What was Steve England doing yesterday over at Standard Chartered?
He said he wasn't going to ask for a raise.
I heard that. Was ridiculous.
For a raise.
I was like, I'm so happy I'm not in the studio. That would have just put me off all
Imagine
day.
how happy Bill Winters will be with that. You know, that's what they want.
People to feel like they're...
Yes.
Okay, all right.
Of course. Yelena Shiletseva at the conference board joins us now. She asked for a raise. It's good to see her. She deserves one. Yelena, good morning.
Thank you so much. But that's not what people are doing according to the latest JOLTS report. They're not quitting, right? So that means they're sticking and, well, probably they're asking for a raise, but they're not voting their feet.
Begs the question, how tight is this labour market?
I think it depends. Sorry to give you the...
You're an economist, I expect it. Please do.
Yeah, sure, but it depends on which indicator you look at. If you look at certain indicators that would tell you the labor market is super tight, there are labor shortages in certain industries. But on the other hand, you know, like you look at flows, you look at different things, you know, it's really... some people are struggling to find a job. Look at the consumer confidence labor differential. People are saying it's very difficult to find a job, right? And that's why they're not quitting.
So this ADP report comes in stronger than expected. Yesterday, we got the JOLTS data, and as you mentioned, you saw the quits rate fall, and that's a significant warning flag. Also, the hiring has been falling off a cliff. You have not seen active hiring in a mass scale, despite this ADP report. Is there any sense that that's shifting around, given kind of some of the tea leaves that we might be getting from ADP?
I don't think so. And I think that given the data on the eve of the Iran conflict, people are actually very confused and uncertain. And I think that hiring rate will remain low for the foreseeable future until we figure out what is going on and how that affects consumer spending going forward. I think we will see a little bit of a demand shock from what is going on with oil prices. It's already been a shock. It's not that, you know, ending the war tomorrow will just put things back where they were back in February. I think we are already going to see a significant impact on growth.
We got consumer confidence data yesterday that actually exceeded expectations, which was something of a surprise because it included the period of the war. Do we have a sense, based on the survey period, of just how much consumers' perception of their current and future circumstances have changed?
So in terms of the consumer confidence index, it did cover the long duration in March. Actually, it was one of the longest survey periods for the preliminary survey, ending on the 24th of March. So I would have expected it would have picked it up, but it didn't, even though it was all across different other measures in the survey. Inflation expectations jumped, interest rate expectations increased, and stock market expectations plunged. There were a lot of write-ins in the survey that mentioned the Iran conflict and high prices and so on and so forth. So I think you really need to think about what consumers will do, not what they say. We always talk about it here, so it's very difficult to capture that in the moment. But I think that we will see a significant hit to consumer spending this spring and going into the summer.
Is that because they're fearful of prices going up, or they're actually feeling the prices going up immediately?
They're feeling the brunt. Absolutely, they're feeling the brunt. Before the conflict started, disposable personal income, which is essentially income adjusting for inflation and taxes, was already slowing. It was close to zero in the fourth quarter of last year. So just, adding more inflation to the picture is not going to help. And I think that consumers will step back.
Let's pretend that we don't have a leadership issue at the Federal Reserve. We do, but let's pretend we don't. What's your expectation for what this committee can deliver in the next 9 months?
Well, it's very easy to say what they will do in the next couple of months, and like through the summer, probably nothing. It's very difficult to say what happens after that, and it is really a question of which one will be bigger, the hit to demand or push to inflation. And I think it will come essentially to where inflation expectations are. And this is what they're watching. And I think, if anything, if you ask me, probably the next move is a cut.
Yelena, it's good to see you.
My pleasure.
Yelena Shuletseva there of the Conference Board. On the next move for this Federal Reserve, things get harder and harder as the months go by for that committee.
Yeah, especially given the fact that it is a two-sided risk, as they say. Some people are worried about the inflationary impact because of the fact that consumers are holding in, and what Americans do is they go out and shop when they're worried about things, which tends to be why that's always been surprising. At the same time, when you look at five-year forward break-even rates, those have fallen to some of the lowest rates that you've seen in about a year, if not more. That's what the Fed's watching.
That tells you the story right now. Coming up next on the program, breaking retail sales data. We'll catch up with Sucharita Gadali of Forrester in just a moment. Ask for a raise. Keep the confidence.
Every day.
The self-belief.
Thank you for the
never give it up.
Self-confidence.
Don't listen to the Steve Englanders of this world. Back yourself.
TED Talk. Bye, John.
There you go.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Vienna report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
So we're 60 minutes out from the opening bout. This is how the stage is set. The price action looks like this. We're firmer by 0.7% on the S&P, up by 1% on the NASDAQ. Just got data moments ago. Upside surprise on ADP, 62K. The number that we were looking for in our survey was 40K. Hardly talked about the payrolls report all week, which is kind of funny, right? Used to be the big number of the week, and now it just feels dated and a bit mushy.
Well, it still will be the number, which is why we'll be coming in. But right now, the labor market, how much is that really going to change based on what's happened since then?
How much momentum was there going into this war? How much momentum was there for the consumer and consumer spending? Let's get to retail sales. Mike McKee's got that number for you now. Morning, Mike.
Good morning, John. Well, this would have been a very interesting report if not for that war thing, because this is February data, so it's before the war started. Retail sales, the advance headline number comes in up 0.6% better than forecast, and certainly better than the negative 0.2 that we had in January, revised now to negative 0.1. Ex-autos, it's up 0.5%, and ex-autos and gas up by 0.4%. The retail sales control group, the part that economists always look at because it goes into GDP, is up by 0.5%. That's versus a 0.2 rise in the month of January. So overall, a little bit better news than we were expecting from February, a bit of a rebound from January, but we're still not able to tell a whole lot out of this because basically these are February numbers. So let me get you the breakdown, and we'll see if anybody is noticing in the markets.
Mike McKee, thank you, sir. In the equity market, equity futures just off session highs, up by 0.6%. There is a very small move in the bond market, just taking another bite out of this morning's bond market rally. Yields were down by 2-3 basis points, now down just 1 on 10s to 4.30. That is 2 for 2. Decent ADP number, decent retail sales.
I'm looking right now at the Bloomberg U.S. Economic Surprise Index, and it's actually at some of the highest levels going back to late 2023. That means that the amount of economic reads that have surprised to the upside versus the downside is the greatest, almost at the greatest, going back several years. It gives you a sense of how much momentum and a surprising degree of it there was in the economy heading into this. It constrains the Fed. How much can they actually react to a downside economic shock, given the fact that there's a lot of heat in this? And again, it goes back to the question, is this a growth shock or is this going to be an inflationary shock, given the proclivity to spend?
Does it raise questions about the potential for second-order inflationary effects?
Exactly.
Just a little bit more on the margin.
People are still spending. So if you watch what they do, I'm thinking about Michelle Meyer of MasterCard when she came on and she said, when you take a look at all the indicators, people are still spending. Delta, American, people are still buying into some of the strongest booking numbers they were getting before this situation. So are people just going to wholesale stop, or are they going to trim around the margins and wait until the coast is clear?
Do you want some guesses for Friday?
Love some.
Median estimate in our payroll survey, 65K. The range this wide. Can't even see my hands, it's this wide. 151 is the high. The low is negative 16K. It's a pretty wide range for payrolls this coming Friday.
And what will actually make a difference for this market? I mean, I think that that's also a key question right now. You always say you learn something from the numbers, the market's reaction. How much is the market going to react to this, given the fact that still the oil price and still the conflict in the Middle East is driving the train, and you have a situation, what is good? We don't even have a sense of what numbers are good based on just how much the employment market's shifting.
And also, it's an interesting weekend because, of course, it's Good Friday on Friday. So you might not get some market reaction until Monday across the board. And a lot of people are speculating is because it is a long weekend, potentially does the president maybe do something in terms of the war in Iran?
We will be here Friday morning. We haven't done that yet, have we?
No.
I will not be here.
I was just saying.
Programming note.
It's going to be exciting.
Should have done that earlier this week. Programming note, okay? Starts at 7 a.m., I believe, right?
It starts at 7. We get to sleep
Okay,
in
good.
for an hour because it's Good Friday.
And we got one of those nice graphics to put up on the screen just to indicate we will be here on Friday morning.
Probably not.
Okay, all right. We'll make that happen a little bit later. 7 a.m. Eastern Time, 3-hour program, 8:30 Eastern Time payrolls, full breakdown right here on Bloomberg TV. Doing the extra work so then at the end of the year you can say, you know what, back yourself. You know? Anyway.
Honestly, I can't wait for this.
We're live on TV.
I'll subscribe.
Sucharita Dali joins us now of Forrester. Sucharita, welcome to the program. Let's just talk about that retail sales number and the momentum in this economy going into the month of March. How strong was that momentum?
It continues to reinforce the bit of the strange story that we've seen through much of 2025 and now even clearly into 2026, which is that the consumer is still spending. But yet you have record low levels of consumer confidence, and that is only going to be exacerbated by the war, by fuel prices. So it is, I don't expect the numbers to continue to be as strong. The big question that we're going to be listening for from earnings calls is units. So even if sales numbers are high, are people trading down or are they purchasing fewer units of things? And that is something that we've definitely seen in the data, which is that prices are simply rising and people are paying more for those higher priced goods, but they're not necessarily purchasing more of those goods. And that's really where the softness in the economy really is.
Mike McKee's going to break down the details of that number in just a moment. But Sucharita, could you walk us through what typically happens when you see a spike in energy like the one we've just seen? What's more interesting to you, the spike itself or the level? Because the level itself, historically $4 per gallon, is not excessive. It's not welcomed, but it's not excessive. Is it the spike or the level?
Well, what we typically will see is that it definitely adversely affects consumer confidence levels. And you have just this level of sticker shock, which then ends up reverberating through other essential items like grocery goods, or it then ends up negatively affecting the shopper's willingness for discretionary goods as well. So that's really where we see the problems. It was not unlike what we saw coming out of the pandemic, where we had large levels of inflation on some of those essential goods. It just creates a really poor psychological impact. And particularly since we are in a K-shaped economy where a significant part of the consumer mix is not feeling well and not feeling like they are flush with cash, this becomes yet another reason that people end up pulling back on a number of those essential items.
If you're just joining us, welcome to the program. Just tuning in, we've got some economic data in the last 20 minutes or so. 2 for 2. Upside surprises on both. We had the ADP number come out at 8:15 Eastern Time. That came in at 62K. The estimate in our survey was 40K, and retail sales dropped just moments ago. That was also an upside surprise. Mike, I understand you've got some additional details. What do you see?
We've got the breakdown of what people were spending money on. Interesting note that ex-gasoline, the retail sales numbers were up by 0.6%. So the same amount. Gasoline prices, of course, much lower in February than they were than they are now in March. Electronics stores up 0.5%, but the big winner this time, health and personal care stores, 2.3%. Clothing stores up 2%, and motor vehicles up 1.2%. So people were spending in some of these less discretionary areas, and the general merchandise stores, department stores, basically unchanged. The non-store retailers, the online guys, up 0.7%. But the interesting thing is grocery stores were down by 1%. We spent money on clothes and cars, and we didn't eat, I guess.
Mike McKee, thank you. I guess. I mean, the data is what the data is. Doesn't make much sense sometimes, but that's the data.
The idea that the people are spending so significantly on cars, on clothing, on discretionary goods indicated that they did have discretionary funds. And that ultimately is the question that people have. How much momentum is there to withstand this? Sucharita, based on that breakdown, how much are you seeing people being able to absorb the increase in gasoline prices? Or do you think that that will divert funding away from discretionary spending and potentially hit the retailers and the car dealerships?
Yeah, that's typically what we do see whenever you have a spike in pricing that affects such a broad swath of the economy. One other nuance, just with respect to the data, is much of those retail forward numbers are month-over-month numbers. And what is equally as important, and I would argue even more important, is looking at the year-over-year numbers. And what we are seeing with respect to year-over-year numbers is that there is still an increase overall. Much of it is tied to inflation levels. So we're not necessarily seeing people spending on more units of goods, but they're certainly able to spend more to cover the higher price of goods across a variety of different categories. So that, I think, is the important piece to consider.
Sucharita, we're going to get earnings in a couple of weeks, and hopefully we'll get guidance about how some of these companies are navigating the inflationary shock, at least for some of their products and their shipping. Just when you do channel checks, how much do you get a sense that retailers are able to pass along the price increases to consumers more directly?
Well, certainly they've been passing them along pretty shamelessly in a lot of these essential goods. So the shopper certainly seems to be absorbing that. The shopper clearly is not happy to absorb that, and that's where you see those consumer confidence numbers down, where you see the shopper certainly either trading down or often opting to items that may be private label goods. Certainly, I think in the automotive sector, when gas prices are high, what you're also going to start seeing is flights to things like hybrid cars or electric cars. So you see substitutions happening in a variety of different places, and that is absolutely an outcome of this. And it doesn't take, kind of a year of these higher prices for this impact to happen. Even if it's a few weeks, people react relatively quickly.
Sucharita, appreciate your time. Thanks for jumping on. Sucharita Kodali there of Forrester, following a better than expected retail sales print in America. Central banks recently clarifying their reaction functions, offering greater clarity. Governor Bailey of the Bank of England doing that just now with Reuters. These headlines just dropped. Markets are ahead of themselves in pricing rate hikes. We have to act in a way that doesn't harm the economy or harm jobs.
And going on to say businesses have less ability to raise prices, so they don't really see the inflationary read-through because of consumers that are crimped. And even if they are spending more on dollar levels or on pound levels, they're not necessarily buying more goods just by virtue of how much prices have gone up. Highlighting just again, the reaction function is not to hike rates necessarily. The reaction function might be to support growth by cutting or at least holding steady.
At one point in the month of March, we had something like a 100 basis point move at the front end of the UK curve, which is wild. We'd gone from talking about the potential for rate cuts to talking about the potential for 2, 3 interest rate hikes through the year ahead. That's a massive turnaround. Yields at the front end this morning down by 8 basis points on UK 2s. Sterling just a touch weaker off the back of those headlines.
Well, also talking about, to Lisa's point, that maybe it's not the inflationary impact that central banks are worried about right now. Bailey, to the Reuters, is saying the focus on the next meeting is going to be jobs and growth. They're worried about what this means for the growth. What did we hear from Ellen Zentner? Her probability of recession has gone up.
There's a sequencing issue for these guys, for communication and for action. They have to pledge to anchor inflation expectations first before they can worry about growth, because they know if they come out up front and say we're worried more about growth than inflation, if they'd done that a month ago, as soon as you got the energy shock, what would we have seen happen to inflation expectations if they were the comments that were coming from these central banks? That's the belief system that they have to follow, that first and foremost you anchor inflation expectations And then you worry about growth soon after. And I wonder if we've got to the worry stage already.
Yeah, verbal intervention leads to a tightening of financial conditions, which leads to worries about downside to growth, which is why Tom Becker of BlackRock came on and said he sees real value opening up in the European front end of the yield curve because of expected comments like this.
Let's give you an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Recapping that data we just received, retail sales for February coming in above expectations, rising 0.6% month over month. And in the labor market, private payrolls surprising to the upside in March. ADP reporting employers added 62,000 jobs versus estimates of 40,000. Anthropic accidentally leaking source code for its Claude AI tool. The company blaming a human error for the exposure of over 500,000 lines of internal data. While Anthropic claims no customer info was compromised, some are raising concerns about potential security vulnerabilities. And NASA astronauts are set to lift off today on a 10-day journey around the moon. The voyage marks the biggest milestone yet in NASA's Artemis campaign to land humans on the moon as soon as 2028. The crew is set to travel farther in space than anyone in history. That's your Bloomberg Brief. John?
Amazing. Very cool. Yahira, thank you. Appreciate your work this morning. Up next on the program, Nouria Rabini of Hudson Bay Capital with investors awaiting President Trump's evening address to the nation. From New York City this morning, good morning.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We did this Monday. We did this Tuesday. We're doing it again this morning. This statement from the President of the United States just moments ago, it reads as follows. Iran's new regime president, much less radicalized and far more intelligent than his predecessors, has just asked the United States of America for a ceasefire. We will consider when Hormuz Strait is open, free and clear. Until then, we are blasting Iran into oblivion, or as they say, back to the Stone Ages. The President of the United States on social media just moments ago.
So I think he's talking about Masoud Pezeshkian, but to your point in the commercial break, he isn't new. He has been the president of Iran since 2024. On top of that, we did see the markets whipsaw yesterday off of this call the president had with one of his European counterparts saying, we're open to ending the ceasefire, but reiterated what Iran would need to see to have a ceasefire. And what Iran wants to see will be absolutely non-starters by the United States. It's also important to note that Iran's president really has no influence, very limited influence on this regime. On top of that, the Iranian president's role is domestic economic policy. He is not going to be the one that decides the war should end.
So there's one component of this that keeps changing Monday, Tuesday, Wednesday, and it's how dependent ending hostilities is on the situation with the Strait of Hormuz. So let's just go through Monday, Tuesday, Wednesday together. So on Monday, the president said, if the Hormuz Strait is not immediately open for business, we will conclude our lovely stay in Iran by blowing up and completely obliterating all of their electric generating plants, oil wells, and Karg Island, and possibly desalination plants. On Tuesday, the president said, you'll have to start learning how to fight for yourself. The USA won't be there for you anymore, like you weren't there for us. Go get your own oil, which spoke to the reporting from the Wall Street Journal that maybe they'd end these hostilities in Iran without reopening the Strait. And then it feels like this morning, Wednesday, we're closer to Monday than we are to Tuesday.
What do you do with this? Well, maybe you just focus on what's going on in the region. And frankly, every analyst and investor who's come on the show today has said, look at what is feasible. And it is infeasible for the U.S. to pull out, for this war to be over without the Strait of Hormuz being a passage of free flow for trade. And that's, I think, what a lot of people just keep focusing on.
So the stock market's all over the place, spiked higher, it's pulled back from there. We're now higher by about 0.5% on the S&P 500, off session highs. Bond yields are sitting this out. At decent data, ADP, retail sales, yields now unchanged on the 10-year, 431. And crude was lower going into that announcement. It stays lower. Brent crude down by about 2% at 102. Let's make sense of this. Nouriel Rabini of Hudson Bay Capital writes the following. If the president walks away from the war with Iran now, the threat to shipping in the Strait of Hormuz will remain. Despite the obvious risk, he has every reason to try to finish the job. Nouriel, good morning.
Good morning.
And good luck as well, to explain the last few days. What is the status of things in your mind, and where do you think this is heading?
Well, there are two options. One is to de-escalate and walk away from this war and get to a ceasefire. But they're going to get a ceasefire without a deal with Iran, and Iran's going to control the Strait of Hormuz. It's going to threaten the Gulf and the supply of oil. You have a regime that is actually much more radical today than it was before, because Muqtada Khamenei's son is more radical than his father. They're going to rebuild ballistic missiles. They're going to build even more drones. They're going to even try to enrich the uranium they have to weapon grade and have a bomb. So it's a disaster. Trump is already behind in the polls. This war has been a bit of a failure. But now going away from it implies he's going to for sure lose the midterms, not just the House, but probably the Senate. So I think that in spite of all the rhetoric about negotiations and getting a ceasefire, my more likely scenario, I give it a 2/3 probability, is one in which the U.S. has to escalate and finish the job. And escalate means take over Karg Island, try to take over even the Strait of Hormuz, try to reopen it, try to have regime collapse, and win this war, and finally have a more stable Middle East. It's a very risky one, because if you take that chance, you might win, but there's also a chance that you lose, and then they beat they block even more Hormuz, they destroy even more energy supplies of the Gulfies, and then you end up in 1970s stagflation. But in my view, escalating and winning is more likely than escalating and losing, and given the politics and the electoral dynamics, he'll have to escalate.
So if you escalate and you end up losing, you said it was 1970s stagflation all over again.
Yeah.
If you win, what does that look like based on the risk premia that are likely to go on a lot of physical goods and a question?
The Gulf is a threat to Israel, is a threat to Europe, is a threat to Asia, is a threat to the United States. So as the Emiratis have been saying clearly, this is not acceptable, and this is the same view that people all over the Gulf have. It's not an acceptable solution. So given what has happened, you have to try to finish the job, and finishing the job means having de facto regime collapse, either formally regime collapse or informally a situation in which this regime is not anymore a threat to the region and to the world.
Well, the regime has been weakened, though. You give that point to the president, but absolute collapse, there's been no evidence that we've seen defections, and they're still in control.
Well, de facto collapse, in my view, means that you take over Kharg Island, you try to reopen the Strait of Hormuz, you try to make sure that they cannot destroy more energy facilities in the Gulf. You keep on bombing the hell out of them for weeks. They've already been eroded a lot, and every day is thousands of new targets between Israel and the United States. You may even be able to kill some of the remaining leadership, and de facto, that is effectively a regime collapse. It's not a regime collapse, a regime that doesn't have nuclear weapon, doesn't have weapon, cannot threaten the Strait of Hormuz, and whether there is formal regime collapse or not, at that point doesn't matter. But that means finishing the job.
Nouriel, we've got about 60 seconds left. You lived in Tehran.
Yeah.
As a child.
Yeah.
How personal is this for you?
You know, I'm a Persian Jew, so I was in Iran last when I was 3 years old. I've lived in Israel, grew up in Italy, in the US. So I don't take it personally, but I would say that while this is an appalling regime and the current one is worse than the previous one, the threat is not just to Israel. The threat is not just to the GCC country. The threat right now is not just to Europe. Europe is threatened from an economic point of view, from a military point of view. The missiles, long-range ballistic missiles of Iran can reach anywhere of the European Union. It's a threat to the world. It's not acceptable. You can discuss whether it was the right thing or not to start this war. Once you start it, if you don't finish it, it's going to be much worse than the situation previously. So given the risk, you have to try to finish the job, and having effective regime collapse or the regime boxed in a way that is not anymore a threat.
Nouriel, we appreciate your time and your experience, sir. Thanks for sharing it with us. Thank you. Nouriel Roubini there of Hudson Bay Capital and Roubini Associates, breaking down the risks to the economy and the phase we're in right now, the opportunity to get to a better place.
This is why a lot of people keep focusing on the idea that the U.S. can't just walk away, that this can't just end with Iran controlling the Strait of Hormuz, and why some people are looking past to that better scenario on the other side.
Q2 starting to feel a bit like Q1. First day in.
Yeah, this is my shocked face. I mean, come on, did you actually expect us to be in a whole new world?
A whole new world.
Oh, yeah, a whole
like the Disney song.
Yeah,
yeah.
I'm not going to sing.
Okay. No, I'm not going to sing. No. Coming up on the program tomorrow, Jim Zelter of Apollo Global Management. Good banter. Mike Parr of BlackRock. I like that.
I know you think I'm not funny. I'm very funny sometimes.
That was good.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Good Wednesday morning, 30 minutes until the start of the cash trade, and futures are higher again. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump delivers a primetime speech as optimism grows over a potential end to his war in Iran.
Nike stumbles, the retailer issues a surprisingly gloomy outlook for the year ahead, citing global headwinds.
Plus, OpenAI raises $122 billion in its largest funding round yet, pushing its valuation to $852 billion in total.
I have another piece of breaking news just crossing now on some other tech movers. I want to show you what Intel and Apollo are doing, because this is actually a deal that I talked to Apollo about in 2024, that they and Intel were going to do this giant JV to invest in a data center in Ireland. Well, now Intel has agreed to pay $14 billion to buy back half of that plant in Ireland. Originally, it was an $11 billion deal. Intel's starting to move lower. Maybe there's concerns about them spending more money. Apollo was up 1.4%, rallying with most of financials in the market in this big relief rally we've been getting.
All right, so Apollo makes good money on that deal. Nike expects revenue for the fourth quarter to be down 2 to 4%, with the company noting that its turnaround efforts are taking longer than originally planned, but the direction is clear, lower, and the stock is off 12%. Furniture giant RH, Restoration Hardware, is plunging after earnings missed estimates as tariffs and bad weather apparently weighed on demand for furniture, which normally, Danny, we keep indoors, right? But Restoration Hardware, I think investors calling that bluff, down 22%.
Well, everyone has a lot of good excuses. We were talking about Beyond Meat this morning, who missed estimate, and it's because of Maha, apparently. It's because of all the false pseudoscience around red meat being bad for you that they did poorly.
But it doesn't taste good. That's an important aspect of food, right? It's supposed to be enjoyable.
I am almost positive that they would disagree with you on that point. Now, let's get back to our top story this morning. Oil dropping ahead of President Trump's address to the nation tonight at 9 p.m. He just sent a new post. It reads, thus, Iran's new regime has just asked the United States of America for a ceasefire. We will consider when the Hormuz Strait is open, free, and clear. Until then, we are blasting Iran into oblivion. Let's compare that with yesterday, when the president suggested that the U.S. would pull out of the region with or without a deal around the Strait of Hormuz. Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Analyst and retired Army Colonel. Wayne, I don't even know where to go with this. What do you make of this back and forth? Do we care or do we not care?
Is it an objective or is it not an objective?
Yeah, there you go.
Yeah, I would say it's an objective. This morning on Bloomberg Surveillance, you guys would laugh. One of the conversations was about the movement of the USS George H.W. Bush and start moving towards another aircraft carrier into the region would have one of two different outcomes. It's either because you're looking at creating one last final blow, where I use the phrase "a bombing back to the Stone Age," and then here it's coming out, in that context right now. Or the alternative of that is it would be in a protracted conflict perspective. So in one aspect, I'm not surprised that this is the direction that it's going. I think the ceasefire portion, the military is not going to stop unless it's asked to stop, right? I think that's key. Iran's also not going to stop. We saw that in the Iran-Israel 12-day war as well. They even shot at each other even after the ceasefire a couple of times and just some skirmishes. So until things are actually signed, you're going to see continued strikes and continued military operations.
We, have you at Bloomberg Intelligence because of your vast experience in the military, in military intelligence, at the Department of Defense. It strikes me that the president has started to say new regime. He thinks there's a new regime in Iran, even though the IRGC is still firmly in control and the Ayatollah's son, possibly even more radical, is the supreme leader. How come the president thinks there's a new regime?
Yeah, I think he's looking at it in terms of who he is actually dealing with, right? I mean, I don't think at this point in time he's dealing with some of the remaining IRGC leadership. He's dealing more on the presidential side, and I think that's the reason why he's looking at it that way.
But that president was the president before he started this war.
Correct, but he was also looking for how much influence is being exerted by the president versus the Ayatollah regime portion of it, and I think he's hoping that there's actually going to be a shift. I haven't seen the evidence to that yet, but obviously he has a lot more assets than I do.
All right, retired Army Colonel Wayne Sanders of Bloomberg Intelligence, appreciate you jumping in here. Now we have seen a massive move on optimism. We thought that the war would end, but now it's starting to look like, according to trading desks, including JP Morgan and Goldman Sachs, that what we actually saw yesterday was a massive short squeeze, contributing to the biggest rally in stocks in more than 10 months. Headlines around a push to end the war from the U.S. and Iran basically triggered a rush to dump bearish bets. Bloomberg senior strategist Jan Patrick Barnard reported on this, and it's also due to, JP, I guess, the end of the month, the end of the quarter, so pension funds putting money to work, and reversal of the short gamma positioning that dealers had.
Yeah, absolutely. It's a mix of things, and certainly like the headlines, even though we get a bit of a contradiction today from President Trump, have certainly helped, and it shows like the market is looking for an off-ramp and wants an off-ramp, just given how bearish the positioning has become. But it also shows you that this is a phase right now where I feel like it's more about market mechanics. And not so much about the fundamentals and the sentiment, actually, because we have seen so much shorting in the last couple of weeks from hedge funds, from trend following investors. We have seen like de-risking from all sides, corners of the market, even though if the decline of the S&P 500 was rather shallow at the beginning. But still, so I feel like we're in a market that is more technical than fundamental, because, like, I mean, if everybody tells me we can already, like, foresee that this conflict is over, and that we, on top of that, can foresee what that conflict will have kind of an afterplay in terms of corporate earnings and macro data, I'm very skeptical about this. So I would take this as a very short-term, very technical move, and not so much about a change in sentiment or optimism, or broader optimism among investors.
Where does it leave us then, JP? Do we have a sense of current positioning? Are shorts covered? Does that give us room to load back up? What does it all say about the trajectory from here?
Well, I would say like this is the first like typical impulse where you have the ultra fast money, and those would like the let's say the most strict risk management, that they exit the position because they are like always at risk of being squeezed into a move if this plays out to actually be an off ramp for that conflict. But I would say we are now at the point where, I mean, it sounds a bit lame, but both things can happen. I guess, like, if Trump is now backing off from anything of ceasefire and Hormuz is back on the table, that it has to be opened, then this conflict will certainly go longer, more bombs will fall, and then the market will probably move back into, like, higher oil prices and lower stocks in the broadest sense. If we, like, even tonight get, like, a real roadmap for an off-ramp and real evidence of talks and an idea of how this is going to be resolved, then I guess we will see more short covering, because then probably today and yesterday was only the beginning.
JP, appreciate it. That's Bloomberg's Jan Patrick Barnett. Now, elsewhere in stocks, check out what some of the retail sector is doing. Nike getting punished, down 12%. RH also down 23%, both of them warning of tough times ahead as both earnings outlooks disappointed due to changing consumer habits. around policies like tariffs. However, U.S. retail sales, they did increase in February by more than forecast, including a rebound in auto purchases. ADP data also came in hot. Michael McKee, Bloomberg's international economics and policy correspondent, joins us now. And maybe Nike and RH have its own thing going on, but it does sort of stand out the contrast between companies' views going forward and I guess maybe now stale data in February for the retail sector.
Retail sales were February data before the war, and certainly retail sales are denominated in dollars, so it's going to be affected by the rise in gasoline prices. The maybe good news is ADP. Now, I don't know, you said coming in hot. I don't know what hot means anymore, because they said they found 62,000 private sector jobs, which is a little better than was forecast for them, but lower than the survey we have for Friday's private sector jobs of 75,000. You can see on the chart there that that ADP has not matched up well in the last couple of months with what we get from the government. Last month, they said 66,000 jobs, and the government found, in terms of private sector jobs, a negative 86. So we'll see what happens on Friday. But back to retail sales. We're looking at what I call antebellum sales before the war, and retail headline did come in fairly strong, up 0.6%. And you take out gasoline prices, it was still up 0.6%. But remember, prices are a lot higher now. The core is what we care about. That goes into GDP, and it was up by 0.5. So a little bit of extra strength for the first quarter. The biggest movers, health and personal care stores, clothing stores, both up over 2%, and motor vehicles were up 1.2%. The interesting thing, grocery stores were down a percentage point. I don't know if we were, going to get our nails done and did not eat or something like that during the month, but it is what it is. And again, this isn't going to tell us much about what's going on, although it's interesting that clothing stores and clothing accessories were up as much as they were when you see something like RH and Nike being down.
What do we get? At 10 o'clock, we get ISM manufacturing, right? And manufacturing has been, it had been a goal of the Trump administration to boost the manufacturing sector in the U.S. Of course, that goal may change at a moment's notice. But what are we expecting to see today?
We're expecting a slight rise, and it would be the third month in a row where we have expansion rather than contraction for ISM. But we're going to be looking at the underlying indicators. Obviously, employment, ADP found 7,000 jobs lost in manufacturing during the month. But the real interesting number is going to be prices paid, because it's a sentiment number, doesn't depend on the actual price of petroleum. It depends on what the purchasing managers think the price is going to be and how it's going to affect them. And there are some people thinking we could see almost a record number on that.
All right, so that data coming in just under 50 minutes time. Mike, thank you very much. Bloomberg's Mike McKee. And let's get a check on your markets this morning. 20 minutes to go until the start of cash trading. We are still up today. We are holding a gain, which was the best end to a quarter since 2008 after a very rough quarter. It was the best day in general since last May, when we had the U.S. and China reach a sort of détente over Liberation Day tariffs. You're seeing yields, those moving higher this morning. We're at 4.33 on your 10-year yield. The Bloomberg dollar spot, that falls 0.3% this morning. I don't know if we have oil in there. Oil, obviously.
We have a whole separate board, actually.
Oh, yes, we do.
I put together two boards today.
Matt, please take it away.
Well, I thought it was important to look at two boards here, because we have so many assets that are moving. The volatility has just increased with this war, and perhaps that's also part of the goal. But NYMEX crude right now is
at 100.
Is down 80 cents. It's still at 100. This is WTI, even though we're energy independent. We're still seeing NYMEX, West Texas Intermediate, rise with Brent, and terribly close to Brent as well. It's only $1.25 away there. So Brent crude at 102.26 right now, down 1 2/3%. Gold actually moving a little bit higher to 47.30, so getting back closer to that 5,000 level that it had been. And Bitcoin holding pretty steady at 68,377. It's been about 70 grand throughout the war. Let's take a look at some of the single stock stories.
Yeah, Raymond James, they've upgraded Disney to outperform from market perform. They say that this is an attractive entry point for the stock, which shares are moving higher by 1% in the pre-market.
Anglo Gold among the miners rising as investors anticipate de-escalation in the Middle East. Funny how this worked out, right? We invade Iran and gold falls as it looks like we're getting ready to pull out, although we are sending another aircraft carrier
carrier there.
And gold did
gold
rally
rises.
3.5% yesterday, which was pretty wild. Microsoft is in exclusive talks with Chevron and investment fund Engine Number One over a long-term deal for a giant power plant in West Texas. Chevron down, Microsoft up.
Coming up, OpenAI is inching towards a $1 trillion valuation after a massive funding round. It got more than $100 billion in fresh cash. This is Bloomberg Open Interest.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Let's get to high interest now. Look at what's making headlines around the world. NASA astronauts blast off today on a 10-day journey around the moon. It will mark humanity's return to the lunar vicinity in first return in over half a century. The crew will launch from the Kennedy Space Center in Florida, soon to be renamed the Trump Kennedy Space Center. I jest. That's tonight at 6:24 p.m. Eastern. The mission includes several firsts, including the first woman and the first black astronaut to fly near the moon. The mission has also been plagued by soaring costs, repeated delays, technical shortcomings, and operational complexities. It hasn't gotten a lot easier in 50 years. Nissan is urging Washington to ease tariffs on Mexico-built cars, warning entry-level models could become unaffordable. The automaker says tariffs add up to $3,000 per vehicle and can't match low-cost production in the U.S. Meanwhile, President Trump is posting about Nissan's success in the U.S. on Truth Social. As you can see here, I'm sure you follow him anyway. We'll talk to Nissan America's chairman, Christian Meunier, in the next hour, and I'm looking forward to it, having driven the new Armada. OpenAI is now valued at $852 billion after raising $122 billion from backers including Amazon, NVIDIA, and SoftBank. The deal is the largest transaction in history as the ChatGPT creator positions itself to become the backbone of the AI economy. At least that's what it hopes will happen, Danny.
And let's bring in Bloomberg Intelligence head of global tech coverage, Mandeep Singh. And Mandeep, this means that if OpenAI were to be a public company today, it would be the 13th largest in the S&P 500. All of this seems like a run-up also to it becoming a public company later this year.
Well, I mean, they have certainly made a pivot, you know, from focusing on consumer ChatGPT subscriptions to really going towards more enterprise use cases. And really, I think when you look at Anthropic's growth, I mean, all of that growth that they have had, they've doubled their revenue since the end of the year, Anthropic has, and it's driven by coding agents used in enterprises. And so OpenAI is definitely playing catch up. That's why they moved away from Sora and the instant checkout. And it's a pretty hard pivot. I think $122 billion is a big number. I would be curious to see if they're just hoping on AI agents deployed at enterprises, or there is more to using that money that they're raising. But right now, it's really enterprise play for everyone.
How are they doing in terms of the competition between, you know, different chatbots? Gemini at first was lauded for being really useful. Claude got a lot of subscribers after they refused to let the Pentagon, you know, use AI to do surveillance on the American people, and OpenAI said, we're game. You know, are they still far ahead?
So I look at the token consumption, which is probably the best metric to measure the usage of these LLMs across, you know, enterprise and consumer use cases. And Google tokens have grown almost 20x in the past 12 months. They are at the top when it comes to token consumption because of the surface they have with their own family of apps as well as the Google Cloud business. But at this point, OpenAI and Anthropic are neck and neck. I mean, the numbers are like 6 to 8 trillion tokens per month, and Google is somewhere around 30 trillion tokens. So from that perspective, it feels like Anthropic has definitely narrowed the lead, and that's where, you know, enterprise tokens are what you monetize. It shows up in your revenue. I mean, both these companies are guiding close to you know, 25 to 30 billion in revenue by the end of this year.
By the way, what happened with Claude yesterday? Did they
their code got released?
And is that a big whoops, or?
It is. I don't think it was intentional. So from that perspective, you could argue, you know, their controls didn't really work well. And look, I mean, they're talking about cybersecurity use cases and all that. Like, to me, this is the perfect case of where, you know, a cybersecurity or one of those companies could come in and say, you have a process where you could be exposed, you know, to code leaks and this kind of inadvertent stuff. So from that perspective, I do think they need better control.
Yeah, all those cybersecurity companies who said AI will not replace us probably feeling a little bit smug this morning. Yeah. Mandeep, just before you go, at the top of the hour, we learned that Intel is going to be buying back the rest of the Irish JV that they had with Apollo around a data center. Apollo, originally the stake was $11 billion. They pay it for $14 billion. I'm interested from both sides about why Intel would want to pay this back and why only after 2 years Apollo would want to exit this thing.
Well, right now there is clearly a boom when it comes to data center construction. And for a company like Intel, their best bet is onshore manufacturing. Like, what you really want to double down on is companies having to diversify their supply chains and, you know, moving some of the chip production here. And so from that perspective, it does make sense. They did raise some money from NVIDIA. And so, you know, that's probably the direction Intel is headed towards in terms of focusing on manufacturing here.
All right, Mandeep, thanks very much, Mandeep. Singh there runs Bloomberg Intelligence tech coverage for us. Coming up, Kestra's Kara Murphy is trimming exposure of mega cap stocks and pushing into industrials. She joins us with her market outlook next. This is Open Interest.
American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Vienna report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Perhaps a little bit of a preview of what we're going to hear from the president in his address to the nation at 9 p.m. tonight. Reuters reporting that President Trump will express his criticism of NATO tonight, that he says that the U.S. will be out of Iran pretty quickly, but that they can come back for, quote, spot hits once the war is over. Futures still rallying after that monster rally yesterday. We're up about 0.5%. NASDAQ goes up 0.7% as 10-year yield still moving higher at 4.32. And I know you're looking at the energy and commodities market.
Yeah, I mean, there's just so much to look at. So oil has been fluctuating. NYMEX crude has been fluctuating up and down around the $100 mark right now. We're at $100.16. Brent crude about $1.50 away at 101.86. Gold is rising today, and Bitcoin holding steady around $68,400 right now. So we have seen a lot of volatility. But it's interesting to see that oil, even with the market anticipating in some senses a retreat from the Middle East, is not selling off.
Because a retreat doesn't necessarily mean that the Strait of Hormuz would be open, although there's some question marks to that this morning about if that's necessary for a retreat. President Trump earlier in the week saying that we could leave without reopening the strait. There was that Wall Street Journal report, but then today saying that in order for there to be a ceasefire, which he says Iran wants, that the Strait of Hormuz would need to be open regardless. Oil still falling this morning as futures point higher. We're going to have your market open for you just on the other side of this commercial break.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said,
Succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg. Moments away from the start of trading on this Wednesday. This is Bloomberg Open Interest. I'm Matt Miller. We're seeing big gains in, gains in futures, 0.5% on the S&P, 0.75% on the NASDAQ futures after massive gains in yesterday's trade, the biggest we've seen since May of last year, which was right after Liberation Day month. So, I guess for the similar reasons, right? After Liberation Day and President Trump threatened the world with massive tariffs and the economy would have been greatly damaged, then he brought them down. And so we were like, okay, the economy can fly free now, soar like a pigeon in the sky. By the way, Paloma Acquisition Corp ringing the bell at the NASDAQ, and Paloma means pigeon, I'm told, in Spanish.
But apparently dove as well.
A dove is a pigeon.
Because again, my best friend's sister's name is Paloma, and I refuse to believe that her name is just Pigeon, that her parents named her Pigeon.
Well, yes, I know. It's probably because they thought a dove, a beautiful, peaceful dove.
Yes.
I think Picasso has a daughter named Paloma.
Okay.
In any case, my point is, we were worried about war. Right. March was a horrible month for stocks. In fact, more wealth was destroyed in the stock market in March than any other month in history. And so yesterday, when the market gets the idea that maybe President Trump is ready to back out of the Middle East, you know, the closed straits of Hormuz be damned, that market rallied, although we know that there was a lot of short covering as well, pension funds coming in, and that the short gamma position of dealers had rolled off because of Tuesday's expiry.
I also think it's important, though, to compare it to Liberation Day, because at that time, it was Trump's switch to turn on and off. This time, it's not just his decision. It's Iran's, it's Israel's. Just because he says it's over doesn't mean that the strait is open.
We'll see how it turns out.
Anyway, here at the Open, I am looking at deal news we had at the top in the 9 a.m. hour, Intel and Apollo. So in 2024, Intel and Apollo, they reach a JV to build a plant and a data center in Ireland. Originally, Apollo paid 11% for just under 50% of that data center. Now, Intel comes back and says, thank you very much. We will buy the rest of that. $14 billion is what they're going to pay. Matt, over the 2 years, that's an IRR of just over 12%. That's a little bit under the average of what PE tries to achieve for it. But hey, for a holding period of only 2 years, maybe that's not so bad.
Yeah, better than a stick in the eye, I would say. That's what my stockbroker used to tell me. Nike expects revenue for the fourth quarter to be down 2 to 4%, with the company noting that its turnaround efforts are taking longer than originally planned. The CEO said the direction is clear, and he expects revenue to fall the rest of the year as well. So that direction doesn't look very promising, and as a result, Nike shares are down 13%. Furniture giant RH, which was previously known as Restoration Hardware, no idea why they would have changed their name to just 2 letters. It missed earnings estimates as tariffs, and it says bad weather weighed on demand. Restoration Hardware down more than 20% in the early trade.
Let's get more on these markets that are rebounding again after the rebound yesterday. Kestra Chief Investment Officer Kara Murphy joins us for more. What a quarter it was. And of course, yesterday is how it capped it all off. How do you think about your portfolio right now? And after the quarter that was and a huge rally on our hands yesterday, are you defensive? Did you lean into the sell-off? Did you buy? Did you pick up some of the babies with the bathwater? Where do you stand now?
So I think it's important to think about these conflicts as they tend to be relatively short-lived. They're very painful, and not least of which for the people who are directly impacted by it. But at the same time, when we look back through history, these types of geopolitical conflicts tend to be short. And then what happens is that...
You mean their effect on the market? Because actually they take, like, you know, Vietnam, Afghanistan, they take a long time.
Yes, but the market's focus tends to be quite short, right? And the U.S. economy is very, very privileged in that we are very insulated from these types of conflicts. Now, the higher oil prices are the way that these conflicts tend to transmit to the U.S. economy. But again, we're much more insulated than the rest of the world. So what happens is that as the headlines start to recede, market participants then refocus on the trends that were in place before the conflict started. And I think that's where we're seeing an important market shift away from these Mag 7 names that have been so important for a number of years to a lot of other areas of the market that are beginning to show earnings power, and that I think will then draw the attention of the market.
So the Mag 7 had a tough start to the year, right? The whole market obviously did, but the Mag 7 index is down, what, 11, 12%. Do you buy that? Do you say, okay, this drop was amplified by the war, and now that we can look through that, hopefully, it's a cheaper set of stocks to buy?
I suspect what happens, like if you look at the Mag 7, actually, they actually peaked at the end of October. So that underperformance has been going on for a number of months. I think as the conflict hopefully comes to a resolution in the not too distant future, initially it's those Mag 7 names that are going to bounce back. Those are where valuations have come down, earnings estimates have really held in there. So that's kind of an easy place to go for some grounding. But as we kind of get past that, then I think in the back half of the year, you start to see smaller large caps, mid caps, small caps start to kind of come into their own when it comes to earnings, and that's the longer term trend that we see going forward.
How are you thinking about the impact if the conflict ends but the strait remains closed and oil prices remain elevated? What sort of impact would that have on your look forward?
That's our base case right now. We don't go back to $60 oil, but if we get back to, let's say, $80 oil, where the cost of doing business, the cost of transportation for oil is still high, that's still a very sustainable level. And that's also a level at which most American producers can be very profitable, right? So that becomes the ballast to all of this.
The broadening out that we were seeing, do you bet on that? Because earnings expectations are still pretty high for the whole S&P 500, right?
Yeah.
Double digits.
Yeah, and that compares with like a 9% long-term average. Like, that's fantastic. And so even if we see a little bit taken off of there, right, if expectations come down a little bit, we've also had valuations re-rate down. And so that becomes a really big opportunity where you have solid earnings power, a little bit more attractive valuations.
Does the earnings power, though, stay if a consumer is still dealing with $4 at the pump? Like, is there a level at which the really strong consumer retail spending we got, I mean, February numbers were very strong, even though they were very backwards looking. Is there a level at which people start to funnel more of their savings into things like the cost of powering their car? They start to save more. They get nervous. Is there a threshold?
I think there is for sure a risk, but it's actually duration is more important than level. So the longer we stay at these high levels, the more damage happens. But the uncomfortable thing to remember is that higher oil prices really impact the lower end consumer, who's actually a much smaller contributor overall to the U.S. economy. High-end consumers are actually in really, really good shape. Wealth is at historic levels, leverage is at historic lows, and the amount of earnings that they spend on filling their gas tank is relatively small. So again, as we think about the U.S. economy in aggregate, it's very asymmetric who gets hurt by high oil prices.
You know, last year, the other markets around the world in Europe and Asia outperformed the U.S. Now, they needed to do some catch-up after, you know, a decade of underperforming. But is that trend finished now?
I don't think so. It has certainly been halted. If you look at emerging markets in particular, they've really been hit hard by these high oil prices. So you have to get that corrected in order to see some momentum come back in those names. But again, as we think about fundamentals, we think it makes sense to have exposure outside of the U.S., both because we're likely to see a continued pressure on the dollar. You have extraordinarily low valuation valuations in those markets, and you're starting to see earnings begin to pick up.
What difference does it make the dollar going forward from here? Because we're seeing the dollar decline now as we look towards a resolution of the end of the war. It had been strengthening as the war coming up. How are you factoring that into your view for it?
Yeah, and then meanwhile in 2025 the dollar was quite weak, and so what we tend to see is that the U.S. dollar goes through these large cycles, and in periods when the U.S. dollar is appreciating, U.S. markets also tend to do better on a local currency basis. But we think that we're starting to come off of a very long period where U.S. dollar has been strong, U.S. assets have been ascendant, and it's starting to favor some of those assets outside the U.S. It doesn't mean the dollar is going to plummet, but on the margin, we think that outside the U.S. we tend to have the benefit.
All right. Kara, we're going to have to end it there. Thank you so much for joining us this morning. Great to see you. Kestra Chief Investment Officer Kara Murphy. And we are 8 minutes, just over that, into your trading day right now. We're not only holding on to gains, we are increasing them. We're now up 0.8% on the highs of the morning, the future session included, after a very, very strong day. We had the most advancers yesterday, so far year to date. That it's a pretty good breath this morning, 325 stocks up. It's all of the big mega cap tech, as Kara was just talking about, that's advancing. They are now all trading below 25 times forward earnings, so maybe it's a nice little bargain if you want it. NVIDIA, Alphabet, Amazon, Broadcom, Meta are the best gainers. Micron, which had been selling off, up 5% this morning. Intel, we talked about their deal with Apollo. Those shares are also up by more than 6%. On the downside, you have consumer type companies and you have energy names, energy falling with the price of oil. Nike down 13% after a lackluster earnings report where China did not perform as expected. McDonald's is in there, Visa, MasterCard. Again, some really consumer exposed names like P&G. You're going to see that if you look at the sectors this morning too, that energy is performing poorly alongside consumer staples. Energy down 2.1% is the best performing sector over the past month, over the month of March. No surprise with that big move in oil prices, one of the biggest months since the Gulf War. Communication services with the tech giants, industrials, infotech. Those are your leaders this morning, Matt.
All right, coming up, Brian Reuter of Permira is going to join us to discuss his outlook for M&A. And by the way, today's the big day. Today is the hour-long M&A special starting at noon. Danny anchors that, and we have a lot to talk about with Brian. Looking forward to him joining us on this Bloomberg Open Interest.
What's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg. Quick check on what's going on in the early trade. We're up 0.5% on the S&P 500 after a massive rally yesterday. 65.61 is where we sit on the benchmark index. The NASDAQ up another 152 points to 23,895, so getting back close to 24,000. You got the small caps rising more than 1%. It's time now for top calls. Some of the analyst action and focus this morning. First up is Raymond James, upgrading Walt Disney, saying the current slowdown and weaker international park traffic make this a good time to buy, with streaming profits expected to drive more growth over the next few years. Next up is Benchmark starting Microsoft with a buy rating, saying the company is becoming a leading force in AI and says investors should take advantage of the recent pullback. Microsoft shares had fallen yesterday 25% year to date. Of course, they rallied with the rest of the market. And finally, HSBC is upgrading Bank America and Wells Fargo to buys, writing that some bank stocks have overcorrected in response to rising economic uncertainty. Danny?
Dealmakers saw a very strong start to the year, despite a volatile backdrop as the war in Iran continues to cloud the global economic outlook. We spoke with Rich Lawson, who co-founded private equity firm HGGC, alongside Hall of Fame quarterback Steve Young, about what he's seeing in the market.
We all, I think, feel these profound implications of this geopolitical strife. But again, there are certain pockets of the alternatives, and particularly medium-sized companies globally, that are being transacted. We've actually bought a business in Canada. We've taken a business private in the UK. And we've also done a fund admin in Luxembourg in recent times. So deals are still happening.
Joining us now, I'm pleased to say, is Brian Reuter, co-CEO and co-managing partner at Premier. Brian, thanks so much for stopping by.
Thanks for having me.
And look, you have a better view than maybe anyone. Nearly 100 billion assets under management. You're headquartered in London, but you operate truly globally. It's all these existential risks. I mean, you and I were just talking about some of them, between AI, supply chains, war. What has this environment so far this year been like to invest in?
Yeah, it's energizing, but incredibly volatile. Volatility tends to create like really interesting environments to invest in. Looking back over the last couple of years, it was actually really tricky because we saw the markets being pretty highly valued relative to underlying risk potential. So volatility you could see in the world, but not volatility you could see in asset pricing. Today it's kind of reversed, and you see risk being priced everywhere, especially around the AI trade. So it's a really interesting time now. So we were saying before it was a good time to be selling beta, buying alpha, as in like the market we were kind of generally not excited to invest in, but you could have to pick really interesting selective assets where you could drive differential returns over several years. Now we actually see much more interesting opportunities with the way the market's being priced.
The AI, I guess, evolution has created kind of a reckoning for software especially. And it turns out that private asset owners are much more exposed to software than public markets. How does it look at Permira?
Yeah, we have a significant part of our NAV that's in B2B software especially, but it's a minority of where we've been investing. We actually have been a significant net seller of software for the last several years, and in fact, since the release of ChatGPT, not because we think software is in a bad place, but because we did not see this risk priced into software. So we saw better opportunities to sell software than to acquire. Recently, really towards the end of 2025, software moved into a really interesting price range, and we think actually now it's been oversold. Not necessarily in total, but there's really interesting single names in software that we think are significantly oversold.
You can go ahead and share some of those with us.
Oh, well, I tell everybody when they come to bring something to the investment committee today, it better look good compared to Workday at 9 times EBITDA, right? So it doesn't mean we're not going to buy Workday at 9 times EBITDA. We're not a public investor, but anything in the private market has to see that. The private markets have not yet reset to reflect those levels. It usually takes 6 or 9 months, as crazy as that is, for the private market to kind of see their way to what the public market reality is. But anyway, we think there's some really interesting names out there, and it will kind of work its way into the private
market. I was just thinking that your company Zendesk must be so happy that they're not a publicly traded company when all the wildness was happening.
Yeah.
So when you look in the market, if private hasn't caught up, are you actively having conversations with publicly traded companies that you're looking at taking private then?
The take private market has been a very consistent source of deal flow for us. It's a really good one. I don't know any public company that's happy they're public at the moment. And so we've taken companies public, we've taken more companies private than we've taken public, Zendesk being one of them. We've sold some of our public companies. We sold Informatica last year to Salesforce, which was it's a great trade for Salesforce, but we're very happy that that company's not public right now. So yeah, it's a really interesting time to be having dialogues with all of these companies about maybe it would be better off to be private in this kind of a world.
What's your take on the moat that's necessary, or what do you want to see in a software company? I mean, you mentioned Workday. I thought it was so fascinating that the CEO pointed out Anthropic and OpenAI still pay Workday on a monthly basis, right?
Yeah. We think there's a lot of overused kind of comfort terms that we see around software today. System of record, overused comfort term. Every application has a database, and you'll see people say, like, well, we're a system of record because we have a database. I'm like, nah, that doesn't really fit. You need to be feeding lots of other enterprise applications in the organization to have that kind of level of stickiness. So there's a lot of, like, moats have changed, and a lot of moats that we find really underwritable today are back to basics. It's regulatory protection. It's deep relative market share advantages relative to your competitors. And actually, a lot of what we've been doing with our existing portfolio companies, going back to 2022, 23, on the release of ChatGPT, was aggressive investment around AI innovation. We're now 600 million plus of real AI ARR in our portfolio, and that's growing more than 100% per year. So your best protection is actually to invest in and around the new technologies.
That's growing more than 100% per year. That's more than doubling every year.
Yes.
Wow.
And by the way, like, you realize there's tremendous advantages in the AI era to being the incumbent, because you have access to all of the context and workflows. That's actually the rate limiting step for enterprises to get real value out of all their investment. So we're thrilled, Zendesk being one of them. 200 million plus of that 600 million is coming from Zendesk alone, who made that pivot very successfully over the past several years, and really embracing being now an AI native, AI forward company.
Some of your peers who maybe hold software companies that don't have that incumbent advantage, it's been sort of stacked on top of what people are saying is the bifurcation of private capital players right now, the haves and the have-nots. Davidson Kemper has some stats that are hedge funds saying that roughly a quarter of PE funds that have raised since 2015 have failed to earn the rate of return at which firms can earn performance fees. There's been a lot of talk about the 21 and 22 vintages being really poor because of how much was paid. Again, that sort of shakeout, that bifurcation, have those troubles fully made their way through the system?
It never fully works its way entirely through the system, but there's been a very consistent trend of where especially institutional investors would like to put their capital, and it tends to be with firms that have some scale. So that's been a very consistent trend across this. There is a cycle to the industry. Some of that's driven by performance and vintage years and the like, and the vintage year you're talking about is going to be a very tricky vintage year, kind of 21, 22 era for the industry. But the industry always survives and thrives through that.
Is that making its way out, that vintage right now, or exits finally coming? Because I know there was some kind of indigestion of could the sellers and the buyers, could that gap come together? Is it coming together at all?
Yeah, it's still a low liquidity vintage across the class. We have been monetizing in our vintage for that. Like, that underlying portfolio is actually growing really nicely. So the more you grow, you work out some of the prices that were paid during zero interest rate environment and the like. So what we think actually the assets you want going forward, we love our position in this because we're a digitally native investor across everything we do. Our second biggest office is Silicon Valley, deep kind of roots in the Valley, but applying that technology expertise to all of the areas we invest, whether it's services, healthcare, consumer. We think that's actually the setup you want as a firm heading into the next decade of risk and opportunity around AI.
Brian, it's awesome to have you here, and as Danny points out, your perspective is really valuable, so I hope we can get you back on again. Brian Reuter there talking to us, he of Permira, but fortunately here at 731 Lex. We're getting some breaking news from the Islamic Republic of Iran Broadcasting Network, IRIB, citing the IRGC, saying that the Strait of Hormuz won't reopen based on Trump's absurd displays, and that's their word, not mine. As a result, you can see that we have paired some of the gains that we had on the S&P, although we're still up 0.5% at 37 points at 65.65. So it is, you know, a headline worth paying attention to, and we've seen a couple of these big red sticky headlines cross the Bloomberg terminal. Just about an hour and a half ago, President Trump said he will only consider a ceasefire with Iran when the strait is reopened. So the president officially making that an objective, even though yesterday the Department of Defense Secretary Pete Hegseth said it was not an objective. Now Iran says they won't reopen the strait. So we'll continue to see, I guess, volatility in these markets. More on Bloomberg. This is Open Interest.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing after headlines crossed, this time from Iran. We had President Trump earlier saying that he won't consider a ceasefire until the Strait of Hormuz is reopened. Remember, he said at the beginning of March, only when there's an unconditional surrender. But the Iranians say they're not going to open the Strait of Hormuz. As a result, we have some fluctuations, but still, I mean, 65.64, 65.66 right now. We're still up 0.6%. So the market really looking through those Iranian headlines. The NASDAQ gaining 0.75%, a little more at almost 24,000. Take a look at crude. It's down 2.5%. This is WTI at 98.77. Brent also down almost 3% at 101. So the market not buying what Iran has to say. Nvidia is up, and that's helping gains as well. Coming up the next hour, State Street's Maria Waitman shares her take on this week's massive rally.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
President Trump, he has arrived at the Supreme Court, and this is, his appearance goes against long-standing precedent of presidents not attending oral arguments over their policies.
In fact, I recall Scott Bessent, the Treasury Secretary, criticizing Jay Powell for attending a Supreme Court argument concerning Lisa Cook of the Federal Reserve Board, saying that he was politicizing the decision. It feels like this is very much a political decision, too.
Again, President Trump arrived at the Supreme Court as justices consider the constitutionality of his bid to curb who is eligible for automatic citizenship when born in the U.S., which has been something we've had for a very long time.
Absolutely.
In this country, I'm not sure. And what I understand from the legal experts is as it's a pretty well-established
There's a law that was passed in 1952, basically mirroring the language in the 14th Amendment that all persons born or naturalized in the U.S. and subject to the jurisdiction thereof are citizens. There's a key precedent in 1898 when the Supreme Court ruled that Wong Kim Ark, he was born in the U.S. to non-citizen parents from China, was a U.S. citizen. And by the way, worth mentioning as well that this executive order that President Trump signed back in January 2025 has never gone into effect. It was blocked by lower courts. And reportedly, it would only affect babies born in the future. But, you know, once this gets reversed, who knows what could happen next?
Yep, absolutely. So there is no video allowed in the Supreme Court, where there will be audio. And we'll take some of the oral argument audio live when it starts. And that's how we're going to cover, and that's how it's being covered here today. But there was certainly some video of President Trump leaving the White House en route to the Supreme Court and then arriving at the Supreme Court. And we had Tyler Kender on with a live report just moments ago, and we could barely hear it because there were so many protests on both sides of the issue happening at the Supreme Court. And very loud bands and drums and things like that.
Yeah, well, it's got a lot of people worked up, a lot of people animated. I mean, worth also reminding everyone that the opening arguments begin today. Let's bring in Jeff Mason, who is a Bloomberg White House and Washington correspondent, joining us from our Washington bureau. Jeff, when it comes to today's arguments, I mean, this is the beginning of a long process. We're not looking for any kind of decision anytime soon, are we?
No, you're certainly right to say that it's the beginning of a long process, at least in terms of being a long legal process. This process started when President Trump signed that executive order on his first day in office of his second term. And it really laid out one of his and some of his advisors, I would note Stephen Miller being certainly high among them, a dream for conservatives and for MAGA faithful to get rid of birthright citizenship. So that's what he wanted. It got challenged in court. It has not gone into effect, and now he's going to sit and is sitting in a courtroom looking at 3 of the justices who were appointed and confirmed under his first term, listening to oral arguments.
Jeff, the fact that President Trump is taking the unusual step of actually going to the Supreme Court, sitting in for oral arguments, that suggests that this is a very, very important topic for him. Just frame that out for us. How does he think about this? And how long has this been an issue for him?
Well, it's you're absolutely right. I mean, I think number one, President Trump likes drama, and he likes to have and has a flair for the dramatic. This is a former reality television host who became president twice. He still thinks very much like a reality television host. That's one reason why the press pool is often brought in to the Oval Office and to other events where he engages with the press. He's doing that in the Supreme Court right now, sans camera, which my guess is he would have been very happy for there to be cameras in the court today to see that. But to your broader question, yes, it's a huge priority for him because it's tied to one of his main promises as a presidential candidate, and that was to reform the immigration system in the United States, and particularly to crack down on illegal immigration. And his view and their view in the administration is that birthright citizenship encourages people to cross the border and have babies. And that's what they want to stop. Now, of course, the counter view to that, and you laid this out a little bit in the introduction, is that there are decades of legal precedents for this, more than decades, and that it is enshrined in the Constitution that being born in the United States means you become a citizen. So that's what they're up against, the administration, and we'll have to see how the justices view it.
And of course, how the justices view it, I mean, are they likely, if they disagree with the White House's argument, what are their options? Because my understanding is the justices generally prefer to avoid major constitutional questions if they can decide a case based on existing law, a statute.
Yeah, I mean, I'm not a Supreme Court expert, but it seems it's hard for me to imagine how they can just avoid the constitutionality here. I think that's the key. The key is whether this is in any way in line with the Constitution. And from a layman's read, you would think that it would not be, because the words that you read earlier are pretty clear. That said, their interpretation is just totally different. And they being the administration in this case, and that's the interpretation that they want to get the justices to rule on. I think it will be very interesting in oral arguments to hear the questions, and that is, for any really close Supreme Court watcher, that's the really dramatic part, is to get a sense of who's asking what and why, and then read the tea leaves based on that.
All right, let's listen in because the arguments have begun and General Sauer is speaking. Let's listen in.
Clause. When Congress used the term "not subject to any foreign power" in the Civil Rights Act of 1866, it rejected the British conception of allegiance. Senator Trumbull explained that subject to the jurisdiction thereof in the clause means not owing allegiance to anybody else. And in 1884, this court recognized that subject to the jurisdiction means owing direct and immediate allegiance. The clause thus does not extend citizenship to the children of temporary visa holders or illegal aliens. Unlike the newly freed slaves, those visitors lack direct and immediate allegiance to the United States. For aliens, lawful domicile is the status that creates the requisite allegiance, and the text of the clause presupposes domicile. For decades following the clause's adoption, commentators recognized that the children of temporary visitors are not citizens, and illegal aliens lack the legal capacity to establish domicile here. Unrestricted birthright citizenship contradicts the practice of the overwhelming majority of modern nations. It demeans the priceless and profound gift of American citizenship. It operates as a powerful pull factor for illegal immigration and rewards illegal aliens who not only violate the immigration laws, but also jump in front of those who follow the rules. It has spawned a sprawling industry of birth tourism as uncounted thousands of foreigners from potentially hostile nations have flocked to give birth in the United States in recent decades, creating a whole generation of American citizens abroad with no meaningful ties to the United States. I welcome the court's questions.
General Sauer, before we get into the broader national issues, would you start with Dred Scott? Dred Scott was a case about state citizenship. It was a diversity case. And of course, we know what Chief Justice Taney did with that. How does the Citizenship Clause respond specifically to Dred Scott and answers or changes or corrects its answer as to citizenship? The other point is the Citizenship Clause refers not just to national citizenship, but also to state citizenship. Are we to have two different definitions for those? It's one word, citizens of the United States and citizens of the state wherein they reside. So as you begin, I'd like you to go back at the beginning and be more specific about the answer, and I want you to explain whether or not those two definitions are the same or related, and what state citizenship is based on.
Thank you, Justice Thomas. I'll maybe start by addressing Dred Scott. As you alluded to the fact, Dred Scott, imposed one of the worst injustices in the history of this court, and it led to the outbreak of the Civil War. It's very clear, and this court in all of its early cases interpreting the 14th Amendment said, the one pervading purpose, the main object of the Citizenship Clause is to overrule Dred Scott and establish the citizenship of the freed slaves. And if you look at the debates in the congressional record and discussion surrounding the adoption of the Citizenship Clause, what you see is a very clear understanding that the newly freed slaves and their children have a relationship of domicile. They do not have a relationship to any foreign power. For example, there's a comment where he says, look, people have been here for 5 generations and clearly have no relationships to any foreign African potentate, or have a relationship of allegiance to the United States. And that reinforces our point that allegiance is what the word jurisdiction means. It doesn't mean regulatory jurisdiction or sort of being merely subject to the laws. They're talking and they're thinking about it in those debates about allegiance. Now, as to your second question, if you look at the text of the clause, we believe it says, born in the United States, born or naturalized in the United States and subject to the jurisdiction thereof, are citizens of the United States and the states of which they reside. So there's a constitutional guarantee that applies to both federal or national and state citizenship. And the key point we make there is that word reside, if you look at, for example, section 1473 of Justice Story's commentaries, was understood to mean domicile. So when they say subject to the jurisdiction, and then they go on to say you're a citizen of the United States and the state in which they reside, the very text of the clause itself presupposes that the citizen is domiciled in the United States. If they're present in a state at all, they reside there. Reside means domicile in the Constitution, and we think that strongly supports our interpretation. It's textual evidence of our domicile-based theory of jurisdiction.
Well, starting with that theory, you obviously put a lot of weight on subject to the jurisdiction thereof. But the examples you give to support that strike me as very quirky. Children of ambassadors, children of enemies during a hostile invasion, children on warships. And then you expand it to the whole class of illegal aliens are here in the country. I'm not quite sure how you can get to that big group from such tiny and sort of idiosyncratic examples.
There are those sort of narrow exceptions for ambassador foreign public ships. Tribal lineage is an enormous one that they were very focused on in the debates as well. But what I do is I invite the court to look at the intervening step, which is the enactment of the Civil Rights Act of 1866. And there they didn't say subject to the jurisdiction thereof. There it says not subject to any foreign power. Now, if you go back to Blackstone and Calvin's case, they say it does not matter if you are subject to any foreign power. If you are born in the king's domains, you have this indefeasible duty of allegiance to the king at any time. So there's a clear repudiation in the Civil Rights Act. The Civil Rights Act is this breakwater which makes it very, very clear that they are not thinking about allegiance in the terms of like the British common law. They've adopted the Republican conception of allegiance. So it's from not subject to any foreign power, and then the debates just a couple months later make it very clear that they're recodifying the same conception. They were dissatisfied with the potential ambiguity in the phrase Indians not taxed, and they adopted subject to the jurisdiction thereof. And one of the strongest statements of this is Senator Trumbull's statement that I quoted at the beginning, where he says, he's asked, what does that mean, subject to the jurisdiction thereof? And he says, it means not owing allegiance to anybody else. That is what it means. And this court picked up on that in Elk against Wilkins when it says, it uses, completely subject to the political jurisdiction, not mere regulatory jurisdiction.
All right, we've been listening to U.S. Solicitor General John Sauer arguing before the U.S. Supreme Court. And recall that President Trump is in attendance at the Supreme Court oral arguments here, and we'll be dipping back into some of those arguments. But right now, we want to convene a nice roundtable to kind of put this into context here. We have, of course, Jeff Mason, Bloomberg White House and Washington correspondent, and June Grasso, Bloomberg's legal analyst here. June, I want to start with you. Just on the legalities here, just give us a history of how this case has progressed through the courts, and what are the expectations for the Supreme Court?
Well, all the lower courts who heard this issue ruled against the government, and some of them in very sharp tones, because this has been an accepted part of American law since the end of the 1800s. So this interpretation that the Trump administration and the Solicitor General are trying to put on this, they're trying to look at the text and look at the history around it, because this is an originalist court. So what they'll do is they'll look at the text and what did the text mean at that time. So now for up until a few years ago, the text meant the same thing to everyone. But now, because of this Trump executive order, we have all these analysts, legal analysts, talking about how it is possible that it could be this. It could be the way the Trump administration wants it. So this is new research that's coming out in the last couple of years. It's not what has been held for, time immemorial in this country. So what the Solicitor General is doing is he's going back and he's saying, yeah, but look at this. The question is, what does it mean subject to the jurisdiction of? That's what the whole argument is about. What do those words mean? And he's saying, well, here in this decision, you can take it this way. And so he's sort of trying to put a gloss on what was said at the time. And it really is an uphill battle, but it's surprising to me that we've even come to this point, because years ago, everyone thought that this was a ridiculous assertion.
Absolutely. Jeff Mason is our White House and Washington correspondent in our D.C. bureau. Jeff, I just want you to kind of expand on what Paul had mentioned, which is that President Trump is attending this hearing at the Supreme Court. What's the symbolism of that? And what do you think, or what do we anticipate the president wants to get out of this appearance?
Nope, think we lost Jeff. Maybe not.
To the people who...
Go ahead, Jeff.
Can you hear me now? You want me to try again?
No, go ahead.
Okay.
You're all good.
Okay, great. I was just saying that I think he's sending a message with that appearance very, very deliberately. And in part, excuse me, that message is to the three members of the court that he is responsible for getting them their jobs. Of course, they had to be confirmed by the Senate, but he appointed them, and not all of them have ruled in his favor on some of the other issues that have been before the court, although, let's be honest, they've ruled in his favor on most, but not on one that was particularly important to him, which was tariffs, and this is also especially important to him. So I think he's demonstrating that by being in the court. If you were to get into President Trump's head, he might think that it's an intimidation move. I'm not sure intimidation is going to work with Supreme Court justices. That is their nest there. That is their home. And they're looking for the legal rationale for the decision that they're going to make, and probably not paying a great deal of attention to theatrics. But the message is very clear that he wants to get across, and that's why he's sitting there.
So I think, he is, as you said before, he's a reality show host. This is not reality TV in the Supreme Court. They don't like this kind of drama. what other president has come and sat in the Supreme Court oral arguments? I mean, think about all the cases that come up that involve the United States government. How many times Solicitor General's office is there? If he's trying to intimidate them, I think it might have the opposite effect. They're not going to be intimidated by him. Besides which, so far, I mean, how many names has he called his appointees, at least the two who didn't vote for him on the tariffs case? I mean, he's called them names, and now he's coming there and saying, I'm the president of the United States, you know, look at me. It's just, I think, it's a position that is, there's more harm than good coming from him sitting there, because it's not like he couldn't hear the arguments if he wanted to.
June, just give us a sense of how the timing of this may go. We have oral arguments today. Then what happens?
So oral arguments today, and then the justices will conference on it, and then they'll make their decision, and there will be all kinds of briefs going back and forth, because you've got to believe that there'll be dissents in this case. And when the decision comes out is anyone's guess. It'll come out before the end of the term, but if you look at past terms, most of the big cases come out very close to the end of the term, if not the last day. You know that because we've been here many days.
And the last day of the term is in?
Well, it's usually the end of June,
right,
but they have gone into July a couple of, I think once. So, I mean, the question is, do they save that to the end? They deny that. They say, when it comes up, but it's kind of odd that it ends up being at the very last day. So we'll know by July 1st, I guess.
Okay.
Jeff, do we know if there's more than just this one day of hearing? Is there going to be another couple of days? I mean, this is clearly a priority for the president because he's showing up there, but he's got a lot of other things that he needs to take care of today, including an address to the nation this evening.
He's got a lot of other things indeed, but you know what? That doesn't stop him. This is a president who, in the middle of launching a war against Iran and removing Nicolas Maduro from Venezuela, also went shopping at a marble store for his ballroom, and on Sunday night brought back renderings of the ballroom on Air Force One when he was flying home from Florida. So he juggles, and this is just one of those things that he's juggling. I do want to take a second, though, just to pretend I'm a Supreme Court reporter and analyze a little bit of that, the little bit of the opening arguments that we heard. I thought it was really fascinating that Justice Thomas was the first one to jump in. This is a justice who, as June will be able to say much more authoritatively than I, went for decades without talking at all on the court, and has more recently started to weigh in a little bit more. And today, the symbolism of an African-American justice asking about Dred Scott and looking for the legal sort of basis for this argument that the administration is making, I think that's fascinating. And to me, it came across as probably, well, I'm not going to say more than that. But it was at least interesting to me that he was the first one to weigh in.
So I hate to burst that great analysis, Jeff, but
please.
since COVID, they have been asking in the first person to. That's when Justice Thomas started talking during the COVID arguments, because he was, they were all home in their own abodes. So now the chief gives the first question to Justice Thomas. So every argument you're going to see Justice Thomas ask the first question, and it's been happening since COVID.
June, will all the justices ask questions during this?
Not necessarily, but what happens is at the very end, the chief goes through the list of all the justices. He says, through seniority, Justice Thomas, Justice Alito, Justice Sotomayor, any questions. And that's to eliminate what used to be, which everyone talking, it still happens sometimes, but everyone talking over each other. And Justice Scalia, they used to call it a hot bench because, they would jump in on each other. Right. And so this is a little more subdued.
All right, June
Grasso. Can I just last thing on that? Then I withdraw my smart analysis about him being first.
It was still good.
But I do think it's important that he mentioned Dred Scott, and I think the symbolism there is really fascinating.
Point taken. Jeff Mason, our White House correspondent, June Grasso, our in-house legal analyst. We're going to go back and listen to Justice Elena Kagan speaking right now.
You're using some pretty obscure sources to get to this concept.
Well, I take it straight from the framers' mouths. So, for example, Senator Trumbull was asked, what does jurisdiction mean? He means subject to the jurisdiction. He said, what does that mean? He says it means not owing allegiance to anybody else. He is the principal framer of the Civil Rights Act of 1866. Representative Bigham, who's the framer of the 14th Amendment, is asked, what does it mean in the congressional record at page 1291? He says, within the jurisdiction of the United States of parents not owing allegiance to any foreign sovereignty. And we've cited many, many examples where the congressional debates reflect that. Then you referred to the oration of George Bancroft. That's one of probably 16 sources, but there's at least 13, counting that one in the 12 treatises we cited, pages 26 to 28 of our brief. There is over a dozen sources that specifically address temporary sojourners. In the 5 decades after the enactment of the amendment, every single one of them says, well, temporary sojourners, their children are not included, including for 2 decades after Wong Kim Ark. So,
if domicile's the key linchpin to your argument, and I take it that it is, do we look at how domicile was understood in 1868, or do we look at it how it's understood today in context of the INA?
The 1868 understanding, I'm not aware of a strong difference between those.
Well, here's where I'm going with it. I'm just working within your argument for a moment. Today, you can point to laws against immigration that are much more restrictive than they were in 1868. We really didn't have laws like that we do today until maybe 1880. So if somebody showed up here in 1868 and established domicile, that was perfectly fine without respect to anything, any immigration laws. There they were. And so why wouldn't we, even if we were to apply your own test, come to the conclusion that the fact that someone might be illegal is immaterial?
I would first cite Wong Kim Ark on that point, because Wong Kim Ark says you're...
Well, I'm not sure how much you want to rely on Wong Kim Ark.
But there is a statement in there that says, so long as they are permitted to be here. So Wong Kim Ark, keep in mind that by the time they decide Wong Kim Ark in 1898...
But that's 1898. Now I'm looking at 1868, you're telling me is when I should look, and the test for domicile. And the stuff you have about unlawfully present, it's like Roman law sources you're going to.
First and second restatements as well, and decisions of this court.
So it wouldn't be the INA that would control whether you're capable of having domicile. It would be whatever the law was in 1868.
I think that this is addressed by my exchange with Justice Alito from earlier, which is that this concept, jurisdiction, baking in allegiance and domicile is applied to.
So Congress could continually restrict who may lawfully be present more and more, and you would say that would be incorporated into it, even though you're telling us to apply the original meaning of 1868.
The original meaning of domicile. And so the question is there any argument that the framers intended to preclude Congress from dictating who can and who cannot establish a lawful domicile here? I don't see any evidence of that in the congressional record, so it's a natural extension.
Whose domicile matters? I mean, it's not the child, obviously. It's the parents you'd have us focus on. And, you know, what if, is it the husband, is it the wife? What if they're unmarried? Whose domicile?
Well, in the executive order, it draws a distinction between the mother and the father, and it's really the mother's domicile. I think that would matter there.
Well, but 1868 matters, you're telling us, so what's the answer?
The 1868 sources talk about parental. I'm not aware of them drawing a distinction between mother or father, but they say the domicile of the child follows the domicile of the parents.
And how are we going to determine domicile? I mean, would we use contemporary sources on what qualifies as domicile in a state, or do we look in 1868? And do we have to do this for every single person?
And again, I don't see a strong distinction between those because, of course, domicile is a high-level concept, has been pretty consistent over centuries, which is lawful presence with the intent to remain permanently. That domicile, when you've come to a new nation, you say, I'm here to stay, you become part of their political community, and you become akin to a citizen. And that's reflected very strongly in the case I cited before.
And just to circle back to Justice Kagan's point, it's striking that in none of the debates do we have parents discussed. We have the child's citizenship and the focus of clauses on the child, not on the parents. And you don't see domicile mentioned in the debates. The absence is striking.
I think the 19th century sources would say a newborn child lacks the capacity to form a domicile, so they're imputed the domicile of their parents. So I don't think they would have seen a distinction between children and parents. And I point out that their position, like ours, is forced to look at the domicile of the parents, because if you look at the exceptions that they accept, like
I'm talking about
tribal Indians and so forth.
I'm talking about in the debates. over the 14th Amendment and the Civil Rights Act. It's striking that these concepts aren't discussed in them.
I think domicile is discussed. I mean, it's brought up in many.
Allegiance, jurisdiction, complete jurisdiction.
Well, I mean, here's just a few examples. Page 1679 of the Congressional Record, President Johnson vetoes the first version of the Civil Rights Act, and he says, I can't sign this because it would extend citizenship to the children of, quote, all domiciled aliens and foreigners, even if not naturalized. And you have all the other sources we cited that say, and this is a deeply rooted 19th century understanding. It's reflected in the Venus. It's reflected in the Pizarro in 1814 and 1817. It carries through the 19th century, and this court is talking about it in 1892 and 1893 when it's discussing the Chinese Exclusion Acts. Domicile is the key concept that creates allegiance. That's
General, you said in your reply brief that the children of slaves who were brought here unlawfully, in defiance of laws forbidding the slave trade, would in fact be citizens. And we can imagine that their parents were not only brought here in violation of United States law, but were here against their will, and so maybe felt allegiance to the countries where they were from. And you say that the purpose of the 14th Amendment was to put all slaves on equal footing, newly freed slaves on equal footing, and so they would be citizens. But that's not textual. So how do you get there? You say it in just a few sentences, so can you elaborate?
Sure. If you look at the 19th century sources, what you see is that even though their entry may have been unlawful, 19th century antebellum law never treated their presence as unlawful. In fact, quite the opposite. One of the amici, in fact, points to like a Mississippi statute, which probably is replicated throughout the South before the Civil War, that says slaves in Mississippi have an indefeasible domicile in Mississippi. In other words, even if they run away, if they get away, Mississippi says, nope, you still live here. Right? And so it would be astonishing, in other words, for the opponents of the 14th Amendment to say, oh, these people were not domiciled and therefore it goes the other way, because actually U.S. law, even if they were brought in illegally and through an illegal slave trade, once they were there by
their intent is to return as soon as they can, let's say. So they're here, they're resident, and maybe under your theory, which says, well, lawfulness for a different purpose, but they're here, they're resident, let's take your assumption that they're not here unlawfully. But let's say they don't have an intent to stay. They want to escape and go back the second they can. Are they domiciled?
Under the 19th century law, I think this is the flip side of the hypothetical that we were talking about earlier. Under 19th century law, they are treated as domiciled in the United States, so it'd be astonishing. And the debates in the congressional floor talk about not this specific case, but to say, look, slaves who have been forced to come here and have been here are lawfully domiciled here. They don't use the ways domiciled, but they use allegiance. They say they don't have allegiance to, once they've been forced to come here, they don't have allegiance to any foreign or African potentate, and therefore they're.
General, how would that apply to the children of illegally trafficked people today? Would the same reasoning apply?
It would turn on whether the parents are lawfully domiciled in the United States.
So if they're brought in illegally, but then they choose to remain and they want to remain and they're domiciled, you would say that their lawful presence is not dictated by whether they were brought here lawfully or not. And that's different from someone who, say, crosses the border unlawfully.
Yeah, I think it would turn on whether their presence is lawful.
General,
in other words, obviously there may be many other important things that could be done to assist people like that. The question is, if they give birth to someone in the United States, that person naturally a citizen, that would turn, based on the original public meaning of the clause, on the lawfulness of their presence. Are they domiciled?
General, can I ask you a question?
All right, that was Solicitor General John Sauer arguing in front of the Supreme Court again on the constitutionality of automatic citizenship when folks are born here in the U.S. We are joined a nice, smart roundtable here to discuss this. Jeff Mason, Bloomberg White House and Washington correspondent, June Grasso, legal analyst for Bloomberg. Jeff, let's start with you here. I have to be honest, before this executive order from President Trump, I didn't even know this was really an issue. How does this poll with his base? It's one thing to shut the borders if you're characterizing all those people as being let out of prison, but this is something different. Is this important to his base?
Well, it's certainly it's a little different, but it's connected. And the broad issue, of course, for President Trump and for his base is to crack down on illegal immigration and to try to give a disincentive for people to cross over the borders into the United States without having done it in a legal way. And their argument, some of which you were hearing from John Sauer in the Supreme Court is that the U.S. law or the U.S. precedent, which is what he's fighting against right now, essentially encourages people to come into the U.S. and give birth to children who then receive that citizenship. You asked me about polling. I don't know the answer to that in terms of what the polling is specifically on the MAGA base and birthright citizenship, but my guess is it's also very popular because the president's broad immigration agenda is very popular with his base and is one of the primary reasons, among a few others, that he came back to power.
All right, so we had been listening to the first 30 minutes of the opening arguments, and June Grasso, host of Bloomberg Law and our legal analyst here at Bloomberg Radio, there was a lot of back and forth. Is that typical of the opening moments of this kind of event?
It is typical. It's very typical. And I think what you heard was a lot of pushback from justices on both sides of the ideological spectrum. You heard Elena Kagan talking about how obscure, because as we talked about before, this is an argument that they have sort of been coming to for the last couple of years, and they've been reaching for obscured references to try to interpret the word subject to the jurisdiction of. And you heard Justice Gorsuch talking about, well, you're going back to Roman law. And Justice Barrett also talking about, because their position is very difficult, I think. Now, when you listen to the oral arguments and you hear one side, you think, oh, that side is, losing because the justices are asking all these questions. We have to wait and hear what questions they ask of the ACLU lawyer. And even then, you've heard a zillion times, you can't tell from the oral arguments. I think that's not so true, but sometimes true.
Supreme Court overturned something that's got decades of precedence. I mean, is that something that takes extra effort on their part?
I think it will take extra effort if they, in this case in particular, but I mean, they do, and they have overturned precedents from, 40 years ago. I mean, you're talking about union precedents from 40 years ago. Roe v. Wade. It can be done. They can do it if they want to.
All right. Jeff Mason, thanks so much for joining us. Jeff Mason's Bloomberg White House and Washington correspondent, and June Grasso, Bloomberg legal analyst. Bloomberg Law airs at 6 p.m. Eastern this evening on Bloomberg Radio. So June will have a lot more for you on this important day for the Supreme Court. Again, made even more so, more unique, I guess, by the presence of President Trump at these oral arguments. We don't see that.
We've never seen that before, in fact. And of course, all the cameras were there to capture him walking into the Supreme Court, and they'll be there when he walks out. But there are no cameras inside the Supreme Court during the arguments, and I guess for good reason, but I wonder if that's going to be the case, because this is a president who thrives on kind of making a big show out of everything.
And it seems like there are cameras everywhere these days and age. And people expect to get video of everything. And so why would the Supreme Court be different?
In fact, June was reminding us that there wasn't even audio available until during COVID when they put that provision in. So
so we'll see how it plays out.
Technology is starting to catch up here.
All right, looking at the markets here, we continue to hold on to the gains here. The S&P's up 44.6%. The Nasdaq's up 230 points. That's 1%. We've got oil down about $2 a barrel for WTI and Brent. WTI is now $99.20, below that $100 level. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by Eisner-Amper. Most advisors tell you what happened. Eisner-Amper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. Well, it looks like investors are in an optimistic mood after a rally that led stocks to their biggest one-day gain in 10 months on hopes the war with Iran will soon be over. S&P 500 up 46 points now. Dow Jones Industrial Average up 276 points, a gain of 0.6%. NASDAQ Composite up better than 1%, or 245 points. We have in the oil pits, Brent crude briefly slipped below $100 a barrel after President Trump said he expects the war in Iran to end in 2 to 3 weeks. Brent is now at 101.75 the barrel, down more than 2%. WTI crude also down about 2% at 99.35 the barrel. We've got the Bloomberg Dollar Spot Index down about 0.4% at 1210.84. Spot gold up about 2% at 47.50 the ounce. In stock news, Nike down 14% to the lowest level in a decade. It's also the biggest loser in the S&P 500 after the company gave a gloomy outlook for the year ahead and said its turnaround is taking longer than expected. And shares of RH, formerly Restoration Hardware, plunging nearly 23%, hitting its lowest intraday level in about 6 years. The upscale furniture company forecasting revenue that disappointed investors. Analysts say the forecast is pressured by execution and supply chain disruptions. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
Alexis, thank you so much. We appreciate it. Scarlett Fu and Paul Sweetie, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and on Bloomberg.com. Red headline just crossing the Bloomberg terminal. They just keep coming. Top Gulf aluminum producer EGA halted smelter after Iran strike. We're looking at aluminum on my Bloomberg screen, up 1.7% here today, which is perfect. Segui for Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Mike, talk to us about the aluminum market. I guess we all have to get smart on that today. What can you tell us about the aluminum market?
The key thing to think about aluminum market is about less than 10% of supply comes from the Middle East Gulf area. 60% is from China. So yes, this is a factor. It's an issue. It's cutting off global supply. It's the fog of war. But in the macro big picture, it's actually more destructive in the big picture. It's going to boost prices in the short term, which will curtail demand, bring on supply. But the key thing overall big picture is, why is everything going up? Partly because of the hostilities and crude oil spiking. But number one thing to remember about crude oil is typically its own worst enemy. And we're seeing that now. It was in 2008. It was in 2022, but the difference this time, it's global, it's spiking, and now it's triggering a global recession, more supply potentially, a curtailed demand, and major issue in consumer sentiment and capital budgeting decisions, which means a downward trend. And the key thing to think about here is the potential wealth destruction that's kicking in.
Yeah, especially when it comes to oil. To go back to what Paul was saying about Emirates Global Aluminum, which is EGA, that is the region's top supplier, and it did say over the weekend that it sustained significant damage at its site in Abu Dhabi. You had mentioned that the Middle East only accounts for about 1/10 of global production. Why is the impact so amplified then? What do inventories look like that might account for the outsized reaction?
Well, before this came out, our BI strategists thought aluminum was becoming oversupply, was more likely headed towards 2,400. Now we're near 3,500, and they said, well, if this continues, it might head towards $4,000 a ton. So it's shifted the narrative, but a lot of this, Carl, I think, is the risks of it continuing hostility from Iran. That's it. I think it's probably the fog of war, and it's oftentimes these are peak eaklings. For instance, crude oil probably peaked around 120, and now it's starting to tick lower. Aluminum's seeing its moment right now. Look what happened in copper. Copper put a new high early in the year. It was up 15%, and then it ended up dropping almost 20%. Same in silver, same in gold, same in natural gas. So that's kind of what's happening. Right now, it's the pumps period for things like aluminum and crude oil, but everything else has been shifting to dumps, partly because that's what happens. You go up too much, and you shift back lower, particularly if the stock market keeps going down.
Yeah, Mike, we've seen the stock market today and yesterday kind of bouncing back, trying to look through and kind of jump on President Trump's comments that this is shorter rather than longer issue here. Not so much in the oil market. Oil market's hanging on to these higher for longer. Does that simply reflect that we haven't seen any concrete moves to open the strait.
So here's a call for you, Paul. I think by the midterms, WTI crude oil is going to be closer to $40 a barrel, 40, than 100. And there's one good indication for that. You have to skate to where the puck's going in crude oil. And that December contract, that December future right now is $70 to $71 a barrel. It got to near 80. It's going to be front month right before the elections. And what does Mr. Trump need? And the key thing to remember here, there's the demand versus supply in the U.S. and Canada for crude oil and liquid fuels is collapsing. There's a surplus now of 8 million barrels a day. When crude oil peaked in 2008 at 147, it was a deficit. This spike in prices is bringing on people to sell forward, like that December contract, bring on some more supply, which means profits and lower prices as things kick in. And the bottom line is consumers are really being squeezed by the spike in distillates, in gasoline and diesel. To me, this is very similar to 2008, but worse, because then U.S. was a net importer, now we're a net exporter. So it's very much favorable to the U.S., but it's not favorable for prices as we get towards midterms.
Right. It's favorable for the U.S., it's favorable for WTI, which is the U.S. benchmark. What does this picture mean for Brent, the global benchmark, and for all the oil importing nations out there in Europe, in Asia?
Global recession. There's, you have it right now, Scarlett. So I have to ask myself, what is this doing for consumer sentiment and capital budgeting decisions? And, you know, consumers in this country were very much waning well before this happened. So I think it's the classic shutoff that we saw in 2008 when the price of gasoline got to 4. But this is the rest of the world. And before this happened, they were already facing the tariffs from the U.S. and deflationary forces from all those exports from China going to the rest of the world. And the bottom line, I think, is this is all happening with the U.S. stock market. Very expensive, very complacent. And the main thing, I think, is gold warned us. When gold spiked last year, to me, that was the warning. Now it's making more sense what's happening this year. It warned us we're going to get volatility, and it's all trickling over to the stock market, which means everything goes down eventually.
All right, and just to follow on to that headline about EGA halting its smelter after the Iran strike, we're seeing shares of Alcoa and Century Aluminum rise to session highs. So the U.S. aluminum producers are climbing on the news that the Emirates Global of Aluminum, the EGA company, has halted its smelter. Mike, I want to go back to you and talk a little bit about the president's address to the nation this evening at 9 p.m. What is the oil market bracing for any kind of commentary that could move oil prices dramatically? I mean, what would you look for in terms of positioning to determine whether that's the case?
Well, the key theme I saw this morning is there will be no ceasefire until the straits open. Now, there's so many quotes from Mr. Trump, which is part of his strategy. And that's the key thing. We have to be very careful of these pie-in-the-sky expectations and all these things coming out. Iran, they sell, they get headlines, but what really matters, I think, from this is going to try to soothe the markets. And I think his advisors are telling you, sorry, we have to clear up the strait, we have to close that, and we have to clean it up and get out and make it clean before you get out. Otherwise, your legacy is ruined, Republicans are ruined, and it probably means a global recession. And by the way, the #1 issue is affordability, and right now, stock market going up and gasoline prices stock market going down, gasoline prices going up is really bad from consumer sentiment. By the time we get to midterms, you have to make sure you have a path to make that better.
You know, it's this time of year where we're no longer jealous of Mike McClone. He's got 80 and sunny. We're going to push 80 today here in New York. So, I mean, Mike, you can have it. We're getting our spring here. Mike McClone,
finally.
Senior Commodity Strategist. Yeah, finally. He's a Senior Commodity Strategist for Bloomberg Intelligence. He's based down there in Miami, sporting the year-round tan. But he is our go-to person on commodities. And we'll get to pork bellies next time with Mike here. What are you looking at, Scarlett?
I'm looking at the market overall because there was a lot of talk about how the spike in stock prices yesterday was due to a lot of short covering.
Yep.
And so it wouldn't last. But we're seeing some follow through of buying here with the S&P 500 up 0.9%. There was a lot of short interest in the overall market. So yesterday's comments or reports that both Iran and President Trump are looking for some kind of off-ramp caused a lot of people to cover those shorts. Where do we go forward from here? The address tonight is going to hopefully
that's a great point. I'm glad you brought that up because we have no idea. I don't think anybody has any idea what the president will say at 9 o'clock. Since he tweets so often, you kind of know where he is, but we'll see how it goes. So again, stocks moving higher here. I'm looking at the WEI function. That also gives me a sense of volume. Volumes are trading 15 to 30% above 30-day averages. So people are buying today and they're buying in size, and that gives you a little sense of the conviction and breadth of the market. A little more coming up. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good morning, Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And one of the stocks that we're keeping an eye on, especially as this market extends a rally from yesterday, is Nike. No rally there because shares of Nike down almost 14% after its latest earnings report. The last quarter was fine. It's the outlook that has people a little bit concerned. Lily Meyer is our retail reporter, and she joins us. Actually, is she here?
I don't.
Yeah, she is. Okay, I'm sorry. I thought she was going to be in studio, but I was wrong. Okay, Lily, great to speak with you. What is it specifically that Nike said that got people concerned? Because we've been conditioned to really understand that Nike is in turnaround mode, so it's not going to be a straight line up.
Yeah, exactly. And I think they're still fair to say they're in turnaround. What really spooked investors was they shared that the outlook for revenue for the year is just much lower than the street expected. They're still having challenges with Converse. They're now seeing some challenges in EMEA, and that's offset some of the gains in North America and in the running category.
Lily, talk to us about the inventories, because I know that was a big issue for this company. Hey, let us just kind of get through weaning down our inventory, and then we'll be in good shape. I thought they were making progress there, and I think I'm probably representing the market here because the market, I guess, was surprised here. Talk to us about inventory.
Yeah, so one place that inventories came up this quarter that was interesting is they said that they're seeing some elevated inventories in EMEA, in Europe, in the Middle East, and they're also seeing some traffic disruption there from the war.
What is it specifically with China that's been an issue? Because inventories has been a problem there, but it goes beyond that. I mean, it goes to a weakness in consumer spending and rising competition, but Nike has been really struggling to get its China business, its greater China business, back to what it was.
Yeah, exactly. So I would say it's, a lot of increased competition there. And this quarter, they did show some improvement in Greater China. I think, things turned around a little bit more than was expected, but still not enough to excite investors.
And one area that's really been weak for Nike is Converse. I don't know about you, but I love Converse sneakers, but I'm also
Chuck
old.
Taylors.
Yep, exactly. And Converse sales fell more than expected. I think you have something like a 15-year low in your stories. What is going on there? Because it has attracted some interest.
Yeah, so Converse has been one of the most stubborn parts of the business to turn around under Elliott Hill. So I think, Nike has really relied on Converse for the Chuck Taylor, but has struggled to diversify outside of that. So they're trying to make a basketball push, but, we're not seeing a lot of progress in that area. And, we reported yesterday that they, Authentic Brands has expressed some interest in Converse. So we'll see what happens there. Nike has said, they're still invested in Converse, but it hasn't turned around yet.
It's Lily, just for Nike overall, when I think of them as just one of the great consumer product brands with just the coolest cutting edge, leading edge kind of products. It feels like maybe they've lost that. How concerned are people that they've just kind of lost the feel for the market?
Yeah, I think innovation was definitely a concern prior to Elliott joining. So under John Donahoe, one of the biggest concerns was there was a lack of innovation. Nike was relying too much on some of their lifestyle products. So on the Dunks, the Air Jordan ones, the Air Force ones. Elliott has really refocused the business around sport, and he's been trying to innovate in that category. Nike had some new product come out around the Olympics. So I think that's an area to watch closely, seeing how much innovation they're able to pump out.
And speaking of Elliott Hill, he's been on the job for now 1.5 years. Does he own everything that's happened, or does he still get a little bit of a pass? I imagine that it's frustrating for investors. It's frustrating for him as well to kind of see this stop and start progress.
Yeah, so I think that in one of our stories today, we said that shares are down more than 35% since he started, despite him executing a new strategy. He, on a call with employees, said he was so tired, of talking about fixing the business. I think he's definitely it seems like he's starting to feel some of the frustration there, the business not turning around.
Lily, thanks so much for joining us. Really appreciate it. Lily Meyer, she's a retail reporter for Bloomberg News, giving us the latest on Nike shares. Again, disappointing results from Nike. disappointing guidance, and you're seeing that in the stock here. Stock trading down pretty significantly. And again, this was probably, I remember in the last quarter or two, a lot of analysts were saying, all right, I think I'm calling the bottom here. I think they're getting past this inventory issue. They can start focusing on growth again. And I think that's where a lot of the consensus was. So when I put out this number today, boy, a big reaction. Stock off 14% today. This is not a small cap company. This is $67 billion in market cap, setting a 52-week low here today. The stock's down 28% year to date. So back to the woodshed.
Back to the woodshed. I mean, maybe time to like rethink the strategy, the one that they're putting in place, because as you mentioned, investors were looking for growth. The consensus estimate was for 2% gains this quarter and bigger gains for the rest of the year. And instead, Nike saying revenue will fall as much as 4% this quarter and will stay in low single digits for the rest of the year. That is not a growth story.
And just looking around at the young folks at Bloomberg, most of them wear sneakers.
They're not wearing Nikes?
They're wearing other brands that I haven't, and I'm not aware of, like Hoka.
On Holdings,
like those things, like not even in my generation. So to me, it's just, Nike was it. And they had 500 different things to choose from.
My cohort wears Onitsuka Tigers.
Really?
Yeah.
Wow.
I mean, I've seen a lot of people like exactly my demographic wearing the same sneakers, and I realized I'm a type.
Yep, exactly right. All right, very good. Nike. Tough day for them. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good morning. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube and on Bloomberg.com/video. Paul Sweeney and Scarlett Fu here with you as we look at the stock market extending yesterday's rally, and oil prices at the moment are lower by 2%. So we're going to check in with, of course, everyone to talk about these markets, but we're also going to get an update on what's happening at the Supreme Court, where the president has shown up to hear the opening arguments on his effort to reverse birthright citizenship. Tyler Kendall, our Washington correspondent, will be giving us the latest there. We're going to check in with Ed Ludlow, our B-Tech co-host, who joins us from the Kennedy Space Center on NASA launching astronauts to the moon for the first time in half a century. Sylvia Jablonski, CEO and CIO of Defiance ETFs, will discuss her outlook for these markets. And Lindsay Dutch, our consumer hardlines senior analyst, will recap earnings from RH, Restoration Hardware, as well as talk about what's going on with Mattel. But first, let's bring in Charlie Pellet for Bloomberg Business Flash. Charlie.
Hi, thank you very much, Scarlett. Lots of moving parts to this market. We got you covered here at Bloomberg. The Dow, the S&P, NASDAQ, all pushing higher, building on yesterday's surge. S&P 500 index right now, best level of the day, up 63, 65.91 where we stand on that index, up now by 1%. Stocks are climbing. Oil is sliding on war and optimism. Dow Industrials up 400, even up by about 0.9%. NASDAQ Composite Index now up 314, up another 1.5%. The VIX now with a 23 handle, the 10-year 4.30%, the 2-year 3.78%. Gold up $95 the ounce, up 2%, 47.62 on the precious metal. Crude West Texas Intermediate back below 100, 99.02 right now, down 2.3%. Brent, the global benchmark, 101.44 now, down by 2.4%. We are watching Nike shares sell off, down now by 13.8%. Nike down after the retailer gave us a surprisingly gloomy outlook for the year ahead. Now, Lily Meyer follows the company for Bloomberg News. She was a guest moments ago, right here on Bloomberg Intelligence.
What really spooked investors was they shared that the outlook for revenue for the year is just much lower than the street expected. They're still having challenges with Converse. They're now seeing some challenges in EMEA, and that's offset some of the gains in North America and in the running category.
Again, shares of Nike down 13.8%. Lily Meyer interviewed right here on Bloomberg Intelligence. We mentioned crude oil moving lower, but elsewhere in the aluminum industry, we are keeping an eye on a top Gulf aluminum producer that has halted its smelter after an Iran strike. Alcoa shares today, they're up by 5.7%, and another aluminum producer, Century Aluminum, CENX on the ticker, up now by 6.2%. Bottom line here, stocks are rallying again. West Texas Intermediate just above $99 a barrel. Scarlett and Paul, that is a Bloomberg Business Flash.
Charlie Pella, thank you so much. We appreciate that. Scarlett Foe and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. Sunny, warm New York City, which is very cool.
For a change.
Yeah, exactly. I tell you, a spring day in the city, nothing beats it, man. The park, people are out having a good time. It's just awesome.
You go away in the winter, you stay around in the spring.
Yep, that's how
you can go away for the summer again.
Yep, a lot going on out there. As Charlie was just reporting, we got some green on the screen here. Let's take a look at some stocks on the move today. For that, we're joined by Bloomberg's Christina Aquino. Christine, what are you looking at today?
All right, Paul, let's start with Intel today. Those shares are roaring at the moment. So ticker INTC. Shares extending now up 9.4% on the day. And that is because Intel agreed to pay $14 billion to buy back half of a plant in Ireland. I don't know how you buy half of a plant, but Intel is doing it. They are buying it back from Apollo, who was the previous buyer. And so apparently the transaction is going to be financed with cash in hand, as well as the issuance of about $6.5 billion in new debt. Now, investors are thinking that this is a positive sign for Intel because they spent much of 2025 in cost-cutting mode. And so the fact that they're spending money and investing in infrastructure, particularly as they try to get into the AI infrastructure space, that is all being taken positive by the market.
My boy Frank Yeary, who I worked with back at Solomon, he's the chairman of the board at Intel. Maybe I'll throw a phone call out to Frank and say, what are you guys doing?
Yeah, explain the strategy here.
He's always smart.
Why half a plant instead of a full plant? That's what I'd like to know.
Maybe in due time. Let's talk about some defense contractors.
Absolutely, Scarlett. Let's talk about Boeing in particular, because that's a big winner as well today. So ticker BA, those shares also climbing on the day. They are now up, let's have a look here, more than 5%, so extending some of those earlier gains. And that is because the Pentagon announced a partnership with Boeing, as well as Lockheed Martin, to triple the production capacity of Seekers for the Patriot Advanced Capability 3 missile segment enhancement. That is a lot of words to say missiles, but there you go. And so Boeing now involved in this deal as well. And the Pentagon also saying that it's going to be a 7-year agreement with Boeing. It's going to be part of its recent agreement with Lockheed to more than triple the output for these Patriot Seeker missiles. And so analysts are noting that the tripling of production is well in excess of, I think it was initially an implied 750 per year in delivery in 2030, which was earlier referenced in October 2025. So those shares benefiting from that as well.
Okay, very good. One more. What do we got?
Let's take a look at Nike. Big downer of a stock today. So ticker NKE. Again, those shares extending their opening declines. They are now down more than 14%. So we know, of course, Nike did have a disappointing forecast for the year ahead. They said that revenue is expected to decline in the current quarter. It's going to be down for the rest of the calendar year. Now, a Bloomberg News exclusive also taking a look at this recording of an all-hands staff meeting where the CEO, Elliot Hill, talking to staff, basically airing his frustration about the situation. He said, quote, "I am so tired, and I know you are too, of talking about fixing the business. I want to move to inspiring and driving growth and having fun." But clearly the vibes are off. They're not having fun at the moment.
And we can report, Scarlett, that Christina Aquino is wearing Nikes today.
I am wearing Nikes today.
Yeah, and you are a Nike fan. You're looking at buying more Nikes too.
Exactly. I have a couple of pairs currently in my basket at the moment. So I don't know if that's going to help turn around their business, but you know, I'm doing my
Nike
part.
needs more customers like you. That's the plan.
Exactly.
Maybe we should go talk to Elliot Hill. Christina Aquino, thank you so much. She is our managing editor here at MLive Go. For her markets blog, be sure to check it out on the Bloomberg terminal. And for more conversations like what you just heard, subscribe to our Stock Movers reports Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can find it on Apple Podcasts, Spotify, or anywhere you listen. So President Trump has a busy day today. I mean, he began this morning by going to the Supreme Court, where he is currently in attendance as the Supreme Court listens to opening arguments on the White House's bid to reverse birthright citizenship, to change what it means to be a citizen here in the United States. Let's bring in Tyler Kendall. She is our Washington correspondent, and she is right outside the Supreme Court. Tyler, what can you tell us so far about the hearing?
Well, Scarlett, we're about an hour into oral arguments here at the Supreme Court, and we're not expecting there to be a ruling today, but essentially what we're looking for are those signals, those clues that court watchers want to see that could give us an indication on how these justices may weigh in when it comes to this case in specific. Now, we can say going into today, some conservative justices, including Brett Kavanaugh, had already signaled to us that they may be skeptical about some of the administration's arguments here, and we're starting to see that echoed as the Solicitor General, John Sauer, is taking questions from these justices as we speak. For example, Chief Justice John Roberts calling one of Sauer's arguments, quote, quirky. He also said, take a listen to this quote, it's a new world, but it's the same Constitution, because part of this is that the Trump administration is trying to argue that when, well, we can back up. This is essentially about the citizenship clause under the 14th Amendment, and the Trump administration has tried to argue that the drafters weren't thinking about undocumented immigration at that time, and therefore it shouldn't be applied as broadly. Paul and Scarlett, we did hear at least one justice appear to signal some sympathy to that argument. That was Samuel Alito, but at this point we haven't heard yet quite from the challenger side. They're up next. The ACLU brought this class action lawsuit, and we'll hear from their lawyer next. But until that happens, we can't really give a full picture on exactly how these justices are weighing in.
Tyler, as Scarlett mentioned, the president certainly has a busy schedule today. At 9 p.m. Eastern time, he's scheduled to speak to the nation. Do we have any idea what the topic is, what he's going to say, why now?
Well, Paul, at this point, the White House has outlined that, of course, it's going to be about Iran, and we can take some clues from what the president has focused on over the last 24 hours, mainly taking aim at some of our NATO allies. Just yesterday, of course, posting that he is urging our NATO allies to open the Strait of Hormuz, go in and take the energy supplies themselves. Pair that with recent comments this morning in an interview with The Telegraph, saying that he is seriously reconsidering the U.S. being part of the NATO alliance. Pair that then with his Secretary of State, Marco Rubio, overnight saying that it's time to, quote, re-examine the alliance. I think it is probably safe to say that we could expect the president to pile on that criticism and that pressure of our allies on this backdrop, as we know that the administration has been telegraphing at least that they think that this war could conclude in the next 2 or 3 weeks, in President Trump's own words. Yet still we are getting so many headlines, including this morning, President Trump saying that the U.S. will not agree to a ceasefire unless the Strait of Hormuz is opened. There's been no indication that Iran has offered that there could be a unconditional cease in the hostilities just yet, but that of course is raising questions here about exactly where these negotiations stand, since Iran won't confirm that they're happening, but the U.S. says that they are gaining strength.
And of course, on the U.S. side, the negotiators for America would be Jared Kushner, as well as the president's friend, Steve Witkoff, his kind of emissary overall. Do we know whether discussions are still taking place with whoever's representing Iran in Pakistan as its role as a mediator?
Right, so we've gotten some indications from the administration that these diplomatic talks are underway. Take Secretary Pete Hegseth just yesterday saying that these talks are, quote, gaining strength, but also maintaining that the U.S. will continue to strike Iran until that agreement is in place. At the same time, you also had President Trump saying that he doesn't necessarily need an agreement to be in place in order to end the U.S. military operation, and instead reiterated that the main goal here is that the U.S. wants to ensure that Iran will not be able to obtain a nuclear weapon with or without a finalized deal. So a lot of different threads that we could pull on, Scarlett, but the administration maintains that they are talking with Iran, though a new statement out from the Iranian foreign minister earlier today through Iranian state TV saying that they are rejecting President Trump's assertion that these talks are happening or that the U.S. could have a say in what happens to the future of the Strait of Hormuz.
Tyler, I can tell it's loud where you are. There's a lot going on where you are. It's better than it was this morning, Scarlett. She had to contend with competing, I think, like marching bands and banging
Protesters,
drums.
right?
Protesters. Tyler, just remind us what the timing is here. We have arguments today, but we're not going to hear from the Supreme Court for a while, are we?
Probably not, Paul. They're going to likely rule by July. The Supreme Court term ends in June. This is a highly, highly anticipated case, and there's a lot at stake here for President Trump, considering that he has been under pressure when it comes to his hardline immigration policies. I can tell you I have a direct view of the U.S. Capitol Rotunda right now, and the backdrop, of course, is that the Department of Homeland Security is still in a government shutdown over disagreements about the president's hardline policy tactics. But the fact that he is here today at the Supreme Court really shows that he is doubling down, and it is quite a scene here. As you mentioned, a lot of protesters, also probably a scene inside the courtroom. We don't have live photos inside, but we know that he is sitting just feet away from those justices who he has often criticized after we saw that landmark ruling where I was there with you in New York when it happened, when they overturned his tariff policy. So a lot of drama today here in Washington.
A lot of drama, and as we were mentioning earlier, there is live audio feed of the arguments taking place in the Supreme Court, but it's the first time. Well, no, I had said that that had not happened before. Previously, there used to be audio feeds, but it would come a day later.
Okay.
Yes. Okay. Thank you to June Grasso for that. So. Thank you so much, Tyler Kendall. We'll let you get back into the shade because Tyler's standing outside the Supreme Court right now. She's our Bloomberg Washington correspondent. Let's switch gears and move over now to Florida, where Ed Ludlow, our B-Tech co-host, is standing by. He is at the Kennedy Space Center. And Ed, very exciting. There's going to be a lot happening today, this evening, specifically with NASA astronauts poised to lift off on a 10-day journey. Tell us why this is so significant.
It's significant because this is America through NASA trying to take humans to the moon for the first time in more than 50 years. In this instance, in Artemis 2, the name of the mission, there will be no attempt to land on the moon. But it has been since the Apollo era that America's even tried, right? So much of America's and the world's space activity has been focused on low Earth orbit. And it's part of this bigger goal of America establishing a presence, landing on the moon's surface as early as 2028. Within the background, the geopolitical context that China has similar ambitions, right? They have said 2030, so the race is on. And this Artemis 2 mission is a critical dress rehearsal, if you like, to test those key rocket and launch systems, as well as the Orion spacecraft developed by Lockheed Martin.
You know, Ed, I'm old enough to remember we've already done this, been there, done that. I, for one, and I think I speak for a lot of folks in my generation, were like, hey, we've already done this. Can't you guys come up with something new? What's the bigger reason on the back end to go back to the moon?
Yeah, I mean, it is politics, right? You know, there is a camp of people that believe there is a future where we rely on access to the moon's surface, an established base for resources, literally in the context of minerals. There is the space industry perspective that if humankind and America has an ambition to get to Mars, the best way to do that is to launch eventually from the moon's surface or use the moon as an issue of resource. But beyond that, you know, the other way of looking at it is, why have we not done this since the Apollo era? You know, I don't know, Paul, I'm not going to comment on your age, but you know, what Kennedy said famously in the early 60s is that they wanted to go to the moon not because it was easy, but because it was hard. But he made a second speech later in that year where he said, you know, the world was basically at a crossroads between capitalism and communism is what he was referring to. But, you know, that political part is a big point, and it has not been the focus of prior administrations to go to the moon. Trump has made it a priority.
Very good. Ed Ludlow, B-Tech co-host. He's down there at the Kennedy Space Center, which is better than some of the other places he's been for some of these launches that are like in West Texas and New Mexico and the desert. So being down there, I've been down there, Cape Canaveral. It's a pretty cool place. Red headline crossing the Bloomberg terminal. Billionaire Elon Musk SpaceX has filed confidentially for the IPO. Here we go.
And this is one of the most long anticipated IPOs ever. It's been something that people have been looking ahead to, looking forward to. We already know NASDAQ changed some of the rules for inclusion in the NASDAQ 100 so that a company like SpaceX could be added after 15 days as opposed to after a longer, lengthier period. So investors can get access to this company sooner.
Yep, and the numbers are going to be just all
ginormous.
Yeah, jaw-dropping type of things. So again, billionaire Elon Musk, SpaceX has filed confidentially for the IPO, beginning the process. How about that? S&P up 61 points this year.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks holding at the best level of the session right now. And this Bloomberg Business Flash is brought to you by gold and Crest metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. We brought you the headlines moments ago. SpaceX has filed confidentially for an IPO. That's according to people familiar with the matter, bringing billionaire Elon Musk's company closer to delivering the biggest ever listing. Sources tell Bloomberg the company has submitted its draft IPO registration to the SEC. It could seek a valuation in the IPO of more than $1.75 trillion. Again, developing story headline right now on the Bloomberg Professional Service. We're working the story, and we'll have more details as they become available. The Dow, the S&P, NASDAQ all pushing higher as optimism grows that the war in the Mideast may be nearing a conclusion. S&P right now up 64, 65.93, up by 1%. We've got the Dow up 426, gain there of 0.9%. NASDAQ pushing higher, up by 1.5%. Nike, after earnings, down 13.5%. The VIX below 24, the 10-year 4.29%. Gold right now 47.74 the ounce, up 2.3%. And West Texas Intermediate crude oil 99.34 a barrel, down right now by just about 2%. Brent 101.58, down 2.3%. You're in a self-driving car. Suddenly it grinds to a complete stop after a system glitch. It happened in China, specifically Wuhan, when a number of Baidu's Apollo Go robo-taxis suddenly stopped in the streets, trapping passengers in vehicles and raising concerns about the safety and reliability of autonomous driving technology. I'm Charlie Pellet, Scarlett and Paul. That is a Bloomberg Business Flash.
That reminds me of a power outage in San Francisco last year, late last year, when the Waymos that were on the streets of San Francisco just suddenly stopped because they didn't know what to do.
Yeah, I did my first Waymo ride in Santa Clara, California, just a few weeks ago. Went fine. We went to the In-N-Out Burger, back. Everything worked out fine. What's more California than getting in a Waymo, going to In-N-Out Burger?
You're such a tourist, Paul.
Exactly, exactly. Just looking at Charlie's story here on this Elon Musk SpaceX thing. You know, what we used to call the bulge bracket, the top 5 firms on Wall Street, they're all lined up here for this. Bank of America, Citigroup, Goldman Sachs, JP Morgan, and Morgan Stanley. So you got all the big banks lined up to take this space company public. So you would expect nothing less. And they're going to need every other investment bank on Wall Street to help them push it out as well. Let's get back to these markets here. We've got, as Charlie was just reporting, good moves higher today on good volume, by the way. I'll put that out there, confirming kind of the trade we saw yesterday to the upside. Let's check in with a professional here, Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer of Defiance ETFs, joining us here. Sylvia, it seems to be, the market seems to be looking past this war, taking President Trump at his word that maybe we're closer to the end than not. How are you thinking about all the themes crisscrossing this market?
Well, good morning, Paul and Scarlett. I think the market is taking him at his word today and yesterday, right? And it's certainly a welcome relief rally that we've seen for the last few days. But I think that, the future of the market will really depend on what happens. I think we need that certainty now, right? Like, we want to hear that there will be some sort of ceasefire. We want to hear that the strait will be reopened and that all of the world's oil, gas, energy, fuel demands will be met within a period of time. And, the longer delay of this being held up won't lead to our biggest fears, which are things like inflation, inflation, right? Our biggest fears in the market, I should say, of things like inflation rising, stocks continuing to fall, volatility remaining high. So I think it depends, right? It's a good sign. It's nice to see the relief rally, but we need sustained good news that we're coming to an end here.
Maybe we'll get some indication of what's to come. The president giving an address this evening at 9 p.m. Although in the past, he did a State of the Union that took almost 2 hours and didn't mention Iran at all. And then the following couple of days, we had the war on Iran begin. So it's hard to say. Sylvia, one thing that we do know is that Elon Musk's SpaceX reported to have filed confidentially for an IPO. This is something that the market has been anticipating for a long time. And I imagine that there are a lot of investors out there who want to get a piece of this company. How are they likely to position for that? And how quickly do you think we'll start to see some of that positioning take place?
I think that people have been positioning to get exposure to SpaceX for the last year or two, when the rumors have been running around. This is like the most confidential IPO filing in history, I think. But which is great, right? I mean, it goes to, the kudos to Elon Musk and the innovation and technology that he brings to the markets, whether it's with Tesla, whether it's with XAI, and whether it's with SpaceX. And so I think that there's going to be massive demand for the equity itself. And I think that investors will do a lot of things. I think first outright, people will probably try to get those IPO allocations. Most of us will be unlucky enough to do so. And then I think, the rest of us will probably look to things like ETFs. Once it starts listing, once it's publicly traded, I think you'll start seeing that name included in different products that are relevant to space, relevant to technology. You gave in your intro the information about NASDAQ doing that early addition clause. I think you're going to see it everywhere, and investors will be happy to have exposures to it.
Hey, Sylvia, at Defy ETFs, at your platform, over the last 5 weeks or so with all this volatility in the market, what have you seen in terms of fund flows? Have your investors been putting money into the market, taking it out of stocks, maybe putting it into short-term treasuries? What have you seen in terms of the fund flows?
Yeah, I mean, it's been super, super interesting on our side. And I think, I've kind of heard people talking about this broadly in the market too. But the interesting thing is that there's just so much money on the sidelines, right? And this is what people talk about. Like, we're waiting for that next big pullback and that, 5% or more pullback, which doesn't feel so big, but it kind of feels big in recent times to get back into the market. You have a stock like NVIDIA trading at, 14, 15x, things like this. I mean, those feel like Black Friday sales and opportunities to get into stocks, but that hasn't really happened over the last week or so. And I think it's because the issue is just too big and the uncertainty is too big. And it's because it's geopolitical and it's Iran and there's uncertainty there. But if you take that out of the equation and we get certainty there, I do think you'll start seeing, money pouring back into the markets. And I think it'll go where it was going before the pullback, which will be these, absolutely beat up AI names and quantum computing, AI infrastructure. But answering your question a little bit more specifically with Defiance, we've seen the flows into JEDI, which is a modern warfare ETF, right? So investors, and those single stocks have seen flows too, right? So investors are looking at things like Kratos, AVAV, Elbit Systems, things like this, just the future of modern warfare, the idea that you have 2,000 drones instead of one giant missile, the power of information decision-making, and flows have definitely gone there. The performance will take time, but yeah, and we haven't lost flows really. So I think some investors are staying put, they're selling Mag 7, and they're not employing cash.
All right, Sylvia Jablonski is CEO and CIO of Defiance ETFs. Thank you so much for sharing your perspective on the markets. We do have a red headline once again. Eli Lilly's weight loss pill, Fundayo, and I don't know if I'm pronouncing that correctly because all these pharmaceutical names are difficult to pronounce. It gets U.S. approval. So once again, Eli Lilly's weight loss pill. Remember, up until now, it's been all injectables. Fundayo has gotten U.S. approval, and that will open up a bigger market for this
People who
drug.
don't want to get injections. And I think this will be a daily pill is what I understand, as opposed to a weekly injection. But
much
people
easier
are taking
for people
pills
to swallow that.
Yep, exactly.
Literally.
Right. Okay.
All right, let's switch gears and look at some other companies that are on the move. And I'm paying attention to RH, Restoration Hardware. The stock is plunging. It's down a quarter today, a quarter of its market value lost just this morning. Lindsay Dutch is our consumer hardlines senior analyst at Bloomberg Intelligence, and she joins us now. So this is very much a play on the consumer and a higher end consumer as well. Lindsay, what do we know about RH and the outlook it's given?
Hi, Paul. Hi, Scarlett. Thanks for having me. Yeah, so RH missed both on the top and the bottom line when we looked at fourth quarter earnings, but I think worse is when we look at this year, the outlook was well below expectations, including expecting a sales decline in the first quarter. That kind of tells me between the miss and the bad look for first quarter that demand has really dropped, and they're really going to count on a big spike in the back half of the year with a new collection coming to sort of drive that growth heading into 27. But the first half of the year certainly looks challenged.
Lindsay, how much of this, when we talk to you about your companies, one of the questions I always have is how much of this is industry-wide versus company-specific here?
Yeah, so for RH, I do think that it is a company-specific story. When we look back at last year, they did grow sales 8%. That's pretty impressive in the environment that they were playing in. That is above the peer average, but they do play to a very niche customer, and they are striving to be a luxury brand. And their moves to make waves in that space, do cost a lot of money. They're investing very heavily. They're opening galleries all over the globe. And I think that there was just a lot of disappointment in this coming year that growth might slow again. And their long-term targets are well out of reach.
And I'm just looking at Wayfair. Those stocks are modestly lower. Ethan Allen Interiors modestly higher. So I'm not sure there's much of a read-through to some of the other furniture companies that are out there. But Lindsay, how much are tariffs a part of this story for RH?
Yeah, so tariffs have played a piece here. They cost about 190 basis points in margin in the fourth quarter. Their guidance is kind of including a similar hit for this coming year. The bigger thing for this year, as I mentioned, is tremendous investment going into the business. They're expecting erosion in their margin again this year. Investors aren't liking that. They've kind of missed their profit goals for the past year or so, and we're looking at another year of heavy investment pressure on the margin, even if we see some of that tariff costs come down a bit. But it's definitely a factor. They've also talked about, significantly moving their sourcing around, which is part of the slowdown in that first quarter, reworking that, and they might have a little bit of a less product to sell until we get later into the year.
Lindsay, what are they doing with e-commerce? I would think if I'm going to buy a sofa, I want to go into the store and see it, sit on it, that kind of stuff. Talk to us about their e-commerce strategy. How's that play?
Yeah, so e-commerce is a very small piece of their business, and the openings that they're looking at doing, in Paris and Milan, they are really leaning into that experiential vibe and wanting people to come see their product in person, feel it, and really understand the quality. So they're leaning into expansion. We actually see their peer, Williams-Sonoma, is also expanding stores for the first time in almost 10 years. So we're seeing some of these bigger furniture companies, even though they are focused on growing that online presence, they really much want their customer to come into the store and see the product, and they're willing to invest to do that.
All right, Lindsay Dutch, Consumer Hardline Senior Analyst with Bloomberg Intelligence, giving us the read-through on RH Restoration Hardware, down 24% in today's trading. I love that question because it goes to the idea that all these digital native companies, at the end of the day, it comes full circle. People still want to see, touch, and feel whether it's something they want to buy.
Yeah, and we've heard from some retail folks, I think it was, I can't remember who it was, but saying that for the youngsters, the kids, they like coming back to the mall again. It's coming full circle, So
and their parents are like, sure, I'll take you to the mall.
Exactly. So if you're, if you've got those A-level malls, you're doing great.
Yeah.
But it's the B and C level malls that are
You just have to, make sure that it's Instagrammable. You have some stuff out there for the kids to take pictures with.
Yep.
All right, we've got a lot more coming up on Bloomberg Intelligence. We're going to check in with Anthony Hughes, our U.S. Equity Capital Markets reporter, on SpaceX filing for an IPO. That's next.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. SpaceX has filed confidentially for an IPO. That's according to sources, bringing billionaire Elon Musk's company closer to delivering the biggest ever listing. The company has submitted its draft IPO registration, according to those sources, to the SEC. It could seek a valuation in the IPO of more than $1.75 trillion. Again, this story breaking in the past 20 minutes or so. We'll have more details coming up right here on Bloomberg. Stocks pushing higher. S&P right now up 63 at 65.91. That is a gain of just about 1%. Dow Industrials up 414, up by about 0.9%. And NASDAQ higher by 315, up 1.5%. Stocks rising as optimism grows that the war in the Middle East may be nearing a conclusion. The VIX just above 24 right now with a 10-year, 4.29%. Spot gold is climbing higher by 2.5%, 47.82 the ounce, while West Texas Intermediate crude below $100 a barrel, pulling back to 99.62, down now by 1.2%. And Brent, the global benchmark, 101.83 barrel of Brent, down now by 2.1%. Again, recapping here, we do have the Dow, the S&P, NASDAQ all advancing. S&P up 64, gain there of 1%. The VIX at under 24 now, the 10-year 4.29%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And one of the headlines we told you about this hour is that SpaceX, the startup founded by Elon Musk, the billionaire, has filed confidentially for an IPO. This is according to people familiar with the matter. Anthony Hughes is one of our reporters here at Bloomberg. He covers U.S. equity capital markets, and he joins us now. So when a company files confidentially for an IPO, what exactly does that mean, and where does that leave us in terms of when this company, SpaceX, will go public and actually list?
Yes, well, really, there's a lot of steps along the way to going public, and for a company like SpaceX, which has been around for quite a long time, that it's been a long road. But this is really the most definitive step, you could argue, for SpaceX in terms of going public, because it means that they're serious in the sense that they've filed a hefty document with the SEC. We don't get to see it yet. Hopefully, we might hear about some of the things that are in it. But this really suggests that the deal is going full steam ahead, and I think all the body language we've seen in recent, even in just the last 2 or 3 days, we've seen a number of stories about different things that are happening around the deal, and it's really sort of indicated that it's full steam ahead, and everyone's pretty confident they can get this done actually by June. Now, June is a few months away, so a lot of different things can happen. We're in a world where different things can change, so it's worth being a little bit wary about how easy it's going to be to achieve this, but it's it's a monster deal, and it's somewhat unprecedented in many aspects of this deal.
Yeah.
So you have to take that into account.
And the company is considering a dual-class share structure in the IPO that would potentially give insiders such as Elon Musk extra voting power to dominate decision-making, Bloomberg News has reported. Is that something that they're going to go to the regulators and get some feedback on? Because we've seen other media companies, tech companies have this dual-class stock.
Yeah, so that would be very prominent in the document. It will be mentioned on the cover of the document, likely. That would be something that would be not unexpected in this situation, especially when you have an IPO which is going to be is going to be very hotly sought by investors. You tend to find that founders of tech companies that are large and fast-growing do have the ability to dictate such terms, and that's been my experience. It's not uncommon. It's not something that corporate governance purists love, because it means that if things go wrong, investors may not get to have a huge say in any changes that they would like to see. But it's not surprising that that's something that would happen. And for Elon Musk, it might allow him to consolidate his empire somewhat.
I'm just looking at Tesla. DES screen for Tesla does not have a dual class.
Yeah, so maybe he learned from the first time. And of course, it's not unusual for founders to launch an IPO like this. Meta has this dual class structure as well. And it's fittingly that we're getting this confidential IPO on the day that NASA is set to launch astronauts to the moon for the first time in 50 years. Anthony, one thing that we do know about SpaceX is that it acquired xAI, which is Elon Musk's AI startup, earlier this year. What does that have to do with this IPO? Why was that kind of a necessary step towards this IPO?
Well, I think people have different theories on that. I think it probably makes sense for the funding needs of that business to bring it into SpaceX. I think some people felt that that wasn't great for, it's made the business not as attractive as a whole. But, at the end of the day, I think people are backing Elon Musk because of his track record. I mean, it's interesting you mentioned Tesla. I mean, it's just extraordinary that if we go back to 2010 when Tesla went public, I think it was a few $100 million IPO of a company worth a couple of $1 billion. I mean, we're talking about such larger numbers now, but I think xAI is we're going to see some numbers there. I mean, from all reports, it's been burning cash, so it's not adding to the profitability of the overall business. So that is a concern. But I think because we're also expected to see possibly Anthropic and OpenAI go public this year. I mean, there is an arms race for growing the AI aspects, growing these businesses. And, I think SpaceX is going to be part of that. And, that's obviously adds a growth element to the business as well. But it does probably make the financials not look as good in the short term.
But getting there first.
Yeah, exactly right. There's been reporting that Elon may be considering kind of rolling up all his stuff. SpaceX may be acquiring Tesla, for example. X, yeah. I mean, he's already done that. I mean, what do we know about that? Is Elon said anything about that?
Well, I think there's a lot of speculation about that, but I think what we're seeing here is that SpaceX is going to go public before that happens, most likely. I think there could be a change of plans. You never know, but it doesn't. There does seem to be. There could be some industrial logic in Elon Musk having all of his businesses in one listed entity, but it may be for different reasons because of the way these businesses are developing and the value. Obviously, most companies looking to go public are always trying to maximize valuation and make sure they can have access to capital. I mean, the thing about these businesses being so large is they have almost. For all the ups and downs of Tesla over the years, Elon Musk has demonstrated he has unlimited access to capital, and this business is going to have a good access to capital, which is going to allow them to do many things.
Yeah,
that's the benefit of size and scale.
I know that you always look at the banks that get signed on to do this. SpaceX has lined up Bank of America, Citigroup, Goldman Sachs, JP Morgan, and Morgan Stanley. Basically, the five biggest bulge bracket firms.
The big five. So they're going to have dozens and dozens of banks around the world helping them sell this thing. All I know is if I'm buying space, I'm thinking that the shareholder base is going to be a big overlap. The people who kind of are in the Elon camp, they already own Tesla. My sense is they're going to be a very high crossover there between Tesla and SpaceX. So at some point down the road, particularly if he has super voting shares, he might be able to put the companies together.
I think it's I think it's a reasonable theory.
What's next here? When do we actually get to see some of the numbers, do you think?
So typically what happens is the filing will become public. Typically, there'll be a strategic decision about when that is. But if it's the case that the IPO is on track to actually the stock's actually on track to debut perhaps in late June, which is get in before the summer.
Why file confidentially then? Why not just make it public?
Well, because confidentiality was originally when it was first SEC created the ability for companies to file confidentially. It was really for small companies to help small companies go public, but over time it was extended to every company, so it was just something that was available to all companies. So it's something you would use, but in this case, it doesn't matter that much in this situation because basically what will happen is SpaceX will now be able to go out and start meeting investors. And they'll be able to use information in that filing when they're talking to investors, still in a confidential way that's not really, public. But the filing of the document will allow SpaceX to say lots of things to investors that they wouldn't otherwise be able to say. That's our understanding of the legal position there. And it's really they'll be doing a lot of testing the waters meetings. The meetings are supposedly starting next week, and so it's really full steam ahead here.
Okay, I'm looking forward to that rubber chicken lunch in Midtown.
Just the numbers involved are so massive. A listing could raise as much as $75 billion. SpaceX would seek a valuation in the IPO of more than $1.75 trillion.
Yep, T with a T. Yeah, trillion with a T, absolutely. So
remarkable.
Crazy.
Anthony Hughes, thank you so much. Anthony Hughes is our equity capital markets reporter here in the U.S. On SpaceX filing confidentially, according to Bloomberg reporting, for an IPO ahead of its rivals OpenAI and Anthropic. More coming up on Bloomberg Intelligence right here on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. I mean, here's our next guest is the analyst of just crazy big numbers. That's all he does, folks. Mandeep Singh, he runs all the global technology research for Bloomberg Intelligence. We asked him to manage a bunch of people, too, and he gets it all done somehow. Here's some we have already talked about the SpaceX. $75 billion IPO potential valuation of $1.75 trillion. Crazy, crazy numbers. We've never seen that before. Then OpenAI has completed a deal to raise $122 billion from investors at an $852 billion valuation. Just absolutely crazy, the numbers that are being thrown out there in the world of technology. Mandeep, thanks so much for joining us here. Let's start with just SpaceX. We were just talking about this, and you brought up a great point. Space, we have no idea how to value this thing. We have no idea how the business is going to grow. But one thing you did raise is SpaceX's, I guess, biggest customer is the U.S. government.
Yeah.
So now you've got a, kind of a customer risk type thing here, concentration. Do I have to think about, like, what is the addressable market for space? Do I have to do that exercise?
You can, because right now, given the macro situation, everyone cares about defense, everyone cares about, what's going on in terms of monitoring the risks involved in the airspace. And look, with a name like SpaceX, they clearly have the rocket technology that U.S. government is leaning on, and they are doing it at a cost below the prior attempts that have been made around that technology. So from that perspective, I think what Elon Musk does well is he tries to be that lowest cost provider, whether it's your autonomous car or, in this case, the space technology. And that has worked very well for him,
So if I'm Elon Musk, I got the U.S. government. That's a pretty good customer.
Yeah.
I'd also like to do business with China. Can I do business with China?
Well, that's where I think, as we have seen with EVs, is there are a lot of Chinese EV companies that have popped up, and they're competing on price as well. So from that perspective, given how important this technology is from the standpoint of national security, I would be surprised if they're able to make inroads when it comes to the Chinese market. Yeah.
But presumably it would be in SpaceX's best interest to diversify its customer base away from the U.S. So would I look at it like I would a defense prime contractor, like a Lockheed Martin type of thing? They're happy to sell jets to Germany, but not so much to China. Would that be a similar type scenario, do you think?
I think it's too early to think about that sort of a scenario, but I do agree with your broader point that they would look to sell this to more governments. And we have seen that with a company like Palantir. Okay. I mean, this is on the software side, a name that really was skewed towards U.S. government business, counterterrorism and that kind of use cases. And then was able to expand quite rapidly, into some of the commercial use cases as well. So I would be curious when they file their S1, what kind of commercial use cases are they looking at? Because there will be, I think, a few big commercial use cases. It's just we can't imagine what those could be, and to size the market around that would be my priority.
But again, a valuation of 1.75 trillion.
Yeah.
So I guess they're profitable. I mean,
they are. I think based on the numbers that have been surfaced, they are close to 50% EBITDA margins. Okay. It is an asset-heavy business, but so is cloud and data centers these days. So you can't really differentiate on that.
All right. Speaking of cloud data centers. Talk to us about this OpenAI. Again, the numbers for, a guy like me, a simple guy, these are just monstrous numbers in the private market to raise these money. So what is OpenAI? What's the strategy here with this capital raise?
I mean, everyone is trying to build as much data center capacity as they can, because the business model is if you have data center gigawatt capacity, that translates into revenue, whether it's 10 billion or 12 billion. So every gigawatt can be translated into token consumption, which is what translates into real revenue. So everyone is trying to raise as much money as possible. And in this case, out of that 122 billion, 50 billion is coming from Amazon and 30 billion is coming from NVIDIA. So the majority of that raise is coming from, two of your hyperscalers. Yeah, and that's what's most interesting about this raise.
Is there anybody out there credibly saying the industry's building too fast, there's going to be an overcapacity-ish problem?
No, I think right now you still keep hearing we are undersupplied and undersupplied by at least 20-30%, if you apply your mental models. But no, I don't think we have enough of any of these chips.
Anthropic, OpenAI, I don't know who these, are these all U.S. companies? Where's the rest of the world in all this AI stuff?
So Mistral is a European name that is among that top 10 frontier labs. Okay. But when it comes to LLMs, it's really US and Chinese LLMs, which are mostly open source. So they have used a different strategy in terms of the US names being more proprietary. Some of them do have an open source model, but for the most part, Anthropic and OpenAI's leading models are all proprietary. And that's why they're raising this kind of money with the hope nothing gets commoditized. Right. Because if stuff gets commoditized, that's when their investors will have a problem,
All right. Just the analyst who covers the big numbers, that's what we call him these days. Mandeep Singh, head of tech research for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Medal. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment with markets moving higher. They're at the day's high. S&P up 1.1%, NASDAQ up 1.7%, oil lower. This is Bloomberg.
This is CBS News on the Hour, your home for original reporting.
Steve Kathan. President Trump said this morning on social media that Iran has asked for a ceasefire. Iran has denied it, and Trump is making news with additional comments.
I'm Vicki Barker in London. President Trump has told the Telegraph newspaper here that he's seriously considering pulling the USA out of NATO over the allies' reluctance to join the U.S.-Israeli war on Iran, a sentiment he echoed in a separate phone interview with the Reuters news agency. Trump referred to the alliance, co-founded by the U.S. in the ashes of post-war Europe, a paper tiger, and said Russian President Putin sees it that way too.
Well, President Trump has a primetime speech on Iran tonight, a day after saying the war would end in 2 to 3 weeks.
But there is no sign here in the Middle East of the war ending just yet anyway. The sirens rang out multiple times here in Tel Aviv this morning. We were in the bomb shelter, I think, 4 times. And Israeli emergency responders say 14 people were injured by missile fire.
That's CBS's Holly Williams. President Trump spent some time at the U.S. Supreme Court listening to arguments on his plan to limit birthright citizenship.
Solicitor General John Sauer argued the 14th Amendment Citizenship Clause was adopted to grant citizenship to freed slaves and their children, not to babies of people in the country illegally.
It has spawned a sprawling industry of birth tourism as uncounted thousands of foreigners from potentially hostile nations have flocked to give birth in the United States in recent decades, creating a whole generation of American citizens abroad with no meaningful ties to the United States.
President Trump is attending today's oral arguments. He's the first sitting president to ever do so. Michael Wallace, CBS News.
Construction on a new ballroom at the White House blocked by a court, at least for now. CBS's Ed O'Keefe.
Despite the court ruling, the ballroom plans are set for final approval Thursday from the National Capital Planning Commission, which has to approve major construction projects in Washington. But D.C. Council Chairman Phil Mendelson, who sits on the panel, worries the president is moving too quickly.
I also get that as a former developer that Donald Trump can be impatient.
It's all systems go at the Kennedy Space Center in Florida for NASA's moon launch later today. Our space consultant, Bill Harwood.
They're well into fueling right now. They're past the point where we had leaks earlier this year with the hydrogen tank in that first stage. So that is proceeding smoothly. There are no indications of any technical problems at this point.
Hershey says it will use classic recipes for all Reese's products starting next year. The grandson of the Reese's founder had blasted the use of cheaper ingredients. Wall Street, the Dow is up 454 points. This is CBS News. Newly minted Broadway star is taken ill.
Just a week after making her Broadway debut in Moulin Rouge.
No matter your sin, you
You're welcome here. Megan Thee Stallion was rushed off the stage and taken to a New York City hospital after her spokesperson says she became very ill. An entertainment correspondent in the audience posted to X, the rap star appeared in a few opening scenes but stopped mid-show and apologized, explaining she needed to stay inside and seated. Mulan continued with an understudy subbing as the Zidler. No word on what's ailing Megan Thee Stallion. Her hairstylist posted to X, everyone say a prayer. Deborah Rodriguez, CBS News, New York.
Just days after Tiger Woods' suspected DUI crash in Florida, the golfer says he's taking some time to seek treatment. Woods will miss the upcoming Masters tournament for the second straight year. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Markets are risk on ahead of the president's speech. Welcome to the Wednesday edition. As President Trump prepares to address the nation in prime time this evening, stocks continuing to rally on hopes for an end to the war with Iran. We're going to cover the markets this hour with Bloomberg's Eric Weiner, and we'll get the latest from the administration when we talk to our political panel. Donald Trump today also becoming the first president to attend arguments at the Supreme Court as the High Court considers the constitutionality of his bid to limit birthright citizenship. Bloomberg's Tyler Kendall is at the court and will join us live in just a moment. But we start with the markets and the continuation of a powerful rally yesterday. Charlie Pellet has the latest from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We are looking at an update, perhaps putting it mildly. Best level of the day right now for the Dow, the S&P, and the NASDAQ Composite Index. S&P right now up 76, gain there of 1.2%. As you correctly point out, optimism growing that the war in the Middle East may be nearing a conclusion. Oil pulling back. Barrel of West Texas Intermediate crude, 99.85 right now, down 1.5%. Barrel of Brent, 101.97, a drop there of 1.9%. Again, those stocks higher. The Dow up 1%. S&P up by 1.2%, and we've got NASDAQ up now by 1.7%. The 10-year 4.30%, with a 2-year 3.78%. Gold up 2.5%, 47.86 the ounce, and again crude 99.88. All of this with the VIX below 24. President Trump takes to the nation tonight, 9 p.m. Wall Street time, to discuss the Mideast war. We'll have it for you live here on Bloomberg. The president has said he will only consider a halt to attacks on Iran when the Strait of Hormuz is reopened. Nouriel Roubini is chairman and CEO of Roubini Macro Associates, and on surveillance this morning, he said the war has been a failure for President Trump.
Trump is already behind in the polls. This war has been a bit of a failure, but now going away from it implies he's going to for sure lose the midterms, not just the House, but probably the Senate. So I think that in spite of all the rhetoric about negotiations and getting a ceasefire, my more likely scenario, I give it a 2/3 probability, is one in which the U.S. has to escalate and finish the job.
Nouriel Roubini of Roubini Macro Associates. So again, recapping here, stocks are pushing higher as oil falls. A notable exception today, shares of Nike after earnings. Nike is now plunging by 14.4%. S&P up 1.1%. The VIX below 24. West Texas Intermediate crude 99.98 a barrel, down 1.4%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie. Pretty impressive. Thank you, Charlie Pellet. He's got his eyes on the markets for us, and we'll be back in about 15 minutes with the latest on the Wednesday trade. And it certainly is feeling a lot better than it was a couple of days ago. But of course, so much of this could be in the balance based on what the president has to say this evening. That's going to be the big stop on the road at the end of the day. 9 p.m. Eastern, as Charlie just mentioned, the president will hold forth from the White House, interrupting once again Survivor or whatever it is you're watching at home. Iran, of course, is going to be the thrust of the conversation, and we're going to talk to Tyler Kendall about that in a moment. The fact is, this is a very busy and important day here in politics, and specifically in Washington, with the president beginning his day in the motorcade, heading to the other end of Pennsylvania Avenue to visit the Supreme Court, and that is where we're going to start our coverage here, and a day that will also include a rocket launch with America returning to the moon. strap in. This is going to be a long one, and we're going to be with you for the duration. A late night here in the Washington Bureau as we anticipate the president's primetime address. So thanks for joining us here on the Wednesday edition. Yeah, it's only Wednesday on Bloomberg Radio, satellite radio, channel 121, and streaming live on YouTube. Find us by searching Bloomberg Business News Live. The President of the United States in person at the Supreme Court today. Pretty remarkable. Generating the headline after opening arguments were heard before the court today. Greg Stohr writing, Supreme Court skeptical of this birthright citizenship case, casting doubt on President Trump's bid to roll back automatic birthright citizenship and signaling that justices are likely to reject the central theme here of his immigration agenda. And that wouldn't be a big surprise to a lot of people. To be clear, this is more about potentially at least being caught in the act of making this effort than actually getting it done for the President of the United States, hence the visit to the court this morning. Bloomberg's Tyler Kendall is outside the Supreme Court right now. We do have news on Iran that we're going to get to, but Tyler, I want to start with what's happening or what has already happened inside that building behind you. He's already back at the White House. Did anybody see him, and was there talk of the president trying to thumb the scale on this before you get into what was actually heard?
Well, Joe, it's pretty unprecedented that President Trump was here at the Supreme Court today, marking the first time that a sitting U.S. president has attended oral arguments in the modern era while these justices are deciding what has become a key policy of the Trump administration. This case really centering on President Trump's executive order, as you all know, that he signed on that very first day of office in this term, seeking to bar U.S. children born to undocumented immigrants from gaining U.S. citizenship. But you read the headline there from Bloomberg News and Greg Stohr, having seen enough that they can say at this moment a majority of Supreme Court justices appear skeptical of the administration's arguments here. And this really digs into the citizenship clause of the 14th Amendment. We're not going to get too wonky, but we heard the U.S. Solicitor General really grilled about the administration's position, which is essentially that they're arguing that this amendment to apply, it requires a relationship of what they have called full allegiance to the United States, something that they argue that undocumented immigrants and temporary visitors do not apply for. Meanwhile, though, we saw from the ACLU side defending that there is a long legal precedent when it comes to birthright citizenship and being born on U.S. soil. So, Joe, a lot going on here, as you can probably hear, a lot of protesters, and then, of course, the unprecedented nature of the fact that President Trump was in that courtroom earlier today.
Wow, Tyler, it sounds like you're in the Coliseum. I get it. For the sake of our viewers on YouTube, is it possible to turn the camera? Who the heck is out there and who's making all the noise?
I don't know, Roy, are you able to pan slowly? I don't know if we're able to. We're here on the side.
All right.
You might be able to see the shot's a little difficult. I'll narrate for those joining us on radio, but there's a large crowd here. We're seeing blow horns, also, of course, signs. This one passing right now, families belong together, really taking aim at the administration's policies. I'm not going to have our camera operator turn all the way around, but if you did, you would see, of course, in the backdrop, the Capitol Rotunda, because President Trump being here today is really doubling down on the administration's immigration policies and hardline stance. But keep in mind, the Department of Homeland Security, Joe, of course, is currently shut down over disagreements about those policies. But if we go back to the crux of what we heard at oral arguments today, President Trump left after John Sauer, the U.S. Solicitor General, wrapped up his remarks, and we started to see some of that skepticism. It wasn't all skepticism. There was some inklings of sympathy, for example, from Samuel Alito, as one example, saying that the administration was probably right that when the 14th Amendment was ratified, the drafters were not thinking about undocumented immigration. But here is one of those key quotes from the U.S. Chief Justice John Roberts, telling the Solicitor General when it comes to that argument, quote, "It's a new world, but it's the same Constitution." And that's really what it's ultimately probably going to come down to, as we've been reiterating. Bloomberg News has seen enough. It appears the justices are skeptical of the Trump administration's argument on birthright citizenship.
Yeah, that's the money line from the Chief Justice. You put your finger on it, Tyler. We're going to hear that for the rest of the day here. To be clear, this would impact an estimated 250,000, 250,000 children born to undocumented immigrants and temporary visitors each year. Democrats take it further. They say this plan would strip millions of current Americans from their citizenship. Tyler, I know that you're juggling a lot out in front of the court right now, but you cover the White House, and we need to ask you about the president's address this evening, knowing that there is a lot of news and a lot of questions still involving the war with Iran. We just saw a headline cross the terminal before you joined us that Iran says President Trump's claim that Iran requested a ceasefire is false. This is Iranian TV citing foreign ministry spokesman on a ceasefire. President spoke yesterday about his objectives, his goal, well, singular goal in this case at the White House. Listen to what he said.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
So, Tyler, what do we expect to hear from the president tonight? Is it even possible to anticipate what his message will be? Could it be one of withdrawal? Could it be one of invasion or something in between?
You're probably putting your finger on it exactly. Joe, at this point, your guess is as good as mine. Of course, we've heard from the administration this is going to be an update on Iran, and we can take some clues from what we've already heard from President Trump in the last 24 hours, really putting the pressure on allies when it comes to the conflict in Iran, in particular, the Strait of Hormuz. That is what we're going to be watching for. Developments there, whether that means escalation or potential de-escalation, and how that involves our allies. Yesterday, the president calling on allies to go in and take the energy supplies from the Strait, and this morning in an interview published with The Telegraph, threatening that the U.S. could withdraw from NATO. And I would say it's significant to pair those comments with the Secretary of State, Marco Rubio, overnight, saying that it is time to re-examine that alliance. So I would expect that regardless of what the president says tonight, he very likely will have some harsh words for our allies as we wait to see how this timeline is going to evolve. As you all know, yesterday, the President Trump saying that he expects the war to last 2 to 3 more weeks, also saying that he doesn't need an agreement necessarily to be in place in order to suspend U.S. military operations in Iran. Today saying, though, that he needs to see the Strait of Hormuz open if there's going to be a potential ceasefire. So we're trying to put our finger on exactly what the White House needs to see in order for there to be an end to the conflict, and perhaps we'll get some further clues later tonight.
All right, Tyler, thank you so much. Run for cover. I can't imagine what this sounds like on the radio. Tyler Kendall at a very active Supreme Court on a beautiful day in Washington. I know they're screaming, but it's 82 degrees and sunny out. Wow, my blood pressure went up listening to that. That was insane. Thank you, Tyler. Can we make sure that Tyler and Riley are safe in front of the court? They're screaming on the top of their lungs. Okay, let's take a breath now. We have to get ready for the long haul. Again, the president's going to be speaking at 9 p.m. Eastern time. Very curious to see what the venue will be. Typically, at least in prior administrations, this would be an Oval Office address, right? From behind the resolute desk. The president tends not to prefer that setting unless he's in a room full. And God knows we have a lot of those conversations that we bring you into here on Balance of Power. The prime time addresses have tended to be more East Room, Cross Hall. We'll see, diplomatic reception room. We'll have to find out. They're expecting that he will speak for about 20 minutes. So this will invade prime time entertainment here for potentially millions of Americans. It is also, according to many, overdue. So we could have some very large viewership this evening once the president speaks. I'm Joe Matthew in Washington. We're just getting started here. I mentioned Artemis. For the first time since the Apollo era, the United States of America is going back to the moon. This is going to be a great story today. The window for launch opens right before the president starts speaking, and we're going to bring you to Florida, Cape Canaveral, with Bloomberg's Ed Ludlow straight ahead on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing as optimism grows that the war in the Middle East may be nearing a conclusion. The president will be speaking tonight, 9 o'clock Wall Street time. We'll have it for you live here on Bloomberg. S&P right now at 6,600, up 72, up 1.1% after yesterday's advance. The Dow up almost 400 points, now up 0.9%. NASDAQ up 1.7%. This as the VIX moves lower below 24. Oil also retreating. The 10-year 4.30%, with the 2-year 3.79%. Right now, spot gold is up 2.5%, 47.82. West Texas Intermediate crude back above $100 a barrel. It is down 1% right now, $100.34 on WTI. Brent 102.02. It is down by 1.9%. Mortgage rates climb for a fourth straight week, rising to the highest since August, hitting refinancing and home purchase activity. The Mortgage Bankers Association says the contract rate on a 30-year now at 6.57%. That rate, by the way, has surged nearly half a percentage point in the last 4 weeks. That is the biggest advance since 2024. Now, among real estate stocks, Zillow Group down 1.2%. Compass, the broker, up by 0.5%. And among home builders, Toll up 0.4%. Lennar down 0.4%. Pulte Home, little change there, up by just about 2 cents. SpaceX, major story today, filing confidentially for an IPO, bringing the company closer to delivering its biggest, or the biggest ever, listing. Recapping, S&P up 1.1%. West Texas Intermediate crude just above $100 a barrel. That, Joe Matthew, is a Bloomberg Business Flash.
Sounds good, Charlie. Thank you. We'll try to keep this up and get Charlie Pellet back in the mix here in about 20 minutes as we keep tabs on Wall Street. Good Wednesday. Thank you for joining us here on Bloomberg Radio, live on YouTube here on Balance of Power, with our eyes on the president's schedule today. He's got a long one, and so we all do as well. He started his day at the Supreme Court, as we have already established with Tyler Kendall. I'm still recovering from that whole conversation. Now he's back at the White House, and we might hear from him in a moment. They're assembling the press pool here because the president's about to sit down for an Easter lunch. That's also on the schedule for today. I don't have the menu yet, but he might be revved up enough after visiting the court to actually bring reporters in for some questions. If that's the case, you know that we'll follow them with our cameras and microphones here at Bloomberg, because when he speaks in prime time this evening, that's the end of the day for him, 9 p.m. Eastern time. He might not have the opportunity to get into birthright citizenship, right? So he's going to be talking about Iran this evening. So if he does welcome us to Easter lunch in the East Room, we'll take you there. This is also my way of saying that he's not at the Kennedy Space Center. Big stuff going on this evening here, and it's actually really exciting when we talk about so much controversial and in many ways depressing politics here. Something amazing is about to happen today. America is going back to the moon. Artemis 2, it's finally here. And as we add another position on the clock, 6:24 p.m., that's when the window opens here. So this could have already happened. I'd like to think that it will before the president ever speaks here. NASA's first manned mission to the moon since the Apollo era, since the early 1970s. They're not going to be walking on the moon. They're slingshotting around it. All this leading up to a crewed moon landing in 2028. We heard from Mark Kelly, the senator from Arizona, of course, Democrat, and NASA astronaut, speaking with reporters on the ground at Cape Canaveral. Listen.
This is inspiring, and it's exciting, and it's something that we can only really do in this country. Yeah, the Russians, they go up to the space station. They've never landed, somebody on the moon. I hope we get there before the Chinese. That's the goal right now, but also do it in a different way, where we're gonna have like a permanent presence on the surface of the moon, like we do in low Earth orbit right now.
I think Ed Ludlow is going to have a permanent presence for some time here at Cape Canaveral. The co-host of Bloomberg Tech on Bloomberg TV and radio is with us right now with the countdown clock behind him. I love all of this, Ed. It's incredibly exciting. You don't have to be a space geek like we are to appreciate the importance of the moment. Give us the tick-tock on how this is going to work today once the window opens.
Yeah, the crew woke up at about 9:45 a.m. Eastern time, had breakfast, went about their preparations, and at 7:34 a.m. Eastern this morning, they started loading the propellant. The fuel for the SLS system is hydrogen with oxygen as a oxidizer and an accelerant, and that is an important point because, as you quite rightly noted, the Artemis program broadly is behind schedule in a matter of years and over budget by many billions. And so where they've had issues is with that propellant and tanking and loading. And right through 1 p.m. Eastern, if that fueling process goes off without a hitch, all of the other factors that we look at about whether we're going to go at that window opening at 6:24 p.m. Eastern time, all of those other factors look good right now. There is never certainty when it comes to space launch, let alone human space flight. But that's what we're gearing towards at 6:24 p.m. Eastern today.
So 1 p.m., we're going to have a pretty good sense then, I guess, of the next stop on the road here, Ed. That's really interesting. And my God, the weather's amazing down there. You've got 73 degrees. It looks like mostly sunny. I'm guessing the weather is not going to be a challenge. How long, if they take off tonight, will it take them to get to the moon?
Yeah, so it's a complicated path. The mission is over the course of 10 days. It takes about 8 minutes or so to get to low Earth orbit. But then what happens essentially is a series of maneuvers where the mission's pilot will manually take control of Orion to prove that it can be piloted manually, putting it into close proximity with the launch system. That's kind of a test that happens early. Then it's a 2-day elliptical orbit of the Earth to gather momentum and kinetic energy, to then slingshot it the 250,000 miles or so towards the far side of the moon. In that period of time, they'll be testing a dress rehearsal, essentially, of those avionics systems aboard the Lockheed Martin-built capsule called the Orion.
This is the most powerful rocket ever launched, Ed. What's it going to be like on the ground when they light this candle? And what's the turnout like? I'm guessing if you turn the camera left or right, you'd see reporters from all over the world.
I've never seen so many press and journalists gathered in one place anyway, generally speaking, but certainly for the launches that I've attended here at Kennedy Space Center, it is in the high hundreds, if not, thousands. One point of distinction about what you said, if SLS goes tonight, it will be the most powerful human-rated launch system to ever leave Earth. 8.8 million pounds of thrust at liftoff. I say that because, of course, on paper, SpaceX's Starship is capable of more than double that. But SpaceX is nowhere near to putting humans atop a Starship. And so that's the main point, that this is about humans, a real crew, not just going back to the moon for the first time since in more than 50 years, but it's aboard a system that NASA's been very committed to and has only flown once before.
Really interesting, Ed. Just lastly, and I'm looking forward so much to your coverage this evening. I remember being at Cape Canaveral for the end of Shuttle. The end of the Shuttle program was a very dark time for the community, the space community, not only working on the base, but all the ancillary businesses that make up that whole part of Florida along the Space Coast, Cocoa Beach. What's the feeling today? Are we back?
Yeah, I mean, this is, from the public's perspective, this is sold out. The traffic, the hotels are booked out, the restaurants are filled out. It's a big moment for Americans. Real quick stat that I think you'll appreciate from the shuttle days. On the bottom of SLS are 4 RS-25 rockets, and those are from the shuttle era. They've been refurbished and modernized, but they're the same rockets. There's about an inventory of 16 of them. Some of them were used on prior shuttle missions and repurposed. So a bit of history for you there. But yeah, this is as big as that Apollo era, and the politics are the same as well.
Isn't that the truth? And the price tag, maybe. Ed, it's great to see you right where you belong, and we'll be back in touch with Ed Ludlow through the day live from the Kennedy Space Center. Really exciting stuff for all of us here at Bloomberg, and if you're, of course, with us on Balance of Power, I'm guessing it is for you, too. It'll be right after that launch window opens, 9 p.m. Eastern. The president speaks, and the markets are going to be listening very closely. We've got this euphoric sense in the market that this war is about to end. And look at this, the S&P 500 up another 1% today after that Bafo rally yesterday. The NASDAQ is up 1.5%. And we want to spend some time with Eric Weiner, Bloomberg senior editor for America's Equities, with his eyes on the markets. Eric, how much of this rally is going to be at the mercy of what the president says tonight?
Oh, quite a bit. What we're kind of seeing, what appears to be going on, is a bit of a short squeeze, meaning that traders were very much positioned for another down leg in the market. And when yesterday's news hit, it was just sort of a release, and you had all of these positions where traders were saying, you know, we're thinking that we're going to go down again, suddenly having to peel that back. So, and the idea is, you know, obviously, if we leave Iran, that should open things up. Whether that happens or not is, you know, anybody's guess, but that's the bet. And if the president comes out and, you know, continues along that way, then the short squeeze remains, and, you know, the pressure to continue buying picks back up.
Got to cover the shorts. We just, Eric, got a couple headlines here. Let me see what you think of this. This is coming from a White House official talking with Bloomberg News that the president will reiterate the 2 to 3 week timeline that he mentioned yesterday for leaving Iran. Is that good news or bad news for the market?
That is a question. So I do believe, based on what we've been talking to traders, and you never know what, you know, the market is thinking, but based on the individual traders we've been talking to, they were kind of expecting tonight to be an announcement of the end. And the concern is that there are soldiers in the area. So if there is any risk of us going in, or you know, any sort of extended period where the Strait of Hormuz is shut down, that will peel off a lot of those bets and bring back in the, you know, the downward pressure.
Really interesting. Are you surprised to see oil prices lower on this talk that the president's considering leaving without the strait being reopened?
Yes, actually, that is something that we're very surprised about. And the markets appear generally to be listening to him and not Iran, because when you hear him say stuff and then you hear what Iran says, it's a very different message, but they're responding to Trump right now.
Isn't that the truth? And we're going to find out pretty soon who we should be listening to, with Iran calling it fake or false news that the president saying that they were willing to have a ceasefire. Eric, thank you for jumping in. It's great to see you. Eric Weiner on another big day on the markets. We're not pulling back at all on these headlines. S&P 500 up over 1% now. And crude oil, as we mentioned, WTI, West Texas Intermediate, sitting right at $100. $100, down 1%. Brent down 2%. At $102 a barrel. We're going to have a lot to talk about with our panel today, and certainly glad that they're both with us. Jeannie Shanzano and Rick Davis will be with us in just a couple of moments as we consider the speech tonight, what the president will say, and we're going to have more information on this preview that's coming out of the White House right now. Our team is assembled and ready to cover this in prime time, and I'll be with you for the duration, so I hope you are too. I'm Joe Matthew in Washington. This is Bloomberg.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all pushing higher. S&P 500 index right now up by 1.1%. We are holding close to session highs. A rally in stocks accelerated as hopes grow that the war in the Middle East may be nearing a conclusion. West Texas Intermediate crude holding right around $100 a barrel, down now by 1.2%. S&P, as we mentioned, at 66.01, up 1.1%. The Dow up 400 points now, up 0.9. NASDAQ Composite Index up 361 for NASDAQ, a gain now of just about 1.7%. The VIX below 24 with a 10-year 4.30% and the 2-year 3.79%. Spot gold up 2.4%. $47.81 the ounce. Retail sales rebounded by more than forecast in February in a broad advance, but what about the longer-term impact of higher gasoline prices and how that potentially will play out with consumers? So Sharita Kodali is VP and Principal Analyst at Forrester Research. She was a guest this morning on Surveillance.
It definitely adversely affects consumer confidence levels. And you have just this level of sticker shock, which then ends up reverberating through other essential items like grocery goods, or it then ends up negatively affecting the shopper's willingness for discretionary goods as well.
So Sharita Kodali of Forrester Research interviewed this morning on Surveillance. SpaceX has confidentially filed for an IPO, bringing the company closer to delivering its biggest ever listing. According to the draft IPO registration submitted to the SEC, SpaceX, Elon Musk's SpaceX, could seek a valuation in the IPO of more than $1.75 trillion. Recapping, barrel of West Texas Intermediate crude just above $100 a barrel now. The VIX below 24. The S&P up by 1.1%. Lots going on. Joe Matthew, that is a Bloomberg Business Flash.
Well, that is the truth. This is one of those days, and glad you're spending it with us here as the president opens the day by making history, marching up to the Supreme Court to attend oral arguments, and we might just hear from him shortly. They're telling reporters to be ready if he wants to speak during his Easter lunch. Easter lunch at the White House today, just one of the stops on the road before a 9 p.m. Eastern address to the nation. We don't have a lot of these from this president. We certainly have not in this second term prime time address, and it's possible he will not be in the Oval Office for the traditional speech behind the resolute desk. The president likes to use different venues around the White House, and we're going to be bringing that to you live here on Bloomberg with some sense of what he might say. This is the market. You heard Charlie. We're tearing again, and at new highs for the session. S&P 500 up over 1%. The NASDAQ up almost 2% here. Certainly more than 1.5%. 365-point advance for the NASDAQ with a lot of good feels on this thing winding down. Oil prices are lower. Even though we don't know what the president is going to say, we need to be honest about this with an official at the White House, a senior administration official talking with Bloomberg News, that the president will give an operational update on Iran tonight, as opposed to a withdrawal announcement, right? He will tout success in achieving goals in Iran, presumably the degradation of its military capabilities when it comes to ballistic missiles, and further when it comes to its nuclear capabilities, which of course the president said we obliterated last year. He's talked about this more, though, just recent rhetoric suggesting that we had eliminated the country's nuclear abilities, even though, as far as we understand at least, we have not seized the highly enriched uranium that still exists in Iran. This might be the most important point. The president will reiterate what he said yesterday, a 2 to 3 week timeline for leaving Iran. Nowhere here does that say a reopened Strait of Hormuz. Nowhere does that say troops deployed on the ground, seizing Karg Island, getting our hands on the uranium. Now, this is all on background. The president could say something different this evening, we suppose. We're told he's going to talk for about 20 minutes. Will the market care? We talked to Eric Weiner about this. Is that enough? Does that sound like we're winding it down? Or is it good enough to say that we're preparing to wind down and we're not committing troops tonight? It's not for me to decide. Let's assemble our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick Davis, Republican strategist and partner at Stone Court Capital. Rick, what does the market need to hear? I feel like we're having a couple of different conversations here. The American people might have their own questions. The market may have its own hopes. Are we projecting optimism here in the market? And does it make you nervous about the president saying something very different tonight?
Well, Joe, first let me correct you, and I hardly ever do this, but the president, if he speaks from the Oval Office, will be speaking from behind the CNO desk, not the Resolute desk, which has been sent out.
I thought they brought that back in. Is that still out? Geez, I thought they finished it, Rick.
Well, I don't know. Last time I checked, it was CNO. But maybe you're right. It wouldn't surprise me that I've been corrected once again. So the reality is this may be the first war we've played out in modern history that is basically being orchestrated by the whims of the markets. I don't think you can separate the president's decision-making from what he's seeing play out in either the oil markets or the capital markets. It's really been some head-spinning activity that clearly has been influenced by the global economic activity that has surrounded the war for these last 6 weeks. So yes, I mean, is there an indication that there might be a brighter resolution of this now that capital markets are getting better? But of course, we've seen some of the highest gas prices that we've seen in the United States in quite some time. I think what today was $4.06. So well above the $4 threshold that we've been anticipating seeing. So yeah, I think it's if you read the markets, then I think you can get a sense of what the president is going to do tonight. And I think that a lot of his strategy right now is being predicated by how fast can we move to untangle ourselves from this conflict in order for the economy to recover with enough time to have an impact before the midterms.
2 to 3 weeks, Jeannie, does that need to include an open Strait of Hormuz? We talked to the spokesman for the American Petroleum Institute last evening. He said, yes, it's got to happen, which means ExxonMobil, Chevron, and all the other members are saying that too. Mick Mulvaney also made that point. You can't leave without reopening the strait. Is that what's about to happen?
Yeah, Joe, now you know how I feel being schooled by Rick Davis, which I get on a daily basis. So I'm glad you're joining me. It is unbelievably irresponsible for the United States to leave that strait closed. And the president has this idea that we can break it and presumably just walk away. I would be stunned if the markets are open to that idea, because the impact of that economically would be devastating. I suspect there's a couple things. What the president, I think, is going to do is he's going to do what he did yesterday, which is declare a victory. He's going to talk about defeating the Iranian Navy. Well, you know, that's a little bit like sending an NFL team into like the nearby high school and saying, whoa, they really got the best of them. That was never a strong Navy. Their powers are asymmetric. That's how they shut down the strait. He's going to talk about decapitating the regime. But of course, we've had regime change in the wrong direction. We have a more hardline regime in power. So what he's going to talk about is that kind of stuff, victory. But what he needs to talk about is how he is going to step back from this, how he is going to de-escalate without leaving things worse than we found them. And in order to do that, he needs to have that strait open, which is why he spent so much time berating our allies and threatening last night to leave NATO, because he is so frustrated by the allies there who won't take up what he started and finish the job for us.
We've discussed evolving objectives here, Rick and Jeannie, and I find it interesting what we've settled on here in the past, 48 hours. The most recent news cycle has brought this down to a crystallized 4 or 5 points: destroying the ballistic missiles that I mentioned, Rick, annihilating the Navy, Jeannie just referred to, ensuring terrorist proxies can no longer destabilize the region, and guarantee that Iran cannot get a nuclear weapon. When did the strait fall off that list, or was it never on there?
Well, I think you got to separate achieved objectives of this conflict versus the reasons we got into it. I think you can't leave out the fact that the president himself talked about the imminent threat of the Iranian government pursuing a nuclear weapon. Right, that was out there, and it was almost a precondition for the attack. Two, I don't think this administration ever inoculated the public to the idea that the strait might get closed. I don't recall a single instance before the conflict started that they said, and by the way, if we do go to war with Iran, we'll make sure that the Strait of Hormuz stays open. We didn't hear that at all. And so now this is after the fact. We have an economic dislocation with the Strait of Hormuz being shut by Iran, who can do it with very little capacity that they have left, effectively holding the entire world's oil supply, or at least 20% of it, for ransom. And so this is a ransom demand, in my view, not an accomplishment or a detriment to the negotiations about settling this war.
You know, Jeannie, the president posted this morning on Truth Social. He won't accept the ceasefire, which of course Iran now says was never offered, until the strait is reopened. Do we have to parse the words there? Because that doesn't mean we won't leave before the strait is reopened. It's about whether we actually codify a deal. And react to what Rick said. Is this not what we should be expecting?
You know, the president warned the administration prior to this excursion, as he likes to call it, that they had the ability to close the strait. And the president, based primarily, I guess, on what happened in Venezuela, said, oh, no, they'll surrender before that. That has not happened. And you go through the list of those 5 new objectives or renewed objectives, and you have to really think about how many of those have really been met. Have we really dealt with the proxies? No, we have not. We still have the Houthis threatening to close the Red Sea. We haven't decapitated the regime. We haven't destroyed it. This is a regime that is undecapitatable. That's a new word, Joe. You can't decapitate a regime, as far as I know. You can't decapitate a regime because it's not built like a typical totalitarian regime. This is a deeply embedded regime. It's not going to be one like North Korea. You take off the head and the whole thing falls. Now we know that. So, you know, you go through the ballistic missiles. They still have that capability. The nuclear program, we are in worse condition today. They have 1/2 ton of unenriched nuclear material sitting there. If we walk away, what happens to that? So even this 5 list of new objectives, pushing aside the strait, we haven't achieved them. And, you know, it's hard to know what to make of the president's constantly changing ideas and thoughts that he seems to share with us on real time via Truth Social and in his conversations with reporters and elsewhere. Tonight, what I think the president needs to do is tell us, is he going to do something that's going to make the United States look incredibly weak, walk away with the strait closed and de-escalate this thing? Or does he have another path to de-escalation that we don't know about? Or is he going to escalate and use these troops that are sitting there or on their way, thousands of them, to go in and then be sitting ducks in some of these islands and get us into like a Vietnam scenario where you're going to have Iran attacking our troops from the mainland? What do we do then? We slowly go into Iran and try to destroy a country with 93 million people. These are all bad options. And the president should not tonight, which I think he will do, tout about how he is winning and we have won. He should give us a realistic view as to how we get out of this very bad position that he's gotten us into in the Middle East.
Well, I'm asking you guys questions that cannot be answered. We're all kind of asking rhetorical questions here in our conversation. Rick, in our remaining moment, are you allowing for the possibility that President Trump says, you know, upon my order, troops are now moving into Iran or have already to seize the highly enriched uranium?
Yeah, I don't think you can discount it. Those troops, the Special Forces, the Green Berets, the 82nd Airborne, they're there for a reason. And if they're there, it's easier to use them if they're not. And so it creates the opportunity for the president and his general staff to mobilize at a moment's notice. And if that's the case, then you cannot discount the president making use of this very potent force for the nuclear material, for opening the strait, for many other objectives that they might have in this war.
We've got a lot to learn here yet today, and that speech is several hours from now, 9 p.m. Eastern. Rick Davis and Jeannie Shanzano will stay with us as we move into hour 2 of Balance of Power. We'll welcome our global television audience, and Kaylee Lyons will be here too, so stay with us on Bloomberg. Balance of Power, live from Washington.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump prepares to address the nation. Welcome to the Wednesday edition on this 33rd day of the war with Iran, and a commander-in-chief set to update the country on the way forward. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, the markets are feeling very optimistic about what we might hear this evening, even as the White House tells us he'll reiterate a 2 to 3 week process here in getting out of Iran.
Yeah, an official telling Bloomberg on background that he's going to reiterate this 2 to 3 week timeline, give an operational update. In other words, Joe, we may not get anything materially new or different in this address from the White House this evening, even as we are getting the president posting on True Social today the idea that Iran has asked for a ceasefire and he will think about it if the Strait of Hormuz opens up. Of course, Iran pushes back on the notion that such a request was made.
Suggesting that is fake news. It's going to be interesting to hear from the president, and we'll let you know that they have told reporters to stand by around the president's Easter lunch today. He might actually take some questions because earlier made history by stopping by the Supreme Court, Kaylee, to witness opening arguments in this case about birthright citizenship. He's got a busy day today. It's going to be a long one.
Yeah, certainly there is a lot going on, and he's not just weighing in on the Supreme Court of the United States or on geopolitics. He also just took to True Social to say that he's going to have Congress on a partisan basis, Republican only, bypassing the filibuster, pass funding for ICE and CBP. I assume the president is referencing another reconciliation package in this True Social post, Joe, and he says he wants it on his desk by June 1st.
To bypass the filibuster. Of course, he needs to drop a budget at some point as well, which we're all ears on. And I'll tell you, this is a huge day for politics and, of course, for American history. As the Artemis II launch is set for this evening, we could have 4 Americans on their way to the moon for the first time since the Apollo era. Before the president even speaks this evening, we've got a lot to talk about with the former vice president, don't we?
Indeed, we do. Mike Pence will be here in just a moment with us in our Washington, D.C. studio. But first, we head up to New York headquarters to check on these markets as the second quarter opens. And Charlie Pellet has a look for us. Hey, Charlie.
Hi, thank you very much. And here's what's going on. You guys summed it up nicely. The essence of what's going on today, optimism about hopes that the war in the Middle East may be nearing a conclusion. The Dow, the S&P, NASDAQ, all advancing as I run the GIP screen on the Bloomberg. Just about the best level of the day right now on the S&P. The S&P, by the way, 6602 where we stand now, up 74. That is a gain of 1.1%. The Dow up 413 points, up 0.9%. NASDAQ Composite Index rebounding again today, up 1.7%. Russell 2000 Index up 1.6%. All of this with the VIX, Wall Street so-called fear gauge, below 24. The 10-year 4.29% with the 2-year 3.79%. Spot gold is up 2.6%, 47.89 the ounce on the precious metal. West Texas Intermediate crude 99.81 a barrel, a drop right now of 1.6%. Brent, the global benchmark, still above $101, down today by 2.5%. Traders, by the way, do see a roughly 35% chance now of a Federal Reserve interest rate cut in December, and SpaceX is said to have filed confidentially for an IPO. Again, recapping here, the Dow, the S&P, NASDAQ all higher. S&P up by 1.1%, the 10-year 4.30%, the VIX below 24, and West Texas Intermediate crude 99.85 a barrel. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on these markets for us. Thank you so much. Just after 1 p.m. Eastern time. And of course, that means it is about 8 hours from now that we expect to hear from President Trump speaking to the nation from the White House at 9 p.m. Eastern on the war in Iran. A U.S. official, a White House official telling Bloomberg that it is going to be an operational update on that war and that he will reiterate the timeline he outlined in the Oval Office when speaking with reporters yesterday, that this will continue for 2 to 3 more weeks.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
And maybe he will be speaking about a deal this evening. There's so much we don't know about this address that we will bring you live, of course, here on Bloomberg TV and radio. Again, it's at 9 p.m. Eastern, so the president will be getting in living rooms across the country in a fairly rare primetime address. Will he talk about troops? Will he talk about withdrawal? Is the market optimism justified? Just some of the questions that we have for the former vice president. I'm glad to say Mike Pence is with us, as promised, former vice president of the United States and founder of Advancing American Freedom. Mr. Vice President, welcome back. It's great to see you.
Thank you. Good to be back.
What's your anticipation, your expectation for what the president might say this evening? And are you worried that the U.S. could leave the region with the Strait of Hormuz still closed?
Well, first, let me say I think every American should be proud of the extraordinary work our men and women in uniform have done over the last month. I mean, taking the fight directly to the leading state sponsor of terrorism in the world. Iran has been a source of violence and mayhem, has claimed American lives and lives of our allies, and sown its malign influence across the region for 47 years. So I'm proud of our troops. I'm also proud that President Trump pulled the trigger and made the decision to move against Iran. To simply cannot allow Iran to obtain a nuclear weapon, but to be able to hit the regime and simply say that the time of you sowing terror across the region are over, I think was action whose time has come. But I will tell you, I'm pleased the president's taking his message directly to the American people in prime time tonight. Not that the administration has been shy about explaining their rationale for the war, but I think sitting behind the desk in the Oval Office, as I was present for the president to do a number of times during our years together, I think sends a message to the American people about our resolve, our support for our troops. I expect he'll speak favorably about this mission. He'll update the American people on our progress, but I also expect there'll be a call out to our allies around the world about the need to come alongside America and make sure that we finish this job and don't just open the Strait of Hormuz, but that we make it clear that the free world will no longer tolerate the violence and terror that has flowed from Tehran for 47 years.
Well, on that call out to our allies, Mr. Vice President, making the ask now versus giving them warning and making the ask before these operations began, why would they answer the call at this time?
Well, because they're our allies, Kayleigh, and I'm particularly disappointed in the United Kingdom. I mean, really, since World War II, we've had what we call a special relationship with the United Kingdom, which, as I saw firsthand during my years in Congress and then when I was vice president, that when we go, the UK goes, but not this time. And I think Keir Starmer has fumbled in ways that are not reflective of the deep and abiding ties between the American people and the people of the UK. That being said, there have been other allies that have stood with us. The German Chancellor has spoken boldly about America and Israel taking the fight, which was also their fight to Tehran. But to see allies like Spain and even Italy are restricting access of U.S. air power to either their airspace or their bases, it's just unacceptable. I expect, knowing him as well as I do, I expect you'll hear the president speak out about that tonight. But look, at the end of the day, this was not a moment where America started a war a month ago. This was about a president and American military and courageous Israeli forces being willing to try and end a war that's been being waged against America, Israel, and the West for all those decades.
Beyond reconsideration were the two words that jumped off the page in the Daily Telegraph of London, the president suggesting that, in fact, he would not only consider pulling out of NATO, but is beyond the point of consideration. Are we going to hear about a withdrawal from this alliance tonight?
Well, I don't expect so. Okay. And, of course, that would take an act of Congress.
That's right.
To step out of a treaty.
Not that stopped this president before.
But look, when during our years, the president spoke boldly about the fact that most of our NATO allies were not living up to their own commitment to spend 3% of their GDP on our common defense. I was proud of the fact that before we left office together, the overwhelming majority of our NATO allies had invested some $120 billion in our common defense. In fact, NATO's ability to support Ukraine against that unprovoked invasion by Russia 4 years ago is largely owing to the buildup that we facilitated. So I expect there'll be some tough talk tonight by the president to our allies. The NATO alliance has literally kept the peace now for 3/4 of a century, and sending a message to our allies that we're in this together. They need to be together with America and with Israel And my deep conviction and my hope is that we'll hear the president say tonight that we're gonna finish this fight once and for all. I think it's imperative that our forces, Israeli forces, continue to strike until two things happen. Number one is that the people of Iran are able to rise up
we haven't
and
heard as
reclaim
much
their own
about
country.
that notion in recent weeks.
Well, but it's, I can tell you, I've had the opportunity to meet people in the Iranian diaspora across this country and across the world. There are people hoping and praying that we will create enough space by striking at the internal security forces in Iran where the people can take to the streets as they did in January at great personal risk, and as they did 15 years ago in the Green Revolution, Kayleigh. But the other thing is I think it's imperative that we finish the job once and for all to restore deterrence on the world stage. Look, Beijing and Moscow are watching this conflict very closly. And if we were to stop short, if we were to take anything less than really a fundamental change in Iran and its ability to project force against others and its own people, I think that would only embolden authoritarian regimes around the world.
Even if it necessitates ground troops?
Well, I don't believe it will, but at the end of the day, I think allowing this regime, a terrorist regime, to retain power, even with new faces, would imperil America's interest, imperil Israel, and I think ultimately be a disservice to the lives that have been lost in the last month and to all of those that have been lost over the last 47 years. Look, as I said, I'm incredibly proud of our armed forces and the job that they've done. I'm proud of the president for pulling the trigger. But now I think it's essential that we finish the job once and for all, and I'm hoping to hear that from the commander-in-chief tonight.
When you think back to the first term and the conversations you had with the president, I'm just wondering if this was one that you were actively having then. Were there battle plans to deal with Iran at that point? And if that's the case, why didn't you decide to go in so many years ago?
Well, it was obviously your military is always developing contingency plans, but I can tell you what we did in the aftermath of 8 years of appeasement by the Obama administration was we got out of the Iran nuclear deal. We isolated Iran economically and diplomatically as never before. We unleashed our armed forces to take down the ISIS caliphate that was supported and sponsored by the mullahs in Tehran. And of course, the president made the decision in early 2020 to take out the head of the Iranian Revolutionary Guard, Qasem Soleimani. Iran was weaker and more isolated than ever before when we left office. Sadly, the Biden administration reversed all of that, went back to begging for another Iran nuclear deal. And so, our hope was that by bringing economic and diplomatic pressure and by strategically striking Iran, particularly its leadership during our time, that we'd set the conditions for change in that country's posture. But when this administration came in, the threat of a nuclear Iran, the president struck with Midnight Hammer a year ago and then unleashed the greatest armed forces in the history of the world a month ago. But again, this battle's been going on for 47 years since Iran, the mullahs came to power and took American hostages. And then they took 240 service members' lives when they attacked the Marine Corps barracks in Beirut in 1983. This is a fight we've got to finish. And I hope the president conveys to the world that we expect our allies to come alongside, and we're going to finish this fight.
But it seems that the finish you envision, Mr. Vice President, is a military one, not a diplomatic one. Do you see no real prospect for a deal, for a successful negotiation?
Well, I would tell you that I think the military makes the conditions possible for regime change. Look,
the president is arguing it is a new regime.
Well, look,
he says they're more reasonable.
I know the president's reflected on new and reasonable voices, and I hope he's right. I pray he's right. But the search for moderate mullahs in Tehran has been going on for decades. We can't seem to find any. But that's not true of the Iranian people. I want to say, with the global reach of this network, I've had the privilege to come to know people who fled Iran, whose families are still there. This is a very modern country, very Western oriented. It's a very young country. It has great aspirations and a great history and enormous potential. I think if we continue to use our armed forces and Israel continues to strike, we can create the conditions where the Iranian people will be able to take back their country, and the world will be better and safer and more secure. And again, restoring American credibility, particularly after that disastrous withdrawal from Afghanistan, I think has to be on the mind of policymakers as well.
$4.06 is the average price for a gallon of gas today, Mr. Vice President, and we've seen a huge increase, obviously, in crude oil and natural gas prices since this all began, and it makes it very difficult for the president to prosecute this war and affect his affordability agenda at the same time. You've seen this balancing act before. How long can our economy, how long can the politics of this war survive this cost of gas?
Well, I think that's what underscores the importance of tonight's address to the nation.
Does he need to address this?
Is explaining to the American people what the stakes are and why it is in the interest of the security of the American people, of our cherished ally Israel, and frankly of peace and security in the world for us to finish this job in Iran.
And you think prices will drop precipitously when we leave, as the president says?
I would expect that if we secure, with the aid of our allies, the Strait of Hormuz, or if we use force, I think one of the ideas that is most intriguing to me is to make it clear to the Iranians that even if they let their ships pass through the Strait of Hormuz, that the U.S. and our allied forces may consider taking possession of those ships and steering them into allies' harbors instead. So make it clear to Iran that they cannot control this strait, or there will be costs directly as well to them beyond every cost that they've paid. But look, there's lots of options on the table. I just think at the end of the day, hearing from the president tonight, the American people are going to understand better the stakes, understand the incredible progress our military has made, and I hope they hear the resolve of a commander-in-chief that says that we will not rest, we will not relent until the people of Iran have an opportunity to reclaim what I believe is their birthright of freedom.
Well, so that is how the president is going to end his day, addressing the American people from the White House. But he began his day, sir, at the Supreme Court, attending in a historic first arguments in the birthright citizenship case. He, of course, would like to see that right that is in the United States Constitution revoked. It seems that the justices are skeptical of that. It seems even the president himself knows that he's likely to lose this specific fight. So why wage it in the first place?
Well, look, the Supreme Court of the United States has never ruled on whether people that are here illegally and have children, that those children become American citizens. The famous case from the 19th century had to do with an Asian family that was in the United States legally at the time as a permanent residence, if memory serves. And frankly, it was a case about an openly racist law against Asians in the country that the court rejected when they recognized birthright citizenship. But this was long before the global transportation that we have. It was long before modern immigration issues had emerged. And so I'm hopeful the Supreme Court will take a careful look at this. I believe at the end of the day that that our immigration system is broken. This administration has done, as we did in our 4 years, extraordinary work securing the southern border of the United States, but the rest of the work remains to be done, is fixing a broken immigration system. But having the Supreme Court clarify that unless you are here in a legal status, and as the Constitution says, in a way that makes you subject to the jurisdiction thereof, as the 14th Amendment, that there ought to be limitations on on this principle of birthright citizenship, and I hope they give it. I hope they give it every consideration.
Well, it wouldn't be the first time if this court tells us that it's the purview of Congress that we've heard that in a ruling as well. And I'm wondering what you think about the status of your former House of Representatives when the Department of Homeland Security remains closed today, and the president taking to Truth Social right before you walked in the studio to suggest that the solution might just have to be reconciliation. Reconciliation 2.0 could bring funding for DHS, could be an attempted vehicle for the Save America Act, and so many other things. Is that how this finally ends?
Well, I hope it does end. Honestly, I just think it's unconscionable at a time that America is at war, that Democrats in Congress are withholding funding for the Department of Homeland Security. I was there when we set up the department after 9/11. I know the work that they do. It's far beyond airport screening. And the very idea that we have people who work at the very heart of protecting the American people here at home are not being paid is just unthinkable to me. And so first and foremost, I'd express that concern. But look, you make a great point about the role of the Congress here. As you know, I spent 12 years in the Congress of the United States before I was a governor and a vice president. And I believe that we deserve an energetic legislature. You talk about birthright citizenship. That's a constitutional 14th Amendment issue, but when I was in Congress, I supported a legislation that amended birthright citizenship. Likely expected it to go to the Supreme Court. But I think the American people are well served when we have a legislative process that is working, that's functioning. I get it that close, small majorities make that difficult. I think Speaker Mike Johnson has done yeoman's work in extending the tax cuts last year and in a number of the measures they've been able to enact. But the American people really want to see us get back to a Congress that is working their will, that's going through the legislative process, and particularly when it comes to the safety and security of the American people. Congress just needs to get back to work.
All right, Mr. Vice President, thank you so much for joining us today. Of course, the former Vice President of the United States, Mike Pence, here with us in our Washington, D.C. studio, right here on Bloomberg TV and radio. He helping us walk through the many different storylines in politics we are watching today. But as always, we also have to keep a watch on financial markets. So let's get a check on those now with Charlie Pellet up in New York. Charlie.
Hi, thank you very much, Kaylee and Joe. We have got the Dow, the S&P, NASDAQ all pushing higher. We got a rally in U.S. equities that is accelerating as hopes grow that the war in the Mideast may be nearing a conclusion. So the S&P right now above 6,600, 6,608, looking at a gain of 79 points, up by about 1.2%. Dow Industrials up 448 on the Dow, a gain right now of 1%. The NASDAQ Composite Index up 382 for NASDAQ. That is an advance of 1.8%. All of this with the VIX falling below 24, the 10-year at 4.30%, the 2-year 3.79%. Gold up 2.6%, 47.87 the ounce. West Texas Intermediate crude right now 99.38 a barrel. WTI falling by 2%. Barrel of Brent, the global benchmark, 101.06 right now for crude. That is a drop of 2.8%. So again, recapping here, stocks higher, S&P up 1.2% with the VIX below 24, and a retreat for crude 99.39 now on WTI. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. A busy day in the markets. Obviously, as we've made you aware, a very busy day in politics and geopolitics, but that's not all, because we also have to consider that sometime after 6:24 p.m. this evening, we could see a liftoff of 4 American astronauts as they get set to head to the moon, not land on it again, but setting the stage to do so. So we want to go live now to the Kennedy Space Center, where we find Bloomberg's Ed Ludlow ahead of this Artemis II launch, joined by a very important guest. Ed.
Yeah, and that guest is Mike Karadopoulos, a Republican representing the absolute core of the Space Coast, where so much of the work for the Artemis program has taken place. Also chair of the House Space and Aeronautics Subcommittee. Congressman, there are a few that are gathered here today, probably as excited as you are about the potential of 6:24 p.m. Eastern Time. But summarize what it means to you and your constituents if we are to go off this evening.
Well, it's a part of our DNA. We are literally the Space Coast. This is where, of course, we launched to the moon the first time in 1969. And to see this happening again is so exciting for our community. It's great for our economy, but it's great for America. Coming together to wish these astronauts the best as they go around the moon for the first time since 1972. And as you've driven around this community, you've seen this, not just NASA, but commercial space emerging here as well.
That's what I allude to, Congressman. You know, in your constituents, you have engineers, scientists that have been directly involved in this program. Is there any assessment you've done on the economic impact that something like the Artemis program has on the local economy here?
Oh, it's a tremendous boom. As we like to say, it's literally taking off. And all the jobs that come, not just from the big companies, but the small suppliers as well. So many of us were concerned about what would happen to the space industry after Barack Obama got rid of the shuttle program. We were afraid what would happen, like what happened after Apollo. But the exact opposite has happened. We've created public-private partnerships, like SpaceX are the ones who launch the satellites for communications or for military needs right here on the Space Coast, and has allowed our economy to boom. And so many people have found jobs here at NASA and at the private sector that has really changed the dynamic of our economy.
We probably don't have time for the full history lesson of the origins of the Artemis program, but essentially out of George W. Bush's administration, 2005, the Constellation program. Obama was not as focused on the moon. President Trump in his first administration was, and it was carried through to Biden, and now here we are. And as we sit here today, Congressman, there are many Americans who say we have problems enough as it is here in America, financial or otherwise. Why should we be excited about America returning to the moon?
Well, beyond, of course, the idea of exploring the world, or in this case, literally the space area, but this is about economics as well. It is so important that we have the technological power necessary to take on all challengers. And on the moon, you have things like helium-3 that can be, of course, a fuel for nuclear power here on Earth. You also have water on the moon, the South Pole. That's the area we really want to control, because when you have water, you have hydrogen, which is, of course, the propellant that lifts these rockets. And eventually, we believe we'll have a moon base on the moon that will allow us to launch to Mars, like we had all been talking about, especially Elon Musk. So this is a win-win. This grows our economy. This is private sector and public sector jobs, and it just shows anything's possible in America.
Our audience on Bloomberg Television and those listening on Bloomberg Radio can detect there is a bit of wind and there are some clouds in the sky. You seem incredibly upbeat about the prospects of 6:24 p.m. Eastern Time.
Well, we always say in Florida, if you don't like the weather, wait 15 minutes. So we might be in the spot where, as of now, it looks like at least an 80% go. Hopefully these clouds will dissipate. We'll have the launch starting at 6:24. But we have about a 2-hour window. I'd actually love to see about a 7:30, 8 o'clock launch, have a nice scenic
to light up
view.
the sky.
It is. And if you see a launch at night, as you have, it's like having 12 noon in the middle of the night, because the power of this rocket, 8 million tons, and that's the equivalent of 130,000 NASCAR engines are on that rocket right now.
It would make it the most powerful human-rated launch system, because, of course, Starship, yet to carry humans on paper, is more powerful. A minute ago, we were talking about why the moon matters. You did not use the word China, but they have ambitions to get to the moon in 2030. How conscious are you and your subcommittee colleagues of that?
Well, we're very competitive, as you know. We beat the Soviets, the communists, the first time. We expect to beat them as well. We're going to get there, believe, in 2028. And remember, the Chinese do not share our values, whether it be for life or, that matter, the environment. What happens if they get there first? They might contaminate that water supply that would be vital to really cultivating the moon's opportunities. So Chinese do not share also respect for law. There's a treaty in place since the 1960s. It says this is all the world's property. We're afraid that they get there first, they might try to monopolize that. That's not good for the world.
Congressman, what is your assessment of the early tenure of Jared Isaacman as administrator of NASA? You know, it would appear that he's accelerated the Artemis program and indeed the ambitions of how soon Americans get to the moon.
Well, I give an A+. I mean, this guy has brought high energy, high intelligence, a clear vision of what NASA's future will be. Remember, this guy is a self-made billionaire. He's a guy who's been in space, who walked in space, is a pilot himself. I call him the American James Bond. And he really communicates well. He's really elevated the image of NASA and the direction you see. They're dominating the news today. People see that this is the future. America is going to to lead the way. And Jared has done a fantastic job early in his tenure.
You know, Bloomberg Balance of Power co-host Katie Lyons made a really important point to me, which is, he outlined a plan just last week for $30 billion to establish a base on the moon. And to those in industry, $30 billion would seem like a lot. But when you consider what the Pentagon might get in defense, for example, where do you and your colleagues on the subcommittee sit on that, about the level of funding that NASA should be granted to achieve the goals as they are set out in the Artemis program?
Well, this is step one. This is just the beginning. We believe that if Artemis 2 is successful, like we anticipate, that we think the investment is worth it. Again, there's a lot of waste and fraud we've unfortunately found out in places like Illinois, in places like Minnesota, California. So we have the money when we spend the money smarter, but we also want to improve the technology, and the money is there, but we have to prove it every single day.
Is it being used the right way, Congressman? I mean, the Artemis program, the disclosure is it's been a $93 billion program, or roughly about $4 billion a launch. You know full well that the private players in your district, SpaceX and Boeing, can move pretty quickly. Has this been money well spent?
I think it has, because the technology we've been able to accrue from these emissions. And look, we're constantly asking these companies, can we do better? And you've seen that with SpaceX, Blue Origin. They're creating amazing rocket systems. And the idea is that we think that it will happen in the future. But we have to rely right now on the SLS rocket. It's the only one that can propel us into space. And whether it be Blue or SpaceX or some other company, we think that's the future. Can't wait to see Starship launching here in the fall. That's the future. But for now, SLS is our ticket to ride, and we're going to ride it all the way.
Congressman Mike Haridopoulos, a Republican representing a district that is at the heart of the Space Coast here in Florida and at Kennedy Space Station, where at 6:24 p.m. Eastern, guys, there's a good chance that Artemis 2 sends humans back toward the moon for the first time in more than 50 years. I send it back to the Balance of Power team.
Fantastic. Ed Ludlow, live from Florida. We thank you so much, Ed, on the Space Coast. We do hope that we see all of this take place tonight, and what's going to be a big night for American politics and American history. Of course, the political aspects of that launch are not lost on us, along with the price tag, something that Ed was talking to the congressman about. But of course, we have a primetime presidential address set for 9 p.m. Eastern. And following our conversation with former Vice President Mike Pence, what we just heard at Cape Canaveral, let's bring in our panel to hear from Rick Davis and Jeannie Shanzano. Bloomberg Politics contributors. Rick is our Republican strategist partner, Stone Court Capital. Jeannie, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Jeannie, does the president seize on this tonight? This is a great American moment, assuming that the launch takes place, and he'll have a couple of hours to allow that to happen before he speaks at 9 o'clock. Is this not the American exceptionalism that this president wants to focus on?
It absolutely is. And I think he will definitely do that if they take off. And boy, does Ed Ludlow have the best job in the world. I'm just sitting here in awe. But he's got his work cut out for him, and that would be a really positive way for him to begin. But, this speech is a long time coming where, 30 plus days into the war, he hasn't had a prime time address to the American public. And we know, looking at the polls, we've got about 60% of Americans who disagree with the war, which is a historic low. So absolutely, the president would be well advised to start with the Artemis and all of that positive exceptionalism that America brings to the world and into space at this point, and then address what we're doing in the Middle East.
But on that point, Rick, now that we are more than a month into this war, is it too late for an address of this kind to have the effect you would think is intended?
I would say it's never too late for the president to address the public on an issue of war and peace. And as we've talked previously over the last 6 weeks, this is one of the aspects of this war that's been desperately missed, is the president talking to the American public about what the goals and objectives are. What does he need to see happen in order to bring our soldiers home safe? I should say sailors and soldiers. I get criticized otherwise from my Navy friends. At the end of the day, it's also an attempt for Donald Trump to make common cause with the American public, understand what their frustrations are. There's a lot of anxiety about the economy. This effort has made it harder for people in many ways economically, and I would think he would want to address that tonight, to understand that even though his focus has been on the Middle East, on Iran as commander-in-chief, that he still understands the frustrations and the demands on his administration to lower the cost of living.
All right, Rick Davis and Jeannie Shanzano, thank you so much. And as we consider, Joe, the cost of living, that would be one audience that is presumably watching this address tonight, is the American people, the American electorate. But the question is that the audience the president primarily wants to speak to when he's told Reuters and other outlets that he has a message he wants to deliver to our NATO allies specifically? And we heard a little bit about that from his former vice president as well.
There might be a bit of a scolding this evening as he floats the idea of withdrawing from NATO in an interview with the Daily Mail. It's pretty interesting that we could have a couple of different speeches in one. We're told it'll be about 20 minutes long. We're going to bring it to you live here on Bloomberg TV and radio. Speaking of $4 a gallon gas and the cost of oil, Tom Closa will join us coming up next right here on Bloomberg.
140 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are rallying for a second day. The Dow, the S&P, NASDAQ all solidly in the green. Off session highs, but still advancing on the S&P right now. 66.05 where we stand, up 77 points for the S&P. That is a gain right now of 1.2%. We've got the Dow higher by 439 points, up 1%. The NASDAQ Composite Index up 370 for NASDAQ, a gain now of 1.7%. The VIX below 24, the 10-year at 4.31%. Gold is advancing $116 the ounce to $47.84, up 2.5%. A retreat for crude. West Texas Intermediate now at $99 a barrel, down 2.3%. Brent, $100.68 the barrel, down 3.2%. Retail sales increased in February by the most, by more than forecast, in a broad advance that included a rebound in auto purchases. Among retailers today, we are looking at shares of Walmart trading higher by 0.2%. Target, though, lower by 0.1%. Shares of Macy's down 0.2%. Amazon up by 2%. Nike, after earnings, plunging by 14.3%. Again, recapping the Dow, the S&P, and NASDAQ all higher. S&P up 1.2%. The VIX with just below 24, and the 10-year 4.31%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Clearly, the equity market, at least, feeling optimistic today. We'll see if the president provides more fuel to that optimism when he speaks from the White House at 9 p.m. Eastern time, coverage of which, of course, will bring you live on Bloomberg TV and radio. But we haven't actually had to wait until 9 p.m. to hear from the president today. He's been quite active on Truth Social, most recently, Joe, posting about funding the Department of Homeland Security, ICE and CBP specifically. Looks like he's advocating for reconciliation. We've also, of course, heard from him regarding the war in Iran, that Iran has requested a ceasefire. He needs to see the Strait of Hormuz open first. But he, too, weighed in on the case that was being heard in the Supreme Court today around birthright citizenship, posting on Truth Social a short time ago, "We are the only country in the world stupid enough to allow birthright citizenship." It's not actually true. There's some 30-odd countries that also have laws like this. Right. But it does seem that the president is reading the writing of the wall on how this court is going to rule on this one.
Yeah, I don't know how stupid this will seem once the court rules, but apparently there is some skepticism surrounding the president's case here, and that is what we expected. Bloomberg's Tyler Kendall spent the morning at the Supreme Court as the president made history. He attended the arguments in person, did not talk to reporters while he was there. But Tyler talked to a lot of other folks. It was a rambunctious, very loud, noisy crowd. A lot of protesters showed up just for the actual arguments as the justices questioned whether this executive order issued by the president could be squared with the Constitution and federal law. Tyler's made her way back to the White House. Let's see how things are going right now with, of course, the primetime address set for 9 p.m. Eastern time in that building right behind Tyler. Did the president have any other opportunities to weigh in here, Tyler? Do we expect to hear him talk about this tonight?
When it comes to the birthright citizenship ruling or Iran, because of course, Joe, well, birthright citizenship, beyond what Kaylee just read with the president's post on Truth Social there, that's really all that we've heard from him. We knew that he had an Easter lunch today at 12:30 p.m. Eastern. He has a 3 p.m. policy meeting. Perhaps that will open up to reporters. Other than that, our eyes are just absolutely trained on 9 p.m. Eastern tonight. I can't say at the moment it is a lot quieter here where I am now compared to when you and I spoke last hour outside of the Supreme Court, and we really saw President Trump make history here, becoming the first sitting U.S. president to attend oral arguments in the modern era where these justices are deciding what really is a key policy and a hardline immigration tactic that this White House is doubling down on. So one to watch out for sure. As you guys have mentioned on the program, though, today was just to get those signals from the justices on how they could be voting. Bloomberg News' assessment is that those justices were skeptical of the arguments from the Trump administration when it comes to President Trump's executive order seeking to bar U.S.-born children of undocumented immigrants from gaining citizenship. But at this point, the case isn't decided. We're expecting that to happen, though, before the end of June when the court's term is ultimately up.
All right, so the justices obviously have some decisions to make and some time to do so. The president, arguably, Tyler, also has some decisions to make on a shorter timeline when it comes to Iran. He told reporters last night 2 to 3 more weeks of this conflict. Should we expect echoes of that in his address tonight?
Kaylee, at this point, a White House official tells us here at Bloomberg News that this is going to be an operational update. In their words, when it comes to what is happening on the ground in Iran, we are expecting this to be a tactical update, as this White House has really been trying to tout the tactical successes. And President Trump yesterday reiterating that the U.S.'s main goal here is to ensure that Iran is unable to get a nuclear weapon. But the question about what a potential off-ramp could look like has really been fueled over the last 24 hours, because you had President Trump yesterday suggesting that he does not need an agreement to be in place in order to cease U.S. military operations in Iran. But then, of course, we heard from him earlier today demanding that the Strait of Hormuz be open before the U.S. agrees to any potential ceasefire. Iran has pushed back that they have even offered that a ceasefire could be on the table. As we try to delineate where potential diplomatic talks stand now, as you both well know, the White House maintains that negotiations are indeed ongoing. We heard from Secretary Pete Hegseth just yesterday saying that they were gaining strength, though at this point Iran maintains that they are not in these formal talks with the U.S.
All right, Bloomberg's Tyler Kendall live at the White House, where we will be hearing from the president later. Thank you so much. And of course, a big question on the market's mind is how will the president, if at all, address the reopening of the Strait of Hormuz? This is an issue specifically that the oil market is fixated on, but of course has broader ramifications for the global economy. And it's something we discussed on Balance of Power last evening with the CEO of the American Petroleum Institute, Mike Summers, whose, of course, member companies are in theory benefiting from higher oil prices, but who issued a warning about the necessity of reopening the strait.
The bottom line is we have to get the strait open, and we have to get it open soon. If the Strait of Hormuz remains closed, prices are going to remain at an elevated level. The pain on consumers is just going to be too high. So the top priority has to be to get the strait open as quickly as possible.
So for more on this, we turn to Tom Closa, Chief Energy Advisor for Gulf Oil. He was here with us on Bloomberg TV and radio. Tom, I'm curious if you agree with Mike's assessment. When we have the president saying things like, as soon as the U.S. leaves, the strait will automatically be open, what's the consequence if it is not?
I think the consequence is we go higher and oil prices become an abstraction. And I would probably counter some of the things that the president's saying with the notion that, you know, we've seen a regime change, and the regime change is not in Iran. The regime change is in the people that operate in the Strait of Hormuz. And even if there's peace or progress on peace, we're probably looking at weeks of that strait having at least some sort of modified traffic. So today is an interregnum. Today may be looked back as a day where, well, the president jawboned the market down, but I think the market's going higher.
Wow, interesting. Well, Tom, it's always great to talk with you because we have so many armchair quarterbacks when it comes to the energy market here, and you actually know what traders are saying, what the sentiment is in the oil pits. If the president simply reiterates 2 to 3 week timeline, for instance, and does not actually get more detailed on withdrawal or reopening of the strait, how disappointed might this market be?
I think, you know, I created a word earlier called hyperparabolic, you know, kind of hyperbole plus parabola. And I think that's what we might be looking at shortly, because we've lost somewhere, and, you know, we're starting to see the barrel counters among the big banks, and some of them are estimating that we've lost 500 million barrels of crude oil, refined products, and petrochemicals. I mean, to say that's unprecedented is to say that night is unprecedented in daylight. I mean, it's just an incredible, incredible loss. And that was the buffer. That was the buffer, and you could argue that that's why crude oil prices didn't really go parabolic. But if it looks as though we're going to have intermittent traffic or obstructed traffic in the month of April, we're in trouble.
Well, the president would argue that the U.S. can help with that. On True Social yesterday, he was saying even when it comes to products like jet fuel, the U.S. has plenty of it. Allies can either get it from us or go take it themselves in the Strait of Hormuz. To what extent is U.S. production able to compensate here, Tom?
You know, Kelly, this is a three-ring circus. And until now, 2 of the rings have just seen incredible price spikes, that being Asia and Africa and Europe. Now it looks as though the United States or North America may join the rings. In the past couple of days, I can tell you that in the last 3 years, I never saw any cargoes put together in New York Harbor. You know, those big tanks you pass on the way to the city? They never load for export, but we've seen 5 or 6 cargoes loaded for export. A couple of them jet fuel and a few of them diesel. It's wonderful, and it's great for capitalism to send it overseas where the prices are higher, but ultimately it may end up biting us in the behind.
Really interesting. I want to get into the price of gas here, Tom. We're at $4.06. If you see another parabolic move in oil prices, what's the next stop for gas? And I realize this is a national average. The price being paid in California is a lot different than what I'm paying in Virginia, for instance. But how worried are you about this spike continuing, even if crude oil does not?
I think that they have some levers they're going to pull, even though those levers may not make sense. For example, I do think that we would see a federal tax holiday, and that's 18 cents of wherewithal then. I don't think you'll see anything like the president asking for people to make sacrifices, even though you can make a compelling argument that if you pay a little bit more for fuel now and you have a nuclear-free Iran for the next 50 years, that's a pretty good swap. So it's going to be really interesting. I can tell you, Joe, that one of the numbers that frightened me today came in the Energy Information report, and it showed gasoline imports on the East Coast of less than 100,000 barrels a day. That number probably doesn't resonate with a lot of people, but it's about 20% of what we're used to. And the East Coast, which is, of course, houses the CME contract for RBOB futures, is a market that we have to watch very, very closely. If we're not going to get European or foreign gasoline into the Northeast, we could see tighter supply here, and that could really lead to higher prices throughout the continent.
Well, but then we get into the question as to whether or not at some point if higher prices are going to be the cure for higher prices, Tom. At what levels do you expect material demand destruction to kick in?
Somewhere between 4 and 5. We're at the Ted Williams number now, 406. That's a dated reference, but I'm an old guy. I think somewhere between 450 and 495 or whatever, you do get into demand destruction. Now, one thing's going to help offset some of the gasoline demand destruction, and that's the price of jet fuel, the high fares, and the nonsense that you have to go through when you go to airports. You could make a strong case that there might be a little bit more on-the-road travel this year than there will be in the airways. I don't know about you, but I'm not looking forward to the next time I go to an airport, even though I booked it and got the fares a month or so ago.
I'm supposed to go to the airport with a 7-month-old baby tomorrow. So I cannot tell you how much I'm dreading it.
This is going to be fine. I just know he's going to be a great traveler, Tom. When you think about all of the derivatives, though, which one do you worry about the most? Is it the doubling in jet fuel? Is it gasoline at $4? Or should I be asking you about diesel or something else?
No, I think jet fuel is going to be okay. And I think, you know, one of the big helps there is that we've got this huge new refinery in Nigeria that probably can't make gasoline for North America, but can make a lot of jet fuel. The typical refinery might make 9% of its yield on the jet fuel side. So I think that'll correct. It's just that that was a product that was so low in storage. We don't store jet fuel a lot. You store gas oil and heating oil and diesel. And to a certain extent, you store gasoline, although you have the problem of the winter gasoline is inappropriate for use in the spring and summer. And by the way, you're going to see that in the Northeast. If you think that prices in the Northeast are moving up a little bit higher than normal, that's because they are. And it's because we're switching from the winter blend, where you have a lot of cheap components, into the summer blend, where you don't.
Tom, we have just about a minute left here. Just quickly, if for whatever reason the U.S. isn't able to secure the reopening of the Strait of Hormuz, if Iran is successful in implementing fees to transit the Strait of some $2 million, how would that translate into the actual price of the product on those vessels?
I think that if we have an impeded Strait of Hormuz in the month of April, we are looking at 130, 140, and then all sorts of numbers. There is some symmetry in the market that indicates a possibility of going as high as 200 to 240. How they're going to implement that, I don't know. Do they have an easy pass in the Persian Gulf? Maybe they can do something like that. But it's likely to be wrought with corruption and problems or whatever. So we really need the Strait to be reopened. I don't agree that often with Mike Summers from API, but I agree with him on that.
That says a lot from Tom Closa. We learn a lot every time we talk to Tom, and we thank you so much. Chief Energy Advisor for Gulf Oil. We've got a lot left today, and we'll meet you at 5 p.m., the late edition of Balance of Power here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Across Bloomberg platforms, we're talking about TV, radio, streaming, YouTube, Venus, Vulcan, Romulus.
What are you talking about?
Happy April Fools. Well, we're on most of those. I couldn't think of a good April Fool's joke. I know Tim's like, got nothing for you. Come on.
I'm not a funny person.
He is
I'm very serious.
You are a very funny person.
Today's Apple's 50th birthday.
It is.
Did you
Happy
know that?
birthday.
Happy birthday, Apple.
Yeah, so there is a lot of stuff going on. Hey, all right, so we may not be going to Venus and Pluto, but we are going to go back to the moon. Man is headed back to the moon for the first time
It all comes together.
in more than half a
It all
century.
comes together.
See, actually, there is a method to this madness.
There we go.
A lot going on. We are actually going to head to the Kennedy Space Center. Our Ed Ludlow is there because there's a mission happening around 6:34 p.m. This evening. And so we'll be the first one, a 10-day mission around the moon. We're not actually going on the moon.
Not yet.
But it's a big first step for man or mankind.
Is it a first?
I don't know. No, it's not the first.
No, as Matt Miller likes to remind us, we've done this before.
He went on quite a rant today. But Matt, we love you. And your rant was maybe well-positioned. We're going to talk to Ed Ludlow about that, about cost and ventures and missions and what it all means.
Well, speaking of well-positioned, equity is well-positioned for a little bit of a rally today, at least, up 1.4% on the NASDAQ composite, the S&P up more than 1%. We're going to have more from Charlie in just a minute. But it is the first day of the second quarter. U.S. stocks, hopes are growing that the war in the Middle East may be nearing some sort of conclusion. The president is expected to address the nation tonight, 9 p.m., Wall Street time, and we have a good Bloomberg News piece about what he's expected to talk about.
Yeah, I think we're expecting an update on the war, but I don't know whether that means escalation or does that mean we're coming to an end. So we're going to get into all of that. We're just coming off our best levels of stocks, by the way. Also ahead this hour, a view on the markets, including how Trump trumps the Federal Reserve. So we'll dig into that.
Looking forward to that. Also, humanity's return to the moon for the first time in more than half a century. We're going to head to the Kennedy Space Center where Ed Ludlow is in just a few minutes.
All right, good stuff coming your way in the next 60 minutes. Let's get you going, though, with a check on that trading session on this Wednesday, although we're calling it Thursday because we're off on Friday, but Charlie, take it away.
Here's what's going on. As you guys point out, first trading day of the second quarter, stocks higher, oil lower, bottom line, rally underway. We are off session highs. Right to the numbers. S&P up 61, 65, 89 where we stand. That is a gain of 0.9%. Dow Industrials up 334 now, up by about 0.7%. The NASDAQ Composite Index up 293, up by 1.4%. The VIX just above 24 right now with a 10-year 4.31%. The 2-year 3.80%. Gold is up $100 the ounce to $47.69. That is an advance now of 2.2%. A retreat for crude. WTI, West Texas Intermediate, $99.50 a barrel, down 1.8%. Brent just above $100 now, lower by 3.1%. So bottom line here, stocks higher, oil lower. Oil shares being hit hard today. ExxonMobil, case in point, it is down 5.2%. Chevron down 5.2% as well. ConocoPhillips trading lower by 3.6%. Recapping, stocks higher, S&P up 57, gain there of just about 0.9%. Tim and Carol, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Busy agenda for the White House on this Wednesday, starting this morning on speculation around a ceasefire of the U.S. war with Iran. President Trump again this morning, initially on social, saying Iran's new regime president, much less radicalized and far more intelligent than his predecessors, has just asked the United States of America for a ceasefire. We will consider when the Hormuz Strait is open, free, and clear. Until then, we are blasting Iran into oblivion, or as they say, back to the Stone Ages. So that was President Trump earlier this morning. Safe to say there's been a lot going on throughout the day here, Tim.
Yeah, and then just about 20 minutes ago, we get news that the Iranian president will release a, quote, important letter addressing the American people. This according to Tasnim, who cited the deputy information officer at the president's office. So we're on standby waiting for that.
All right, so back and forth, and we've got to just kind of keep a watch on it. One wonders what exactly the president's going to say tonight when he gives that speech from the White House. Let's get to it with co-host of Balance of Power on Bloomberg Radio and TV. She is Kaylee Lines, and she's in our Washington, D.C. bureau. Another, quiet day in the nation's capital. President Trump, let's start there. What are we expecting? What do we know? Any intel in terms of what he might be saying this evening?
Well, Carol, a White House official told Bloomberg on Background that he is expected to reiterate the timeline he gave reporters in the Oval Office yesterday, which is that this war could continue for another 2 to 3 weeks. He also is expected overall to provide an operational update, according to that official. So it's going to become a question as to whether or not we're actually going to get anything materially new from the president in terms of the trajectory of this conflict, whether it comes to seizing the enriched uranium or deploying ground forces. Will we get answers to those questions? We just don't know. What we do know, of course, is that the president at least publicly claims that Iran is wanting to make a deal around a ceasefire that Iran maintains it is not. Iranian state media pushing back hard on the notion that a ceasefire has been requested today. They say, according to the IRGC, that they are going to be retaining control over the Strait of Hormuz. And of course, for financial markets, that is a major question as to whether or not the president is going to specifically address the reopening of the Strait, or if he is going to reiterate his call for other allies to take the helm on that. As the president has suggested in a number of interviews with Reuters and the Telegraphs today, that he is going to tonight send a message directly to our NATO allies that they need to be doing more to help the United States when it comes to this conflict.
Maybe I'm just showing my age, Kaylee, but when I think about a president declaring victory or an end to a conflict, I think back to 2003, May 1st, and George W. Bush and the Mission Accomplished banner, and going and saying, hey, we accomplished our goals here, and then the U.S. ending up staying in the region for so many years after that. Leaders can say a mission is accomplished. Leaders can say a conflict will end, but that doesn't necessarily mean that activities there will stop, or that what happened before, will happen again, Kaylee. So I don't know. I just don't know how to read into something like this. We can sort of jawbone until the cows come home.
Well, Tim, you're exactly right. And what we're hearing from administration officials repeatedly is that this will not become another quagmire, including those in the administration who, of course, have been previously highly skeptical of interventionism such as this, like the Vice President, J.D. Vance. But there's also echoes of that from the Defense Secretary, Pete Hegseth. The Secretary of State, Marco Rubio, has said similar things as well, that they intend for this conflict to be short in duration. But in many of the conversations we've had on balance of power, I'm sure you've had similar ones on Business Week too, with experts in the realm of geopolitics and military, that this is not going to be another Venezuela. Clearly, it has proven that already, and that this is a conflict that has lasted for over a month, not an in-and-out operation like we were able to do with Maduro. And it maybe is harder to extract ourselves from this particular conflict than it was in what the president has so recently experienced. Now, a lot of this could come down to whether or not there are ground forces deployed, be it to Karg Island, of course, key for Iranian oil, energy, infrastructure, and their kind of economic lifeline in that sense, at least, or if it would be coming to the enriched uranium, an operation which could take some time. If they're actually to go in there and extract it, that could be something that is a little bit more prolonged in terms of time frame as well. And if we're going to try to maintain control over the Strait of Hormuz, if it's required that a military presence be there, that is something that could extend the duration of at least our presence there, if it's not outright combat operation. So clearly that's something the president would like to avoid. We're likely to hear him kind of messaging around that to the American people tonight, as we see with the American electorate consistently in polling, putting troops on the ground and getting drawn into a long conflict is very unpopular. And of course, also evident in polling is the concern among the American electorate that this conflict in particular is going to hurt them economically, especially when it comes to prices at the pump, which, as you guys know, is over $4 a gallon.
Kaylee, I like to say, and Tim, I think has heard me say, if ifs and buts were candy nuts, we'd all have fun at Christmas. But my point is, there's a lot that we know the president seems to want. I think you guys have had these same conversations. It's like from the get-go, what was the plan? What was the mission? Was it about the enriched uranium? Was it about a regime change? What was it about? And I think we still have those questions. And the other side of it is Iran, right? Their leverage is in the Strait of Hormuz. So you do wonder about what do they ultimately want in order for this war to end? And it just brings up so many questions here. Like, will the president
what Iran
just
says it wants is recognition of its sovereignty over the Strait of Hormuz. That's one of its 5 points that it wants to see to end the war. That's something that's a non-starter for the United States and especially for other Gulf states as well. So that is one of the areas in which there's a major question as to whether or not that gap can be bridged between what Iran's desires are and what the United States' desires are in terms of a negotiated outcome to this conflict. So yes, there remain many, many questions. I am not sure how many answers we will be getting from the president tonight when he addresses the nation at 9 p.m., or if this could largely be just a calling out of other allies of the United States to try to solve some of these problems, like when it comes to the Strait of Hormuz as well. He apparently is going to have some pretty forceful words for NATO.
Yeah, busy day, right? Not over. And this is, we didn't even get into the president going to the Supreme Court, but we highly recommend everybody check out Balance of Power later on and the earlier version because you guys were all over this. Kaylee, thank you so much. Kaylee Lyons, co-host of Bloomberg Balance of Power. Catch she and Joe Matthew. They're coming your way again at 5 p.m. Wall Street time.
Well, from the president's speech to what investors will be watching out for. On that, we welcome Andrew Cizarowski, Morgan Stanley Investment Management Strategic Income Portfolio Manager, joining us from Boston. I want to start where we left off from Kaylee and that speech the president is set to give tonight, because markets are, I wouldn't say on edge right now, but they're really looking for clarity from the president, whether we're talking about the equity market, the bond market, or about what's going on with commodities and specifically oil. What are you watching out for tonight to hear from the president?
Yeah, to be honest with you, I'm not expecting to get much in the way of clarity after the speech tonight. I mean, we know that obviously it seems like the administration is looking for a way out of this conflict, but there's two other sides to this as well. There's Israel, there's Iran, and kind of what everyone wants, I think, doesn't exactly line up. So I think Trump is looking to kind of calm markets, calm the U.S. economy. But I don't think he's going to be able to do that until we actually, I think there's been a couple of head fakes this over the course of the last month. And so I think that investors, I don't expect Trump to kind of heighten things right now, but I don't expect to get any clarity that is ultimately too credible.
All right, so stuff continues. It sounds like, Andrew, let me ask you, Jamie Dimon said yesterday on Fox that the U.S. needs to permanently remove any threats from Iran, a call that comes as we've seen the markets bounce on hopes of a swift resolution to the conflict. We know that can change depending on the headlines and what the messaging is. Do you agree, or, even if that means a longer battle between the United States and Iran and more volatility and fallout in the markets and maybe even, more of a longer term impact?
Yeah, I think what the administration will ultimately do is as it becomes less and less politically popular, we know obviously oil prices have risen dramatically. The longer this goes on, the more it's going to ultimately hurt Republicans in the midterms. And so I think that's the thing that I don't expect there to be a complete resolution that ends with ultimately I don't expect us to stay in for months and months, because I think ultimately the longer it goes on, the more painful it will be for Republicans in the polls. And I think the administration is looking for an out and will look to get out as soon as they can in any way they can.
But getting out, and back to this point about the Strait of Hormuz, because you look no further than what the oil market is doing. And yes, equities are rallying, and they've rallied for the past couple of days, but we're still above $100 a barrel for Brent. So, Andrew, it seems like the oil market is sending this message that we're not totally convinced that there's going to be de-escalation and ships will be going through the Strait of Hormuz anytime soon.
Yeah, I think that the oil tremors are going to linger a lot longer than I expect the kind of U.S. military to be involved in this conflict. We know that if you look at the futures curve, the curve is inverted, and oil prices are ultimately supposed to come down over the coming months as the conflict hopefully comes to a resolution. But this is going to have lasting impacts. It's going to have an impact on the U.S. consumer. We had a weak low-end consumer that's going to be even further weakened by this conflict. And we know there's kind of tax returns that were supposed to help boost that consumer, but this is kind of dramatically eating into some of those gains they were supposed to be getting to start the year. So I think that the U.S. is a little more isolated because we are energy exporters. We produce oil, but if you're an pure energy importer, this is going to have a much bigger impact on your economy. And there's obviously, I think that's going to have a much greater impact on global growth than it will on the U.S. growth, but it's going to have a big impact on the low-end consumer here as well.
Andrew, in your notes you shared with our producer, Talia, you basically say Trump trumps the Fed. I mean, what matters right now, right, is what comes out of the White House, what it may be, not just on the war, but just in general, any policy?
Yeah, I mean, the Fed's hands are tied at this point. Obviously, we don't even have Kevin Warsh kind of getting through Congress yet, but there's nothing the Fed can do to combat an oil price shock. This is a supply shock, not a demand-driven shock. It'd be one thing if the economy was booming so much and that was causing the oil price spike. That's not what we have here. So the Fed is going to look through this. Other central banks, though, don't have the same dual mandate that the Fed does. And I expect as the year goes on and we get to the end of the year into 2027, the Fed eventually will be able to focus on the labor market. Now, over the next couple months and quarters, they don't have that luxury. Inflation's going to rise. The thing is, the Fed we were heading for kind of 2% inflation before this had happened. We were kind of rolling off some of those tariffs a year ago, not rolling them off, but they were rolling out of that kind of base impact there. And then so we had a 2.4% headline CPI. There was a kind of reliable trend that was going towards 2%. As the housing market was continuing to slow, that was going to weigh on CPI and bring us down to that 2% number. But the Fed's hands now, they have to kind of sit on them until we get some sort of resolution here. The Fed can't hike, or the Fed can't cut in the face of, $100+ oil that's going to feed through to a lot of other places in the inflation spectrum.
Andrew, if we were, we spent a lot of time in this conversation talking about the war and the macroeconomic backdrop as a result of the war. If we were doing this 5 weeks ago, we'd be probably talking about AI and productivity because that's what Fed Chair Jay Powell is asked about over and over again. And he gives this answer that I think is really honest, which is we actually don't know what it's going to do. So I'm asking that question to everybody we get a chance to talk to. What does it do to productivity in this country?
Yeah, I mean, I think you make a great point because just a few weeks ago, the focus obviously wasn't on the Iran war. It was on the impact of the labor market from AI, the impact on productivity. I think that right now we're still in the first inning of seeing these productivity gains. I think they will come, but I think that a lot of companies like ourselves are in the kind of trial phase. You're kind of using this as a co-pilot, as a sidekick, and then you're getting some gains from that, but more and more white collar jobs I expect to be disrupted over the coming years. I think it's just going to be, I don't think it's going to be some kind of linear move either, but I think we're at a point now where it's still very early stages, but the impact on the labor market I expect to keep getting worse and worse over the next 12, 24 months. I think right now companies are, you had a lot of companies that were kind of hoarding this labor coming out of the pandemic, and now I think people are looking at, okay, how much can we replace with AI over the coming months? And is 75% of what a human can replace good enough?
So Andrew, just got about a minute left here. So model portfolio, has it changed much, do you think, this year, kind of where we are right now? Are you positioning and starting to think about the second half of the year? Like, what should investors be doing here?
Yeah, I think investors should take advantage of the 50 basis point or so back up in treasury yields we saw on the front end of the curve. Look, I don't think there's a scenario where the Fed, as I was mentioning, is hiking anytime soon. I think it's a free option for bond investors right now to buy that kind of two-year treasury around 370, 375. That's pricing in essentially, no cuts over the next 2 years. And so to me, that's a safe place to kind of hide out. And then if my kind of macro view plays out, which is that the labor market continues to weaken, you're going to get a tailwind there. I think going out the risk spectrum a little to agency mortgage and commercial mortgage backs is a great place to kind of hide out. If you want either no credit risk in government agency mortgages, use that backup we've seen in mortgage spreads and treasury yields that you can get mid-fives yield there, and we think that's attractive. Yeah. And then commercial mortgage backs, you can get high single digits, and that's our kind of favorite credit space.
All right, good stuff. Andrew, thank you so much. Andrew Cizorowski, Morgan Stanley Investment Management Strategic Income Portfolio Manager, joining us there from Boston. Want to take a trip?
Yeah, let's go to the moon. Well, we're not one of the 4 astronauts actually going to the moon, but we're going to talk to Ed Ludlow, who's getting pretty close to it. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session highs. The Dow, the S&P, NASDAQ, though, they do remain very much in the green. S&P right now up 42, up by about 0.6%. 65.70 where we stand right now. We were above 6,600 on the S&P. The Dow Industrials up 236, up by about 0.5%. NASDAQ, meanwhile, higher by 1%, up by 217 points. The 10-year at 4.31%, with the 2-year currently yielding 3.79%. Gold is up almost 2% now at $47.58 the ounce, but West Texas Intermediate crude oil is retreating by 1.8%, $99.54, significant, back below $100 a barrel. Brent crude right around $100. Right now, Brent is down 3% at $100.83. Bitcoin, meanwhile, lower, down 0.2%, 68,057 on Bitcoin. Eli Lilly's weight loss pill has won U.S. approval to help people shed pounds or maintain previous weight loss. Lilly's pill is called Foundeo. It'll be taken once daily. Lowest doses will cost $149 a month for patients who pay in cash. Eli Lilly shares, they are gaining today. They're up by 4.8%. Novo Nordisk, a rival, down by 0.7%. So again, recapping here, the Dow, the S&P, NASDAQ, they're all higher. S&P up 0.6%. The VIX just below 25. The 10-year 4.31%. Barrel of Brent crude $100.85. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So we're a little more than 4 hours away from sending NASA astronauts back to the moon. They are, well, kind of around the moon, I should say. They are poised to lift off this evening on a 10-day journey that will slingshot them around the moon, marking humanity's return to the lunar vicinity for the first time, Tim, in more than half a century. So it's been a long time.
He's got a front row seat to it all. Bloomberg Tech co-host Ed Ludlow. He's at Kennedy Space Center in Florida. Ed, set the scene for us. What's going on around you, and where are these astronauts as they do make their way to the vehicle to head to the launch pad?
Yeah, the crew left Kennedy Space Center in the last 15 minutes. They got into their modified, what's essentially an RV, the lunar bus, and are on their way to the pad. And it's so difficult. There's no certainty in space, guys, right? Especially when human life is involved, and this is a human crew. But everything is tracking. You know, the fueling of the SLS rocket and launch system was completed at about 1 p.m. local time. And, you know, we are tracking as best we can to 6:24 p.m. Eastern Time to take off. And I am not a meteorologist, as I said to Tim earlier on Bloomberg Television. But, you know, the biggest factor probably is the weather.
Well, how is the weather? That's why I wanted to go, because that is such a big factor of whether or not these things happen.
Yeah, officially, you know, the weather office, the meteorologists at NASA assign 80% favorable conditions. And what we're looking for right now out here at KSE is cumulus clouds that are within the vicinity of Launch Complex 39B. Essentially, the cumulus cloud, you're looking for two things. Can that cloud evolve into a rain cloud? That is a factor. But in proximity to SLS, if we do launch, what would the effect of SLS and the Orion spacecraft atop it going through a cumulus cloud mean? You know, the on board at the base of the SLS system is a rocket that is powered by hydrogen as the fuel and oxygen as the accelerant or oxidizer. And the lightning risk is very real. That's why there are 3 600 feet tall lightning towers around the launch pad, because lightning likes to find the highest point. So, like, all of this is very real, but it's weird, like, everyone is very chill, very confident, cautiously optimistic.
How's it different? Well, how is it different than other? You've been to quite a few of these, and not necessarily, you know, directly related to what this crew is doing, because this is a first in 50 years. But how does this compare to other launches that you've been to?
Well, many of the launches that I've been to have been SpaceX, right? And they've been Falcon 9. Different technology, different design, different fuel, different size. if we go with Artemis 2 tonight, the combined SLS system with the Orion spacecraft, it's a 322-foot system that has solid motor rocket boosters on the side, capable of 8.8 million pounds of thrust at liftoff. That makes it the most powerful human-rated, human-certified system to ever launch from Earth. And like on paper, SpaceX's Starship, which I've seen as well, is capable of much more power and thrust. But, Starship is nowhere close to carrying humans at this moment in time. So that's the significance of it. And this is a system that's only flown once before, 2022, in an uncrewed mission. It's a program that is over budget and behind in literally years. So there is a lot riding on this. This is the big dress rehearsal for America and NASA's ambitions to return Americans, humans, to the moon.
So I want to go back to Matt Miller, who kind of, I think, approached me.
Matt was not happy.
He's like, put his iPhone in my face and just said, hey, we had less than this, when astronauts and when NASA first went to the moon. I mean, why is it so complicated? Why have there been so many problems? Why does it cost so much? Why, taking out inflation, but why is this such a big deal when we've already been to the moon?
There's this distinction there, Carol, right? There's what's happened in recent history, and there's what's happened in history. In recent history, the Artemis program was hit by technology delays. For example, when they did the wet dress rehearsal of the system in February, they had a lot of issues with hydrogen is a great fuel for this use case, but because of the molecular composition of hydrogen, it requires very big tanks and it tends to leak. So that has been one issue that they've had to get over in the recent term. Artemis was first supposed to go in 2017. It didn't. It encountered delays. Then we had the COVID era, eventually went in 2022. Now, in history, why have we not tried to go back to the moon since the Apollo era? Well, it just wasn't really a priority for any of the administrations of the day since 1972. The Artemis program has its origins in the Constellation program that the George W. Bush administration launched in 2005. But when Obama took office, he wasn't that interested in the moon. It wasn't until Trump won where America, through NASA as the agency, became refocused on this goal.
But why is it important to have this goal? And I want to bring into, I know we've talked with you about this, or we've talked with the team about this, what China is up to. Like, why is it that everybody wants to kind of have some access to the moon again?
Yeah, there's two parts to it. There's the political or the geopolitical. China has a stated ambition to get to the moon by 2030. NASA has accelerated its ambitions to return Americans and allies to the moon as early as 2028. That is a space race for the modern era. And then there is the resources. There are minerals, there is oxygen, there is carbon within the moon's surface and within the moon that are useful to humankind going forward. And the final kind of part B of that is that, NASA still holds ambition to take Americans to Mars, and launching from Mars, establishing a resources base, a fueling base on Mars, makes it easier than getting through Earth's atmosphere because of the differential in gravitational field and pull. So those are all real stated reasons for NASA going after this.
Ed, I want to go somewhere where we went a little earlier on Bloomberg Tech, and that's to SpaceX. This in the context of SpaceX filing confidentially for an IPO. You had that piece along with Bailey Lipschultz, a Bloomberg exclusive, about the timing of this. You mentioned Starship, SpaceX's Starship, and a lot of the launches that you've been to have been for Falcon 9. SpaceX's huge Starship. Could Starship do what Artemis 2 is doing if Starship carried humans?
Yes, I mean, specifically for Artemis, what we reported 10 days ago and then the NASA administrator confirmed is there is a proposal on the table from SpaceX to come in and change how Artemis would run. In SpaceX's proposal, SLS would carry Orion, the spacecraft, into low Earth orbit. Starship would dock with Orion in low Earth orbit and push it the rest of the way to the moon before going down to the moon's surface. The IPO, what I understand from sources, Bailey helped me in the reporting of that, is that SpaceX filed confidentially for its IPO last night, right? Notified the SEC. But their rationale for going public is simply they need money to fund their future business plan for space-based data center. And there, Starship's at the heart of it as well. If that's ever going to work, Falcon 9 is not capable of carrying a data center in satellite form factor into orbit. Only Starship could do that.
Okay.
And the economics of that are measured on a $1 per kilogram basis. That's all anyone cares about. SpaceX is yet to prove that bit out.
So how do you think Elon Musk is watching tonight's launch? I think he'll probably weigh in on X, but how do you think he's watching it?
You know, Elon Musk typically is complimentary of his colleagues in industry and their achievements in the domain of space. He often will say, you know, space is really difficult. And what SpaceX did, particularly in the early days where they were on the cusp of bankruptcy and failure, you know, that is very hard to do. And so when others have made breakthroughs, including Jeff Bezos' Blue Origin, by the way, he's taken to social media and been complimentary of it. You will have seen, you know, over time he's shared social media posts about the Artemis program. And you know, it wouldn't be a surprise if he came out and wished them congratulations. But again, there is no certainty that we're going to go at 6:24 p.m. Eastern time. There is a good chance, and so we have to wait and see what happens. I know that's frustrating.
Yeah, it's just kind of how it goes, right? It sometimes goes right down to the wire. Hey, before you go, if we may, we wanted to ask you about another story involving Microsoft and Chevron. Microsoft in exclusive talks with Chevron, the integrated oil giant, and the investment fund engine #1 over a long-term deal that would underpin a giant power plant in West Texas providing electricity to a large data center campus. Is this just another sign of our times in terms of the AI and data center build and making sure you've got the energy to power it?
Yeah. I mean, the hyperscalers, that is Amazon, Microsoft, and Google, maybe with Oracle thrown in there too, are the biggest corporate buyers of energy. In the data center context, you need to have control of the grid, electricity, but how that electricity is generated can vary. You just need to guarantee supply. And basically, all these data centers that have been announced on paper, which we've been over, right, Carol, they have not yet got the energy supply on paper to match them. But in the context of what's going on with the Iran war, for example, people have come to realize nat gas or gas is much more applicable to data centers at the moment. That seems to be the direction of travel, as opposed to like how long it's going to take us to get nuclear sources, you know, other traditional carbon fuel-based sources of generating electricity.
I mean, this seems, though, that this is the bottleneck when it comes to getting these data centers online.
Yes, and also, you know, the issue is, right, the data shows us, the Bloomberg data, because of that deep investigative piece last year, in zip codes where you build a data center right now, energy prices have gone up.
Yeah.
The counter-argument from the hyperscalers themselves and from economists is that if you have big corporate buyers of electricity who buy at wholesale prices up front, it will be deflationary in the long run, provided that the supply exists. And right now, it doesn't exist. This administration has put deregulation and expedition of permits at the heart of its AI strategy for that reason, to like get this stuff built.
Interesting stuff.
We go around the world with him.
I know.
We go to space with him.
You think he's going to put on a astronaut suit?
I think those are reserved for the 4 astronauts.
All right. This time around, Ed Ludlow. Looking forward to your continued coverage. Bloomberg Tech co-host Ed Ludlow at Kennedy Space Center in Florida. When we come back, more on the macro.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, but the S&P 500 index well off session highs. Right now, we are looking at a gain of 42 points, up by about 0.6%. But at the best level of the session this morning, we did have the S&P up as much as 1.2%, higher by 81. But again, the S&P right now up by about 0.7%. Dow Industrials up 247, up 0.5. NASDAQ up 214, up by 1%. Bottom line here, stocks are extending the rally, but oil is falling on war and optimism. The VIX right around 25, the 10-year 4.31%, the 2-year 3.79%. Gold is up 1.9%, 47.55 the ounce, while West Texas Intermediate crude back above $100, $100.17 on WTI. It is lower, down 1.2%. Barrel of Brent 101.43 as the two get closer together there. Barrel of Brent down 2.5%. And Bitcoin, little change, 68,257 on Bitcoin. Intel shares are surging now by 9.1%. Intel has agreed to pay $14.2 billion to buy back half of a plant in Ireland that it had previously sold to Apollo Global Management. Again, Intel up now by 9.1%. Headline right off the Bloomberg Professional Service, Stellantis, the automaker, in talks to make Chinese EVs at an idled Canadian plant. We've got shares of Stellantis advancing now by just about 4%. And a headline on the Bloomberg, this from the New York Times, the United States is doubling its fleet of A-10 attack planes in the Middle East. Recapping, stocks higher, S&P up 0.7 now at 65.75. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We do want to mention there are some headlines coming from the Iranian president releasing a letter, as was promised, to the American people, addressing the American people. He said Iran never pursued aggression, his word, telling Americans to look past the rhetoric. Also to Americans, the Iranian president, U.S. ties among the most misunderstood. So again, a few headlines, I should say, crossing the Bloomberg terminal. There are other media outlets who are also giving the entire letter, and I'm just looking at one, the full text. To the people of the United States of America, and to all those who, amid a flood of distortions and manufactured narratives, continue to seek the truth and aspire to a better life. Iran, by this very name, character, and identity, is one of the oldest continuous civilizations in human history. Despite its historical and geographical advantages of various times, Iran has never in its modern history chosen the path of aggression, expansion, colonialism, or domination.
We'll continue to bring you headlines.
There's a lot more here
as we do get them. In the meantime, just to hit on something that Charlie hit on just now, the Pentagon doubling its fleet of Air Force A-10 attack planes in the Middle East. That's an aircraft that support advancing ground troops, this according to the New York Times. The Air Force dispatching 18 so-called Warthog aircraft to join the roughly 12 A-10s already in the region that U.S. commanders have used to attack Iranian boats and Iran-backed militias in Iraq. This, according to two Pentagon officials, according to the New York Times.
I just want to go back to the end of this letter, and it says, today the world stands at crossroads. Continuing along the path of confrontation is more costly and futile than ever before. The choice between confrontation and engagement is both real and consequential. Its outcome will shape the future for generations to come. Again, this is from the Iranian president. Throughout its millennia of proud history, Iran has outlasted many aggressors. All that remains of them are tarnished names in history, while Iran endures resilient, dignified, and proud. So this is, again, the pieces of the puzzle that we try to figure out what comes next in the U.S. war in Iran.
Well, this is the environment that not just the U.S. is navigating right now, but it's also the environment that business leaders are navigating.
Totally.
Trying to understand the backdrop of a quickly changing situation, higher energy prices, and a world increasingly looking inward.
Yeah, and something that we talk about, do you look through it, or do you have to start now thinking and factoring it into your strategy? Rebecca Humkis is with us, lecturer at the London Business School and faculty at Duke Corporate Executive Education, previously served as a fellow at the White House's President Council of Economic Advisors, author of Survive, Reset, Thrive, Leading Breakthroughs, Growth Strategy in Volatile Times. She's here in studio. Thank you, Sari, as we
That's okay.
you know, this
we
is
are in volatile times, yes.
Well, tell us what you do talk to leaders and how are they managing through like the U.S. war in Iran, or what are they saying to you? What's top of mind?
Yeah, I think the challenge is that this is not a black or white situation. We really have our strategic tools and playbooks are very much geared towards good times and bad times. Like, are we in an upturn? Are we in a downturn? And it sounds silly, but actually downturns are easier environments for executives to grow through. There's very standard playbooks that work. They know what to do. Uncertainty is much more challenging, right? And that's why we're seeing so much unease and hesitation right now.
Is this a downturn?
See, I don't think it is. And I think that's the challenge. Our brains are framed to see things that we can't explain, and especially that we can't predict, as negative. We can't really help it. And if you think about even how we talk to each other about uncertainty, we tend to always frame it as something bad. You know, we're asking each other as leaders, how are you handling uncertainty or dealing with uncertainty or managing uncertainty? We always frame our brains that the unknown is negative or bad. But uncertainty can actually be an amazing time to grow a company, and for many, many reasons. But we need to stop framing the unknown as something that's bad. So if you want me to, I could make a very bear case right now. The bears have plenty of data to make a very bear case. But, you know, the bulls have some pretty good data, too. The challenge with data right now is we can't build linear models of what's going to happen next. So tell me the story you want me to tell, and I can make the data somehow tell you that story.
But that's interesting because, you know, we were kidding and talking before, you know, that before the war, we were constantly having conversations around AI. And I think you mentioned stagflation, like we were starting to look at that, lower growth in a higher interest rate or a higher inflationary environment. So in terms of what is the fundamentals if you back out the war, or is that even crazy to do anymore because things are going to be longer term impacted as a result of this war?
The challenge with any prediction right now is it comes down to the duration and the devastation caused by the war. So when we went into this, there were many who believed it would be a couple of weeks. Right. Anyone I worked with, executives in energy or based in the Middle East, never thought it would be a couple of weeks. So most knew this would be 6 weeks, maybe a couple of months, which is looking, unfortunately, like that's what we're going to see. So if the duration is relatively short and the devastation to energy and asset fields there is relatively light, then we could see through this. And I think that's what the Fed is telling us in the last meeting. And that's what many executives are doing right now. But you are forced now to build a model for the other case where the duration is several months to until the end of the year and devastation to energy assets is much higher. Then we have this, what we call this negative doom loop, right? Is if consumers are more uneasy, which they are during a period of a war, and we have consumer sentiment, we know that. That means foot traffic goes down, right? That means we need to change things that we're doing across all the spaces that affect consumer goods. Then, of course, energy prices go into inflation goes up, but I'm more uneasy about my job because of a combination of AI and economic uncertainty. So all of these things start fueling each other, and then it becomes a very difficult job for the Fed to help us solve.
$4.06 a gallon, almost $4.07 a gallon. That's the latest from AAA. It's the highest going back to August of 2022.
And the math is quite, you know, if you want to do the simple math there, if we stay above $4 a gallon for the rest of the year, that's about an extra $1,000 tax on the average consumer. Wow. Now,
for the year?
For the year.
I would be shocked if we did stay above $4 a gallon.
You know, me too. But it's, you know, even if the war ends this weekend, it will be a couple of months before we see oil come back down to that $60 target. There are a lot of reasons why it was there before. And so things don't adjust automatically. So again, even if we have a couple more days, which, you know, it doesn't look like it will, we're talking a couple of months.
Do you care about data points or the economic data points that continue to come at us? Do leaders, because you got U.S. manufacturing activity expanded in March by the most since 2022. U.S. retail sales rebounded by more than forecast in February, a broad advance. Consumers stepping up spending after a slow start to the year. Read on private payrolls, U.S. companies added more jobs than expected last month, suggesting the labor market may be stabilizing. We just have about 40 seconds left. I mean, that's real data. Do we trust it? Do we believe it?
We trust all of the data, but we need to separate the headline from the storyline. We need to separate the K-shaped economy, which consumers are spending, which ones are not, you know, what type of manufacturing sectors. And our job is to say, this is the headline, but this is a storyline that matters to me. These are the test and learns, what we call these feeding learning loops that I need in the market. So that's what leaders need to do. Nothing can build a linear model. Not one data point is going to tell you a story. We have to build a storyline that matters for you.
Right, and it shapes what you do, right?
And it shapes everything
and
about
that's
what
true
you do
for
going
leaders,
forward.
right? In terms of spending or holding back or what have you. Thank you. Sorry that we were a little bit short, but come back soon.
I will.
We would love you from London or right here. Rebecca Humkis, lecturer at the London Business School, faculty at Duke Corporate Executive Education. We mentioned her book, Survive, Reset, Thrive, Leading Breakthrough Growth Strategy in Volatile Times, joining us right here in our Bloomberg Interactive Broker Studio.
It's just some more headlines from the president of Iran. He suggests the U.S. entered the war as a proxy for Israel, and attacking Iran infrastructure targets people. More next on Bloomberg.